Welcome back. You're watching Power Breakfast on CNBC TV 18. And now let's get you an update from the US market. Wall Street ended lower on Monday with all three major indices closing in the red. The S&P 500 and Nasdaq edged lower, while the Dow Jones also finished the session in negative territory. CNBC's Christina gets us a wrap of all the action on Wall Street.
Markets were lower on Monday, trading with the Nasdaq nearly flat. Dow and S&P 500 both falling. The S&P fell about 14 points and the Nasdaq dropped 12 points. Alphabet shares rebounded, though, on Monday, ending the day up more than 1%. And this after the information reported that Google is working on a new server chip that would allow its Gemini AI model to function what they're saying is more efficiently. The new chip is reportedly called Frozen V2 version 2. It could really help the global chip shortage that has slowed down AI development and really led to tension specifically within Google Cloud. According to the report, the chip could be put into use as soon as 2028. And a federal judge has temporarily blocked Paramount and Warner Brothers Discovery from moving ahead with their $81 billion merger. The order gives a group of states more time to challenge the deal in courts. 12 states, led by California, argue the merger would hurt competition in Hollywood and leave consumers with just fewer choices. The companies, though, have defended the deal, saying it's going to help them compete with larger entertainment rivals. A hearing is set for August 3rd. That's what's happening here in the United States. Back to you in Mumbai.
Well, now here's some opinion from Mohammad Al Arayan, the Chief Economic Advisor at Allianz on the state of the U.S. markets.
I'm not into we need 3 rate hikes. I don't think we're going to get any rate hikes. I think the worst of the inflation is behind us. The one qualification is oil prices. And regular is above 4 today, and diesel is above 5. And I keep an eye on those 2 prices. I look at them every single day. But if you look at the tariff inflation that's behind us, most of the oil inflation is behind us. The AI-related inflation is inflation that I can live with, because I truly believe there's a productivity gain coming on that.
Now getting you the latest on Trump-related developments. We have Vinny joining us in our special segment, Trump Watch. Good morning, Vinny.
Hi, good morning. So first up, US President Donald Trump has moved to shut down any prospects of Prime Minister Netanyahu facing arrest on US soil. In a pointed Truth Social post, Trump said Netanyahu will not be arrested in any way, shape or form, a direct rebuttal to New York Mayor Zohran Mamdani, who's said that his legal team is actively looking at whether the city could enforce the International Criminal Court's 2024 war crimes warrant against Netanyahu if he comes to New York for the UN General Assembly in September. Now, moving on to the next update that we have, hours after Andy Burnham, who's become and who's sworn in as Britain's new Prime Minister, Trump and Burnham held their first call covering North Sea oil, trade, then military alliances, as well as mine-clearing operations in the Strait of Hormuz. So that's the update that's coming here on US-UK front. Now, in a Truth Social post, Trump called it a very good conversation and says that this is in-person meeting with him could come in soon, though we do not have the dates that have been set. But notably, this is a reset that comes in terms for Trump's point of view, where he's been sharply criticizing UK under Starmer. Moving on to the next update, President Donald Trump has escalated the US-Canada trade fight. He signed 3 separate proclamations under a rarely used 1930s trade law to slap 50% tariff on Canadian autos, alcohol, dairy, and a range of other products. Now, the White House says that Ottawa's own trade barriers forced its hand, pointing to a sharp fall in Canadian purchases of American cars and spirits. And the tariff is going to kick in next month. And Canada, one of the only 2 countries the US has retaliated against Trump's trade agenda which is already being urged by Ontario's premier to hit back as well. So there seems like, we're going to see some bit of a tariff war coming back as well. But that's the development we have on Trump front.
Section 338, a never been used section before to impose tariffs. Well, Vinny, thank you for that update there. Take a short break. All the updates from the world of AI then on the other side. Stay tuned.
There was a
Welcome back. Time for the AI Pulse. Rachna has hopped over to the wall to tell you just that. Rachna.
Well, first up is AMD that has made its boldest move yet against Nvidia. The chipmaker has launched Helios, the first rack-scale AI system, and named Microsoft as its newest buyer. Now, remember, we did get you a sneak peek into Helios during the India AI Summit, but now we see it roll out. And Microsoft Azure will deploy Helios for frontier model inference from the second half of 2026, with Microsoft joining Meta, OpenAI, Oracle, and India's TCS on the customer list. Nvidia still holds more than 95% of the data center GPU market, so this is a foothold and not really a shift. But AMD shares rose nearly 5%. Staying with chips, then Google is building one of its own. As per a report in The Information, the company is developing a server chip called Frozen V2 that would embed its Gemini AI model directly into the silicon. Now, Google engineers estimate it could run 6 to 10 times more efficiently than current TPUs, though that figure is their own. It could launch as soon as 2028, and Alphabet shares rose as much as 3.7% post the news. That sets up a heavy earnings week. Alphabet and Tesla both report Wednesday after the US close, with IBM, Texas Instruments and AT&T also due that day, and Intel comes on Thursday. Alphabet's capex plans would be the number that matters the most after the Frozen V2 report. To the courts, then, a federal judge has granted final approval to Anthropic's $1.5 billion settlement with a group of authors, the largest known U.S. copyright settlement, rejecting objections that it was too small. The case settled a suit over pirated books used to train Claude. In Washington, then, where Chris Fall has resigned as director of CAISI after just 3 months. He was just another AI czar, as the informal designation went before him. This is as per Axios. NIST Chief Arvind Raman takes over as acting director. Now, the office sits next to the export control machinery that briefly pulled Anthropic's models in June. In London, new Prime Minister Andy Burnham has named Kanishka Narayan as Minister for AI, attending cabinet. Born in Muzaffarpur, Bihar, Narayan became Wales' first ethnic minority MP in 2024. He says nations have a narrow window to shape AI or be shaped by it. That's all we have from the world of AI this morning, but we'll get you more updates through the day.
Rachna, thank you for those updates there. Moving on then, 4 Indian seafarers have been killed while one remains in a critical condition in an attack on a merchant vessel leaving Ukraine's Otsy port. Now, the Ministry of External Affairs has said that the vessel MV Golden Leo was attacked with 17 crew members on board, including 5 Indian nationals on Sunday evening. India has condemned the attack, calling the targeting of commercial shipping and civilian crews deplorable, though New Delhi has not said who carried out the strike.
Okay, let's have a look at the latest weather updates. An orange alert has just been issued for Mumbai. Forecasters warn of very heavy downpours alongside winds gusting up to 60 kilometers an hour. The IMD says a fresh low pressure system over the Bay of Bengal will pull the monsoon through back into position, moving from the northeast to central and northern India. Meanwhile, Himachal Pradesh continues to bear the brunt, with 36 roads still blocked and 43 drinking water schemes disrupted by fresh landslides. Well, that's all we have on Power Breakfast this morning. Bazaar Morning Call comes up next.
Resolution would still
morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Tuesday morning, we're coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Mangalam and Nigel. It's an all-boys club, at least in the studios. Good morning.
Good morning, guys.
Hi, morning.
So, nothing much has changed. It's all the same and still as uncertain. $88 on crude. The good part is that yesterday, given the macros at the start, one would have thought that there would be a big gash, but that wasn't the case to be. The broader markets did a lot better. So we'll count that as a win, and let's take note of how things come by. So far, barring a few large banks, the earnings season also hasn't been particularly bad. Yeah. So I guess it's good times.
Yeah, I guess resilient times for the Indian markets, which isn't so bad. Yesterday, as Mangalam said, didn't get away with, got away with actually a cut, but not that big a cut. And in fact, the broader markets are looking up. But let's get straight to the action, Prashant.
And, the headline, the surprising part to me is that oil still at 88,
yes, exactly,
despite all the headlines, right? And I think that is something which is good for a large oil importer like India is. But just look at this. I mean, oil's at 88 and a mix of headlines, all escalatory in nature with regards to US-Iran, but no big bump. So there are three basically separate threads here in terms of the headlines. So Iranian source, the first one was a bit more, trying to be, trying to sort of settle things down. Essentially, the source told Reuters that mediators are proposing a 10-day cessation of strikes to find ways. Basically, a 10-day ceasefire. But, the point is we were already in a ceasefire, right? So, but essentially a cessation of strikes now to find ways to revive the Iran-US interim deal. So that is headline number one. Number two, the Houthis, which are in Yemen, which are widely believed to be backed by Iran, the Houthis essentially declaring that they're imposing a maritime blockade on Saudi Arabia. Now, this is extremely important. Let's just stick with this. Saudi exported 4.19 million barrels from Yanbu. Now, what is Yanbu? Essentially, because the Saudis came up with a pipeline connecting the eastern oil fields in Saudi Arabia to the western side, trying to bypass the Strait of Hormuz. Guess what? It ends up in this port called Yanbu. The oil then is picked up at the port of Yanbu. The Saudi oil is picked up in the port of Yanbu. And then it's got to, go through the Red Sea, essentially go through the coastline of Yemen, which is, de facto under the control of the Houthis. And the Houthis are now saying that we are imposing a maritime blockade on Saudi Arabia and Saudi Arabian oil and oil products, etc. as well. So I think this is pretty significant. So all that, talk that maybe you can bypass the Strait of Hormuz, and you can through one of these pipelines. By the way, there were talks that the Saudis are going to increase the capacity of this particular pipeline, put in one more pipeline. But this is the Houthis now coming into the picture. We don't exactly know whether this is already happening, whether the oil's already stopped flowing through that particular channel. But I think pretty significant. And of course, the third one, Trump saying that Iran, and I quote, will pay a price for killing U.S. soldiers. And this was in a social media post. So, I look at all these headlines and it's actually pretty interesting that oil's still at 88 odd dollars, 89 odd dollars. If that Saudi thing is true, prices can jump easy $10 just like that. So far markets are signing, and this is surprising because ceasefires have been fragile, whereas the breaking of ceasefire has been a more recurrent feature, where the market is signing a higher premium to a ceasefire and a lower premium to perhaps the possibility that the ceasefire does not hold, even though the opposite so far has been true. Anyway, U.S. stocks were largely lower. The S&P was down about 0.19. Yields went up about 4 basis points. We're about 4.6 on the 10-year. Tech was the big story over the last 48 hours, actually more. And, the Nasdaq is down 7% from the highs, and the SOX index is in a bear market. But tech was largely positive last night. If you look at the semiconductor story, memory, software, relatively quiet and news flow. Mag 7 was mixed. Tesla was lower, Apple was down. Google, by the way, will report numbers later today. In an interesting headline, right? The entire sell-off, and we call this DeepSeek 2.0, of course, question mark, whether what happened in January of 2025 when DeepSeek came out in the open and It caused a big sell-off. I mean, it lasted about 2 weeks, but was a big sell-off on tech stocks in the US. Well, this is another moment, one of those moments. So Axios reported that the White House, Trump's White House, is considering options to block the use of open-source Chinese models by American companies. And of course, I mean, the last one which has caused this flutter, this sell-off in tech in the US is Kimi, which is, of course, by Moonshot AI, the Chinese company. So essentially considering options to block the use. I mean, this is going to be pretty big news if it's true. Another headline, another news item we got yesterday was essentially RBI saying that India has taken in about $17.5 billion in deposits under the FCNRB window, and this is pretty large compared to what the expectations were. The expectations were running at about $10 to $12 billion for this point in time. Remember, we had Federal Bank yesterday on the channel, and they told us that in its entirety, the market is expecting the number to be between 50 and 55 odd billion dollars. Now, I mean, the earlier assumption was 60 to 80, but 50 to 55. But looking at the 17.5 already in, and the fact that perhaps most of these schemes are back-ended. People rush in towards the end to kind of sort of, get their check in. The number could be larger than 50 to 55. It could be, 60. There are other measures, by the way. We're only talking about the FCNRB, but the RBI had other measures in tow as well, along with the FCNRB scheme. So the total number perhaps could be larger. Will this revive sentiment on the rupee? Because that's been pretty poor. Actually, even before this number, the rupee, I mean, just look at the rupees, 96.44. The low is just under 97, and it's not as if equities are still going out. Money is still going out at the same pace, how it was about 2 months ago. Or the mood is, if anything, at the margin, there has been relative improvement in terms of earnings prospects, oil is down, etc. But the rupee, of course, has been flashing red. So will this be enough to change sentiment? We'll see. And I'll just leave you with the levels, which are not very different. The range is the same, but the support for the Nifty, 24,000. The first one is 24,140. Below that is the big one, which is 23,800. And on the upside, the resistance at 24,320 and then 24,500. So those are near-term levels. So the immediate 24,140 support, 24,320, which is the resistance on the upside. So that's the index for you. GIFT Nifty comes up. It's down about 100 odd points this morning. Well, yesterday it was showing absolutely unchanged, and we got a 150-point sell-off. This morning, got a 100-point indicative open lower on the GIFT Nifty. Nigel has walked across to the wall with the F&O positioning and the cues. Nigel.
Well, it's Tuesday, so it's weekly expiry, so volatility will pick up, particularly in the final hour of trade. We're just looking at the cues that we have overnight. Crude oil prices, they are still subdued. Come off from yesterday's high of around $91 a barrel, odd, holding at around $88 per barrel mark. So crude basically is behaving like Trump's bark may not turn into a bite. At least that's the hope, because the hope is that things will de-escalate rather than escalate. And going by the crude price move, well, it's pretty much well behaved in comparison to, all the headlines that we got overnight. The other factor that I'm going to track today is going to be the Indian rupee, because crude oil prices have come off a little bit, and then the FCNRB, the response to the FCNRB deposits, it's better than expectations. So that as well could play a factor. It's weakened over the last few trading sessions. I think today there's a good chance that we see some kind of strength on the Indian rupee. So we'll have to keep an eye out on that. One positive yesterday was that the Nifty ended in the red, but the India VIX as well cooled off. Normally, both these two move in opposite directions. So that was one of those positives. In a falling market, you didn't see the volatility index spike up. Moving to the flows, the FIs they sold, but all that selling was offset by the DI buying. Institutions yesterday, the net number was almost zilch because, both those two cancelled off each other. Moving to what the FIs did on index futures, well, they went ahead and they unwound some long positions. They covered some shorts as well. So there's basically lightening of positions that we're seeing from the FIs. And if you look at it, the net short positions itself, at the high, it was around 2.7 lakh contracts, as that chart is telling you. That's come down to around 2.2 lakh contracts. So short positioning as well has reduced considerably. And also the positioning on the index has actually reduced. So keep that in mind. They continue to remain net short, though. 91% of their positions are on the short side. Moving to the options data, 24,250 call well out there. There was a good amount of open risk build up. Close to 35 lakh shares getting added there. The premium out there is holding at around the 70-75 rupees odd. There appears there is some writing at those levels. The good news, though, from a bullish perspective is there continues to be writing at lower levels. And the FIs as well in the last many trading sessions, they've been writing puts. telling you that maybe that base of the market has moved up a little bit. So for today's trade, since there is a lot of writing at this 24,150 put, and since it's weekly expiry, you'll be backing that 24,000, 24,100 level to hold out. Remember, the 20 DMA comes in this vicinity of around 24,100. And, the recent high, that becomes a bit of a resistance, which comes in at around 24,370 odd. The Nifty Bank, that's an interesting chart. The last few days, almost every day it's going to this mark of around 57,300, 57,500. And from there, it's seeing a bit of a bounce. Keep in mind, you have the 200 DMA as well, which is at around 57,360. So there's a good chance if we go to those levels, we see a bit of a bounce. Yesterday, you had a couple of large names like Axis as well as HDFC Bank that weighed down on the Nifty Bank. Let's see whether or not the Nifty Bank can get back to its winning ways, because that in turn will support the Nifty. A dip to kickstart trade with the GIFT 50 suggesting a 100-point pullback. But, going by recency bias, the bulls will fancy their chances at lower levels.
Take that point entirely. The bulls should fancy their chances at a 100-point dip, as the GIFT Nifty is indicating. But good time to bring in Taimur Beg, Managing Director and Chief Economist at DBS Group Research, joining in on the show as well. Taimur, let's start off with the two factors and your view on the Indian rupee right now. One, oil contained at $88 per barrel, despite the geopolitical uncertainty that we're seeing. Yes, it's not obviously at 70, 72 that we had seen earlier, but it's definitely not 120 that we saw earlier as well. So at around 88, your call on the oil for macros for India. And the second part, the deposits that came in to the Indian banking system because of the steps that the RBI has taken have been so far a lot higher than what the street was anticipating. So do all of these things make you more India positive?
Good morning, Mangalam. So the second question first, short answer is yes. We think that the absorptive capacity of the Indian economy to higher oil price is vastly understated. I think this is actually a general observation about the global economy, but India has shown over the last 6 months that just because there is a big pickup in import prices and trade deficit worsens and the rupee comes under pressure, doesn't mean that the whole economy falls apart. We haven't seen any evidence of wide-scale demand destruction. We haven't seen any major consternation among fixed income buyers with respect to the fiscal stance of the Indian authorities, despite the fact that you would think that higher energy prices bring in the subsidy and deficit risks to the fore. So put aside the incipient pressure on the rupee, which is not an isolated development. You look at the Indonesian rupiah, you look at the Philippines peso, all the large energy import-dependent economies have seen their exchange rates come under pressure. There's nothing India-specific. It would have been India-specific if we had seen huge amount of sell-off in the fixed income market in fear of fiscal deterioration. We have not seen that. It would have been India-specific if we had seen a substantial demand destruction type evidence. We haven't seen that either. So I think that, generally speaking, outlook for the Indian economy, in our view, remains unchanged. We haven't turned bearish India. I've come to the show in the past and I've sort of made somewhat light of the fact that this consternation around negative net FDI should be seen in the context of some degree of profit taking by private equity companies, which have sort of realized certain IPOs. So overall, that issue remains on the constructive side. Now, coming on the question of where oil goes and what that means for overall external macro dynamic, I think that question has bedeviled us all year long. But we again need to contextualize to the fact that even at $85 or even $100 oil, in real terms, oil is significantly lower than it has been in the previous incidences of crisis around energy. So whether it was the 2022 Ukraine war or even 2010, when at that time oil was at 150. Compared with that, we are like down 50, 60% right now. So I wouldn't worry too much about oil going to higher than where it is now if indeed the US-Iran situation were to worsen, or if the Houthis come into fray and even some oil coming through the Red Sea starts getting disrupted. All of those things are not constructive developments. Let's be very clear about that. We do worry about what happens to energy security. We do worry about the global refining capacity. But we should also step back and look at the bigger picture, which is that the upside risk to oil still should be seen in the context of the fact that historically oil prices are actually quite low.
Yeah, despite all of this, right? And you're absolutely right. Taimur, what explains this sentiment is poor, right, on the rupee? even though on the equity side, I can argue that maybe things have gotten a little better. And the big problem was equity outflow, which was this continuous pressure. Why is that? And what can change? I mean, will this number, $17.5 billion yesterday, is that enough? Or does it need something else?
Hi, Prashant. As you know, I always look at these issues from a cross-country perspective. And when I look at a select group of Asian economies which have dependence on energy import, I don't see the rupee as an outlier. Rupee, rupiah, peso, Thai baht, they've all sold off in the last 6 months because these are the economies that see worsening of external balances when energy prices go up. So I wouldn't put rupee at a separate bucket than all these economies coming under pressure. Now, of course, we would like to think about remedies around market stabilization. We don't want to disorderly sell off the exchange rate, even if from a competitive perspective of Indian exporters, this is actually fairly good news. Now, will the FCNRB solve this issue? Well, it certainly will help, no question about it. And we have seen, I'm sitting here in Singapore, I look at demand from private clients with respect to FCNRB, substantial. And I know that counterparts in the Middle East, elsewhere in the US, are seeing among the diaspora huge demand for the FCNRB scheme. And it will certainly surprise on the upside from initial expectation about in terms of the capital that is going to be mobilized. If foreign investors are bottom fishing India, that's good news. If oil doesn't become like a massive source of worry, but just in this $85, $90 range, all of those things should pave the way for rupee staying below this 97 threshold that everybody's talking about. I really think that, focusing on 96.4, 96.5 is particularly constructive. We should look at it from a broader cross-country perspective.
Hi, Taimur. Good morning. Always good to see you in. This is Nigel on this side. Taimur, I want to ask you, what about the dollar index? What's the tragedy out there? At one point of time, it was going south. But in the last couple of months, it's bounced back a little bit. Now, the expectations are that the US economy is in okay state. And the Federal Reserve, in all probability, could probably hike rates towards the end of this year. Are you in this camp, or do you think that they'll actually postpone that hike to 2027?
So, short answer to your question, Nigel, is that they will postpone, but I'll explain that. Give me a few seconds. I think that in terms of where the DXY goes, I remain on the structurally bearish camp. I think that given the U.S. macro dynamic with respect to its fiscal situation, with respect to all the trade war that it is embarking upon, that a weaker dollar sort of makes sense. Now, if U.S. twin deficits were to get addressed in some meaningful manner, I would become a big dollar bull. I'm not, not necessarily, event agnostic. But right now, I don't see any major sign of U.S. fiscal consolidation. I don't see any major signal, despite all the talk that's come out of the FOMC in the last month or so, any serious resolve about bringing inflation down to 2%. If inflation is 3.5%, if core PCE is heading past 3.5%, it's very problematic for the Fed from a market expectations perspective, and they have to show some hawkish tendency. But under Kevin Warsh, I would expect that to be the last resort for the Fed. They would try to say that, look at headline inflation has come down substantially in the last 1 month as oil prices have come down. They will say that labor market-related uncertainty, given the AI disruption, is substantial. We'll have to consider that before tightening monetary conditions. And so putting it all together, I'm not necessarily in the camp that U.S. dollar will get major medium-term support, either from fiscal policy or monetary policy or overall economic developments. It is a strange thing to say, given the excitement around the AI dynamic and given that the hub of AI activity and excitement seems to be the United States. So a lot of capital does go there. That should be dollar positive. But overall, from an external deficit, domestic deficit, monetary policy stance perspective, I don't find that much to be constructive about the dollar, despite the developments of the last 2 months.
Got that. Thanks very much for that. Really appreciate your time here, Taimur. And, with more questions, tariffs are coming back into focus once again. And there's some talk around, tariffs in Canada, Mexico and such. Here in India, for example, we don't know what will happen after the 24th of July. Those tariffs, right? The reciprocal tariffs, which we're working with. I mean, will they be reset higher? There's no deal, of course, before that. So We'll see. Thank you very much for joining us here on CNBC TV 18. We'll take a quick commercial break here. We'll come back and we'll tell you the interactions which are lined up on the program. 8:35, we get you a discussion with Shyam Metallics in the back of the first quarter numbers. 9 o'clock, we have Girija Shankar of Nirmal Bang puts a spotlight on the cement space. Ultratech Force also reported numbers yesterday in the afternoon. Rajiv Batra of JP Morgan talks markets at 9:15. Well, there's an upgrade from HSBC, and we'll talk both macros and equities. And Pranjul Bhandari, the economist at HSBC, and Harold van der Linde of HSBC on the equity side will be with us for that. The management of JK Cement speaking with us at 9:40 on their first quarter numbers, 9:50. We have BNP Paribas' Kumar Rakesh to get a preview of what to expect from the auto space in the first quarter and towards the end of the program. Lata speaks with BNP's banking analyst Santanu Chakrabarti on the takeaways from the banking sector results. So that's the lineup which is coming up.
Time to take a quick break. We got a lot of stock-specific action, though, to track on the other side. For the time being, I give you a sneak peek into the top 10 segment. We're looking at Ultratech, Paytm, CMPDI, Canara, HSBC Life Insurance, Bluestone. They'll all be reacting to positive news flow, but the list is not done at that. Ace, Rallis, Ather Energy, Reddington. While on the flip side, TARIL will be the stock that will be reacting to negative news flow. Take that break, come back, getting to further detail on all of these names.
Fellow party members are pressing.
CNBC TV 18 tracks the pulse of markets and business in real time, bringing you the stories that shape the economy.
From breaking news to sharp analysis, we deliver insights that help you navigate businesses, markets, and investment opportunities.
Nuvama presents CNBC TV 18 Market Central,
providing sharp market intelligence for wealth creation with a commitment to doing it right.
That's an all-boys club on Bazaar this morning. The Gift Nifty indicating a 100-point downtick at the open. But do we recover from there or not towards the end of trade, given its weekly options expiry, something that we'll be tracking? A bunch of numbers and a lot of stocks to track. And as always, our team is here. Let's start with Nigel. Nigel, Ultratech, good numbers coming in, but more commentary in the con call.
You know, what I like about Ultratech Cement is that this sort of scale, when you deliver these numbers, it's very, very good. At a big base, you're growing at this sort of a pace, that gets a thumbs up. So a few details with regard to their con call. First, on demand, they continue to target double-digit volume growth, which will be more than what the industry is growing at, and they'll be looking to grab in further market share. Point number one. Point number two, they're saying in the monsoon season, they expect prices to be more or less stable because input costs have gone up. So that's giving them a reason to keep prices elevated. Point number three, on the cost. This is the positive, because they are saying they're going to be looking at the cost-focused measures, and that's why the cost will go up by only around 130 to around 140 rupees per ton. Now, this is a positive because some brokerages, they were working with 200 to around 250 rupees per ton higher cost in quarter two in comparison to quarter one. So that's something that the street will take very, very positively. And they're saying in terms of a longer-term target, by FY28, they're looking at around 1,400 rupees per ton of EBITDA, provided things remain fairly stable on the cost front. And they're also saying, that the EBITDA will gradually improve from around this 1,200 rupee mark. On the brand integration of Kesoram as well as India Cements, they're saying that it's completed. And on India Cement, a company that used to do 200-300 rupees of EBITDA per ton, they've scaled it to 600 rupees, and they have their eyes set at around 1,000 rupees. Wires and cables business, by the end of this year, you'll have a new player, as they had promised, by the end of 2026, that's what's going to happen. Looking at brokerages, more or less, most of them are positive. It's their top pick, and the target prices as well come up for you on the screen. So green on Ultratech Cement, that scale growing at that kind of pace, thumbs up. But hopping across to Ananya, she's in to tell us about Paytm. Morning, Ananya.
Good morning. So when you look at the numbers, they delivered a pretty strong quarter. Revenue rose 28% year on year. EBITDA nearly tripled. It is the highest ever EBITDA in the company's history. The net profit also rose 79%. It is the 5th consecutive profitable quarter for them. Now, growth drivers were the merchant payments, financial services and AI-led execution. They also maintained a strong cash balance of 13,500. So one of the positives here. Now, on the corporate front, the most interesting part today, they cancelled the proposed bonus issue here, choosing disciplined capital allocation and long-term value creation over a short-term shareholder reward. Now, it also plans to reallocate the remaining 1,600 crore of IPO proceed, subject to shareholder approval, while approving an additional 100 crore investment in Paytm Money. Now, while earnings were strong, we need to keep that in mind that the stock has rallied quite much from its June low. So some profit booking after the bonus decision cannot be ruled out here. Now coming to brokerages, however, largely they remain constructive. Citi reiterated its buy with a Goldman Sachs maintained its buy rating, while CLSA stayed cautious with an underperforming rating here. Citing limited upside after the recent rally. So all in all, good set of numbers from them.
All right, take that point. Thanks a lot for that, Ananya. With that, let's go across to Nigel back again. Nigel, CMPDI.
Yeah, that's right. CMPDI, expect the stock to recover, to react favorably to its numbers. Remember, they came out with an IPO at around 180 rupees. The stock has already gone to around 250 rupees. The numbers look quite good. Remember, the management has been guiding that they'll grow at a good clip, and that's precisely what's happened. So an 18% growth is what you've seen on the top line. The encouraging part, though, is that the EBITDA number is up more than 60%, which tells you that the margins that were in the 20s, they have moved to around 30% just in the past quarter. Sustenance of these margins is going to be crucial. Remember, for them, the other expenditure as well as the employee cost in the past quarter was fairly well-behaved, which is good news for them. The PAT number gets an additional booster shot because of the other income that went up as well from 14 to around 22 crores. They grew on most of their divisions, and we are at CNBC TV 18 will try to pull in the management sometime today and ask them what's the trajectory ahead, what's the outlook with regard to the cash and books, which is close to around 8% of the market capitalization. For the time being, we go with green on CMPDI, the consulting company for various coal mining as well as other mining companies. So that one opens up in the green. But Yash is joining in. He's going to tell us about Canara HSBC Life. Hi, Yash. Good morning.
Good morning, Nigel. So, I mean, as far as the numbers for Canara HSBC Life are concerned, it's a decent set which the company has delivered. The top line seems to be moderating, but on the value side, it's been a good performance which has come from the company. The new business premium, that has grown at 25%. Individual WPI, that has grown at 18%. The total annualized premium equivalent seeing a growth of 18%. Now, this is as far as the top line elements are concerned, where the growth has moderated from the higher rate which we used to see earlier, but still a decent set. On the VNB side is where we see the value coming in. 29% growth as far as value of new business is concerned, and that has resulted in strong margin performance as well. The margin has come in at about 21.1% versus 19.5%, a growth of about 160 basis points as far as the margin performance is concerned. I'm going with green on the stock for two reasons. Of course, the value side of the business has done well in this quarter, and the stock hasn't done much. It's moved in the range of about 140 to 150 almost since listing. So of course, there is value upside, hence going green on the stock.
Right, going green on this stock. I'm going with green on Bluestone Jewelry as well, because if there's one sector which is doing extremely well in the consumption space, it's jewelry, and within that, it is the affordable adornment jewelry which is doing even better. So we've seen the updates from Carrot Lane coming in, or Candier from Kalyan Jewelers, and Bluestone is no different as well. The stock's up 11-12% this month ahead of numbers, and 50% revenue growth is what the company has reported. During the IPO, they had said that operating leverage would take their margins higher as well. So from 11%, the margins have gone all the way up to 15%, and this is post-Ind AS, so about 94% jump. Pre-Ind AS, it's 120% plus jump on the EBITDA, and at the bottom line, they've turned profitable from a loss of nearly 35 crores. It's a profit of 6 crores as well. The key internals look fairly strong as well. 39% same-store sales growth. Customer base itself has increased by about 21%. They've added 12 new stores in the quarter, which takes their overall stores to 352, and average order value, that too, has come in at around 78,000 rupees versus 55,000. A large part of that obviously has to do with the jump that we've seen in gold prices year on year. Studded share is at 57% versus 63.5%, improved sequentially, down quarter on quarter, largely because of the higher contribution coming in from gold value. But all the internals look fairly positive, and despite the run-up that we've seen in the stock already, going with green on Bluestone Jewelry. But with that, let's go across to Winnie. Winnie has a bunch of stocks that she's tracking this morning. Winnie.
Hi, good morning. First up, we have Action Construction Equipment. We are expecting green here. They reported the Q1 FY27 numbers. Good set of numbers, revenue growth of 20%. What led to this growth? The construction equipment segment for the company, that saw 22% growth, that you could say, for the company on a year-on-year basis. The agri-equipment side of the business also saw a growth, but the volumes were a bit muted there. Overall, margins have remained largely stable. Slight bit of an improvement there. 14.9% is what the EBITDA margins came in at. All in all, good set of numbers. This growth rate we've not seen in the last couple of years for the company, so that is why green is expected here. Then transformers and rectifiers, again, a miss that's coming in Q1 FY27 as well for the numbers. One more quarter missing the street estimates, so we could see red here. The revenue from operations on 8% growth. Now, the company highlighted that this is mainly because the expansion of one of their facilities is still going on. That will come in on August 2026, somewhere around that. We could see the commissioning getting completed, and that's when they expect to see an improvement coming in here. But as of now, muted numbers that came in. Margins have seen a bit of a contraction versus last year, 16.3% versus 16.6%. Profits of the company also have seen a decline. Orders inflow, though, they've been strong this quarter, but that is what the street was already expecting. And the management last when they spoke to CNBC TV 18, they also highlighted a similar number of around 2,300 crores. It's coming at 2,114 crores, the order inflow. Order book is strong at 6,630 crores. And inquiry pipeline, the company highlighted, is at 23,000 crores. But the miss, because of one more quarter of miss, is the reason for red here. Rallis, that's the last one. Green expected here as well. Good set of numbers, beating the street estimates. Overall revenue growth of 7% this time was backed by a double-digit growth that the company saw in terms of volumes in their domestic formulation business. EBITDA uptick also was mainly due to the manpower cost reversal that they saw coming in this year versus last year, and that is why an improvement in terms of margins as well. So green expected here.
Got it. Okay. All right. Thanks a lot for that, Vinny. Well, let's go across to Sudarshan. He's here to tell us about Ather Energy and Reddington. Morning, Sudarshan.
Good morning, Nigel. So first, talking about Ather Energy, company has announced the closure of QIP issue, have raised up to rupees 1,300 crore. Allotment is done at rupees 1,202 per share versus floor price that company had announced of 1,170 rupees per share. So allotment price is at a 3% premium to the floor price. Now, the shares have been allotted to most mutual funds and FPI. FPI here is Abu Dhabi Investment Authority. So I'm going with green for Ather Energy. Next one is Reddington. Company has entered into a 5-year strategic relationship with Resultix for market expansion for markets like West Asia and India, and market opportunity over the next 5 years. They are targeting of more than $150 million. So I'm going with green for Reddington as well.
All right. So thanks a lot for that. In fact, with that, we'll thank our entire team. And in case you missed all the stocks that we spoke about this morning, here's a quick recap. Stocks with positive news flow. Commentary coming in from Ultratech, which is positive. Paytm, decent results. They've postponed the bonus. CMPDI, good numbers. Canada, HSBC Life as well as Bluestone Jewelry, Ace, Rallis, Ather Energy and Reddington, all of them in the green this morning. Whereas Darryl, Transformers and Rectifiers, the only stock on our radar that is likely to open in the red. With that, let's go across for a quick roundup of all the action from the commodity space with Manisha. Manisha, good morning.
Morning, and thank you for that. I'll start with the crude oil prices, where we have seen some profit-taking since yesterday. There's some easing, especially after there are reports of mediation efforts between the U.S. and Iran. So we are off $91 a barrel, a high that we saw yesterday, to holding around 88, 89 right now. The U.S.-Iran conflict, having said that, has entered a 10th day, and Iran has continued retaliatory strikes on neighboring countries. The one thing that the street will want to watch out for is the Houthi militants announcing a maritime embargo against Saudi Arabia. Well, if that happens, then Suez Canal, Bab el-Mandeb are some of these waterways that the markets could be looking at getting disrupted, and that could take the crude oil prices on the higher side. As of now, it's a statement. On ground, not much has happened, and is the reason the crude oil prices have not reacted to that. Having said that, it also is about the precious metal prices. Some decline in crude prices clearly has been supportive for many of these metals. So we've seen a rebound overnight in gold, in silver. Copper futures have continued to gain, especially because of the physical tightness in China. Strong gains is what we are witnessing in aluminum with all those tariff conversations. Steel and iron ore prices also gained overnight. So many of the metal commodities are doing quite well in Asia.
Okay, all right. Manisha, thank you very much for that. Well, that's commodities in focus there. We'll take a quick commercial break here. We'll connect with Mayuresh Joshi of Markets with India for some fundamental stock conversation. Later, we bring you a quick discussion with the management of Shyam Metallics on the back of their first quarter numbers. Stay tuned.
Welcome back. You're watching us here on Bazaar Morning Call. We're tracking a lot of the earnings that have come by overnight, along with the fact that Brent prices are holding around that $88 per barrel mark. The GIFT Nifty, which started off with a 100-point downtick, has cut its losses to about 75, 76 points. The street is expecting some sort of reversal as we open with a gap down, largely because the street is poised for 24,100 to about 24,300 on the range for the Nifty. A lot of individual stocks on our radar. Mayuresh Joshi, who's the director at MarketSmith India, joins us now. Mayuresh, good morning. Yesterday, one of the big results that came by was Ultratech. Seemed like a good performance, and now the management commentary is also positive. Typically, when companies with such a big size and scale report outperformance, you do see percolation down across the industry. The cement pack did well post Nuvoco's results. Do you expect it to continue to do well? What's your call?
Morning, Mangalam. So again, I think we remain constructive on the sector as a whole. And Ultratech and JK Cement are a couple of names where the leadership traits probably are exhibiting very strong growth signs. Having said that, I think the numbers that Ultratech delivered yesterday is a precursor for the industry as a whole. And yes, there will be some misses as far as the sector is concerned, as far as a few stocks are concerned. But the guidance that they've probably given double-digit volume growth over the next fiscal, they've beaten the estimates in terms of the cost guidance as well. The initiatives that they're probably doing, and it's not just Ultratech, I think the sector as a whole in terms of having its own captive sources reduces energy costs to a large extent. And the size, I think the build-up that is probably happening for Ultratech, both in terms of its grinding and clinker capacities, along with the acquisitions that they've probably done, the presence that they've probably got pan-India probably makes it, gives it huge strength in terms of leveraging the kind of growth dynamics that can probably come through. So Ultratech, JK Cement probably remain top of our rack as far as ratings and rankings are concerned at MarketSmith.
Well, stay with us, Mayuresh. What we're going to do is we're going to queue up the management of Shyam Metallics, and Nigel had a conversation with him. Nigel, over to you.
Oh, yeah, that's right. We had a conversation with the management of Shyam Metallics. Let's hear out what the management had to tell us.
Actually, I'd been always sharing that, we are focusing more on the value chain. We are developing a lot of high value products in our metal segments, which is helping us, to increase our EBITDA margin. Also, the advantage is on the cost side, yes, we are trying to reduce more and more cost on the better from the front of the energy efficiency and also on the capacity utilization. So a lot of upgradation on the present infrastructure facilities has been done, which we are seeing a result on the better side.
Got it. All right. Let's understand a couple of aspects then. When you talk about
why do you play the
value-added products, could you tell us a couple of lines that are coming on stream in this year? If you could help us out with that. And when you talk on the cost side as well, could you quantify it? Is there some captive power that is coming on stream, or maybe captive coal, iron ore?
Yes. On the iron ore front, we are just commissioning the beneficiation plant. So it will help us to, improve the quality of the iron ore, and also will help us to optimize on the efficiency of the plant, because if you are able to improve the iron ore, it has a big effect on the quality of steel as well as on the cost side. Number two, this year, yes, we just commissioned the aluminum facilities, backward integration, and also we have increased the capacity of our existing foil plant. We are going to see a good value coming up, this year in the aluminum space as well. Now, from the prospect of this new power plant and new iron making facility of more than 500,000 ton is under final stage of commissioning. We expect that, this quarter will be commissioning both the facility, then we can see this year a lot of value, coming up from this new commissioning.
All right. Mr. Agarwal, let's talk about pricing then. We're getting to a typically weaker quarter or a seasonally weaker quarter, and pricing sees some softness, and longs as it is have already been under pressure. What kind of price trends are you working with for this quarter? And could you tell us what is the margin band, since you're talking about margins 14% approximately? Do you think around 13.5% to around 14% margin you can maintain?
See, right now we're in the second quarter, and we all know, during the monsoon times and all, so there's a lot of challenges on the, on the demand side. But more or less, we will be doing pretty decent. But yes, there will be little pressure on the second quarter because of the season. It's always, for all the metal companies, this is a period where we all struggle because of the logistics, monsoon, flood, and a lot of other challenges.
Okay.
And where we are talking from the margin side, yes, there will be a little bit of, kind of changes in the present quarter, because when there is a pressure, there is an effect. But if you see round the year, like from last 4 years, our CAGR on the EBITDA is more than 30%. And if you see the volume growth, or you see on the overall growth on the PAT side, it is more than 20%. So we should be able to continue this for next few years.
Okay, got that. So margins will be in this vicinity, I think so. But though quarter two will be the seasonally weak quarter. Is that correct?
Yeah, a little bit, yeah.
Okay. Now you've also gone ahead, you are talking about some fundraise, probably by the equity route, via the QIP route. Do we expect something in this fiscal year itself? The street would like to know, because it's around 4,500 crores.
So we have just taken the enable on the fund side and all. We are not very firm on this. With the time, once we see an opportunity, any kind of acquisition or any kind of, we just have taken a resolution. So presently, we don't have any concrete plan on the fundraising and all. But in case we find any opportunity, we have created our preparedness for that.
All right, let's go across to Mayuresh Joshi. Mayuresh, Shyam Metallics, a stock that's gone ahead and made a fresh 52-week high. So the ambitious target is what the street is focusing on, because current market capitalization is 30,000 crores. They're doing an EBITDA, at first quarter is around 750 crores odd. So if you annualize that, it'll come to around 3,000 crores, and quarter two will be seasonally weak. So it's not particularly cheap, but the street is focused that they can deliver how they've delivered in the past. What's your view on the stock at around 1,050? Bulk of the good news in the price, or would you still be betting on it?
Morning, Nigel. So I think our take is that the expectations that are now being laid out in terms of the growth map that the management has probably put forth as far as FY31 is concerned, I think seems to be very, very optimistic. Having said that, I think the expectations in terms of being a commoditized player, largely restricted to sponge iron, billets, pellets, and moving towards the value chain with the expansions that are expected, as an example, in the aluminium foil business, the cold rolling mill that they've probably put out, the expansion in carbon steel through Reddys Industries, and the expectations that these value-added products will start adding significantly in terms of the revenue growth that they've probably put through. Over the next 4 years, they're expecting a 2.5 times revenue growth, 2.7 or 2.8 times, if I'm not mistaken, on the EBITDA front as well. And they're deploying a large amount of capex, so around 9,500 in terms of capex that is probably expected to be put in, which probably then means that what they've probably delivered at this juncture in terms of the metal capacity that you already have of 17 MTPA, the captive part is expected to go significantly higher from 460 or 450 to around 750, 780. And the value addition has already reached 52% with the alloy export mix reaching that level. The working capital is very much under control at 9 to 10 days. And therefore, I think the return ratio should largely improve. So in our opinion, again, I think operating leverage should significantly play out over the next few quarters. There will be a quarter where I think there will be some lumpiness coming through. But structurally, I think they're poised for good growth. So yeah, I think we remain optimistic on it.
Another big sector, Mayuresh, was banks, right? All over the place. HDFC Bank sold off hard. ICICI Bank, of course, did much better. What's the Axis sold off? What's the play here? What do you like?
So ICICI had a decent show, I think, but Axis, HDFC Bank were more or less on expected lines of a very soft quarter. Axis, in fact, was a little surprising that they had a reasonable show last time around. So our take is that the large banks will continue to have a stable, steady show. However, I think within the financials, NBFCs is something that we are preferring at this point of time, and good rated quality leadership NBFCs, because our belief is that the advantage that they've probably got in terms of the credit cycle should also play out for NBFCs. The large rated NBFCs obviously have an advantage in terms of access of funds, which are far more reasonable. And because of the parentage that they probably have, the expected cost-income ratios probably stay a little bit muted in that case. More diversified will also mean that they've got lesser exposure to riskier assets. And therefore, Shriram Finance is something that we continue liking in our global portfolios. Our sense is that Shriram Finance is a mix of all these components put together, and it is perfectly de-risked in terms of business momentum going forward as well. So I think return ratios, the expectations in terms of risk-weighted assets remain in favor for Shriram.
Got that. And perhaps the safest of the lot as well. No dearth of capital with that big deal coming in. There's some news on Glenmark. Could be potentially significant. Realty, from what I remember, is a large drug for them. And the FDA has approved an expanded use case for that particular drug. So maybe more details with Ekta in a bit from now. We'll just take a quick commercial break. Mayuresh stays on with us. We'll also connect with Sudarshan and Mitesh for some technical trading ideas coming back in 2.
It's to 208.
Welcome back. You're tuned in to Bazaar Morning Call. Well, it's that part of the show when Hormuz joins us. He's going to tell us about all the big numbers and some that were backed with delivery. Hey, Hormuz, morning.
Morning, Nigel. And finally, it was a day yesterday when the heavyweights put their hand up and were featuring among the top traded stocks on the Nifty 500, be it HDFC Bank, ICICI, Reliance, and even SBI for that matter, made its presence felt among the most traded stocks yesterday. And it was a day that was dominated by banks, both on the upside and on the downside. Let's start off with the laggards first. Both HDFC Bank and Axis Bank were down over 5% each. For HDFC Bank, it was the worst day since Satanu Chakravarti's resignation in March. For Axis Bank, it was the worst day in over 2 years in yesterday's trading session. Both were down over 5%. The 780 put option on the HDFC Bank stock was up. Premiums were up over 270%. Axis Bank's 1260 put option, the premiums were up 120 as well. Now on the volumes front, HDFC Bank's volumes 5.5 crore shares traded well above its 20-day average. Same is the case for Axis Bank as well. 2.5 crore shares traded more than 4 times its 20-day average. Now, while HDFC Bank's delivery volumes were on par with their 20-day average at 62%, but for Axis Bank, 66% of the shares traded were marked for delivery. The 20-day average here is 58%. Now, on the flip side, there were a couple of PSU banks that bucked the trend yesterday. Both PNB and Union Bank both saw gains of anywhere between 4.5 to 5.5%. PNB, of course, a positive result reaction coming in. For the 110 call option on PNB, the premiums were up 155%. The 180 call option on Union Bank, the premiums were up 166% in yesterday's trade. Close to 12 crore shares were traded on PNB. The 20-day average just 2 crore shares, so 6x the 20-day average. Union Bank too seeing volumes that were double its 20-day average. And on the delivery front, of course, Union Bank's volumes were at par, but PNB, because of the significant surge in volumes, despite that, 27% of the shares were marked for delivery. The 20-day average is around 45%. And lastly, moving away from banks, an underperformer yesterday was MapMy India. It was the top loser on the Nifty 500 yesterday, the biggest single day fall in over a month. In fact, the stock has declined in 4 out of the last 5 trading sessions. But between the 3-day stretch between 9th, 10th and 13th of this month, the stock had gone up 27%. And yesterday's session, though, the volumes were subpar because of the fact that close to 5 lakh shares were traded. 20-day average is 12 lakh shares, and 35% of those shares were marked for delivery. And even the delivery volumes were lower than their 20-day average. The stock is a big underperformer this year, down 36% so far, and from its 52-week high, the stock is down over 45%.
Take that point. Thanks a lot for that, Mayuresh. Sorry, Hormuz. We still have Mayuresh with us. Mayuresh, Hormuz did speak about MapMy India, down about 45% from its 52-week high. Do you fancy the stock? What's your view?
No, not at this juncture, Mangala, because I think the fall has been pretty sharp. And again, I think would ideally like to see how numbers play out, at least for a couple of quarters, before we bet back onto this stock.
Right. You in the past liked the jewelry space, and you've liked the leader a lot as against the others as well. But, one segment in the jewelry space which is doing extremely well is the affordable adornment jewelry. So for Titan, the growth driver has been CaratLane. For someone like a Kalyan, there has been Candier. And we have a listed play here as well, Bluestone. Decent numbers coming in, nearly 50% revenue jump, a large part obviously on account of value growth, but same-store sales growth of 39%, average order values, new buyers, not particularly bad. And it's reflecting in the margins as well. Close to around 15% is what the company is reported as EBITDA margins. How do you like Bluestone? The stock now a little over 600 as against their issue price of a little over 500.
I think most jewelry players have reported a very good set of numbers, Mathila. And again, I think the volume growth has been pretty sharp and stellar for most players within this space as well. Bluestone had a stellar quarter, no two ways about it. If I'm not mistaken, they've jumped back into profitability on a comparable basis as well. But our thesis still remains the same. Our sense is that the unorganized market is pretty large. There is obviously playing room for everyone within the space itself. But leadership stocks like Titan, and where the bias probably is because it's part of a portfolio, is that they will gain significant amount of this market share that probably comes through. As you rightly pointed out, I think they're tweaking their product mix as well. I think a large part of the marriage-related jewelry is also coming in, which was clearly missing a few quarters and years as far as Titan's entire product portfolio is concerned. And as they start plugging these loopholes, along with the expectations of having franchisee-led stores, specifically in Tier 2, Tier 3 cities, reducing the capex requirement to a large extent, I think the scope of growth is pretty large with organized players gaining market share, and leadership stocks like Titan might gain quite significantly in our opinion. I think out of the broader market pockets, I think Tangamile is something that we continue liking along with Titan because of the unique business model they've got and the strong positioning probably in the south of the country, which makes it a very good play. I think this stock has a stellar run. So again, this is not a recommendation at this level, but something that we liked a few months back and has worked really well.
Yeah. I got that. So that's the view as far as the jewelry space is concerned. The other one which went up quite sharply is Viatec Vabag. I don't know, Mayuresh, if you have a quick view on this one.
So Prashant, again, a clear disclaimer is a part of our local portfolios, domestic portfolios. Again, a very strong domestic-led story, and the expectation largely is that as the infra capex spend continues, the kind of orders that will keep on coming through will be significant. They're already sitting on a decent order book as we speak, and therefore I think execution is going to be very, very material as far as Viatec Vabag is concerned. So I think the revenue visibility is probably there. The orders are with reasonable margins. So if the company is able to execute well, we have a sense that I think the numbers will just keep on coming in on the balance sheet. So again, I think continue holding the stock and remain optimistic.
Okay, all right. Mayuresh, thanks very much for that. Thank you for joining us. Good speaking with you here on CNBC TV 18 as always. We'll take a break. We are back. We'll talk about the rupee, the flow which has come in, the RBI, FCNRB and other schemes which have taken in $20 billion as of yesterday's RBI notification, circular rather. So Dheeraj, name of ANZ Research, is going to be with us with a quick view on that. I think 6 minutes away from the rupee market open, and more coming up in just a bit.
For fuel, food and
Welcome back. 18 minutes to go for the market open and 4 minutes to go for the pre-open session. Sudarshan Sokani and Mitesh Thakkar are with us with what they want you to do as we start with another session. I think the GIFT Nifty open was a big gash. It's still a lower start, but I think it's moderated. 70 points down. Sudarshan, let's start with you. What's the view and what would you ask viewers to do?
View is that the Nifty is in a trading range. Within that trading range, it is giving us very brief or small upward bias. See, the lows are keeping on increasing. So we have a pattern of higher lows, but the compression will break out on the upside or downside. It's difficult to say. I'm assuming that sooner or later we'll have a big move on the upside because that's what the trend suggests. So for today, remember, it's also weekly FNO expiry, and for the recent weeks, FNO expiry days have been treacherous. So keep a long trade if you have one. Keep a stop at 24,000. Do not enter today. Maybe tomorrow could be a better day, simply because markets are choppy and FNO expiry is there. So maintain long positions with a stop at 24,000.
24,000 stop, and it's been the up move is there, but it's so slow, right? Taking so much time. But you know and that range remains. Mitesh, what about you? What would you recommend?
Yeah. So
I was actually hoping that the strong close on Friday will see some follow through, but the moment Bank Nifty started open below 58,400, 450 support, we kind of pruned our long exposure. I think the indices, they are not negative, but that follow through strength which is required to see a trend develop into a stronger up move is kind of missing. So I would still wait for the Bank Nifty to get past 58,400, or you get it at slightly better entry point from current levels, which is, as Sudarshan also rightly said, around 24,000 if you get it. 24,000, 24,050 is an area where I would want to explore into some kind of a long position on the indices. But otherwise, the action is purely into stocks. The index, both the indices are, moving with very, very slow kind of a momentum.
All right, indices moving with slow momentum, but a lot of stocks can't say the same for that. They're moving with big momentum on either sides. Mitesh, your stock calls for today before we go across to Sudarshan for his calls?
On the stock side, I have 3 buys and a sell. On the buying side is Hero Motors. Since we might have a negative opening on the index, gap down, I think if it starts trading above yesterday's high of 49.8586, buy with a stop at 49.35. Look for targets of 5,100. NHPC is a buy with a stop at 79. I would look for targets of 85 here. Buy on Colgate. See, yesterday we had a buy on Britannia, and FMCG is generally looking strong. Colgate needs to clear the recent high of 21.24, 21.25, which plays just below that, 0.5% below that. So if it starts getting past 21.25, buy with a stop below 2,100 for the first target of 21.80. And one sell call, that's Axis Bank, big gap down yesterday, could see follow through. So that's a sell with a stop at 12.75 for targets of 12.15.
Right. Colgate has been doing well in yesterday's trading session. Let's see whether it continues the momentum today as well on Mitesh's buy list. Sudarshan, your calls on individual stocks?
Well, let's see what Colgate does, because it's also on my buy list. So Colgate is a buy with a stop under 2075. Bank of Baroda is a buy with a stop under 250. Power Grid is a buy with a stop under 285. I have Glenmark Pharma, which is a short sell with a stop above 2285. But broadly, you were right earlier. Mid caps are doing things which the Nifty is not doing.
Right.
I got that. Thanks very much for that, Sudarshan and Mitesh, for those trading ideas. We'll come back in a bit from now. I think the first rates have come through, and we should have the Nifty and the Rupee as well. So, okay, the Nifty, we'll give it maybe a minute to settle in. But the dollar rupee at about 96. Do we have the first rate yet? 96.41 compared to 96.45. So it's a small 4 paisa uptick coming through on the rupee against the dollar this morning.
The early rates, it's very early days, but the stock which is actually doing extremely well in pre-open is Paytm. That's the one that should come up for you. It's settled about 10% higher. From its lows, the stock has already seen a big move. Decent results coming in. The fact that they've postponed their bonus issue is something that everyone will be taking note of as well. Not sure whether that changes things fundamentally or not, but it's up around 10% to start things. But let's go across to Sudarshan once again. Sudarshan, do you have a chartical call on Paytm? It's up around 24-25% this month and has gained some momentum. Is there something on the charts that suggests a tradable move?
Yes, Paytm had a tradable move, and with a disclosure, I think my algos have some buying in it. But I would expect Paytm to have a steady up move. This is not today; is not a good time to buy, but buy every time there is a dip.
Okay. All right. Got that, gentlemen. We'll come back to you all for your 9-10 call. Well, for the time being, let's move on. Let's talk about the cement pack. And let's talk about Ultratech Cement. We have with us Girija Shankar Ray, the research analyst, institutional equities at Nirmal Bang, who joins us on the show. Hi, Girija. Thanks a lot for joining in and good to have you on the show. Well, for Ultratech Cement, what stood out? Most on the street were factoring in, cost per ton moving up by 200, 250 rupees or even more for Q2. Now, they have surprised positively, right? They're talking about 130 to 140 rupees. Is that a big beat for you?
What I believe the cost structure for Ultratech for this first quarter FY27, despite having the rising fuel cost, packaging and kind of diesel price, what I see, the cost per ton was limited impact on the Ultratech cost structure because of kind of fuel mix that they have. So going forward, also I do not see much more cost impact on the Ultratech cost structure, even though there is a hike in energy cost and all.
Okay, all right. But what, according to you, is the outlook for Ultratech Cement? They're growing at a very fast clip. The costs are, they're managing to keep a lid under it. And as they mentioned, prices as well will be fairly stable in Q2. What is your reading of it? And first, your call on the big boy, Ultratech Cement.
Yeah. See, for my, I'll tell you, getting, become 242 million ton by FY28 is quite remarkable, and the kind of capacity addition Ultratech has added over the years through organic expansion or inorganic acquisition, that is quite remarkable. And the most importantly, the capacity utilization. And it has been proved that Ultratech is a company always, they are very efficient enough to take a distressed assets and make it efficient to that, up to that Ultratech efficiency level. For example, India Cement, you can see India Cement average capacity utilization is somewhere around 70%, which is above the average capacity utilization of all southern region, I can say. So going ahead, Ultratech outlook looks very good because of the kind of capacity additions and ramp up of that capacity, and supporting by the kind of the demand is coming in second half FY27. Why I'm saying demand is coming in FY27 because the pent up demand from FY25, 25, 26, it's still there, and which is expected to come in second half of FY27 onwards. Even FY28 will be a boom, I can say, for the cement volume perspective. Coming back to your pricing, see, there is always a kind of pre-monsoon price hike has to happen, but this time this has not happened. But again, I believe second quarter will be little subdued. But in terms of volume, I believe it will be still it will be good volume in second half of for second quarter FY27, and if any price hike we are expecting, that will happen in second half of FY27, not before that.
Got it. In a monsoon quarter, if you could at least have prices stay stable or not fall too much, the street will be very, very happy about it. What is your top pick in the cement pack?
As you mentioned, this price, I'll tell you, post GST rate cut, the prices are in that place where, I do not believe any kind of significant correction from this level, which is a very good. The prices are stable, and I'm expecting this has to be stable, this momentum to continue. And the top picks are Ambuja, Birla Curve, Nuvoco, and JK Lakshmi at this moment.
Got it. Okay. Now, going by the results that we have seen, geographically, what are you going to be most bullish on? Nuvoco is one of your top picks. What is the target price you have on Nuvoco? Because that's been a big underperformer, but they seem to be getting their, or they seem to be getting the piece together, at least as per the last quarter's numbers. So your view out there. I'll tell you what the problem with Nuvoco is. I personally as well have visited Sanghi Industries, and we saw that the Adani Group went and bought Sanghi Industries. But ramp up of that asset is very, very challenging. And now the street is waiting by to see what can Nuvoco do with Vadraj asset. That's the big trigger for the stock. Please go ahead. Tell us your reading.
See, the thing is that Nuvoco, if I consider from past 3 years, or even in fact from past 6 quarters, if you see, every quarter their capacity utilization has improved. Okay, so somewhere around 80%, 82% Nuvoco is running right now. And coming back to the Vadraj acquisitions, this capacity has to start commissioning in first, the second quarter of FY27, third quarter of FY27, and in between first quarter of FY28. But bit earlier, they have started, ramping up this 2 million tons out of this 6 million tons. So that is quite significant story, I can say. And getting into Gujarat market with Vadraj Cement is going to help this company like anything. And in fact, I'll tell you, this is a eastern and northern region player, and eastern regions are having higher competitions from other regional players as well as larger players. Still making 80-85% kind of capacity utilization is very good, I can say. About the pricing you saw with the results, there is around 7.5% kind of realization growth. So overall, I can say they are having a very good market shares and they are having a very good brand and market positioning in eastern and northern regions, including their premium segment is also helping them.
Okay. All right. And you're more bullish on the eastern region. If I look at markets like Odisha that, for many years, it didn't grow that much. First 6 months, the growth there has been very strong. And there's hope that even West Bengal, we'll see once the government has changed, more focus on businesses and on industry, we could see a spike up there as well. Would you be relatively more optimistic on East India, given that companies like Birla Corp that have some exposure out there, Nuvoco has exposure there as well. So geographically, do you expect East to come back into play now?
Even East as well as Central, both are going to do well. In fact, I'll tell you, for the first quarter of FY27, if you see the volume growth, so far the companies who has reported their results, volume, let's say for JK Cement, 18% volume growth, Ultratech 12% year-on-year volume growth, Nuvoco 18%. So this kind of double-digit kind of volume growth looks very, positive. I can say FY27 is getting started with a very good note with terms of volume, despite having the election impact and kind of, summer heat and all these things. But still, you see the year-on-year volume growth is very good in this quarter. And even in fact, the second quarter, FY27, the monsoon quarter, the volumes will be relatively better than last year monsoon quarter, I can say. So Eastern, as you mentioned, there are a lot of things that are going to, infrastructure projects are going to happen. So that is also going to support the volumes.
Okay. And why didn't Ultratech Cement figure in your top picks?
See, as of now, the valuations at this moment, I say valuation is little higher, I can say. So that might be that is the only reason. So where I see, it will take few more quarters to see how exactly the company is going to work out.
Okay. Girija, it's been a pleasure having you on the channel. Thanks a lot for joining in and giving us those views. We look forward to chatting up soon and also getting in your picks and views on the sector. Let's go across to Mitesh. He's back with us to give us his 9-10 call. Mitesh?
Yeah. I'll go with a buy on NHPC for targets of 85.
NHPC, that's the one. Target of 85. Sudarshan, what about you?
It's Bank of Baroda. Buy Bank of Baroda with a stop under 250.
Super. Thanks a lot for that, Sudarshan, as well as Mitesh. Well, let's get some brokerage calls in. Brokerages have initiated calls on a couple of companies, and Hormuz has gone through the details on that. Hormuz, tell us the rating, target price, and key takeaways.
The two names where coverage has been initiated, and the interesting bit in both of them is that both of them have received their highest target on the street in view of this initiation. First up is Jindal Stainless, of course, as an initiation with a buy rating, a target price of 1,000 rupees, which is the highest on the street. 4 factors that Goldman Sachs has highlighted in its note. One being the fact that it is best positioned to gain from an increase in the domestic stainless steel consumption, and the fact that it is increasing its share of value-added products as well that will contribute to its profitability going forward, and it has sufficient balance sheet room to double its capacity from the current levels that it has, and the valuations too, which are reasonable in terms of the current or in terms of the ROE that is being projected for the company going forward. And they also say that Jindal Stainless will emerge as the second largest stainless steel player in the world after the capacity expansion, which includes a 1.2 MTPA steel plant in Indonesia and a 4 MTPA greenfield plant in Maharashtra, which is in the works. The second one is a UBS initiation on Sona BLW. Here too, the target is 830 rupees, which is also the highest on the street. They're saying that they are entering a new growth phase courtesy of strategic investments, new partnerships and initiatives which are expanding their total addressable market, and they are expecting their emerging business to scale rapidly over the next 5 years, even as the traditional business continues to grow at its pace, and as a result of which they are expecting revenue and earnings CAGR of 20 to 25% over the next 5 years, which is going to be supported by an increasingly diversified revenue mix. So positive calls coming in on both Jindal Stainless and Sona BLW.
Interesting last couple of initiations yesterday. Sansera was, I think, one from Goldman. Today, Jindal Stainless. So, I mean, actually, if you just see the coverage universe across sell-side brokers, it's kind of coming lower and lower in terms of market capitalization. That is quite interesting. Otherwise, you don't see that very often. And names like But of course, I mean, I think it's also demand from the buy side, because the kind of funds, foreign large global funds, which have bought into smaller names, in the recent past, in the last 2 months, and a long list of it. So perhaps a fair bit of demand for research, for institutional research more than anything else, which is coming through. Guys.
Just one more word on Jindal Stainless. The author is Amit Dixit. He's come out with this note from Goldman Sachs. But I'll tell you what, I think when the stock was in double digit as well, he was positive at that point of time. He was with other brokerage houses. So now he's...
This is the same Amit Dixit?
Yes.
Oh, I see. Okay.
Right.
Amit Dixit was earlier...
earlier with a couple of companies.
Philip and...
Yeah. No, I don't think Philip. I think maybe ICICI Securities. Prior to that, Nuvama as well, I think. So the brokerage names I may be mixing up, but I recall that in double digits he was positive on this, and now obviously he's looking at defense as well, so he's positive on that. But Mangalam, tell us about the other stock you're looking at.
Yep, I'm looking at Bluestone. The stock's up around 12% this month itself. In the last, few months, it's up around 30% from its lows of around 400 rupees. It's rallied about 50% already. And now we have numbers to back that as well. Pre-open settled about 4% higher. 50% revenue growth is what the company has reported. 737 crores versus 429 crores. We've seen a jump in the EBITDA as well from 55.5 crores. These are reported EBITDA numbers that the company's posted. 108 crore is what it's turned to, which means a margin improvement of nearly 350 basis points. We've seen the net profit as well come in at 6 crores. This compares to the loss that the company reported same time last year at around 35 crores. Yes, they've attributed that to about 24 crores of inventory gain as well. Adjust for that, it's still a good performance. Same-store sales growth at 39%. Customer base increased by about 21% and studded share at around 57% as well. This puts it pretty much in line with the growth that we've seen for CaratLane and Candier. 50% as against them, who reported around 42 to about 112% on a low base for CaratLane as well. Seeing some green on Bluestone, and that's exactly where it has settled as well. Prashant, a few moments to go for the market to open.
Well, absolutely. And I think let's just, we'll focus on all these names, but as always, we'll start with the Nifty. We'll look at the Nifty 50 constituents. And then, of course, we will, look at some of the other broader market movers as well. First rates should be with you shortly. And the Nifty, I think, is absolutely flat, 24,216 at the end of the pre-open. I think we should start there. The Nifty Bank is down a little bit, but not by very much. The small cap index yet to show us a rate. The mid cap index will, I think, is ticked into the green at about 62,800. So this is largely unchanged on balance after... and now everything is coming back into the green as we look at it. So 24,240, no real thrust one way or the other. Nifty Bank is up about 0.19. The Nifty 50 heat map, let's just go straight to it. Look at what the 50 stocks are opening up like, and then we will look at broader markets. So you've got Ultratech, which is the top gainer. Tech Mahindra and Eicher follow behind. There's ICICI Bank, which is doing well. And, HDFC Bank is stuck right at the last spot, like yesterday when we opened. I think it's down the most in terms of absolute cut after yesterday's 5%. I'm not sure if there's a big one, unlikely, but Eternal, Maruti, Sun Pharma, some of the others which are opening down. But, broadly, over 35 stocks are higher and about 15 odd names, less than 15 names are in the red right now. So it's, it's 5-point change on the Nifty at 9, with about a minute into market open this morning. Guys.
Well, the broader markets are doing a lot better than the frontline index, which is absolutely flat right now. We have about 1,300 stocks which have opened in the green. This compares with less than 700 stocks which have opened in the red. And some of these initiating coverages doing well for the stocks themselves. Jindal Stainless, we had Sudarshan speak about that. The initiating coverage coming in from Goldman Sachs. The stocks opened straight off the bat about 3% higher. We've seen some traction on JK Cement as well, post their numbers. HFCL continues its march forth. It's up around 2.5% at the open. And then on the way down, we are seeing some bit of a decline for names like Dixon Tech, Torrent Pharma, and Kalyan Jewellers. But it's beneath the surface where there are big moves that we're seeing. Asahi Songwon, for one, has opened about 7% higher. So the chemicals pack doing extremely well. This one, this morning has a decent amount of, volumes backing that. That's Asahi India. We're speaking about Asahi Songwon, which is about a 290 rupee stock right now. Soba, good performance coming in for them as well. Revenue up 50%, margins improving from 2.8% up to 6%, even though for real estate pack, it's the quarterly updates that matter more than the reported numbers. But the street's taking this with both hands. Yash told us that Canara HSBC Life, the VNB margin expansion is something that the street would like. And that's exactly what's happened. It's up around 5% at the open. Vectors continues its move ever since Sunil Singhania's fund went ahead and bought that stock at around close to sub 170 levels. Now the stock within 3 or 4 trading sessions from them has surged to about 218. So it's a big move that we're seeing out there. And Bluestone, we spoke about it. It's done well so far in terms of reported numbers. The stock had already rallied about 12% going into these numbers. So we're seeing 177 basis points up move on that stock versus yesterday's close. On the way down, the two stocks that stand out, transformers and rectifiers, down about 4%. This, as the margins compressed, the net profit fell for the company. And then Wanbury is the one that should come by as well. Some regulatory action. The US FDA has issued Form 483 with 6 observations for their Andhra Pradesh facility. In pre-open, that stock had opened lower. Now it's seeing a bigger knock, down about 6.5%. So a bunch of moves taking place in the broader markets.
Well, that's right, Mangalam. As you took that market check, the market, in fact, has moved into the green. The Nifty has seen a good recovery as we speak. Few stocks that are bobbing around. Karur Bank, that stock is up close to around 5%, so big move out there. Cross, KROSS, that's a newly listed company. That stock as well is up close to around 4% as we speak. CMPDI, the stock that we covered in top 10, the numbers are quite good amount of revenue growth. There was margin expansion as well. We'll try to get the management during the course of the day to tell you what's the trajectory ahead. But CMPDI as well as another stock, I think, that opened up with a 2% gain. For the time being, it's more or less flattish. Mild positive take. Tina Rubber, not a stock we talk about very often, but I think it came out with a set of numbers. That as well is moving higher on decent volume. So that's another stock that's up close to around 10% and it's coming in the top winners list. Ace seems to have played an ace. That stock, in fact, is up close to around 5%. Good move on strong numbers, I think so. So that one up and about. Now, that point on transformers and rectifiers, the numbers are very disappointing. The stock actually opened up with a cut of 8 to 9%, and it's seen a bit of a recovery from the day's low. Let's see whether or not it's sustainable. And one stock, that's been catching your attention for the last few trading sessions, well, that one is MTAR. On a day-to-day basis, it's just moving circuit to circuit. After seeing that one-way move, and as we speak now, the stock, in fact, is down close to around 5% yet again. And in the last 1 month, it's 34% down. Painful one out there. Pending sell orders is what I can say. So keep an eye out on that stock as well.
Well, I think, the markets are up about 15 odd points now. By the way, the Tina Rubber name, right, I think is up 50% this year so far. And the numbers may be the latest. In terms of why the stock is up. Yesterday was up 10%, I think another 10% today. Actually make that 70% for the year. So closed last year at 785 and stocks at about 1320 at this stage. What else? Sobha, I think we mentioned, there's a 4% pop coming through. Action Construction Equipment has been moving up steadily. That is up another 5% today. I think had a decent day yesterday as well. The AMCs should all be in focus, right? I mean, you got HDFC, AMC, Nippon, ICICI, UTI. There's the SBI funds listing, which should be a good one, by the way. And valuations were pretty palatable, and especially compared to some of the other listed peers out there. So I think let's see what happens here. Gabriel is up about 2.5. KPIT Tech is up 2.5. Chennai Petro is up about 2.5. But it's a quieter start. JK Cement, which Nigel was talking about in the morning, by the way, you'll hear from the management a little later, 4% higher on JK Cement this morning as well. So that's the start. And we'll come back to some of the individual movers as things pick up momentum. Some visuals coming through from the SBI funds, ceremony, the listing ceremony. You can sort of, go full frame, take a quick look at it, and I think that is the new head, the new MD and CEO at SBI Funds Management right up there on stage. And I think you've got the representatives from, the other partner of SBI Funds, which is also, by the way, selling an equal amount in this IPO. It's a complete OFS, by the way. SBI is selling a certain bit and the equal bit being sold by the foreign shareholder as well. And I think the SBI chairman there, Mr. Sethi, right there at the event. So we'll go back to that in a bit from now. Well, Rajiv Batra is with us from JP Morgan with what he thinks is happening right now as far as markets go. Rajiv, it's always interesting to catch up. Thank you very much for joining us here.
Good morning, Prashant. Thanks for having me back.
Rajiv, so we are. Is this DeepSeek 2.0? I know you invest in. You look at markets around the region pretty closely. You look at US tech as a theme, and you advise on all of this. We got pretty last 6-7 days. We got between 15 and 20% corrections in Korea and Taiwan. They're still up a lot on a year-to-date basis. But what do you make of it? And are you seeing any inclination for large foreign funds to allocate to markets like India?
So Prashant, I will say that's a buzzword which has now started floating around since middle of last month, that whether it's a DeepSeek 2.0. But when you look into the market anatomy, there are lots of other reasons why this correction happened. The one broad-based reason have been the risk of mode that came in picture post, you can say, the US-Iran kind of a friction that has started. So that led investors to start trimming some of the risk from their book, and people will sell what they own. Sadly, the most part of the ownership was in a crowded space like tech and AI hardware. So that became the ultimate reason. Beyond that, we saw some concerns started coming on whether there's an excess compute in the markets, and some of the CSP hyperscalers guy want to sell, and that puts the question mark on whether there will be more demand for compute in future, and that means whether there will be more demand for the hardware stake or not. Finally, last but not the least, the concern started arriving that markets want to move from the frontier model to more like an open source model, and hence this is the reason why adoption of you can say inexpensive China AI models start becoming more like a rage. Couple of the names are already listed on Hong Kong Stock Exchange. You can look at the performances of the stock. But I will say it is too early to say whether it is going to be a DeepSeek 2.0 moment. We can already see one of the newer model launch. The company itself is coming out and saying that we have reached a limit and we don't have enough GPU or a compute capacity to accept more kind of a subscription overall. So it is easier said and done whether we are going in that space, but answer will come pretty soon, when from tomorrow onwards some of your top 5 and 7 CSP or hyperscaler companies start reporting. If the capex forecast is in line with my analyst estimate for 2026, 870 billion, more than $1 trillion in 2027, then I don't think so there's an end to this trade. There's just you can say a pause in this semiconductor or tech hardware trade, which means this is a brilliant opportunity for my investor to go and buy the dip, because the correction has been fully led by derating. It has not came on the back of downward earnings revision or any disappointment in terms of an earnings. And if market goes back to earnings growth, earnings revision card, then I believe North Asia is still leading the whole emerging market space in terms of earning growth.
You spoke about buy the dip this morning. The Korean index is up around 4.5%. Obviously, this after comments came in from the regulators and leaders out there as well, and some of the steps that they're taken to curb the sort of volatility that we've seen in the market as well. 4.5% higher. It opened about 2% lower. So from there, it's a serious up move that we're seeing out there. But Rajiv, if your belief is that this dip should be bought, does that mean that India will continue to underperform? What's your call on India from here on?
So right now, in case of an India, we do believe that absolute return are going to be positive. But it will be a stretch to expect that outperformance what India has been given during the month of June and what India has delivered month to date overall can be sustainable throughout the end of this year. Because as I've said earlier, if the story is earning growth, then if I just look at the second quarter for this calendar year where India earnings are also going on, expectation X energy from India cohort is 11%. But in case of an emerging market, that kind of a number is 91%. And 91% earning growth is coming from the cohort of Korean memory space, Taiwan tech space overall, which is quite a stretch for any other emerging market, not just India, even other non-Asia market to beat that kind of a mark. And hence this is the reason why outperformance will be a question mark, but absolute return can make a comeback in India, and also looking at the very high volatile episode of sell down over the last few weeks, India has now started appearing as also a AI hedge trade, especially in a scenario where India has started delivering on earning growth, not just on the large cap, but on the broader market basis.
Got it. Hi, Rajiv. Always good to see you in. What about the earnings estimates? I recall you all were at around, I think, 13-14%. You all had trimmed down expectations to around 11%. Going by what you have seen in the past quarter, do you think there is a downside risk, or do you think we'll get that double digit that we were hoping for?
So nice question, Nigel. I will say that the good part of the earning growth is when I look at a consensus number, it is not as scary as it was when I appeared on your show last time. Last time, the consensus earning growth number for, you can say, calendar year 2026 or FY27 was in the range of 15 to 16% cohort. Right now, that number has declined to 10 to 11%, which is in line with my estimate. No doubt, there's a pressure building because analysts have still not revisited their calendar year 2027 or FY28 number, due to which that number have now increased on consensus side to 18. But in case if you can say factors of production like oil remain well behaved, commodity price remain well behaved, we don't see any kind of a monetary policy tightening, then even for FY28 or calendar year 27, 15 to 16% will be on the card. And that set the stage for India from the next 12-month perspective, where we can get a return in a high teens kind of an handle.
Oh, that'll be beautiful. Been a bit of a painful ride for the last 18 to 24 months. If we get those mid-teens earnings growth, well, the street will be very, very happy. What about preference in terms of the Asian markets? I think we were positive on China as well as Malaysia, and then India came lower down in the pecking order. What's the view right now among Asian markets? And what about the FIs? A couple of those problems are getting fixed, right? The RBI has taken measures to stabilize the rupee. Hopefully, earnings growth comes back. Your view, are the FI flows set to turn for India? So give us your answers on both these two, Asian markets and FI flows.
So in terms of our recommendation, we still continue to prefer North Asia over South Asia. In South Asia, it includes both India and ASEAN. The reason behind keeping South Asia as a number 2 over here, because our only problem is not just the earning growth. Our problem is also the upcoming headwind which market is going to face. Remember, most part of the South Asia economies are the deficit country. And we are in a scenario where the US rates are higher, dollar is getting stronger. So even if the market does not have inflation concern, and if you need to protect your currency, central bank may need to change the stance if the higher US rate and stronger dollar become a persistent problem overall. So that becomes my near negative, not just on the valuation side or the risk premium side, but even for earning growth if monetary policy needs to change the stance. The second one is El Nino. I know it's not an immediate concern. It will develop somewhere by the fag end of the year, like November, December, and January. But once it start becoming the mainstream story again, initially it will play from the risk premium perspective, and later on, when the impacted sectors earnings starts getting revised down, that's where the earning growth impact will come. So hence, this is a reason why initially I told I'm circumspect about what consensus is now forecasting 18-19% next year, because these are some of the headwinds which will take earning down. In case of a North Asia, you have a clear window of what is happening, like both Korea, Taiwan, and now even China, in terms of a hardware capex space overall, where there's an end demand. And we are going to see whether the CSPs comes out and give the quantitative guidances for not just 2026 confirmation, but even for 27, and some bit of a subjectivity on 2028, which keeps on moving my earning growth number higher. Interestingly, if you will also compare earning growth ex IT and industrials for both the cohort North Asia and South Asia, even in that segment, North Asia still have a positive growth differential to South Asia. So this is the reason why the pecking order still sit with Korea, Taiwan, China as an overweight, India as a neutral, and selective, you can say, some preference in ASEAN. Talking about the last part of the questions, which is FI flows. So no doubt, we have seen 40% drawdown in the inflows number at an emerging market level. Back in April, YTD inflows in EM was close to around $85 billion. Right now, that number is down almost to around $51 billion. Interestingly, this drawdown has impacted much more the North Asia cohort compared to South Asia, or you will say India also. As I've said at the start, investors sell what they own. When you look at foreign ownership of India, it has almost declined from a peak level of around 18, 19, now to around 14.7, 14.4. So the propensity to sell enough from here is reducing. And that is also good news, because if the foreign sell down slow down in India also, compared to what it was the trend in the past, it means there's a lesser pressure on my domestic investors, both long only and retail, to absorb the FIs sell down also at same point of time when they are bailing out the primary or the IPO market also. So all in all, I will say it's not that bad situation when we look at internals of NSE 500 also. Foreign holdings are going up for mid caps and small cap. It's the large cap sell down from the foreign investor what is hurting India.
Okay, all right. Rajiv, we'll leave it there. Thank you very much for joining us. Good speaking with you. And I think good explanation and good context backdrop to what's happening North and South Asia. And of course, I mean, North's done phenomenally well. I think those markets, Korea, Taiwan, still up 50, 80%. On a year-to-date basis, even after the pullback that we've had. And of course now, there's of course also China and what's happening there. China tech seeing renewed interest once again. Thank you very much once again here.
Thank you.
Okay, all right. Well, HSBC has turned more constructive on India, upgrading its stance to neutral from underweight. HSBC has also raised its Sensex target to 84,000 from 80,500 earlier, reflecting a more optimistic macro outlook. What's driving this shift and what does this mean for Indian markets and the economy? We have Harold Van der Linde. He's head of Asia Equity Strategy at HSBC, and Pranjul Bhandari is Chief India Economist at HSBC. Harold, great to have you with us here. Pranjul, great that you could be here with us in the studios. Thanks very much. Let's just start with what is new, which is that number which we got from the Reserve Bank of India, Pranjul, because that's an important thing in the mix. The big concern the last time we spoke was foreign outflows, and then we got these measures from the Reserve Bank of India. And RBI now tells us that these schemes in total have got us about $20+ billion, 17.5 odd from the FCNRB scheme. And the general sentiment is that this means that, you'd basically end up with, a much larger number compared to what people were anticipating till yesterday, day before yesterday. We had Federal Bank yesterday who said, well, the number could be $55 billion. Perhaps looking at the disclosure yesterday evening, it'll be higher. So just wanted you to market. What is your expectation here, Pranjul?
Yes, thanks for having me. So, we are broadly cautiously constructive across all asset classes over the next 2 months, equity, rates, FX. And I think one of the big reasons for that is, this FCNR number. And what gives us confidence is the update that we got last night, that there have been inflows which have been quite strong and fairly front-loaded. It basically gives a sense that, it's off to a good start, despite all the problems that, borrowing costs are very elevated at this point of time, which is true. And our sense is at this level, I think it's going to be even higher in August. So broadly speaking, our estimate is that, we could get, about $50 billion from the FCNR alone in this entire sort of 3-month window, and then take about $10 to $15 billion more from ECB and all of that. So $60 to $65 billion inflow, which will really help the BOP and put it into surplus. Now, what this means for different asset classes is that a lot of this money, the $17 billion, is yet to be swapped with the RBI. And I think some of that is going to happen this week. And as that happens, domestic liquidity will increase. Once domestic liquidity increases, it's generally positive, for bonds, it's positive for equities, maybe with a lag. And I think this is going to be a theme that will continue over August. And that makes us cautiously constructive. I want to sort of re-emphasize why I say cautiously constructive. Why cautious? Because there are two other unknowns, and one is where will oil prices go? I think anywhere $80 to $85 a barrel India can handle, but if it's much higher than that, then it starts really hurting. And the second thing is, how will RBI behave? All of this money is coming in, FX reserves are going up. Now, will it use all of these dollars to stabilize the currency, and how much? And what will it do with the liquidity? Will it allow it to float, or will it take it out? And if it takes it out, will it be a crude mechanism and jerky, or will it be very gentle? So all of these are sort of like second, third degree things that I'll be looking at. But generally speaking, I think positive for the next 2 months.
The rupee, Pranjal, and that's where the cautious sort of word comes in, the last couple of things that you mentioned. But for the rupee, sentiment has been poor, right? Why is that? I mean, is it because markets thought that it'll get us a smaller number, but now we know it's a bigger number? And perhaps, as you said, $65 billion, right, in total.
Sentiments were actually getting quite positive, I would say about a fortnight back. But then suddenly oil prices went up and the rupee is very sensitive to that. And before that, we also had a lot of NDF maturities, and RBI allowed these maturities to happen. So that also, pushed dollar rupee up. So I think these have weighed on the rupee. But going forward, if you're going to get good inflows and markets gets the confidence that RBI has a good amount of FX reserves as ammunition, which can be used in the future, then I think that would generally be positive for sentiments around the rupee over the next month or two.
Dollar rates have also moved up lately. You think that'll have an impact to these estimates, or you think you're factoring all of that in? Just yesterday we had, as I said, Federal Bank saying their feedback was it's slow, and they have about a 3% market share in FCNR. So I'm just asking whether, and these schemes typically are back-ended, or because you said this is looks like it's front-loaded, but I would imagine that a lot of people try to get in towards the end rather than the beginning. I don't know, just your thoughts.
Well, there are no real trends. In 2013, most of the inflows came in the last few weeks. But remember, 2013 was a fairly new concept. This time we all know about this, so people have been more proactive. So it's quite possible that it's going to be front-loaded this time. It's hard to say, but I do agree with people who say that borrowing costs are high, and a lot of people were thinking that this could get us $100 billion. Maybe it's possible, but I think it's a little exaggerated from my perspective. Maybe not that much, but I think we're sort of out there that we can aim for a $45 billion to $50 billion given what has happened in the first month. Coming to your point on what's happening to the dollar and dollar rates, look, whenever the dollar appreciates, it's a bit of a problem for emerging markets because of problems with outflows and all of that. But this time, around the same time, we have all of these FCNR inflows. So in a way, at least for now, we can offset and overcome some of this dollar strength problem that would otherwise have hurt us a lot.
Fair point. I guess, the other factor that we will track is whether there is a lot more FII inflow coming into our market or not as well. So let's go across to Harold van der Linde. Harold, you've upgraded India after being neutral or underweight rather since April. The obvious question here is it a tactical move or is it something structural which is changing in India? Especially given since then, volatility has only increased. We're back at around $88 per barrel on the oil. And then you did flag IPOs as a risk as well, IPO supply. And in the second half of this year, we have two major ones. There is the NSE and Jio Telecom as well.
No, that's right. So I hope it's tactical and it becomes a bit structural as well. So I'm just listening to Pranjal there. Hello, Pranjal, by the way. I'm listening to Pranjal there. And that liquidity story, what's happening with the currency to a certain extent, that's positive. Oil is a risk that hangs over many markets, India including. But if we take that off the table for the moment, I think India is starting to look a little bit better. You have on the earnings side, things looking a little bit better. We see small earnings upgrades. We don't see the downgrades too much. I think consensus is a bit too high, but the actual earnings numbers look a little bit, still look a little bit better. Have a bit more confidence into that. Now, your valuations in India look better. We know that a lot of foreigners have already sold, so there's not that much more that they can actually sell. And I think also the dynamics in the region are changing a bit, right? So we've seen that Korea is off. There's a little bit more worries, or I would say some issues on the semiconductor trade. Not so much on the earnings front there, but just on the momentum there. So on the margin, that's all positive for India. So it's a tactical sort of move that we're making. It becomes more structural if we see that the earnings growth story is going to improve further in India. And if we don't have a situation whereby interest rates need to move substantially higher because of oil, all the things that Pranjal was talking about. So if we just say, okay, let's assume for the moment that's not going to happen in any dramatic way. Oil is not going to, say, shoot up well over $100 for the moment, or inflation is becoming a serious problem again, that interest rates need to go seriously high, and that liquidity that she was talking about will be drained out. Then on the margin, actually, India, it looks a little bit better. So we decided to upgrade.
Earnings is something that you'll be tracking fairly closely. There is a downside risk here as well. The streets anticipating around 15%. So the question is, where do you see this downside coming in? What sectors do you think is the street a little more optimistic about than it should be?
Well, depends a little bit, but if you actually, I think that actually the consensus earnings are starting to have a little bit more sort of confidence with the consensus numbers, because some of the high frequency data that comes out of India is starting to improve as well. I think the banks look okay, probably on the consumer side, still here and there some risk with individual companies, but for most of the domestic companies, I think the earnings look more realistic now. And that's to a certain extent, as I said, by looking at some of the high frequency data that comes out of India, that starts to look a little bit better as well. So the earnings look, I feel a bit more confident with those numbers.
Hi, Harold. Good to see you. Ben, what about the flows picture? As you said, the FIs have been selling India lock, stock and barrel, right? And at least those outflows have reduced to some extent. And going by what Pranjal said, as well as what most economists are talking about, there could be some stability on the rupee. Otherwise, anyways, irrespective of the index move, they were anyway making losses. So there is some stability on rupee and maybe some kind of a pullback that will help them. Do you think we should be bracing for some kind of FI flows, after the kind of outflows we've seen in the first half of the year? Could the tide turn?
I think purely from an equity point of view, there are three key issues that are important here. It's the earnings. We just spoke about that. We feel there's a bit more confidence on that. Secondly, it's the currency. And that looks a little bit better as well than, say, 3 months ago. So that's a good thing. And thirdly, you need sort of global/regional trades to come back to India as well. Now, we've seen that foreigners have already sold India, so there's not that much further that they can actually sell. They're on sort of historical low levels in India. Where's that gone? Of course, that's gone to Korea, that's going to China to a certain extent as well. So if we see that rotation out of Korea, that could flow to India. Now, that hasn't happened in any big way yet. A lot of the money that's left Korea has actually gone, I think, to Japan and also into the US. A stronger dollar is a risk to that as well. But there is a chance that actually some of that money within Asia starts to allocate itself to India. So that sort of, you call it anti-AI trade, but that money that moves out of North Asia could come to India. I don't think we're completely there yet. That's why we're not overweight. But that's why one of the reasons why we said, okay, we don't really want to be underweight as well. People have already sold, and on the margin they can buy, and on the margin India looks a little bit better. The currency, the earnings, maybe later that other rotation is going to come in as well. So therefore you want to be neutral in India.
Right. I guess
a tactical upgrade, which hopefully becomes
structural if earnings hold.
That was well put. Yeah. Absolutely. Pranjal, anything else? Anything else we need to be watching? I mean, you gave us a fit.
In fact, since you said that, I just wanted to ask her one thing. She upped her GDP target to about 6.3%. You said manufacturing has been fairly resilient. So I guess a lot of the drivers come from there, and perhaps exports as well, given the weaker rupee. Services, what data points are you tracking here? Because that's a bit of a concern, right?
Yeah, that's a great question. I think growth has been remarkably resilient through the energy crisis. And I think front loading of manufacturing and strong exports have been at the heart of it. Whenever you have front loading, then later it fizzles off. So the big question is when it starts to fizzle off, what will take over? And I would be watching services very carefully, particularly trade and transport. If, hopefully oil prices fall from here, I think that is a sector that could do better. And then the other one is financial services. If because of these FCR inflows, liquidity improves, generally speaking, I think that sector, financial services, could be stronger. And between trade and transport and financial services, you make up 40% of GDP.
So what would be the high frequency data that you would be tracking like a hawk over the next few months to get to whether the services is picking up or not? I
would be tracking the HSBC PMI services data.
I love it. That's a good
and other than that, I would be tracking, changes in credit growth. I think there should be some movement from industrial credit to personal loans. I would be watching a lot of transportation, airline traffic, something that really fell a few months back. So some of the, general transportation data.
All right. Pranjal, thanks very much for dropping by. Great speaking with you. And as always, appreciate your time. Harold, great having you with us here on the program as well. Thank you very much for joining us here on CNBC TV 18. The first rates are appearing for the SBI funds sort of pre-open. The IPO, of course, the listing is at 10. So the price is settled at about a 40 rupee premium as compared to what they sold the stock at in the IPO. 574 was the issue price, and 613 is where the pre-open is at. So it's like a 6-7% kind of a pop. In the pre-open, but I mean that could change and it could look bigger. I thought, perhaps we get a bit of a bigger pop, but let's see. But for now, it's about a 6% jump. Our colleague Yash is there on location, and we hope to be able to go across to him in a bit, perhaps to just showcase what's happening. The top SBI the bank team is there, Mr. Sethi is there, and so are of course the top management team of the SBI funds as well. We'll take a quick commercial break here. That is Mr. Sethi, by the way, addressing the media. And maybe just play out 15-20 seconds, see what he's saying, and then we'll go into that break and come back with J.K. Simmons.
Another defining chapter in our journey. I would like to express my heartfelt gratitude to investors across every category for the overwhelming confidence they have reposed in SBI Funds Management. The IPO witnessed, as mentioned by the MD and CEO, exceptional response, being subscribed nearly 42 times, with the QIB portion subscribed approximately 140 times. The issue attracted bids worth nearly 2.98 trillion. The participation of leading domestic and global institutional investors
Welcome back. Well, let's focus on cement. JK Cement reported a mixed set of numbers. Good top-line growth because volume growth was very, very strong. Margins a little bit under pressure. But what's the way ahead? We're joined by Anuj Khandelwal, the business head, JK Cement, who joins us on the show. Hi, Anuj. Good morning. Good to see you in. Congratulations. Solid volume growth is what you're delivering. Now, give us a quick analysis. Where are you gaining market share, if you could tell us? And what is the volume growth target for the remainder of this year?
Firstly, thanks, Nigel, for having me on this segment. Yes, we had a fantastic volume growth. We did around 18% volume growth in grey cement. The volume growth has been quite broad-based, but as you would imagine, given our new capacities have come up in central India, we've got outsized volume growth in UP, Madhya Pradesh, as well as Bihar. We've definitely gained market share there. Having said that, we've also done well in North India and South India, maybe managing or maintaining the market share or slightly growing. So across the regions, it's been quite secular with the central markets doing better. In terms of our targets, look, we target around 13-14% volume growth for the entire financial year, and we would definitely target trying to touch 22.5 to 23 million tons for the full financial year.
Got it. So that implies a comfortable double-digit, mid-teen double-digit growth. Is that correct?
Yeah, around 13,
22 and 23. Got it. All right. Tell us about prices then. Prices actually have been resilient. I'll tell you what, you guys could be placed very, very well, not just you all, but the cement industry, because the input costs went up and then they cooled off. Now we're entering the seasonally weak monsoon season and price hikes have come about, and maybe the downward trajectory that you normally see in monsoon season may not take place. Are you in the camp that believes that cement prices could remain stable even in this second quarter? And also tell us about cost per ton. How much will they go up in quarter two in comparison to quarter one?
So multiple aspects to the question, Nigel. Firstly, yes, pricing is strong as we head into Q2. It's not dropped. Normally it drops in July, but it's been 20. It's been fairly stable, but it's early days because demand still now in Q2 is resilient, but demand will go down, and then that would be the acid test whether the prices hold or not. In terms of the cost structure, yes, Q2 will be higher. We'll have around 150 rupee per ton hit in cost because 100 odd rupees in fuel, because in Q1 you would use lesser cost inventory, but in Q2 you start using the higher cost fuel. And the diesel impact, which played out in the last part of Q1, will have the full impact in Q2 unless the prices drop. So around 150 per ton. But the good thing for us is that normally we take a lot of shutdowns and repair maintenance cost is high in Q2, but that's we front loaded in Q1. So that in a way, is not an additional hit which we would have, which we normally have in Q2. However, I would also want to make the point which you said of the pricing being cool, having been cooled off, not, cost cooling off, not really so, because if you look at it, the way the crude prices have oscillated, that has the entire impact on fuel basket. In the last 5-7 days, it's again up by 15 to 20%. And if that persists, then basically any hope which we were having of reduction in fuel costs starts reducing a bit.
Okay, so for Q2 then, EBITDA per ton, gets hit. That should be natural, right? Or will you be able to protect yourself? If your cost hit is close to around 150 rupees, do you think EBITDA per ton falls by less, probably 80 to 100 rupees?
No, I would say, the EBITDA per ton, it's very, very early to speculate because or estimate, because we do not know the pricing per se, and many, many things are right now up in the air, especially how the demand would play out and the monsoon being weak, what impact will it have in the later part of the year. But I would say, given that the prices are if they remain stable, that's the cost hit and that's the mathematics on EBITDA per ton.
But the second half of the year, the second half of the year, you at least expect to get back to that 1,050 to 1,200 rupees per ton of EBITDA per ton?
Yes, second half likely to be better because, look, in the second half, the demand is again better than, starts getting better. We would have finished the maintenance aspects, the fuel cost and the diesel cost, hopefully, can start correcting. We are expecting a better Q2. Sorry, the second half of the year. Q2, seasonally is weak for the cement industry, and that would be the case for us as well. The only silver lining there would be that the maintenance cost, as I said, which we have preponed in Q1, will not get a hit in Q2.
Okay, got it. All right. Tell us about the smaller segments, the RMC business. You're gradually adding plants. So how do you see that addition going? What kind of revenue number can you do for this year? That is FY27. And also, is it EBITDA positive? And your paints division, very small yet again. But out there as well, it's ramping up, and I believe it's EBITDA positive. So run us through both those two aspects with revenue guidance as well.
Okay, let me take up paints, though I don't look at that business.
But you could give us a brief number, I think.
Yeah, 125 crores this quarter, which is really good. We have a visibility, we are targeting around 550 crores in this financial year, and happy to say that it's quite spectacular that we've broken even in paints in Q1 itself. So in a three-year window, we've got to a business build of around 550 crores with a break even, which I think is quite spectacular. On the RMC front, look, this business right now is in nascency, or infancy. We just started 8 months back, but we've ramped up well. We are now having 17 RMC plants across the country. Revenue guidance quite tough to get, but we believe we should be doing around 200 crores or so in this financial year in RMC business. But don't hold me to it because the business is just still building and it can be higher, lower. In terms of break even, look, it depends on what you take as the cement cost, as the transfer pricing. It will take some time to break even, maybe a year or so, because we are putting up more capacity in terms of machines, people, and vehicles while the volume is catching up. So RMC business pure break even might happen in a year's time, but I would say the business build is happening really well.
Got it. Okay. All right, Anuj. A little short on time, but thanks a lot for joining in and giving us some color. Probably during the course of the quarter, maybe you rejoin us and give us some more outlook with regard to the other aspects of business, like you're looking at some captive coal in the coming years as well, 2028. So we could talk about that and more. But thanks a lot for joining in and all the best. The street is definitely listening to what you had to say. The stock has moved to the high point of the week. Well, it's time to turn our attention to our special segment, Quarter Se Quarter Tak. We get you earnings expectations from every sector. And Sudarshan joins us now to tell us what's Q1 FY27 looking like for the auto sector. Sudarshan, over to you.
So it's a story of growth versus margin this quarter for the entire auto sector. While the growth has remained largely strong, the margin is likely to take a hit for most OEMs, and the reason for margin hit because a sharp increase in the material cost due to several factors, including West Asia tensions. But let's start with something which is positive, and that's volume growth. So the growth year-on-year has remained strong, with all the segments registering a growth in the double digits, with two-wheelers, PVs and LCVs seeing growth of over 20%, while for tractor and M&HCV, growth has been in the range of 14 to 9%. On a sequential basis though, as expected, growth did see some moderation from a high base of Q4. Now, from growth to margin, another important parameter. Margin decline for the entire segment is a well-known factor. What will be important is the quantum of the fall. The expectations are for passenger vehicles and two-wheelers, margin can see a fall up to 200 basis points, while for commercial vehicles and electric two-wheelers, the drop can be significant and can be in the range of 400 to 500 basis points. Here too, few companies with major export exposure can see rupee fall, offsetting the margin compression to an extent. So who is the culprit of the margin fall? It's commodity. So let's take a look at the commodity basket. Prices have largely remained elevated in Q1, but if there can be any silver lining, it's the quantum of increase. The increase that we have seen in Q1 FY27 is a bit lower than what we had seen in Q4 FY26, except for commercial vehicles. So considering all the factors mentioned above, which sectors will be outperformers or underperformers? Two-wheelers and auto ancillary companies are expected to report better earnings growth in comparison to passenger vehicles and commercial vehicles. In two-wheeler space, two companies, Bajaj Auto and TVS Motor, can outperform, and that's thanks to major export exposure. For Eicher Motors, the favorable base can be a bit of help. That takes me to valuations, which look largely reasonable for most companies. Most of the stocks are trading below their recent peaks, but higher than their 4-year average. Two-wheeler stocks are trading in the range of 2 to 8% above their 4-year average, except Hero MotoCorp, while passenger vehicle and commercial vehicles are trading at plus minus 6% to their 4-year averages. Lastly, what will be the most important factor is the commentary. So the question is, will the high level growth that we have seen so far will continue in the entire fiscal, and if the inflation is peaked? So today is the Shubharam for auto earnings with Bajaj Auto and TVS Motor. Hope earnings remain in the high gear, and if there is any bump, it's not that sharp.
All right. Well, so thanks very much. And by the way, we will bring in the auto analyst on the numbers in just a bit. But the listing is there. And we have the top team at the promoters of SBI funds basically up there ringing the bell.
10,
so,
9,
yeah, let's hear the countdown.
7, 6, 5, 4, 3, 2, and 1.
Trade started to appear. The pre-open left us with about a 6-7% pop, and SBI Funds Management, the latest AMC coming into the market, 7.5% now. So 574 was the IPO, the issue price, and 613, 621 now. So it's an 8% pop. So it's a good listing. I mean, it looked like perhaps with a 6% pop. I don't think, I mean, I was thinking perhaps there's a bigger one, but 8.5% higher. They asked basically for a market cap of about just under 1.2 lakh crores. And based on, you look at FY28 estimates, I mean, I think, it's not that expensive, some 30 times earnings compared to where the rest of the sector, of course, is trading at. The yields that they make in SBI funds, of course, slightly lower than some of the other players out there like HDFC, AMC, etc. But I mean, the guidance is strong that this is something that they're going to continue to work on. In terms of equity AUM, the largest player out there, actually in terms of the overall AUM, it is the largest player. A large portion of it, of course, is EPFO and pension-linked assets for which SBI Funds is the manager. But even if you strip all of that out, just look at just purely equity, which is where the money gets made, they are the largest out there within the sector. So that is SBI Funds with the first rate starting to come through and the management coming up. We perhaps will get an opportunity to put some questions in terms of forward-looking guidance, etc. a little later. And I think that should happen. But Mangalam, I think back to autos, and we have the auto analyst with us to preview the quarter for us.
Absolutely. We do have the auto analyst with us. Kumar Rakesh, who's the analyst IT auto and auto at BNP Paribas, joins in. Kumar, we'll ask you to wear your auto hat today rather than the IT hat. Sudarshan said it's going to be more about the margins that he'd be tracking more than just the demand, because that's largely known because the volumes that have come by, etc. as well. So what's the kind of margin hit that you expect here this time around? And, how do you expect that to, improve gradually, as we've seen in the other parts of the consumption space as well, as we move towards the end of this year? And in light of that, your call on some of the stocks.
Good morning, Mangalam, and thank you for having me on the show. As you rightly pointed out, there would be margin impact in this quarter. We think June quarter will see the peak of the margin impact across the auto companies. Every month we closely track the commodity prices. We have blend in about 11, 12 key commodities, which goes into a typical manufacturing of cars and two-wheelers. And that index have moved quite sharply through this calendar year, which is implying about 200 to 300 basis points sort of an impact in this quarter for most of the auto companies. There would be slightly higher impact on some of the companies such as Tata Motors, PV, and commercial vehicle companies, because sequentially the March quarter has a higher base in the volume, especially for commercial vehicle companies. And they will have, apart from commodity, also the base, the scale disadvantage as well. At the same time, as you also pointed out earlier, some of the companies who are exposed to the export market, we expect them to partly offset the commodity pressure by the currency depreciation. So we are calculating about 100 basis point or so of tailwind coming in from the currency depreciation for companies such as Bajaj Auto, partly TVS Motor as well, by the currency depreciation, helping them in better realization. So that essentially is the breadth of the impact which we are talking about, starting from about 50 odd basis point, going up to 300 odd basis point, and even higher for commercial vehicle companies. How that pans out from here on, now, this number is largely reflecting of only the headwind, but not the tailwind from the price increases many companies have started announcing, which came in part of June, part of July has started playing out. So we expect the impact to start coming down, going into September quarter, potentially start recovering as well. In the month of June, we had also seen commodity prices starting to soften quite sharply, although it has reversed in the July month. And a lot depends on how the geopolitical issues pan out. But from here on, the price increases should start kicking in, and that should offset the impact. And hence, in our view, June quarter hopefully should be the trough of the margin and gradually start showing a recovery in the coming quarters. By the end of the fiscal year, largely recovering all the margin impact. From our pecking order, what we like, we think that passenger vehicle stocks have been quite beaten down. Most of the passenger vehicle stocks, if you see, have gone below the GST rate cut announcement period. So the entire tailwind coming from GST rate cut has been discounted in the stock price now, barring Maruti, which is marginally up from 15th August 2025 levels. All the PV stocks are much lower. We think this is a heavy bearishness in the positioning, and that could potentially start reversing once the second half data starts coming in. In contrast to that, most of the two-wheeler stocks are materially above the pre-GST announcement levels, and the base for them in the second half would be much tougher compared to the passenger vehicle companies. And hence, that could potentially see a higher slowdown compared to PV names. And the valuations are also more expensive in those stocks. And hence, we are more cautious on the two-wheeler stocks. Our preferred picks are Mahindra and Maruti in the PV names, and iShare among the two-wheeler stocks.
All right, iShare among the two-wheeler stocks and Mahindra and Maruti among the passenger vehicle names. A specific question on the electric vehicle space. I mean, they saw a fair amount of traction during the peak of oil prices because the street thought maybe people will shift there. Volumes have picked up for Ather as well as Ola as well. What are your thoughts here?
So you rightly said that we have seen some of the tailwind from demand because of the increasing concern on the pump prices going up. At the same time, we also had the concern among consumers that potentially the demand incentive of 5,000 rupee per kilowatt hour will be pulled back, and there was some level of pre-buying as well, which we are still seeing. And that goes away sometime in July, and then we'll potentially see a dip in the penetration and demand for electric two-wheelers. We think that would be more transient. Every time these demand incentives have gone away while the penetration has come down, it has structurally kept moving up after that fall. So we expect that trend to continue in the coming months. In the mind of customers, especially for the two-wheeler customers, the concept of total cost of ownership is very well settled. We think that the penetration has now started moving from early adopters to early mass segment. And we have started seeing some of the more traditional markets also starting to adopt EVs in a bigger way. So we think this is a structural trend which we are seeing of adoption of EVs, barring these monthly volatility. We should continue to see a fast-paced adoption to continue.
Take that point. Thanks a lot, Kumar, for joining in. Always a pleasure speaking with you. Another day, another conversation, maybe on the IT space the next time you join us as well. With that, we'll take a short break on Bazaar, come back on the other side. Manisha Gupta joins in with a focus on all things commodities.
Some properties are not just homes. They are statements, achievements, legacies. At India Sotheby's International Realty, we represent the country's most exceptional properties with unmatched expertise. Unique homes, uniquely for you.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
So that's why I'm saying additional 2 aega. If you all try anything.
Welcome back. I think we're going to shift focus to what's happening as far as commodities are concerned. Now, markets, of course, doing, I think on the Nifty down about 10, 12 points. So nothing very much. Market breadth, though, is positive. Lots of single stock action, which we've, of course, been highlighting. But what's the top of mind for commodities? Manisha is here with exactly that. Manisha, morning.
Morning, and thank you for that. Well, I'm looking at the crude oil prices, where we're looking at prices off its highs. Yesterday was $91 a barrel, and we seem to be trading below 90 right now, below 88 as well. And the markets, of course, have been quite volatile. There's no resolution in sight, but there have been just so many statements and tweets and views coming in from markets. That is what has led to slight decline. The reason that you have seen the crude prices come off highs is there are reports of mediation between US and Iran. There is a proposal, a new proposal that has reached Iran, and that is what they're talking about, and is the reason markets have led to some profit taking there. Well, having said that, the US and Iran conflict has entered a day 10, and Iran has continued retaliatory strikes on neighboring countries as well. What is added to more concerns, and the markets would want to watch out from here on, is the Houthis' entrance into this one. So the Houthi militants have announced maritime embargo against Saudi Arabia. The Red Sea, remember, is a critical alternative route that we have seen for Gulf oil as Strait of Hormuz has been disrupted. Now, the Saudi Arabia did divert nearly 70% of their oil flows and other exports to Red Sea, moving away from Strait of Hormuz. What we have seen, though, right now, in sense of numbers, is that ships from the port Yanbu bound for Europe go north through Suez Canal. And the ships which are coming in from Saudi Arabia, which are southbound, which are coming to Asia, come via Bab al-Mandeb. And this is where the concerns really seem to be rising right now. Bab al-Mandeb is what it links Red Sea to the Gulf of Aden that handles nearly 12% of global oil movement therein. So the petroleum shipments from Yanbu, this is as per Kepler data, last year was 4.2 million barrels per day. But this year in the month of June has nearly doubled to 7.4. So this is exactly the kind of traffic that has moved away from Strait of Hormuz to Bab al-Mandeb. Interestingly, when you look at the overall crude availability and the way it moves globally is to the tune of 104.4 billion barrels per day. This is what is available to the global markets as in sense of supply. Now, nearly 76% of that, which is 79.8 million barrels, moves via maritime trade. So it comes via waterways, etc. I want to also bring to you the major waterways in the global markets. This is the data that we have as of last year. This year, of course, there has been a lot of disruption. It keeps changing on a weekly and a monthly basis as well. But I want to start with the major one, and that is the Strait of Malacca. This is where 23.2 million barrels per day of crude passes on an everyday basis. And then you have Strait of Hormuz, 20 million barrels per day. This is, of course, until last year. At this point in time, we understand it's anywhere between 5 to 8 million barrels per day, depending on how many ships pass on an everyday basis. And then you have Bab al-Mandeb, which is 4.2. You also have Suez Canal, which is 4.9. And then Cape of Good Hope, a lot of traffic, not just oil, but various other commodities have gone on to Cape of Good Hope. This is after concerns at Red Sea, which also does very good volumes at around 9.1 million barrels per day. Let me remind you, this data is all of last year. A lot of numbers have changed. This is just to tell you on the importance of waterways as we see in sense of crude flows there. And then you have Danish Straits, Turkish Straits, Panama Canal, etc., which move anywhere between 2.3 to 5 million barrels per day as well. Now, the charges on waterways is something that Iran and Gulf countries and US are talking about as well, about $2 million per ship there. But remember, it's not just going to be about Strait of Hormuz, because you have Suez Canal in Egypt, which charges anywhere between $400,000 to $700,000 per voyage therein. A lot of service, of course, is given in sense of movement, surcharges, facilities therein as well. And then you have very high charges that come in from Panama Canal as well, anywhere between $10,000 to $100,000 as well per voyage. But what Strait of Hormuz is talking about is $2 million per voyage, much higher. But this is the only two waterways which actually charge. Rest all waterways, some 7 or 8 of them, do it free of charge. These are international free waterways. So markets, of course, will be looking at on where oil is going to be passing through now in this quarter, with Bab al-Mandeb being a bit of a concern therein, and what charges, of course, they will have to be paying.
Okay, well, Manisha, very, very interesting that breakup as far as where all of the oil goes through in the world. And quite incredible that despite the overnight headlines and, just escalatory headlines, oil is still pretty well behaved, 88, 89 all told. Well, Latha speaks with BNP's banking analyst, Shantanu Chakrabarti, on the takeaways from the banking sector results which we've got so far. Some are reacting in a pretty large way this morning as well. So that's coming up in just a bit.
Both Trump and Rubio push back.
ए दया कौन है रे?
मैं है
सखू।
हाँ।
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर आपकी ग्रीन टी।
थैंक यू दया। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई, और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ आया।
और फिर एक दिन उसे एक मौका देखा,
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई है और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा। जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया और हमें ये सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे।
The big private bank results of the weekend did not impress the market all that much. Only ICICI Bank shares have been in the green for both the past 2 days of this week. On Monday itself, all the other three banks, HDFC Bank, Axis and Kotak, remained in the red, and HDFC Bank is still reeling for a second consecutive day. The positives were a sharp reduction in provisions for Kotak, also for Axis, a fall in credit cost, boosting profit. ICICI showed a surprising rise in margins and, of course, in growth as well, while HDFC, after showing good growth in deposits and advances, actually disappointed on margins. So should our buys and sells change? To take us through the sector as a whole, I have with me Shantanu Chakrabarti, the banking expert from BNP Paribas. Good morning, Shantanu. Thank you very much indeed for joining us. You must forgive me, but my first ball is a bouncer. You know, it's very obvious from the way the results have shaped up in the past 2 quarters that public sector banks have done much better than what their valuations give them credit for. The second best performance are old private sector banks. You know, the Federals and the RBLs, all coming with surprising fundraising. And then come our gods, the private sector banks, you know, the Axis, HDFC, Kotak, ICICI. But still, you guys seem to prefer the new private sector banks. Will you change your order anytime?
Good morning, Lata. I mean, that's in true fast bowler tradition that you have opened with a bouncer. Nevertheless, a very good morning to both of us, I hope. There's a point here that one needs to look into. The two public sector bank results that you're talking about is the early disclosure from Bob, really, and the PNB numbers which have come out. Now, PNB numbers especially have been very strong in auto loans, right? Now, let's just contextualize the whole thing for a little bit. The reason that the private sector banks in the beginning of this month, for example, were performing very strongly was because, as you yourself alluded to, the overall deposit CASA and credit early disclosures, as well as the system level numbers, were very robust, right? And on the back of that, what you saw on Saturday from the 4 results, and with the very, very notable exception of ICICI, was a disappointment, especially on the margin front. And part of that is mix. Part of that is the fact that in the last 1 month, the short-term money markets have hardened a lot. So the extent to which, for most of these large banks are 5-6% short-term wholesale money within their liabilities. That has brought in a little bit of a squeeze. And even though, if I look at it in basis point terms, the miss vis-a-vis what expectations were for the market is not very meaningful. For example, it is largest for something like HDFC, which was about 8 basis points. On Saturday itself, when we publish our notes, we made it very clear that this will be taken quite seriously by the market because the good news part of it was already in. And, given where the markets have been positioned over the last 2 weeks or so, there was a lot of optimism going into those numbers. Now, why did it have a disproportionate impact on HDFC? Because remember, the entire HDFC re-rating story is an idea of ROA and ROE mean reversion by, let's say, margins going up from 3.4, 3.5 to something like 3.7. So in that context, their margin disappointment becomes the most salient factor driving near-term sentiment. And that's where we are. And finally, one point regarding the PSU versus private thing is something you need to keep in mind is that the moment you look at the asset side, you have rightly pointed out that the PSUs are gaining share. But please look at what is happening within CASA. which is the cheap money market for banks, right? Within that, these private sector banks, which have been under the cosh, are the ones gaining share. Some of them have now gone into double-digit growth territory, while all of these large PSU banks are in single-digit growth, mid-single digit, right? So if you are losing market share in cheap money sourcing, for how long can you sustainably gain market share in prime loans, giving out prime loans, without injury to margins? And it's not as if that most of these PSU banks have a lot of ROA to play with to begin with, right? And also they're operating on...
I take your point. Shantanu, just in defense of the PSU banks, I completely take your point that you cannot keep on growing these loans when you are totally neglecting deposit growth. And this deposit growth reduction for PSU banks is a secular trend. They're not just losing now, they have been losing for a bit. But at the moment, for instance, in PNB, their credit deposit ratio is 73.8, whereas most of the private sector banks are in the 90s. So they have a distance to go even up till 85. That will take them, coast them through till FY28. So do you think that PSU banks need a look in, at least as a tactical buy?
No, sure. I mean, for example, we are neutral on SBI and have a decent upside on it. What I would highlight here, Lata, is that don't look at it from a credit deposit prism, because there's also something called leverage within the balance sheet.
Yeah.
And what incremental leverage can a PSU bank go into? And credit costs are not going to remain, even if asset quality holds out, from here on out for the next 2 years even. Do you think credit costs can sustain at 20 and 25 basis points?
Yeah.
That's by the way, a better track record than what something like HDFC has had on housing finance for the last 20 years. That's not a sustainable number. It obviously draws down on previous reserves and things like that. And plus a lot of upgrades which have happened from previous stress.
Yeah, we may be at the peak. I take your point on that. The numbers look, in credit cost and all that, it can't get any further. I take your point on that. Okay, now let me come to the meat of your reports within the top four. You still invest a lot of faith in HDFC Bank. It has disappointed on margins, as you pointed out. Then why this faith? You think FCNR will turn the bus? Because they've already raised an OFCB, right? A foreign currency bond. So you think that will be their, trump card, so to speak?
I think FCNR is a positive for most of the banks. And one of the reasons initially there were challenges, at least our channel checks suggest that maybe some of the banks tried to take too much of the benefit for themselves. I mean, that's a valid criticism, I think. It's a valid observation, if not a criticism. Where I would think about margins of HDFC Bank is not to think of margins themselves, but to think of the constructs that drive the margins. What are the constructs? The construct is how are they doing on deposit growth? Within deposit growth, what's happening to current account and savings account money? And finally, the bonds expire on schedule. And they will expire, and at worst, they will get replaced by time deposit or short-term money. And even those are 100 basis point kind of arbitrages. So when I look at the building blocks of the margin story, none of those are changing. So a particular observation does not change my stance on it. I would have been much more negative long-term if, for example, the CASA number was low or deposit mobilization was challenged. Margin is an outcome. Those are the drivers.
Oh, fair point. They have done very well on those extremely labor-intensive and difficult jobs of deposit accretion. Will you be increasing your EPS forecast for any of the banks now that FCNRB performance has been good? 17.5 billion plus another 2.5 in other sources. It's a good number. So are you inclined to be positive? Also because, interest rates can't go down from here. They can only go up. So are you improving your EPS estimates for anybody?
Right. On the interest rate part, how inflation plays out, Lata, I wouldn't be as sanguine about it as you are. It might well be that by the second half of this financial year, you start to see at least the wholesale market start to ease again. I'm not saying RBI is going to cut. I'm saying a neutral RBI and, a easing bond market might well be the scenario that you see if, the flows reverse towards the second half of the year, right? Another thing that I would like to point out, Lata, regarding this, the PSU part of this is, please keep in mind that it's not so much deposit growth that I'm worried about in the PSU banks. It is the composition of those deposits. I'm saying that the CASA game is critical to you remaining competitive in prime assets. And that's where they seem to be losing share. So with that clarification, I think across the board, whether it's a PSU bank, whether it's a private bank, FCNR will be a clear positive. But some of that sheen has been taken off by the fact that our short-term money markets have hardened by almost 50 basis points since the beginning of the conflict.
That's true. That's true.
Right.
I mean, if you were to include any category, which would it be? I know you can't, publicly announce the exact name. But would you be positive in old private sector banks like, the RBLF Federal variety, which have now, donning modern clothes? Or would you be including the public sector banks or, the smaller banks? AU is already in your list. Where would your next buys come from?
Right. So as of now, we are very positive on the large private banks. We are quite positive, and I have large upsides on the life insurance side of things. And within NBFCs, we like Bajaj Finance. But here's my general observation, Lata. Where do you think the disappointments have been in earnings growth in the last 2 years? And therefore, they have been commensurately accommodated with deep discounted valuations. That's driving our preference. And I'll tell you why. Because the earnings mean reversion story is starting to play out. Today, we may be talking down 8-9% EPS growth in some of these private banks in the very first quarter. But 6 months back, the consensus was these numbers are going to be flat to a decline even this, right? So, the expectations have changed. The valuations have not changed that much. And I think the catalyst is there. The valuation support is there. And even in the 2 years where, because of the interest rate cycle moving downwards, profitability getting impacted from the peak, earnings growth was not all that great. But banks, for the most part, stuck to their mid to upper teens ROEs. So, right. So, I think that is where the valuation gap is. And it's near term. It's very painful to own. I get that. And but it doesn't change my 1 year view.
I take your point. We're actually now at a possible inflection point where, if they have gone through the difficult part, they should be starting to deliver now. Unfortunately, out of time. Thank you very much, Shantanu, for giving us such a well-rounded perspective. Wrap up on Bazaar on that note. Chartbusters after the break.
Where
Jimmy?
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Some properties are not just homes. They are statements, achievements, legacies. At India Sotheby's International Realty, we represent the country's most exceptional properties with unmatched expertise. Unique homes, uniquely for you.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Earnings cheer for Nifty Heavyweight Ultratech Cement. The cement maker delivers 12% volume growth after EBITDA per ton improved despite elevated costs. The management says they're on track to launch their wires and cables business by the third quarter. The street remains constructive on the stock.
ACE delivers double-digit growth in April to June quarter. Construction equipment segments leads the way with over 20% growth. Crude Bank posts a 45% profit growth with resilient asset quality. Both counters higher in early trade.
Strong earnings from Coal India subsidiary CMPDI. Robust first quarter numbers see the revenue rise 11% with profits jumping 54%. Margins expand both sequentially and YOY. The stock up 6.5%. Stay tuned because the chairman and MD Chaudhry Shivraj Singh will join us in just a bit to break down the performance of the quarter that goes by.
On the flip side, selling pressure on transformer and rectifiers. The company delivers a top-down miss. Profits skids 13%. The order book, however, is up closer around 26% at around 6,600 crores.
SBI Funds makes a strong debut, up around 8% as India's largest AMC lists on the bourses. It listed at 613 rupees versus its issue price of 574 on the NSE.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. And as we speak, markets trading a little bit in the red, just dip below the 24,200 odd mark. But Mangalam, plenty of movers from the broader markets.
Plenty of movers from the broader markets and maybe a sector that you track personally fairly closely. United Breweries, that's the one which is up 5% right now. I track the sector from an equity market standpoint, but maybe consumption comes in from your end at the high point of trade.
It wasn't me.
Doing well.
It wasn't me.
It possibly perhaps could be on account of the fact that it was a longish summer this time around. So we'll monitor how, the alcohol space grows in the country as of now. But decent moves coming in from across the board. Maybe some commentary from Heineken would also power the stock ahead. So we'll monitor international exchanges and updates for the same. But let's get some ideas for profit from our colleagues at Money Control Pro. Khushbu Rai joins in with a stock.
In today's idea for profit, we have Marico. The company is experiencing strong growth, outperforming the competitive Indian FMCG market through its unique and defensible market positioning. The company's strength lies in customer-centric innovation, strategic acquisitions, and strong execution capabilities, which boost our confidence in the continued expansion, particularly within the specialized premium segment across core and growth engines. The company ended the FY26 year on a strong note with volume-led growth, improving mix, and robust international momentum. In terms of raw material prices, the cost of copra has dropped around 35% from the peak levels and is expected to trade in a range-bound manner. While global headwinds may drive up cost for vegetable oil and crude-sensitive materials, the company will take cautious approach to adjusting prices. That said, the impact of the ongoing West Asia conflict on crude-linked inputs cost and the global supply chain disruption and the progress of the momentum in the rural demand sentiment will remain near-term risks.
All right, with that, we'll take a short break. Come back on the other side. We have the management of Bluestone Jewelry. Gaurav Singh Kushwaha joins in to discuss their first quarter numbers. Stay with us.
ए दया कौन है रे?
मैं है
सखू
हाँ
साहब बनेगा रे हमारा दया.
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी. चॉली सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर. सर आपकी ग्रीन टी.
थैंक यू दया. गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई.
अंडा सर्कल हाँ आया.
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का. उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया. शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा। जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया और हमें ये सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमेशा दया करता है। ऐसे इंडियंस लिख रहे हैं नए इंडिया की कहानी। और
Welcome back. You're watching us here on Chartbusters. The market doing what it is. The broader market is doing a lot better. But one of the stocks on our radar is Bluestone Jewelry. It's turning a corner, swinging to profitability in the first quarter of FY27. The EBITDA also nearly doubled. Strong same-store sales growth coming in. We do have the management joining in. Gaurav Singh Kushwaha to break down the numbers. Gaurav, thanks a lot for joining in. A strong first quarter for you. Understandably, perhaps a large part of that could be value growth as well. But I just wanted to understand two things from you. Was there any one-off gain? You've, spoke about 25 crore gain coming in on account of inventory, but was there any one-off gain due to increase in customs duty? And with this 50% jump that we've seen in the first quarter, what's your target for the full year when it comes to revenue and margins?
Good morning, Manglam. So, in general, any inventory movement that happens in our business, we capture it separately and disclose it separately as inventory gains, right? So that custom duty movement is also actually sitting in inventory gains, and it'll also flow through quarters. It's not that in a single quarter, because the accounting standards ask us to do FIFA accounting. So it's gonna flow through multiple quarters, and it'll all be sitting in inventory gains. We do that so as to present a very clear picture of the overall or the fundamental operating profit in the business, which increased significantly. So 7.5% we delivered this year, which the first quarter of this year, which is YOY growth of around 273 basis points. And that actually is a result of the operating leverage that we generally have been speaking about, that as stores mature, as overall revenue also scales, most of the costs in our business are very fixed in nature. And hence, basically over the next 4 years, as stores further mature. In fact, we started opening stores just 6 years back. So more than 50% of our stores are still sitting in are still less than 3 years old. So as they also mature, we expect the 7.5% to go more and more towards 15% over the next 4 years.
All right. So 7.5%, this is post-Ind AS EBITDA margins, right?
Just pre-Ind AS EBITDA.
Pre-Ind AS EBITDA margins likely to grow to mid-teens over the next 3 to 4 years. We get that point. In terms of revenue growth projections, first quarter has done 50%. In the past, you've grown at a compounded rate between 31 to 35% as well. So what happens this year? What's your overall projection?
Yeah, right. So almost from the very beginning, generally we had always seen SSSGs in the range of 30% across our different cohorts, and that behavior was there for almost last 6 years. I think last year was an anomalous year for us when the gold price increased sharply, which created merchandise dislocation, especially at the entry level. And hence, if you look at few of the quarters in the last year was some of the lowest SSSGs that we ever delivered. But operating in the range of around 30 is something that we are generally comfortable with, and that we generally delivered over the last 6 years when we were private also. So I think as long as gold remains stable, that creates a very conducive environment for us to do business. And in such an environment, we should comfortably deliver 30% SSSGs.
All right, over 30% SSSG. Just two-part question from me. In terms of store addition, you've done 12 this year. You had targeted anywhere between 50 to 80 on an annual basis. This at a time when even 50% of your stores are less than 3 years old. So store addition plan for this year. And as you do that, obviously, you will be deploying more working capital as well. We've seen a mild increase in your overall debt versus last year. So what's the kind of store addition plan that you have and working capital deployment that you will do?
See, every store in our case requires around 5 to 6 crore of capital. So if you do the math, let's say for 80 stores, you would need close to 400, 500 odd crore. So our balance sheet comfortably supports that much investment. And as we are turning corner on the cash profitability also, so EBITDA is one thing, but if you look at cash PAT, which was almost 57 crore for this particular quarter, that also gives us enough cushion to deploy more and more capital in the business.
And what kind of inventory turnover are you targeting? Because in an industry like yours, gross margins are typically capped between 35 to 40%, at best maybe 41, 42 odd percent. So then the onus of growth in the same stores, etc., lies on better inventory turns. What are you doing for that? And at a time when everyone's, getting to this market, the affordable adornment sort of market, what's your differentiator here?
Okay, so two-part question. One is essentially, so typically in terms of gross margins, us and only one more player has gross margins in the excess of 30%. Otherwise, typically the industry operates at 15-20% and so on, gross margins. So our gross margins are industry leading. In our case, typically what happens, Mangalam, is so we acquire a lot of users in the age bracket of 28 to 35. When they buy, let's say in our case, what happens is, when people are living in different cities and when they're right after they get married, they actually look for new jeweler. And these days, more and more people are using internet, omni-channel behavior. They're exhibiting that behavior, and hence they are picking up people who are fundamentally omni-channel, who are tech-driven and so on, over the legacy brands. Now, once we acquire these users at the age of 28, 30, 32, they tend to remain with the same jeweler, or they tend to stick to the same jeweler for very, very long time. So our category fundamentally allows for that. And what that does is that actually drives very strong repeat behavior in our stores. And that is one of the fundamental levers of long-term SSSGs. Another thing that happens is as people age, their ticket sizes also increase. The kind of jewelry that they buy also increase in size, value, and everything. So with time, people buy more and more from us, and more so at a higher price points also. So essentially, these are some of the factors that will keep on driving very strong repeat in the stores. And then there was a second part of your question. What was that, Mangalam?
Inventory turnover. How do you improve that?
So SSSGs, comfortably we'll deliver 30% in excess of 30%.
All right. So which means inventory turnover of more than 3?
No. Okay, inventory turn was the next question. So inventory turn currently is inventory turn right now is kind of slightly dislocated because gold moved 70% between the beginning of last year and end of year, which actually increases the value of closing inventory, whereas all that inventory in value terms was not in the play throughout the year. So when we look at our own inventory and when we look at the inventory turn at the store level, we see around between 1.4 to 1.5 times inventory turn. And we believe that, with store maturity, so our mature stores are already operating at 1.8 to 2 inventory turn, which is more than enough given our gross margins, our contribution margins of around 32%. At 32%, even 2 turns actually delivered 64% of GMROI, gross margin return on investment, which is industry leading. So we are generally comfortable with inventory turns of 1.7, 1.8 and so on. And as stores mature, they will reach to around 1.8 to 2%, 1.8 to 2 inventory turns. And in our case, what also happens is we also manufacture ourselves. So there's some amount of inventory sitting in factories also. And right now, because we are manufacturing in excess of our sales, because we are opening new stores rapidly, because we are also in process of fixing our merchandise, which is sitting in store, which got dislocated because of gold rate fluctuation. Because of all these things, the inventory sitting in manufacturing is also elevated right now. It's almost 25% of the inventory sitting in factory right now, which should, in a stable environment, it should come down to around 10%.
All right.
So I think these are the things that we'll deliver, that we are working on over the next 4 years or so. And the reported terms then should reach around 1.6, 1.7, which is very, very good.
All right, we take that point. You spoke about GMROI of 64%. I remember a lot of people saying that maybe a GMROI of 100% plus is something that they would like to look at going forward. But you're saying this is still industry leading. So we'll monitor that, and we'll have this conversation, say maybe in the quarter after this, and speak about the pre-festive, etc. as well, and speak a little more on the inventory turnover. With that, we'll take a short break. A good chat. Thank you so much for joining in. The stocks moved to the high point of trade, up around 3% right now. On the other side, we have the management of CMPDI, another stock which is a buzz after a good set of numbers coming in. Chaudhary Shivraj Singh joins in.
Asking him to reopen.
ए दया कौन है रे?
मैं है।
सखू
हाँ।
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ आया।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा। जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया और हमें यह सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमें।
Welcome back. You're tuned into Chartbusters here on CNBC TV 18. Well, let's focus on CMPDI. It's off to a good start actually to this fiscal. Solid revenue growth, good margins as well. And the planning and design segment has led the charge with a growth of close to 26%. To help us out with what's the way ahead, we are joined by Mr. Chaudhary Shivraj Singh, the chairman and MD of the company. Hi, sir. Good morning. And thanks a lot for joining in and speaking to us here on CNBC TV 18. And congratulations on a good showing. Well, you've grown by more than mid-teens. So for the year, what kind of a revenue growth are you looking at? And margins have gone up above 30%. What kind of margins on an average we should be looking at for the year?
Good morning, Nigel, and good morning to all your viewers. And as whatever we have been promising and working upon has started yielding the results. And on the same lines that we had predicted. If you see, we had said that 15-20% of revenue growth we are targeting. And that is what in Q1 you can see. And during the year, as we had said that we will be maintaining 15% of growth in revenue and EBITDA margins at 40% and PAT margins is 30%. So we are aligned towards that. So that is how we are progressing as per our plan and as per whatever we had estimated and we had discussed about.
Got it. All right. So could you help us out with what kind of a revenue mix we should be looking at? If I look at it right now, exploration is more than 50%. You have planning and design, that's at around 20% approximately. How does the revenue mix evolve from here on?
So if we see the revenue mix, our growth in revenue in exploration has been more than 15%. It's 18% growth in the Q1. And in planning and design, mainly because of the PMC services that we were focusing on, especially for the renewable energy, that growth is about 26%. So the same, the revenue breakup of the four verticals, about 46 to 47% from exploration and about 26 to 27% from planning and design will continue. About 15-16% from geomatics and environment. Environment has given a good growth, about 24% in revenue in this quarter, especially because of the volume, about 54,000 of sample testing we have done in this quarter.
Right.
So that is growing at a good momentum. And geomatics will always be there with increased volume. Of course, this has been down in this quarter by 9%, mainly because of the surveys that have been completed towards the end of the quarter month. That reports will be coming within 1 week, so that will be capturing the billing of the last month's results.
And
so that is how our breakup in revenues will continue, same as about 46-47% from exploration, about 26-27% from P&D, and about 15-16% geomatics and environment.
Got it. All right. What about Coal India? It's around 65% of your revenue mix. If you could give us some clarity out there. And you were also looking at non-coal, right? How much is non-coal as a percentage of your mix, and where is it headed?
So Coal India, of course, it will remain at about 65% because of the largest volume from Coal India. And as far as revenue from non-coal is concerned, we are working in, we have already got the exploration license for the RE block. So we are doing exploration in RE, as well as will be doing on critical mineral blocks of Coal India. Similarly, we are targeting some base metal and mineral blocks. So some state governments are aligned for exploration blocks in minerals. So that will be there, but the percentage, of course, will remain around the same, about 5 to 7% in non-coal.
Okay, non-coal will remain at around 5 to 7%. Mr. Singh, going by what you're saying, 15% growth, do you think in the next, say, 3 years, revenue should approximately scale to around 3,500 crores, going by mathematically 50 to 20% growth? And you're saying PAT margin, you're looking at maintaining at 30%. Is that correct?
That's right. Okay. And because in addition to whatever we have been promising and doing and working upon, we had also promised that we are building mainly on our technology front for making CMPDI as globally competitive consultancy. Now, another dimension that we are adding now is comes from the policy push from the government side. That is, the mineral sector is now not restricting itself from exploration and extraction. It's going beyond to the value addition, be it the coal to chemicals or be it the critical minerals processing. So as CMPDI has always been providing end-to-end services, we are adding this dimension also to our consultancy, and we are working upon, we have already proposed for adding the processing also in our value chain. So I'm very much confident that in the next 3 years, our projected figures we will be achieving.
So 3,500 crores of revenues looks likely going at just 15%. If it's more than 15%, it could be even better. That's the revenue number. And you're saying a margin of close to around 30% PAT margin. So net profit should be more than 1,000 crores in the next 3 years?
That's right. And that is why we are also planning now for more technological push. And if you see that recent Indian made satellite success, so we, being the geomatics and remote sensing consultancy in India, we are also aligned for satellite-based surveillance systems. And as these private launches will give more and more access, I think this area of consultancy will increase for CMPDI.
Okay. Any news very quickly from Coal India that they want to come and sell more? They have 85% in the company, or are they done?
At present, that's all at this stage.
Okay, that's all at this stage. So maybe further supply will not come in. But it's been a pleasure talking to you, Mr. Singh. Thanks a lot for joining in. The net profit number that was approximately 600 crores in the next 3 years should scale to around 1,000 crores or thereabouts. And they're very optimistic about growing at 15 to 20%. Street likes it. Stock now at the high point of the day. Well, on that note, though, we'll wrap up on this edition of Chartbusters. You stay with us. The team of Trading Hour is waiting by.
morning. It's time for Trading Hour. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Hormuz Fatakia. With me, as always, is Ritu Singh. Ritu, good morning to you. And after a resilient session yesterday, it's a similar sort of a story that is playing out, but the markets are slowly grinding lower as we speak after opening higher in today's trade. But of course, today is the fact that it's the Nifty weekly expiry as well. But just before we move on, let's cut across to the management of SBI Funds Management, the new kid on the block.
And online media, and then we move on to the television. Shah will give the guidance on the question.
We can start with CNBC first question, and then we have 20 I'll guide the other ones.
Sir, first of all, thank you so much for having us here, and congratulations to all three winners, I would say. SBI, SBI Funds, and of course Amundi. One question to each of you, sir. As far as the bank itself is concerned, I want to ask, of course, we've had the listing of SBI Funds Management today. There are just two subsidiaries now which remain unlisted, large ones, the general one and the pensions. Which one is next, and would it be this financial year or next financial year? The next one is for SBI Funds. Sir, I want to understand as far as, certain things. First one, the impact of TER specifically on the margins, the recent changes which were made, and the road ahead for TER. Do you see further tightening in any form? Second thing, mutual fund being allowed as collateral for MTF, how do you see that working for the industry? And finally, as far as for Amundi is concerned, we've seen this trend that once AMCs get listed on exchanges, the foreign partner there tends to sort of value unlock after listing. We've seen that in HDFC, we've seen that in ICICI Prudential. What is Amundi's stance here? 2 years, 3 years down the line, would we have you holding the same amount of conviction in terms of your holding in the company going ahead? Thank you so much.
So let me start thanking all the stakeholders for the wonderful response what we have got for the IPO of SBI Funds Management Limited. And I probably would not be able to answer his question to me for two reasons. One is we are in silent period. It will be seen as forward-looking statement. But more importantly, I think it is SBI Funds moment. I think let us enjoy that. But having said that, there are definitely financial institutions. State Bank of India has helped to grow through our subsidiaries route. And now currently with SBI Funds Management, we have 3 subsidiaries listed. And we would definitely look for opportunities of listing, as they evolve and mature and reach a stage where, the listing makes sense. Thank you very much.
Okay, on the fund side, sir, I have 2 questions for you.
Thank you, media, and thank you for support today. Sir, as already mentioned, we are also in silent period, so difficult making any statement. But what is done before, the TER is now BER.
Yes.
So we have already accounted for it, and we are now revenue neutral on that. They already mentioned road source, so our accounting system already taken care of that. And going ahead, you said collaterals. It is a industry-related scenario which will request AMFI and others to look at it very carefully.
Okay, sir, final question.
Amundi, you want to take
maybe on Amundi, SBI FM is a translation of a very strong partnership between SBI and Amundi. It has been a long journey for us. This partnership has lasted for 20 years, but I want to say it's only the beginning. And we are a very happy shareholder of SBI FM. We will continue to build this partnership, to grow together, and we will continue to be there alongside SBI for a very long time.
Thank you so much, and congratulations again.
Anurag from ET Now.
Anurag Joshi, ET Now. Congratulations, Seti sir, on the successful completion of the IPO. My question to you is that it's been a 15-year partnership with Amundi. You have successfully completed an IPO. Now, going forward, how is SBI planning to take the partnership with Amundi forward? And to Mr. Nicolas Calcon, my question to you is that is Amundi looking at boosting your investments to India? What is your outlook to India currently? And in terms of even the riskometer, how do you see India in terms of risk?
I'll go first. This is a long-term relationship. As Nicolas said, I think this divestment, I think a lot of people asked us that why this listing now? SBI FM doesn't require capital, is a capital light industry. And similarly, SBI and Amundi did not look for any capital raising. But I think we believe, both of us believe that such a large AMC not being listed, I think is not systemically good, and we wanted to bring a large AMC to the market. So having said that, this listing does not change anything on our relationship and partnership. Very interestingly, Amundi, in several roadshows has publicly mentioned that while Amundi's best of international practices used to be brought to India, now SBI FM best practices and India's best practices of mutual fund are taken internationally. I think this relationship would continue for a long time. Nikolai, over to you.
I can only confirm what the chairman say. We will continue to develop and together to make sure that the SBI FM is developing in India, and we'll continue to bring what we bring. Of course, I would say our international expertise in asset management, but more and more indeed to transmit to SBI FM the interest, the growing interest we see from international investors for Indian assets. India is, of course, a very rapidly expanding economy. There's more and more interest from international investors, and we will continue to bring this interest into the expertise of SBI FM.
NDTV corporate.
Thank you, sir. I have two questions. Firstly, Mr. Sethi. Mr. Sethi, of course, SBI's parentage was very important to the listing here and pushing this forward. How strong, how did SBI approach this listing? In that sense, how did that brand name sort of build out the reputation and the premium that this listing has brought? So if you could take us through that a little bit. Similar question to you, Mr. Chicago, with Amundi's role here, what sort of role did you play in getting this IPO forward and building this out in the way you did?
So coming to SBI, I think it's not only the largest distributor of the mutual fund products. As I mentioned in my speech also, that we wanted to bring this investment opportunity to a large number of retail customers what we have. So probably the value creation is not only in terms of what SBI FM has been delivering on their schemes, it is also a fact that they have the backing of the largest parent company. And what we would like to assure all the stakeholders is that even before listing, this company was having the best governance practices of both SBI and Amundi. I think that's a value which we have created over a period of time to all the subsidiaries what we have. We almost have 18 subsidiaries, and the value creation, what you mentioned, I take pride in mentioning that our investment in these subsidiaries is about 6,000 crores as we speak today. Hopefully, maybe a month later, the number will change. We are valued at 4 lakh crores. I think that's a value creation for all the stakeholders we have done. And in the process, we also have created institutions of enduring value in the financial services. You would like to take the rest of the question? Or Olivia, you would like to join?
As for Amundi, we try to bring a little bit of our experience. As you know, we are a listed company. We have lived through this process a bit more than 10 years ago, being listed in Paris. So we had this experience and we tried to share it and to advise SBI FM in the process. And I think a second dimension we brought is probably during the roadshows, the contact with international investors. Of course, SBI and SBI FM have a lot of contact with international investors, but we could also help in that regard. And Olivier has been participating in roadshows alongside Chairman Sethi in that regard.
Business Ekta.
Good morning, sir. So congratulations. मैं आपसे पूछना चाहूँगी क्योंकि ये सारा OFS था तो एक शेयर होल्डर जो है वो अगले आने वाले सालों में वैल्यू क्रिएशन कहाँ देख सकता है और 3 से 5 साल की अगर हम बात करें तो आप AUM किस तरह से बढ़ता हुआ देख सकते हैं और कहाँ से आपको ज़्यादा डिमांड दिख रही है?
You can ask a question in English also.
Yeah. So my question is that in the next 3 to 5 years, if we talk about the AUM, where do you see the growth coming from? And since this was entire OFS, so for a shareholder, where does he see the value creation here? Because there was no, the fresh money was raised differently. It was entire OFS.
Devashish, over to you. We are the participants of OS. You have to respond.
See, मैं पहले नहीं बोलता, हमने इस क्वेश्चन का जवाब आपके शो में दिया है 7 दिन पहले। देखिए, वैल्यू क्रिएशन फॉर इन्वेस्टर तो होगा, क्योंकि जिस टाइम में मार्केट में आए, we came with confidence. Whatever the market is, cannot time the market like investor. So, like a company also, we wanted that all the trust, all the confidence of investors come back to the market. That is why today also, I think already it has gained 6% when I saw the screen, 8%. So, value creation in long term is very high, because as I mentioned before, out of 140 crore Indians we have now, only 10 crore are mutual fund portfolios. So, we have a long way to go. So, in country also value creation more. Also, we are looking at international scheme with the Amundi support, where also they are making this product. So, in long term, it will be much better.
All right, that is the top brass at SBI and SBI Funds, along with their partners Amundi, addressing the media after that listing. It's been a good listing. 574 was the issue price, now trading at 622. That's an 8.5% uptick that the counter has already seen. Let's now move on and address some macro news. The RBI's dollar attraction push is showing some early results already. Banks have mobilized more than $20 billion via the FCNRB deposits in just 6 weeks, and already more than half of the 2013 scheme has been raised, in the entire window. But the rupee is still down nearly 7% this year. So why has it not responded? Let's get you some of the details, because you have the first report card on RBI's dollar attraction measures, which is out, and it is better than expected. Now, RBI yesterday, in fact, disclosed that banks have mobilized about $17.4 billion through the FCNRB deposits and about $21 billion in total, including the ECBs and the overseas foreign currency borrowings in just 6 weeks. Now, that is already more than half the money that was raised under the entire 2013 FCNRB scheme, even though the window will still remain open until the end of September. So the measures clearly are bringing in dollars, and yet you have the rupee that's down nearly 7% this year, and it remains close to the record lows it had seen earlier. So the question is why the rupee has not responded. Well, that's because the currency trades on daily dollar demand, not just the fresh capital inflows. Remember, India imports 85% or more of its crude oil requirements, and higher oil prices mean oil companies and importers, they're buying dollars every single day. And there's another important component to this as well. When you look at the FCNRB inflows, they mainly strengthen our external balance sheet. Now, banks have to swap these dollars with RBI, and that boosts the foreign exchange reserves and improves liquidity in the system. But it creates confidence in the rupee for sure, but it doesn't immediately create enough dollar supply in the spot market to offset the heavy importer demand, and that's why the pressure on rupee continues. Now, RBI's disclosure also changes the market expectations, because recent reports, if you remember, they'd raised some concerns that the FCNRB mobilization was falling short of expectations. Now, instead, RBI data now tells us that $20.7 billion has already come in just 6 weeks. So Jeffrey says much of this FCNRB money appears to be fresh inflows, largely from NRIs in the UAE, Singapore and Hong Kong. Macquarie adds that perhaps foreign banks have played a much bigger role this time around, using their own balance sheets to support mobilization, broadening participation beyond just leveraged deposits. Both of them believe that strong mobilization will improve bank funding and liquidity, even if the rupee has not responded yet. So the macro signal is this: the strategy to attract foreign currency is working better perhaps than many had expected. But the challenge, for the rupee is not the lack of inflows. It is that the daily demand for dollars from crude imports continues to absorb those inflows. So if FCNRB mobilization remains strong through September and oil prices also stabilize, the rupee should get more meaningful support. But until then, day-to-day importer demand for dollars is likely to remain the dominant driver of the currency moves that we're currently seeing. So that's the setup. On that note, let's invite Devang Shah. He's the head of fixed income at Axis AMC. Joins us now, to discuss this further. Devang, that $20.7 billion inflow number seems to have taken the market by surprise. The expectation was it would be much lower. Now that the scheme is open until September, what is your revised estimate? How much, what kind of inflow should we expect over the entire period?
Yeah, thanks, Ritu. So I think you're perfectly right. I think last 2 weeks, market has started believing that the flow was not as strong as expected. I think, first of all, to give some credit, it's only been 2 weeks after the FAQs have been released. So end of June, largely, we got the FAQs and all the clarifications from RBI. And after that, the scheme has started mobilizing money. And we believe so. Actually, the first 2 weeks or 20 odd days, the collections have been quite positive. Our estimate has always been that from the FCNR piece, we'll probably get around 60 to 70 billion on 60 to 70 billion dollars in as part of FX flows, and we continue to believe that with the bumper start, I think our view continue to remain around 60 to 70 billion till the September period where the deposit scheme is open. So 60 to 70 billion is what we believe so we'll garner on this FCNR deposits.
But, Devang, just to clarify for our viewers, bankers in their commentary, during the earnings and otherwise have been telling us how there are various challenges as to why this scheme has not picked up the way they anticipated. They're hitting limits. They're tapping the same kind of lenders for leverage overseas. They're talking about tax implications, for these residents overseas. And, of course, the fact that compared to 2013, our interest rates, in the US are also much higher. Do you also believe, like Macquarie was saying, that perhaps much of the heavy listing has been done by foreign banks more than Indian banks? What explains this kind of a move, despite those challenges banks were speaking about?
So our assessment is largely, if you'll ask me personally, I believe so that the flows will be equally divided among foreign banks and Indian banks. I think somewhere down the line, if our estimate talks about 60 to 70 billion of flows, we probably believe around 30-35 billion or 25-30 odd billion will be largely garnered by the foreign banks, and the rest of it will be garnered by Indian banks. Yes, for the first few weeks, probably you have started seeing the flow more from the foreign bank perspective. We don't have any insight there because RBI has actually not given any kind of listing of the flows for each of the banks. But our assessment is that largely, and when we looked at 2013 also, the flow was quite equal between foreign and Indian banks. And in this scenario also, this year also, we believe that largely the flow will be equal, 50-50% between foreign banks and Indian banks.
Devang, there is a question that is still coming to my mind. The flows that have come in, yes, but the quality of the flows, is there any data that shows whether this is genuine savings that are coming in the form of these deposits, or this is just hot money with regards to the flows that are coming in, or on the because of the leverage factor that is involved in it as well?
My understanding is that if you look across at the scheme, and the scheme is quite attractive for any investor who is sitting outside India. Let's understand from a perspective, even if they borrow at 4.5% to 5%, and somewhere down the line, the FCNR deposit rates are between 6 to 6.5%. The leverage option, which is being given 9x to 15x. If I do the math, the return on dollar perspective for an investor can be upwards of 10 to 14%, and it can go closer to 17 or 18% also. These are quite attractive returns, and that is why if you look across in such kind of uncertain environment where markets have remained volatile, a dollar return of upwards of 10-12%, I think it's a very, very good scheme from RBI perspective to attract the flows, and somewhere down the line, as Ritu was highlighting, to fill in the hole of current account deficit and BOP. So our view is the scheme is quite positive. We will keep on attracting the flows, and if you'll give me a number, I probably believe that 60 to 70 billion is a very, very easy target looking at the initial flows.
Okay, got that. Devang, the fact that $20 billion has already come in, and, with all of these measures that were announced, we saw some recovery in the rupee. And then, of course, with what's happening in West Asia, crude prices spiked up yet again. And then you have the rupee again close to 96.3, 96.4. Very simply, to explain to our viewers, why is it that we're seeing these dollars come into the country and yet the rupee remaining where it is?
So 2 points, I think. First of all, as you rightly highlighted, I think the West Asia conflict is, again, we have seen a lot of volatility around there. The people are still concerned about where oil price settle across. And the escalation has again increased. And we are not seeing any end to it. So the large part of the rupee depreciation in the last 1 week has been on account of this conflict flaring up again. Secondly, if you'll ask me, I think dollar has also strengthened a lot, and it is not only INR which has depreciated in the last 1 week. If you look across at relative other emerging market currencies also, we have seen as depreciation for all of them. So it is relatively INR has also depreciated. Yes, we were all positive about because of the expectation of the flows, but both the reasons parallelly happening, which is the flaring up of the ME conflict as well as dollar strengthening, has somewhere down the line spoiled the party for rupee in the near term. We believe so that these flows will probably provide a kind of cushion to rupee depreciation, and we don't, unless crude goes above 100 again, I think rupee should find some bit of, I would say, cap at 96, 97, and we should not see further depreciation from there. So that's our view on currency.
96, 97 is the cap. No further depreciation from there, hopefully. Devang, just to come back to the number, 60 to 70 billion, is that your base case scenario? Could it be even better? I mean, is that a conservative number, given that in 6 weeks, we've already got 20 billion or $21 billion or so? And with that number, does the math for, what our balance of payments, external account situation would be, various, other things like bank deposit growth, how do these expectations change?
To answer the first piece, I think 60 to 70 is what has been our view from the time the announcement has happened on this deposit scheme, and we have actually been quite positive on this scheme. Secondly, to come across, the entire BOP math changes on how long the oil price remain higher. If oil price remain around similar levels of 85 and above, we can have a BOP deficit or to the tune of around 35 to 50 billion. So if you'll ask me from an overall perspective, we believe all put together, which is FCNR and ECB, we can get upward of around 75 billion of flows. Another important element which we have not discussed is that because of the taxation changes which the government took for government bonds, we've actually seen around 6 to 8 billion of flows from FPI already. And there is a possibility that we get added into Bloomberg indices, which can add another 20 billion of flows next year. So when I look across at the overall math, the regulators have actually tried to solve out for this entire BOP deficit and the FPI outflows, which we have seen in equity markets, and tried to attract flows to provide some bit of stability to our external sector, and somewhere down the line provide stability to the depreciating currency. So that's how we believe the math is working.
Devang, thank you for spending time and joining us today with your views on this very important development with regards to the FCNRB flows. Take a short break, focus on the bond markets on the other side with Manisha Gupta.
Dismissed.
Some properties are not just homes. They are statements, achievements, legacies. At India Sotheby's International Realty, we represent the country's most exceptional properties with unmatched expertise. Unique homes, uniquely for you.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Welcome back, and as promised, shifting focus to the bond markets. Manisha Gupta is here with all the updates. Manisha.
Well, thank you so much for that. When you look at the global cues that are coming in, well, the U.S. Treasury yields actually saw a bit of a gain coming in there. It's a quiet week in U.S., not too much of a data or Fed officials talking as well. So when the Indian markets come, that's exactly kind of mirroring that we are seeing here as well. Having said that, it is the Brent crude oil price is also holding around that $90 a barrel mark, slightly below that. But the Indian rupee decline is something that would be in focus as well, which is trading at around 96.5 right now. The India, of course, faces heightened risks of wider import bill, imported inflation as well, with the way the crude prices have been inching higher, nearly 30% up from the July lows therein. The rising public bond yields have driven corporate borrowing slightly lower because of the costs have gained there. I want to put across some numbers here. So the state-owned financial firms, NBFCs, seem to be front-loading debt even with that. And this is resulting in robust single-day spurts, the way we saw in earlier July, to the tune of around 15,000 crores therein. If you look at the FPI inflows, that has crossed $7.7 billion in this year till time. The Indian corporate debt market also stands at a tall 54 to 59 lakh crores right now. Accounts for 21 to around 22.5% of India's total domestic debt market, growing at an annualized basis at 12% in the last decade or so, but remains almost concentrated when it comes to availability or participation, for that sense, within the top tier institutional issuers there. Finally, take a look at the private bond issuances as well. And there are a couple of board meetings happening in this week, which are deciding on what kind of a private bond issuances that they would want to bring in. First one is board of Ultratech Cement, which is meeting on Thursday. They are going to consider a proposal to raise 50 billion by issuances of NCDs in one or more tranches of private placement basis, something that the markets will keep a clean eye on. And then you have Cholamandalam Investment. We spoke about this earlier as well. They also have a board meeting which is happening on 28th of July, and that is where they will be considering the quantum and the NCDs that they are going through with. And finally, you have ECAP Equities. They are looking to raise 2.5 billion. The bidding for that is happening today, with the maturities which are perhaps in 2029.
All right, Manisha, thank you so much for joining in with those details on all of the action from the bond street. For now, we zip into a short break, but when we return, we are going to be joined by the management of Karur Vysya Bank on their first quarter numbers.
There's indication.
When the market moves, we don't just report, we decode.
From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV 18 Market Central.
For your daily source of market intelligence and wealth creation, with a commitment to doing it right.
हे दया, कौन है रे?
मैं है।
सखू।
हाँ।
साहब बनेगा रे हमारा दया।
सर, आपकी कॉफी विद मिल्क और सर, आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर, आपकी ग्रीन टी।
थैंक यू दया। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई, और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ आया।
और फिर एक दिन उसे एक मौका देखा।
ग्राफिक्स 1299।
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा।
Welcome back. You have shares of Karur Vysya Bank that are in focus after they posted a strong set of first quarter earnings. Let's get in the management, to discuss more on their first quarter numbers and the way ahead. We now have B. Ramesh Babu, who's the MD and CEO of the bank. That stock now up almost 10% on the back of that performance. Mr. Babu, thanks so much for joining us here. If I just look at your asset quality numbers, the guidance is pretty strong, less than 1.5% of net NPAs. Gross NPAs and net NPAs of under 1%, credit cost less than 1% for the year. Just a small clarity on the SMA 30 number. I mean, the 30-day, sort of stress. There's a bit of a sequential increase, although year on year it is lower. What's really happening there? Because, this is the first quarter where perhaps whatever's happening in West Asia will start to show up in the numbers. I mean, is that why you're seeing that bucket, seeing some rise in stress, or how would you explain it?
Good morning, Mr. Ritu. First of all, this is again another wonderful quarter for us because the profit what we have got is the highest in the history of the bank. And we started the journey 22 quarters back at 104 crores and we are reached 756 crores now. Likewise, if you look at our business numbers also, 6% the quarter growth, which is in the last decade, the highest in a particular quarter. So that way, it's one of the historic quarters for us. Coming to the asset quality is concerned, you would have observed saying that our SMA 30 plus is always 0.5% below for the last few years. It has just moved from 0.17 to 0.22 in respect of few accounts. We interact with not many people on the ground, particularly the textile customers where 5% of our portfolio is there. And everywhere what we hear is the orders from US have come down. West Asia also to some extent has impacted them, but they are able to survive well. The working capital limits also utilization has not gone up and we didn't find any stress. Particularly this 0.17 to 0.22, if you look at it, this is nothing related to the West Asia. So that way we are reasonably confident that this has no impact as yet on our portfolio and we are relatively safe.
Mr. Babu, good morning. Congratulations on the quarter gone by, sir. While most of your larger peers, mid-sized peers have struggled in terms of the margin performance, your margins have been fairly strong. They've been higher on a year-on-year basis. Sequentially, too, they've been where they were in the March quarter, if not better, at 4.26. Does that sustain at these levels? Do you plan on keeping them here? Or do you see any moderation going forward for the rest of the quarters?
Thank you, Mr. Hormuz. I agree with you. This is a strategy which we have taken some 3 years back. We were mainly tilted towards the corporate. 40-45% used to be there where the yields were pretty low, though top line was growing. So we took a conscious call to granularize the portfolio and to diversify. That's why if you look at our RAM now, it comes to 86% and corporate is 14. That doesn't mean saying that we will retain corporate at 14. It means oscillating between 15 and 20% and RAM can be 80%. So that has really supported us. While moving to the RAM, we also strengthened our monitoring, onboarding, as well as the guardrails and collection, all these things. So that is the reason we are able to maintain our SMA well. In the whole process, the earnings what we have, it is not getting diluted through the provisioning. So we feel that with the current asset quality what we have, we will be able to maintain well. But there is a lot of competition on the ground as far as the pricing is concerned. That's the reason we have been guiding, saying that we may have to compromise on the margin to some extent to retain the existing customers. So we gave an annual guidance of between 3.8 to 3.9 for that. But during this quarter, what we thought is with the 4.26, next quarter we'll be able to get 4%. And at the end of September, we will take a call for the whole year where we'll be landing for the whole year.
Okay, so the full year guidance is 3.7 to 3.89. That's what you're saying. Next quarter, NIMs will remain above 4%. Yeah. And
next
thereafter, you will revise it.
And next quarter, it will be 4%. So overall year, what we thought it will be 3.8 to 3.9. So next quarter, we may revise it also. If the position looks good for the second quarter, we will think of that where we will be at the end of March.
Mr. Babu, the cost of funds have been fairly okay. They've come down on a year-on-year basis. They've gone up slightly on a sequential basis as well. In the interest rate trajectory that we are in right now, with a fear that the rates might go up, where do you see the cost of funds going towards the rest of the year, particularly if not for the full year, at least for the first half?
I know during the first quarter what we did, strategically this time we have front-loaded the business. For that we need the funds. That's the reason we have increased the TD rates by 40 basis points in the first quarter. That had a bearing. It has gone up by 4 basis points. But somehow I feel that in the coming quarters, the deposit prices may not go up that much. The reason is there are few levers which RBI has provided. One is FCNRP, second thing is OFCB. With these, the money when it is coming up, the pressure on the deposits will come down to some extent what we have been experiencing for the last 2 years. So that way, there may not be an incremental much hike or spike in the deposit rate. So we'll be able to maintain at these levels. That's what I feel.
Mr. Babu, for the full year, could you give us a sense of where you see incremental credit demand coming? It's been pretty strong, and in particular, your jewelry portfolio. I mean, it's remained at around 27-30% of your portfolio or so, and it's growing by almost 27% year on year, about 6% sequentially. The other concern in this portfolio is the gold prices are coming down. So, what kind of trends are you seeing? Of course, the competition is increasing in the market as well. So many new players are entering this segment. So how do you see this, segment performing? What kind of growth are you anticipating here and overall for the year?
We are mindful of the fact that the risk involved in this. That's the reason 4 years back itself we took a call. The overall gold portfolio will not cross around 30 to 35% of the whole portfolio. If you can look at last 3 years of our portfolio, it is hovering around 30%. Maximum it can go up to 32%. But what we did is internally we have strengthened our margin call mechanism, and the teams have been formed. As and when these sort of a dip in the gold prices are there, our teams are active actually in engaging with the borrowers for getting it. So that is the reason you can find that the gold is concerned, agriculture, the average, the LTV is around 67 and non-agri is below 60. So this we maintain that when even if there's a dip by another 10%, we will be able to maintain that. Coming to the growth is concerned, now that you see the first quarter, it's inclusive growth. Every vertical they have grown, including the corporate, by 6%. If that sort of a growth is coming, the dependence on the gold can come down over a period of time. But whatever it is, as I said, the upper rider is we would like to be around 32% for the time being, which is the overall portfolio. So beyond that, there are many avenues available to us. We have moved into affordable housing, loan against mutual fund. All these things will be coming up. They will be supporting us. In that way, the dependence on the gold over a period of time will come down drastically.
Mr. Babu, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. Take a short break. Back with more with market technicals from Sachitana Duttekar on the other side. Some trading ideas as well. Stay tuned.
ए दया कौन है रे?
मैं है
सखू।
हाँ।
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। चॉली सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर आपकी ग्रीन टी।
थैंक यू दया। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ आया।
और फिर एक दिन उसे एक मौका देखा।
ग्राफिक्स 1299।
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा।
$70 points lower on the index currently, still around about that 24,150, 24,200 range all through the day. The Canada HSBC Life Insurance, though, has extended its gains now 8% higher on the stock and is also at a new post-listing high for the company. So good going as a positive result reaction coming in on Canada HSBC Life. Sachitanand Uttekar from Trade Bulls is now joining in for a quick chart check. Sachitanand, good morning. Thank you for taking our time. Well, it's still around that same range as we were when we last spoke, but where is the trend? Is the trend still up or the trend is now shifting, considering the fact that we have been in a consolidatory / downward move over the last couple of days? Your call on the index and your trading ideas as well.
Good morning, Hormuz. I think the view on the Nifty remains the same. What we are observing here is that the Nifty could continue its sideways trend. On the higher side, it is locked in between the two key averages. Now, if you look at the overall price performance, 24,380 is where its 200-day exponential moving average has been placed, which continues to act as a very strong resistance. And on the lower side, 24,000 remains a very significant, support level where its 50-day exponential moving average is also placed. So overall concentration from a trend perspective remains sideways. We don't see any fireworks until unless we see the crude, dipping below that 82 mark, which is a very significant level, because it has been trending with a lot of confidence above its 50 and 200-day exponential moving averages. So I think until unless we don't see a crack in the crude below 82, the expectation of a breakout above that 24,380 looks difficult. So as of now, I think it's a sideways market. From a trading perspective, even yesterday we saw a lot of price action near its 5-day exponential moving average, which is around 24,170. So I think that remains the key pivotal for the day. And on the lower side, in case if we see some slippages, there is a decent support somewhere around 24,100, 24,080 zone. So I think it's a same strategy. It's better to wait for a decline to build some long positions when it comes to the index. And we don't see a major breakout, culminating soon on the index until unless the crude is trending above that 85, 82 kind of a zone.
Okay, for now, the crude at 88.37. That's where the Brent crude is at. But Sachidanand, any particular stocks you would like to call out?
Good morning, Ritu. Auto space, because of the earnings, I think should be in your trading range. And if you look at the overall performance of something like M&M, we have already seen a decent pullback action. The consolidation breakout has been very well. If you look at the overall price performance, it has started trending above its 5 and 20 exponential moving averages. And recently we saw a decent breakout on its RSI. So we are expecting that this particular push could lead the price action higher towards its 200-day exponential moving average, which is placed somewhere close to around 32.40. So we are recommending building fresh long positions in M&M. One can keep a stop loss at 31.54 on closing basis and review positions at 32.40. The other stock from the auto space is Hero MotoCorp. Now, if you look at the overall performance, it has been in a very severe downtrend. But since last few trading sessions, it has started consolidating and forming a base somewhere close to around 4850, 4900 zone. There is a good RSI breakout, and we are expecting that there could be a price move as well. So we are expecting a turnaround in this particular counter. We are expecting a move towards 5050.
followed by an extended move towards 5150, where its 200-day exponential moving average is placed. So we are, recommending building fresh long positions in Hero MotoCorp. One can keep a stop loss at 48.65 on closing basis. So these are the two recommendations from our side.
Pleasure having you as always, Sachitanand. Thank you for sparing time and joining us with your views on the index and on specific stocks as well. Mangalam is now here with the latest trends from the F&O space. Mangalam.
Well, the markets are at the low point of trade. We're down, but not necessarily out, because the mid-cap index is doing a shade better, marginally in the green, even though the Nifty and the Nifty Bank are lower right now. And the macros haven't weakened much as well. In fact, if anything, they've bettered from yesterday. So we have oil, which is at 88 versus 90 yesterday, and dollar rupee, which is actually strengthened from closer to 96.5 yesterday to close to 96.25 as well. So to that extent, again, key supports are maintained. We have the 20-day moving average on the Nifty and the 200-day moving average on the Nifty Bank, which are important supports to track, and that's where ahead of expiry the option writers are positioned as well. So on the way up, 24,200 call writers, fairly active, premium for around 20-25 rupees, telling you levels upwards of 24,200. We will see some sort of resistance, but where we are right now, is important support, because 24,150 put writers equally active in trade as well. The premium around 25 to 30 rupees for that one as well, hoping for some support around 24,125. Those who are writing both of this are expecting a range between 24,100 for the frontline index all the way up to 24,250. Short covering on a couple of stocks which are taking them higher. One of them that really stands out is Nuvama Wealth. So that's a stock that I'll be tracking as we move along as well.
All right, Mangalam, thanks very much for getting us that update. We'll slip into a short break on that note. But up next, more on market fundamentals with Sonam Srivastava of Right Research. Stay tuned.
Last month, when it appeared like
Welcome back. You're watching Trading Hour, and as promised, we have with us Sonam Srivastava from Right Research for more on market fundamentals and top sectoral picks. Sonam, thanks very much for joining us here. I have to start by asking you about the big listing of the day, SBI Funds Management and the AMC space. Any thoughts there and the kind of opportunities you see, if that's a space that excites you?
The AMC space, I think definitely, we have been sort of constructive on this space, and we did have some allocation here. So, I think capital market AMC tends to be slightly high beta, and, with the volatility in this space, you have to be a little bit careful about this. But yeah, I think we are pretty constructive on this space. We've always had stocks in that segment in our portfolios.
What about pharma, Sonam? There has been, of course, there are still major companies yet to report results. But considering the run-up that a lot of these contract manufacturers have seen, say for the likes of Laurus, is contract manufacturing a theme that you are bullish on?
Definitely. I think we are pretty bullish on contract manufacturing and pharma as a theme. And we're increasingly seeing a lot of pharma stocks come up in our portfolios. And yeah, I think definitely, I think this is a very interesting theme, and I think this is where we're seeing that pivot or sector rotation happening, right? I think this is a scenario where you have to be a little bit defensive, and pharma continues to be a defensive sector, and I think you're seeing a lot of upgrades happen in that particular segment as well. So I think we are pretty constructive on the pharma theme.
Okay, Sonam, let's get some more views going on the financial space. I mean, this private versus public sector bank debate that's been going on for the better part of the year and more, and now with these earnings that have come in, does that solidify your views on what you prefer between the two and the underperformance we've been seeing from private banks and the outperformance of the PSUs? Do you expect that to continue?
See, I think banking sector as a whole is sort of an anchor for the index. It's the most high quality segment in the index right now, I would say. And I think private and public, both of them will eventually move together. And I think the movement that we're seeing in the PSU banks will only be confirmed when we see a rally in the private sector banks, right? And it's an interesting thing. I think in this earning, we have to watch a lot on the margin, as well as, the announcement that are coming from the NRI accounts, right? Where the FCNRA, how the banks are going to handle it. I think that will be something to watch. But yeah, I think with the correction in IT and across the index, there's some rotation that is happening towards the banking industry. And I would look at the private sector bank to, in fact, confirm if the trend continues.
Sonam, one final question from my end. The capital goods space has been in the news. The run-up that the stocks have seen, then the subsequent correction as well, concerns about oversupply, pricing, and so on and so forth. Where do you position yourself within this space? The transformer stocks, the supplier stocks, where does your preference lie?
See, I think we have been again very constructive on this. Like we've been in the transformer space, we've been in the data center sort of theme, right, for a while, and we've seen some correction, right? The ancillaries of this segment, we've seen correction, but I think earnings are coming. I think tomorrow you have Google, right, and then a lot of hyperscalers are coming up with earnings in this month. And I think that will tell you that the demand or the trends in terms of fundamentals are extremely strong. There is some profit booking that is happening. But yeah, I think there are a lot of positives that are coming for the particular industry. So we are just constantly waiting for this. And fundamentally, I think the segment is, in fact, the strongest, right? In terms of order books, in terms of earning projection, that is the strongest theme. But you're seeing some, organic sort of mean reversion happening there.
All right, Sonam, we'll leave it at that. Thank you so much for joining us here on CNBC TV 18. Appreciate your time. And on that note, let's do one thing. We'd slip into a short break, but when we return, we'll get you more on the markets. Stay tuned. back. Let's focus on Paytm. Their shares have reversed some of the gains after the first quarter numbers. The board has also shelved the bonus issue plan that they had indicated they would consider in this meeting. Hormuz joins us now to share other instances of bonus issues that have been called off or delayed by other companies. Hormuz.
You know, that's the bigger headline for Paytm's results, because the numbers are fairly decent. The commentary too, and in terms of the brokerage commentary as well, is fairly optimistic. But the fact that they have called off their bonus issue, they said that they want to focus on compounding growth and profitability for shareholder value creation. And the bigger concern is the fact that they have not shared any other timeline. That, okay, not today, but on XX date or YY date. They have not done that. And this is not the first instance that this has happened. This is not only Paytm, there are other companies as well that are part of this list. And the earliest instance is from Indus Towers back last year in May, when they had decided that they are planning on rewarding shareholders either via buyback, a bonus issue, debentures or dividends. They held a board meeting as well. The results were announced, but then none of this was declared. They said, okay, we'll form a committee, we'll consider all of this. But since then, there has been no bonus, no buyback, nothing. They've just announced a dividend of 14 rupees. That too is pending shareholder approval at the upcoming AGM. Now, NTPC and most of the others now in this list are PSU companies. NTPC back in 2019 had said that they are going to consider a bonus issue back in January. Of course, they delayed that proposal, and then next month they went on to approve to 5 bonus issue of shares. Rights back in 2020 had said that they are planning on considering a bonus issue of shares, but due to the onset of the COVID-19 pandemic, they said that okay, we want to conserve cash right now, maintain our balance sheet flexibility, and then we'll take a look at the bonus issue in a later date. And then in 2024 they announced a bonus issue. They have also carried out a buyback in the interim, and adjusted for the bonus issue, they have paid dividends of well over 40 rupees per share to their shareholders as well. Now, SJVN back in 2019 as well, in January, they were supposed to consider a bonus issue along with their Q3 FY20 results. They delayed that proposal, and since then there has been no further decision on that bonus issue. It has not been declared yet, and only 13 rupees worth of dividends have been paid in the last 7 years. ONGC as well, they were delayed the issue in October of 2016, then went on to approve 1:2 bonus issue in December of 2016, and since then that was the last instance of ONGC announcing a bonus issue for its shareholders. And lastly, BPCL is also in this list. In May of 2017, they had delayed a proposal to consider the bonus issue. Then they approved it in July. It was a 1:2 bonus issue. And then in June of 2024, they declared a 1:1 bonus issue as well. And since then, they have paid dividends of close to 40 rupees a share for their shareholders. So it's an interesting precedent that was for Paytm. Of course, the stock reacting to this news more than the numbers, was closing in on its 52-week highs, but still continues to remain well below its issue price.
Well, interesting trend there. Thanks very much, Hormuz, for highlighting that for our viewers. We have to take a wrap up on this edition of Trading Hour. On that note, for the markets, it's holding at about 24,170 as we leave. Now we leave it to the team of Halftime Report to take all the action forward.
But that
Stocks trades off amid the continued US-Iran tensions, even as mid-caps notched some gains. IT and insurance are the big drags.
Ultratech Cement markets its market position while achieving 100% brand conversion of India Cements and Kesoram. It expects double-digit volume growth with steady prices in FY27 and eyes the launch of its wires and cables business in Q3.
SBI and premium to its offer price of rupees 574 per share, following a heady 42 times subscription of its rupees 11,700 crore IPO led by QIBs. SBI's JV partner Amundi dispels any speculation over its selling further stake, says it plans to stay invested for a long term.
Paytm does a volte-face, drops its plan to consider a bonus issue of shares, says it will focus on compounding growth and profitability for creating shareholder value. This flip after a strong Q1 isn't the first of its kind.
RBI's update on forex inflows following its policy measures surprises the street. The FCNRB deposits have racked in a $17.4 billion till June 17th, far ahead of its estimates. Experts now project to mop up a near $50 billion via this route.
Welcome to Halftime Report live from the CNBC TV 18 Motilal Oswal studio. I'm Ekta Batran, with me is Vinny Motiwala. Well, it is turning out to be another mixed session for us. So the broader markets are managing to hold their head above the water at this point in time, similar to what we saw in yesterday's trading sessions. We have the mid-cap index, which is just about clutching on to gains, and the small-cap index, which is marginally higher in today's trading session, just about by around 0.3%, as you can see on your screen. The advanced decline ratio is split right through the middle at this point in time. So even keel, we have around 2,000 stocks advancing to around 1,900 stocks declining at this point in time. But there's a little bit of a crisscross which is taking place. What really stands out today is that the Nifty PSU Bank Index seems to be unwinding a large part of its gains. Remember, on a week-to-date basis, it's already up around 2%, but today it's down around 0.7%. Obviously, majority of the gains coming in yesterday. Autos continue to be in focus because Bajaj Auto and TVS Motors will be releasing their Q1 numbers today. So the street will buy in terms of market as well as commentary. So that's the big thing to watch out for in trade today. Hi, Vinny.
Hi, Ekta. Good afternoon. So yes, absolutely, that's about the market as well. And especially if you look at, we have SBI Funds Management, which is listed today. So that is interesting to watch out for in the trading session. And other individual names like Crude Bank, we have Gujarat Fluoro, ACE, that's Action Construction Equipment, all of them are buzzing in trade. We'll take you through more of the details also in the show as well. And in terms of Nifty Realty, that's among the top sectoral gainer today, while banks a bit muted, like Ekta mentioned as well. But yes, that's what is there in terms for the markets today. Let's talk about what's on the show for you all today, right? First up, we'll bring you the fine print on RBI's report card on the dollar traction measures and break down why the rupee is still weak despite measures. Now, in our top movers and shakers segment, then we'll be putting the spotlight on individual names. Karur Bank, Bajaj Healthcare, Action Construction. We have transformer rectifiers, which we'll be talking about as well. Moving on, Canara HSBC Life Insurance reported a steady quarter in Q1, where the company's new business premium as well as VNB rose 20%, while margins also expanded on a year-on-year basis. We'll be speaking to the management shortly. Stay tuned in for that to discuss the outlook of the company going forward as well. Let's move on and get started with the show. And with the first segment for today, we have Vivek, who is going to take us through all the stocks that are moving around in the trading session. Afternoon, Vivek.
Well, good afternoon, and thank you so much. Well, when you're looking at the broader end of the markets, quite buoyant over the advanced decline ratio, even though largely split in the middle, quite a few stocks are moving higher on strong volume. So volume activity quite strong at this point of time. In terms of individual stocks, well, can't look beyond the latest listing or the new kid on the block. SBI Funds, very strong listing, very strong subscription, higher by 8%. Remember, this is a very large company in terms of market capitalization. The other stock on the radar, one from the broad end of the markets, ACE Construction, good set of numbers, strong top line growth. That particular stock too, higher by almost 6% today. Quite a few of the brewers today are doing quite well. United Breweries today up on very strong volume, significantly higher than the usual average. Crude Bank, one of the top outperformers, especially in the private banking space, in the broad end of the markets, high by 10%. And Bayer Crop Sciences, after a while, we're seeing quite a bit of a move in select agri names. That particular stock, one of the top NSE 500 gainers. On the other hand, quite a few laggards as well. Well, IT stocks under a bit of pressure today. Most of the IT names are seeing cuts anywhere between 1% to 3%. Names like Birlasoft, LTM under a bit of pressure. Trill or Transformers and Rectifiers, that particular stock, again, a bit of a disappointment. Consecutive quarters of earnings disappointment. That stock low by almost 5%. Cartrade Tech, today on high volumes, that particular stock is seeing a certain amount of selling pressure. And lastly, Paytm, a good set of numbers, but a bit of profit booking post the recent 20% rally that the stock saw going into Q1.
Okay, all right. Thanks very much for joining in and giving us all of those updates, Vivek. Well, Canara HSBC Life Insurance is the first management on the show. The company's reported its Q1 FY27 earnings, with the new business premium rising around 25% year-on-year and the VNB margins expanding to around 21.1%. To talk more about this, we have with us Anuj Mathur, who's the MD and the CEO of the company, joining in now. Well, Mr. Mathur, thanks very much for taking the time out. If you could just start by giving us an update with regards to the key highlights of the quarter gone by. You've had your new business premium rising around 25% on a year-on-year basis. What exactly is the guidance for the remaining part of the fiscal?
Fine, thanks. First of all, thanks for having me on the show and good afternoon to all the viewers. Very happy with the set of numbers which we have announced, the first quarter results. In fact, in terms of new business premium, it has gone up by 24%. VNB also, value of new business, has grown by 29%. If I look at our VNB margin, that's upwards of 21%. So all these parameters are actually in very, very good shape. And the business as such has grown. And I would also like to attribute this to some of the things which have happened in the recent past in terms of relaxation on GST, where we are seeing clear focus now coming on protection. We are seeing good demand coming for protection. That's helping us in our profitability. Our overall strategy is to remain focused on the bank insurance model we have, diversify into agency, and maintain a very balanced product mix. So that's what we feel, which will help us in terms of continuing with the same level of profitability we have and also the new business premium growth.
Hi, Mr. Mathur. Good afternoon. This is Vinny joining in the conversation as well. You highlighted a couple of points. Actually, first, I want to touch up on the protection book, right? The growth in the protection book has been strong in the industry. I want to understand, what are you expecting in terms of the growth here, maybe for FY27? And also, where do you see the share for the protection going as a part of your new business premium as well as the APE, which is currently somewhere around 52% for a new business premium and 13% for APE, if I'm not wrong?
Yeah, so if you see our protection business, it has got two components. One is the credit life, which is the loan protection book, and the other is the retail book. And we have seen good growth of 40% in both the segments. So our protection business is growing pretty much. And as of Q1, our protection mix was about 13% of the total AP. So we are very much on track in terms of protection. And as I mentioned, some of the things like GST waiver last year is helping us. And the overall awareness for protection is going up. So we foresee good kind of growth coming in this segment. I would abstain myself from putting a number. But yeah, whatever growth we have seen in the past in terms of our overall top line growth, in terms of our profitability, VNB margin, that's going to continue.
So then, just what would be that product mix that how would it change from 52% for a new business premium, where it accounts to 52%? What would that go to by the end of the year or even FY28?
Yeah, so in terms of AP, actually, if I look at first quarter, we had our unit linked business about 36% and remaining 64% was traditional. That's in terms of the product mix. And we expect this product mix to be a very balanced one. While currently in Q1, we had kind of more traditional business coming in, more protection. But I think we also have appetite for unit linked business, because in our company, our philosophy is to offer what is customer need is. And we have seen that of late, when there is geopolitical uncertainty, the demand for traditional products has gone up, where the benefits are guaranteed. But at the same time, I would also like to mention that for customers who are looking at market-related returns, unit-linked products are actually a good option. So we feel that our unit-linked business would be somewhere in the range of about 45% or so over this year. And as the situation gets better in terms of market stability and all that, unit-linked proportion can go up to about 45%.
Okay, all right, fair enough. Mr. Mathur, on VNB, what had you guided for in FY27?
So our guidance remains the same, what we actually mentioned in the beginning of the year. We are looking at a range of about 22 to 23% VNB for the full year.
Okay, and you're sticking with that guidance. There's no sort of upward revision to that?
Not as of now. Over a period of time, with protection share increasing, it can increase. But as of now, we maintain this guidance.
Okay. Just give us a sense also, Mr. Mathur, I just wanted to understand, with regards to, the IRDA, it's not in favor of mandatory open architecture for bancassurance. You have an exclusive tie-up with HSBC, we do understand. Just give us a sense in terms of how you would read the situation now.
See, IRDA has enabled the regulations for banks to have multiple insurance companies or to stay exclusive. So I think the regulatory enablement is there. And after that, it is the choice of the bank. I think what IRDA is putting up is in terms of distribution reforms, wherein there will be some kind of guardrails in terms of the kind of features you need to have, the kind of guardrails in terms of selling practices. But I don't think so there's anything else on the bancassurance business or any. I think government is clearly looking for increase in penetration for financial inclusion. And I think bancassurance is a very healthy model wherein we are able to penetrate further into tier 3, tier 4 cities using the branch network which we have. So I think government is also kind of enabling the overall distribution platforms, and bancassurance is bound to grow.
Mr. Mathur, just 2 points from me that I want to know and investors want to know. One is for FY26, you had guided that you'll grow ahead of industry average. For FY27, what is that number? Industry average ahead of it means how much of an outperformance ahead of the industry average? And the other point is in terms for how you're going to be diversifying or distribution move away from the dependence on the bank side as well. So how is that going to be happening for the diversification side?
Right. So we had given guidance of about 18 to 20% in terms of our top line growth, AP growth, which we stick to. And I think this is a decent growth if we are able to kind of deliver over the year, which is what we have delivered in the first quarter also. So that's something which we are very confident about. In terms of diversification, and I'm glad that you asked this, we started with agency channel last year, and we have seen actually good growth coming in from agency channel. While the absolute numbers are not very big, but we are looking at phase-wise approach of ramping up our agency business. So that should help us in diversification. In addition to that, we have digital channel, we have direct sales, we have defense, and few other partnerships we have. So we are growing this business. So this will help us in terms of diversification in years to come.
Okay, all right, Mr. Mathur, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Canara HSBC Life Insurance's stock is up around 7% in today's trading session and is very close to its fresh 52-week high or 52-week high levels of around 166. So do watch out for that level for this particular stock. Just want to point out that Granules India has come out with a good set of numbers. There's a 300 basis points margin expansion which has taken place this time. So there's margins which have come in at around 23% versus 20% and a net profit which has surged down 60-odd% for that particular counter. That stock up around 2-odd% at this point in time. We'll do one thing, we'll take a short break, but up next we'll put the spotlight on Crude Bank, transformers and rectifiers and action construction equipment on our M&S segment. Stay tuned.
Some properties are not just homes. They are statements, achievements, legacies. At India Sotheby's International Realty, we represent the country's most exceptional properties. with unmatched expertise. Unique homes, uniquely for you.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Welcome back. You're still tuned into Halftime Report on CNBC TV 18. Like we've been pointing out, it is a mixed day for the market. So we have the Nifty, which is just about holding on to 24,170 at this point in time. But let's get talking about some movers and shakers in our movers and shakers segment. The place where we track a whole host of stocks which are buzzing in trade. First up, we have transformers and rectifiers, the stock that we're looking at. That stock is down 4.5%. Vinny is here to tell us more. Vinny, tell us.
Hi. So for transformer and rectifiers, the Q1 FY27 numbers, again, it's a miss that's coming from the company, right? For the last year, we've seen the company missing the street estimates. Now, this time the growth, when you look at the revenue growth, that's just an 8% growth. Expectation from the street was much higher. So there's a miss on that front. The EBITDA margins that have come in at 16.3% versus 16.6%. So 30 basis point contraction in terms of the EBITDA margins, and the profits of the company were down by around 5% as well. Revenues, the company highlighted why is there a moderate growth only of 8%, because they said there was lower capacity utilization as they were expansion of the facility that is in the Changodar manufacturing facility that's been going on, and that's expected to come online on August 2026, somewhere around in August 2026. So that's one reason that, you know, the execution has not picked up as what one was expecting. So execution is still a concern. Order inflows, they are healthy. We've seen order inflows coming in for the company, but the execution remains a concern. So order inflows for this quarter was around 2,114 crores. Overall order book as on 30th of June stands at around 6,630 crores as well. Inquiry pipeline continues to be strong, but a miss in terms of overall performance, and that is why the stock is down in today's trading session as well. So that's about transformer and rectifiers. It's the top Nifty 500 loser as well in the trading session. But let's move on and talk about Crude Bank. The stock is gaining, and this is coming in more than 10% of gains after their numbers. Let's go across to Ananya, who's here to take us through the details for this one.
Well, yes, they delivered an excellent Q1. If you look at the numbers, advances rising 17%, deposits growing 15%. The business momentum looks great here. Now, they also recorded one of the highest profit in the bank's history. And the margins were also impressive with NIMs at 4.26%. When you compare it with peers, it is one of the best, while asset quality continued to stand out. Credit cost stayed benign. Now, let us look at the management commentary. Now, management retained its disciplined approach here, guiding for credit growth to remain 1 to 2 percentage points above the industry growth, while maintaining a conservative FY27 NIM guidance of around 3.7 to 3.8% due to intense pricing competition, the management mentioned. Now, it also expects to improve CASA and fee income. If you can see, the CASA ratio is very low here. So, management now focusing on improving the CASA ratio. Now, they also remain selective in housing loans while preferring higher yielding LAP and sees only a limited impact from the ECL transition. Now, speaking to CNBC TV18 today, the management said that the bank's record performance reflects the strategy adopted 3 years ago to diversify beyond a corporate heavy book. Now it expects next quarter's NIM to remain at 4% with funding costs likely to stay stable, supported by RBI's FCNRB measures. Now management also highlighted that the nearly 6% sequential business growth was the strongest in almost a decade. Now they also reiterated that gold loans will remain around 32% of the portfolio and will not exceed that, with healthy LTV ratio maintained, and express confidence in asset quality. Now, if you see, the stock has also run up 50% over the past 1 year, and it remains the best performance in the mid-size segment.
Okay, all right. Thanks very much, Ananya, for that. So that's on Karur. But Vinny, back to you. You're tracking ACE.
Yes, absolutely. So ACE, or Action Construction Equipment, that's acing away in trade today, and among the top Nifty 500 gainers after Karur Vysya Bank is Action Construction. Now, why? Good set of numbers reported by the company. Strong double-digit growth of 20%. We're seeing the revenues at 785 crores. What is leading to this good revenue growth? The robust growth that the company is saying that they've seen in the construction equipment segment for them, which is a 22% growth approximately on a year-on-year basis. Now, margins of the company have also seen a slight bit of an improvement of around a 60-70 basis point odd improvement. 14.9% is what the EBITDA margin stands at. We're seeing an improvement in terms of the profitability of the company as well. And this revenue growth rate that you would look at, this 20% growth rate, that's been the best in the last couple of years for the company. So that is interesting. Overall, in terms of the volumes of the company as well, for cranes construction equipment side of the business, they've seen an increase in terms of volumes. Agriculture equipment, that's seen a bit of a decline in terms of the volumes. But all in all, good set of numbers, and that is why the street is giving it a thumbs up, Ekta.
Okay, all right. So that's Action Construction Equipment, which is up around 6%. So as you can see, that is our movers and shakers segment on Halftime Report. But let's move on to another important piece of news. The RBI's dollar attraction push is showing early results. Banks have mobilized over $20 billion via FCNRB deposits and overseas borrowings in just 6 weeks. Already more than half of what the 2013 scheme raised in its entire window. But the rupee is still down. Ritu is here with more details on this. Ritu.
Well, the first report card on RBI's foreign currency mobilization measures is out, and it's stronger than what many in the market had expected. In just 6 weeks, banks have mobilized $17.4 billion through the FCNRB deposit scheme and $20.7 billion in total, which includes external commercial borrowings and overseas foreign currency borrowings. Now, that, like you said, is already more than half the amount that was raised in the entire 2013 scheme, even though the window is still open until the end of September. So the measures are clearly bringing in dollars into India, and yet the question is why the rupee is still down nearly 7% this year, and it remains close to the record lows we'd seen earlier. Now, the simple answer is it's because the rupee is driven by daily dollar demand. Remember, India imports almost 85% of its crude oil, so higher oil prices means more dollars that oil companies have to keep on buying, and that puts pressure on the currency. Also keep in mind that the FCNRB inflows mainly strengthen our external balance sheet. So banks have to swap these dollars with RBI. So that in turn boosts the foreign exchange reserve and the banking system liquidity. So it supports confidence over time, yes, but it doesn't immediately add enough dollars to the spot market to offset the imported demand. And that explains why the rupee remains under pressure. Now, this latest RBI data that's come out also dispels any concerns in the market that the mobilization was falling short of initial expectations. Jeffrey says much of this FCNRB money appears to be fresh inflows, largely from NRIs in the UAE, Singapore and Hong Kong. Macquarie adds that perhaps foreign banks have played a much bigger role this time around, using their own balance sheets to support mobilization, broadening participation beyond just leveraged deposits. Now, both of them believe strong mobilization will improve bank funding and liquidity, even if the rupee has not responded yet. So going ahead, If the FCNRB mobilization remains strong through the month of September, oil prices also stabilize. The rupee should receive some more meaningful support, but until then, day-to-day importer demand for dollars is likely to remain the dominant driver of the currency moves that we're seeing.
Okay, Ritu, thank you so much for that. But on that note, we're going to slip into a very short break. And after the break, we're going to have Pritesh Mehta of Yes Securities who will join us to take us through his trading strategies. Stay tuned in.
Pennsylvania.
CNBC TV 18 tracks the pulse of markets and business in real time, bringing you the stories that shape the economy.
From breaking news to sharp analysis, we deliver insights that help you navigate businesses, markets, and investment opportunities.
Novama presents CNBC TV 18 Market Central.
Providing sharp market intelligence for wealth creation with a commitment to doing it right.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
ए दया, कौन है रे?
मैं है।
सखू।
हाँ।
साहब बनेगा रे हमारा दया।
सर, आपकी कॉफी विद मिल्क और सर, आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर, आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ यार।
और फिर एक दिन उसे एक मौका देखा।
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार।
Welcome back to Half Time Report on CNBC TV 18. Nifty at 24,176 levels. A bit of a dip in the last few minutes that we're seeing furthermore. Down 0.3% in the trading session. But a couple of names that I want to highlight. Like you can see, Arvind Fashions, you have seen the numbers coming in here as well. The net profit of the company is up 11% on a year-on-year basis. We've seen a sharp fall coming in the stock as well right now. Revenue is a 15% growth. We'll have to wait out for versus what the street was expecting. Seems like the street is not liking it because the minute the numbers were announced, we're seeing that fall coming in. Operationally also, EBITDA has seen a growth of 20% still for the company as well. So let's watch out for more details in the press release maybe that we get along as well. Apart from that, I want to highlight a couple of names in the last 30 odd minutes that have seen a bit of an up move. Welspun India, that's seen a bit of an up move in the last 30 minutes. So keep an eye out on that. That's 1.5% as well up and a bit of an increase there. Then we have MRPL, that is also among the gainers that are coming in the last 30 odd minutes, and Piramal Pharma also among the names. But let's keep it going then, and on that note, bring on board Pritesh Mehta, Executive Vice President at Yes Securities, joining us right now on the show. Pritesh, good afternoon. Thank you so much for joining us on the show as always. Let's start with the key levels that you're keeping an eye out on for Nifty as well as the Bank Nifty. Yesterday, Nifty Bank was something that was leading to the downfall in the market. Today, it's a bit better, but what are the levels you're keeping an eye out on?
So thanks for having me, first of all. And obviously, for a while now, in fact, for last 2 months, we were of the opinion that Nifty is not going anywhere. Now we are knocking on the door of resistance. No, we in this last few days sessions we went close to the zone of 2400, 24,300, and then came back. And now, when the financial space, Bank Nifty is participating. On Friday, it was one of the big movers. Yesterday, it was a down day, but again, it is holding strong. So when I look at the ratio of private versus PSU bank, privates have been moving better. They are showing outperformance. So I feel that we have seen PSU banks doing better. We have seen small private banks doing better. I think now the big boys need to participate. I think we are waiting that that move coming in from these big boys, and that is the only leader which can take the market higher from here on. So this is the one we need to focus on.
Okay, Pritesh, hi, welcome to the show. Well, what would your stocks be, and would you have a view on a company such as Granules?
Yes, first of all, let's get the stock ideas. The one that we like is Manappuram. So again, as I mentioned earlier, the financials are the one which are making noise. We already saw big moves coming with the likes of MFI companies or housing finance companies, and we have started doing much better also from in last couple of weeks now. So one that we like is Manappuram Finance. Again, if you look at the structure, we can see bullish ABC breakout on point of figure chart, a continuous move coming in, series of double top buys. From here, we can see rally towards 390. The stop would be around 335. The second one that we like is SRF. So we are on customized chemical index that is moving higher. So SRF, a big underperformer, has not done anything last couple of weeks now. In fact, last couple of months. Now they're showing signs of coming back. It is already given a triangle breakout. From here on, we can see rally towards 3,300 coming in. Stop would be around 2,800.
Okay, that's your point taken there, Pritesh. For Granules, do you have any view? And also, we have one query that's coming in from Urvashi, who's writing to us from Pune as well. And this one is on SBI. She's bought it at 600. So what should they be doing with this one as well?
So, as I mentioned earlier, we are bullish on private banks. And it is one of the baskets which can push Nifty higher or Bank Nifty higher. PSU Bank, not a right time to be in this space. So I think SBI, had its time earlier, not a right time to get in this stock. In fact, we should think of exiting, not building positions. And coming back to Granules, the Granules has been a big mover within the pharma space. The stock has done well. We're talking about rally from 600 levels to 800 plus. Now it's taking a breather. But I think nothing wrong with the structure. It's a matter of time the stock goes over 900 levels. Once the 900 zone is surpassed, then we can see a fresh boom coming into play. So this is the one to keep an eye on.
Okay, all right, Pritesh, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's what the technicals are throwing up today. But India's largest AMC, SBI Funds shares, have listed with a 7% premium on the bourses. Let's get in Devyani to break down how the stock compares with peers such as HDFC AMC and ICICI Pru AMC, and what are the key risks ahead. Devyani, over to you.
SBI Funds listed at a premium of 7% over its issue price at around the 613 rupees per share mark. This implies a price to earnings of around 41 times its FY26 earnings and a market cap of 1.27 lakh crores. Now, at these levels, it is trading between HDFC AMC, which trades at 40 times its FY26 earnings, and ICICI AMC, which trades at about 46 times its FY26 earnings. Now, that is in spite of the fact that it has a higher AUM and market share overall, but keep in mind it also has structurally lower yields than its peers due to a higher 32% passives exposure. Now, coming to this passives exposure, this is likely to reduce going forward because of their SIP book, which stands at a strong 4,000 crores and is actives heavy. Now, that said, also the CKYC 2.0 rules, which are expected to roll out very soon, is something that the management is counting on to help reduce onboarding friction going forward, and as a result also be able to convert more SBI customers into mutual fund investors, which currently just stands at about 2% penetration, which could increase going forward. Now, there are also certain risks to keep in mind. specifically the regulatory risks, especially with SEBI tightening its measures going forward, including the recent expense ratio changes that came into place. And along with that, keep in mind AMC business by itself is cyclical in nature and moves with market movements, which directly impact the AUM as well as the investor sentiment. And that said, the mutual fund business is growing, but so is competition with it, with Jio BlackRock, Grow AMC and Angel One AMC all ramping up operations, and companies such as Anand Rathi setting up their own AMC going forward.
Devyani, thank you so much for that. But on that note, we're going to slip into a very short break. After the break, Manisha Gupta will join in and she'll be in conversation with Lalit Pangar of Global Smart Comtrade. Stay tuned in for that conversation.
And
Some properties are not just homes. They are statements, achievements, legacies. At India Sotheby's International Realty, we represent the country's most exceptional properties with unmatched expertise. Unique homes, uniquely for you.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
ए दया, कौन है रे?
मैं है।
सखू,
हाँ।
साहब बनेगा रे हमारा दया।
सर, आपकी कॉफी विद मिल्क और सर, आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर, आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ आया।
और फिर एक दिन उसे एक मौका देखा।
ग्राफिक्स 1299।
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां
Welcome back. Well, a couple of nifty movers include Shriram Finance. So that stock is up around 3% at this point in time, doing well. We have Nifty Bank also, which is up around 2.6%. It'll be interesting to see how exactly HDFC Bank is doing. We're seeing further pressure on HDFC Bank come through today as well, post its numbers or post its reaction to its numbers that it released on Saturday. So HDFC Bank is your top loser on the Nifty at this point in time, down around 1.5%, and has now lost out around 22% of its market cap on a year-to-date basis. Dr. Reddys, interestingly, comes out with its numbers tomorrow. So Dr. Reddys is down 1% ahead of that. So do watch out for Dr. Reddys. The other one which stands out is Trent as well, which was the top gainer on the Nifty yesterday, but now losing some ground. So Trent is down around 1%. But Manisha Gupta joins in to tell us what she's tracking in the commodity space. Manisha, over to you.
Thank you so much for that. And joining us now is Lalit Bangar. He's head agri at Global Smart Comtrade. Mr. Bangar, hi. Thank you so much for joining in. And we are watching the monsoons and the sowing numbers very, very keenly. And the latest data that came in yesterday evening from the Agriculture Ministry in India does show that the biggest stress when it comes to sowing is now in case of pulses. Big percentage declines is what we are looking at, 15% down on an year-on-year basis. What is your sense, first of all, the El Niño impact, the lower sowing that we are looking at in the Indian markets? Does that mean that India is now susceptible to perhaps more imports into the country?
Namaste, Manisha ji, and thank you to you and all viewers to having me on this platform. Yes, indeed, the numbers which have been issued by the government are definitely worrisome. And one more point which I would like to highlight is that just don't look at the hectares numbers only, because we are yet to see the yield also. Just let us not be happy if we found very good monsoons turning out to be next week and we have a good sowing numbers. But certainly the yield and the sowing and the rains at the time of when the pod is getting matured and when the flower is incoming, that time also we have to see the impact on the other. But yes, from an international perspective, I can tell you that this year we are going to see a huge imports into India for all the pulses. So we have seen the big spurt in the prices of black mud pay, pigeon peas, and the lentils going down to $500, seen up to now to $530, $35 in just a matter of 6 days. So it is indeed a matter of concern for all. And for the pulse industry, I would say that it is a sigh of relief in a way for the trading community, that they have seen the worst prices, the bottommost prices. So from here, you can see a price trend upward only.
Mr. Bangar, I don't. It's still early days right now. But when you said that the prices have bottomed and we could be looking at higher prices from here, what is a very conservational increase in sense of percentage prices that you are anticipating?
So if I break it into the pulses, different major pulses wise, let's start with black mud pay. We have seen the spurt of about 17 to 18% in last say a month or so. The reason was, one, the delay in monsoon. Two, the gap, the very negligible stock of black mud pay in India. Three, the big supplier of black mud pay like Brazil, the crop has just started, so the shipment will arrive sometime in August mid onwards. And then there was a big gap in the stock in India. So this has really given a fundamental push. Then we come to pigeon peas, which is another important pulse. Again, the same story, the delayed monsoon. And the recent spurt is again attributed to the same regions which I told about black mud pay. Going to the lentils and yellow peas, which is to another important pulses. Initially the numbers of Australia was higher for higher production, but it changed later on. So likewise, all the pulses basket, and we have seen the prices going down, even if the monsoon would have been good and decent. Because from the bottom range, the prices are bound to go up only. So this is one of the reason you can see that all prices are going to go up from the current levels. So irrespective of even we get the good normal monsoons in coming few days.
How much of an import in India are you anticipating, accumulative of all the pulses?
Sorry?
How much of an pulses import do you think India will have to do?
I think we will going to hit again 6 million tons, perhaps 6 million plus.
Okay. And you said that the prices already have gained anywhere between 10 to 15 to 18% for some of these pulses. How much of a further gain can we anticipate from here on in the coming months?
For black mud pay, yes, almost it is matured, I think saturated at the moment. Maybe a couple of percentage, 2, 3, 4% is going to be. For pigeon peas, there is a scope for another 5 to 10%.
Okay.
And for chickpeas, yellow peas, and lentils, these three products, I really feel that the spurt could be anywhere between 5 to 10% in coming few months. The regions, again, which I told earlier also, that the not much stock available there in India, and the demand is going to start from, and then we are going to see festival months in coming 3-4 months are festival months. And one more important thing which I would like to highlight is that, which people normally ignore, that as per our Vikram Samvat calendar, the monsoons are not delayed. If you see, this year, Vikrami Samvat 2083, the third month is the Jest month. Jest ka jo mahina hai, Jest month, there are 2 Jest months. So effectively, the rains have started in Ashad, which some people don't believe, but this is our Indian calendar theory also. So they're not delayed if you really look at that. But because we follow the English calendar pattern for sowing and all, so we are a bit worried here. So you can see the monsoons have recovered in last few days. Initially it was that the monsoons will be very, very deficient and all.
Well, Mr. Bangar, It's an El Nino year as well, and that is where the concerns are coming in from as well. We'll have to see how the August and September go, but I take your point that this is an extra month and every month is delayed, so perhaps we could be looking at better monsoons going forward. But thank you, Mr. Bangar, so much for joining and with your sense on pulses.
Okay, all right, Manisha, thanks very much for that. So those are the Bajaj Auto numbers which are flashing on your screen. Just prima facie looks better than at least what the street was anticipating. So as you can see, the net profit is up around 42% on a year-on-year basis. We were anticipating around 2,810 crores in terms of sales. It's coming at around 2,983 odd crores. Similar case for the revenue. The revenue has come in at around 17,244 crores, and we were anticipating around 17,050 odd crores. So there's a marginal gain in terms of the revenue which has come through. So it's a 42% gain in terms of the profitability this time, and a 37% rise in terms of the revenue is what Bajaj Auto has reported. I think we had the margins flash by as well, if I'm not mistaken. So maybe we can just pull back the EBITDA. EBITDA has come in at around a 45% growth to 3,595 crores, 3,595.6 crores, and that translates to a margin picture of around 21% versus 19.7% in terms of a year-on-year performance for Bajaj Auto. So overall, looking good for Bajaj Auto, and as you can see, there was a little bit of a movement of the stock into the green. And revenue, again, higher than estimates. We have the profit, which was higher than estimates, and over 42% growth, which has come through, and the margins, which have been delivered at around 21%, which compares to around 19% on a year-on-year basis. We'll wait by for the press release, but any more data?
So as of now, Ekta, we have only so much data that's flashing at the screen, but surely the stock did see a jump up, then again it's come back to flat. On the operational front, it seems better than what one was expecting, right? The profits of the company also are seeing an improvement, like you mentioned, so that will be interesting to see. And we'll get Sud to give us more details on this front as well, in terms of overall the expectation that is coming in for Bajaj Auto versus the expectations. How did it perform as well? EBITDA surely operationally very, very strong, and 3,595 crores is where it stands at. Let's go across to Sudarshan. He's here and he's connected with us now to tell us what are the important key highlights that he's picking up here. Sudarshan, over to you. How are the numbers?
As expected, it's a very good set of earnings reported at Bajaj Auto, and the reason for this outperformance is mainly because of the major exposure that company has from the export segment to the total volumes. Export forms almost 50%, and that has not only have added the volume and revenue, but also has lifted the margin. While for all the other auto companies, we are expecting compression in the margin, but Bajaj Auto has reported margin of almost 20.9%, which is at a multi-quarter high. Now, just talking about the headline numbers, profit has increased by 42%, revenue has seen a surge of 37%, and EBITDA too has seen a jump of more than 45%. And look at the margin, it has come at 20.9%. Our expectation was around 20.5%, and it's up more than 100 basis points if you compare against Q1 of FY26. And volumes, as we know, that it's up both YOY and on a sequential basis. Year on year, if you talk about, it's up 29%, on a sequential basis 5%. Now look at the most important number, realization. We were expecting an increase both sequentially as well as YOY, but it has outperformed on that front too. Year on year, it's up 11%. So it tells you exactly the realization the company is earning per bike. So there also it's up 11% YOY, and on a sequential basis also 8% improvement. So it's a very good looking set of numbers that Bajaj Auto has reported. Now in the evening around at 6 o'clock, Bajaj Auto holds investor call, and that what exactly would be looking out for. Now see, so far all the companies have been seeing very strong volume growth. Is that high level of volume growth sustainable? Can the company sustain the volume growth that has seen so far? And second one is the most important, is the margin. Now, has the margin hit the bottom for most of the auto company? It's not the too valid question for Bajaj Auto, but still exactly we'll have to see what does management say, and also what are the strategies on KTM and electric two-wheelers front. But as far as the numbers for Q1 FY27 are concerned, first look suggests very strong set.
Okay, absolutely strong set coming in, and Sudarshan has said that very strong set coming in for Bajaj Auto. We do have Gurmeet Chadha of Complete Circle joining in to give his view on the numbers. Gurmeet, the revenue growth, which is up over 37%. We have a profit, which is up around 42%. Margins have expanded around 200 basis points to 21 versus 19%. What's your overall reading of Bajaj Auto?
I think the number definitely look better than estimates. I think even there is volume growth and margin expansion, and this has been a tough quarter with so much disruption in supply chain, as well as input costs being all over the place. So numbers definitely look good. There is obviously some valuation comfort. The stock has been nicely consolidating, unlike what we've seen with TVS. So I think from the first cut, I would like to see the breakup also in terms of the EV, the export numbers, etc. As we get into the detailed call. But I think first cut numbers look pretty constructive, and I think auto overall, as a sector, has surprised me. Both in terms of dispatches, Vahan registration data. I've been speaking to some of the CEOs of auto ancillaries in Delhi NCR. And the outlook and demand remains very robust. In fact, most of them have very, very good capex plans, which augurs very well for the sector. So post GST cut, there was an expectation that with monsoon and war, things will slow down. I think things are looking pretty constructive.
Okay, we also have Ashwin Patel of LKP joining us right now as well. Ashwin, afternoon. What is your first cut in terms of numbers? Beat seems like that's what is coming in. We have more details, right, in terms of the domestic motorcycle realized double-digit growth in terms of revenue for the company. Exports also has been very strong. What are you keeping an eye out on now, and what is your anticipation from here on?
Well, the numbers have quite, come quite robust. I think, on the volume front, there is no issue at this point in time. At least in Q1, it was not. But going forward, we need to see how the monsoons and all pan out and the rain deficits, etc. Mainly on the rural-centric companies. But for Bajaj Auto, I think, most of the business is coming from, equally from domestic as well as exports. And the exports have been really doing well. Also, on the domestic side, also the volumes have been performing well. The concern only going forward will be the margins. Now, in Q1, the margins have come out really very well because of the rupee depreciation benefit that Bajaj Auto has got because of the exports presence. But going forward, we need to wait and watch how the margins fare well. And overall, the volumes, have been quite robust in Q1, not only for Bajaj Auto, but for all the other companies in the auto sector. So going forward, we need to see how these volumes pan out, considering the monsoon impact. And overall, otherwise, the numbers have been quite good.
Okay, yes, overall the numbers have been quite good. Gurmeet, coming back to you on what even Ashwin brought up with regards to the sustainability of the margins. It's coming at around 21% this quarter. What are you expecting for the remaining part of FY27? What are the headwinds that you see when it comes to the margins?
I think the bigger headwind was monsoon, especially the rural numbers. But I think from what has gone by and what we saw in June update and a little bit monsoon also advancing, I think that certain concern has allayed. I just hope crude prices remain what they, and probably head lower and the conflict doesn't escalate. Third, I think I would want to see the EV mix. I think what we've seen with Ather, with Delhi government making EV registration compulsory from 28, I think most state governments will follow. So your portfolio mix in terms of EV, the Chetak numbers, etc., would be extremely important from a re-rating or a future trigger point of view. The stock is 25 times trailing, and maybe with these numbers, maybe less than 20 times forward. So I think valuations are no longer a concern. Company has cash. I think how this mix evolves, and of course the guidance on exports, because that's a large part of Bajaj number. I think those will be future triggers. But I think we don't own Bajaj Auto so far. We have TVS and more an auto ancillaries in the portfolio as a disclaimer. But I think this earnings could be a bit of a event which can slightly maybe re-rate the stock, hopefully.
Gurmeet as well as Ashwin, thank you so much for joining us this afternoon, explaining us in terms of the breakdown of the numbers for the company as well. The stock as of now is flip-flopping between the red and the green before it picks up the side. But on that note, we're going to slip into a very short break. We'll come back with more on stocks, more on markets after the break. Stay tuned in.
ए दया, कौन है रे?
मैं है।
सखू,
हाँ।
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। चॉली सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहां जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ आया।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा। जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया और हमें यह सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमेशा दया करता है। ऐसे इंडियंस लिख रहे हैं नए इंडिया की कहानी और बजाज फिनसर्व इनका साथ देता है।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
ए दया, कौन है रे?
मैं है।
सखू,
हाँ।
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। चॉली सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहां जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल।
Welcome back. Well, for the markets, the Nifty is holding with a cut of around 0.3%. So there's been no sort of buying at lower levels, which has come through. The broader markets, like we've been saying, it's just about holding its head above the water. So we have the mid-cap index, which is just about higher by around 46 odd points. We have a slew of events which are weighing on the markets. There's earnings. Separately, we do have the geopolitical risks along with Brent crude and maybe even the rupee, which is weighing in terms of sentiment. On that note, it's a wrap on Halftime Report. Business Lunch up next. Stay tuned.
Forced it onto.
Stocks trade soft amid continued US-Iran tension, even as mid-caps notch some gains. IT and insurance are the big drags.
SBI Funds Management lists at a near 7% premium to its offer price of 574 apiece, following a healthy 42 times subscription of its 11,500 crore rupee IPO led by the institutional investors. SBI's JV partner Amundi dispels any speculation over it selling further stake, says it plans to stay invested for the long term.
Paytm does a volte-face, drops its plan to consider a bonds issue of shares, says it will focus on compounding growth and profitability for creating shareholder value. This flip after a strong Q1 isn't the first of its kind.
The Reserve Bank of India's update on forex inflows following its policy measures surprises the street. The FCNRB deposits have raked in nearly $17.5 billion until the 17th of June, far ahead of expectations. Experts are now projecting a mop-up of nearly $50 billion via this route.
Bajaj Auto races past Q1 estimates with strong realizations and margins on the back of buoyant exports. The numbers deliver a positive surprise considering expectation of higher input costs impacting profitability. A weak rupee is likely to have aided the strong show. Hello and welcome to Business Lunch, live from the CNBC TV 18 Motilal Oswal studio. I'm Arundhati Ramnan, and with me as always is Hormuz Patakia. Hormuz, good afternoon. You know, the Nifty and the Sensex extending their losses a little bit more, but the mid-caps managing to hold in the green.
Good afternoon to you as well, Arundhati. And you know, there is the busiest stretch of the earnings for the week is about to start, and we already started getting a few numbers in. And unsurprisingly so, the Nifty is at the lows of the day currently, and 90 points lower. It was 90 points lower yesterday as well. Today being the weekly expiry for the index, so that has a part to play. The 24,140 is where we are, but the analysts still remain fairly okay until 24,000 is held on the downside. Of course, 24,300 continues to remain a barrier on the upside. Now, the Nifty Bank, though, was quiet all morning, is trading in a very narrow range, but since then has come off slightly as well. So 80 points lower on the Nifty Bank, and as was the case in yesterday's trading session as well, the broader markets are looking to outperform. They did so yesterday. They're trying to do that in today's session. Just before I toss it back to Arundhati, just pull up Bajaj Auto as well. Numbers came in just a few minutes ago, and it was a very, very strong quarter based on what Sudarshan told us. But the stock, though, is still down around 0.7% despite very strong exports. You need to keep in mind the fact that it has run up as well quite significantly. The 10,500 now is where the stock currently is, but lots of earnings still lined up. So it's promising to be a busy evening as well.
Absolutely, Hormuz. But if you take a look at how the sectors are faring, pulling the market lower are those PSU bank names. That index is seeing cuts of around 0.7%. We've got SBI, Bank of Baroda and Canara Bank, all of them down between 0.5% and 3% lower. We've got those IT names that are also under pressure. That index is down as well. We've got Infosys and TCS, both of them down over 1%, and Wipro nearly 1% lower. And some of the names that are doing well and helping the Nifty cap those losses are those Realty names. We've got Prestige and Godrej as well as Soba, all of them gaining nearly 1% in trade. We've also got those metal names that are doing well today. JSW Steel, Hindustan Zinc, Jindal Steel, all of them between 0.5% and 3% in the green. So that's how the markets are faring this afternoon. But first up, SBI Funds Management made a good debut on the stock exchanges today. The stock listed at a premium of nearly 7% over its initial public offering price, following a strong demand during the 3-day subscription period. And here's the management of SBI and Amundi on the listing. Take a look.
There are definitely a financial institution, State Bank of India, has helped to grow through our subsidiaries route, and now currently with SBI Funds Management we have 3 subsidiaries listed, and we would definitely look for opportunities of listing as they evolve and mature and reach a stage where the listing makes sense.
SBI FM is a translation of a very strong partnership between SBI and Amundi. It has been a long journey for us. This partnership has lasted for 20 years. But I want to say it's only the beginning, and we are a very happy shareholder of SBI FM. We will continue to build this partnership, to grow together, and we will continue to be there alongside SBI for a very long time.
Well, that was the new listing of the day. SBI Funds Management, a healthy subscription and a strong, healthy debut as well, if you call it that, is a big size for itself, 8% higher in comparison to its issue price. It has already received a couple of initiations as well. One from MK, of course, that has set a target of 750 rupees on the stock, and the other one has also come from Equirus. So a couple of bullish recommendations already on the day of its listing. Just pull up Atlanta Electricals as well. That company too reported its results just a couple of minutes ago, along with Bajaj Auto, and that stock has seen a bit of a collapse from the highs of the day, 4.5% lower now on Atlanta Electricals. Of course, this is another name that has gone up significantly from its issue price.
Absolutely. And the Reserve Bank of India's special measures to encourage overseas deposits from non-resident Indians have attracted $17.4 billion in FCNRB deposits till July 17th. Ritu Singh is here with all of those details. Ritu?
Well, the first report card on RBI's foreign currency mobilization measures is out, and it is stronger than expected. In just 6 weeks, banks have mobilized $17.4 billion through the FCNRB deposit window and $20.7 billion in total, which includes the external commercial borrowings and the overseas foreign currency borrowings as well. Now, that is already more than half of the amount that was raised in the entire 2013 FCNRB scheme, even though this current window remains open until the end of September. So the measures are clearly bringing in dollars, and yet the rupee is still down nearly 7% this year and close to the record lows. Now, the answer to that is simple, because the rupee is driven by daily dollar demand. You see, India imports more than 85% of its crude oil. So higher oil prices means the oil companies have to keep on buying dollars, and that puts pressure on the currency. Also keep in mind, FCNRB inflows mainly strengthen our external balance sheet. Now, banks, when they get these dollars, they swap it with the RBI. So that will boost our exchange reserves and the banking system liquidity and supports confidence over time. But it does not immediately add enough dollars to the spot market to offset the importer demand. And that explains why the rupee remains under pressure. Now, the latest RBI data also dispels any concerns in the market that the mobilization was falling short of the initial expectations. So Jeffrey says much of this FCNRB money appears to be fresh inflows, largely from the NRIs in UAE, Singapore and Hong Kong. Macquarie adds that foreign banks have played a much bigger role perhaps this time, using their own balance sheets to support mobilization. Now, both believe the strong mobilization will improve bank funding and liquidity, even if we don't see the response on rupee yet. Now, going ahead, if FCNRB mobilization remains strong through the month of September, oil prices also stabilize importantly, the rupee should receive more meaningful support. But until then, day-to-day importer demand for dollars is likely to be the dominant driver of the currency movement that we're seeing.
Ritu, thank you for that update there. Now, earlier today, Pranjul Bhandari, the chief India economist at HSBC, told CNBC TV 18 that they are expecting $50 billion worth of inflows from the FCNRB deposits. Added that the strong inflows can handle problems with regards to the strength in the US dollar. Listen to what she had to say.
What gives us confidence is the update that we got last night, that there have been inflows which have been quite strong and fairly front-loaded. It basically gives a sense that, it's off to a good start, despite all the problems that, borrowing costs are very elevated at this point of time, which is true. And our sense is at this level, I think it's going to be even higher in August. So broadly speaking, our estimate is that, we could get, about $50 billion from the FCNR alone in this entire sort of 3-month window, and then take about $10 to $15 billion more from ECB and all of that. So $60 to $65 billion inflow, which will really help the BOP and put it into surplus. 2013, most of the inflows came in the last few weeks. But remember, 2013 was a fairly new concept. This time we all know about this, so people have been more proactive. So it's quite possible that it's going to be front-loaded this time. It's hard to say, but I do agree with people who say that borrowing costs are high, and a lot of people were thinking that this could get us $100 billion. Maybe it's possible, but I think it's a little exaggerated from my perspective. Maybe not that much, but I think we're sort of out there that we can aim for a $45 billion to $50 billion, given what has happened in the first month. Look, whenever the dollar appreciates, it's a bit of a problem for emerging markets because of problems with outflows and all of that. But this time, around the same time, we have all of these FCNR inflows. So in a way, at least for now, we can offset and overcome some of this dollar strength problem that would otherwise have hurt us a lot.
India's largest airline, Indigo, has made a major bet on engine maker CFM International. The airline has signed an MOU for more than 1,000 LEAP engines, the largest single order ever for CFM. Madhya Mujawar joins us now with all of the details. Madhya?
Well, this isn't a new aircraft order. These engines will power 510 Airbus A320neo family aircraft that Indigo has already ordered. But the significance lies in who will power those aircraft that have been ordered already. So when airlines buy an Airbus A320neo family aircraft, they have two engine choices, Pratt & Whitney's GTF engine or CFM International's LEAP engine. Now, Indigo's latest agreement is a clear vote of confidence in CFM as the airline prepares for its next phase of growth. The deal is significant because Indigo has faced years of operational disruptions due to issues with Pratt & Whitney's GTF engines that led to grounding of several of its aircraft over the past few years. Indigo had started the shift to LEAP engines for A320neo family back in 2019 by selecting CFM for some 280 aircraft. Then in 2021, it again chose CFM for another 300 aircraft. Now, by signing up for more than 1,000 LEAP engines for 510 aircraft, Indigo is reinforcing its long-term engine strategy. The agreement also includes long-term maintenance support, spare parts and assistance in setting up Indigo's upcoming engine MRO. For CFM International, this is the largest LEAP engine order in its history, a big win for CFM and a big setback for Pratt & Whitney as Indigo, which was its biggest customer, has again chosen CFM. This is also the first time when Indigo CEO designate Willie Walsh has officially spoken on behalf of Indigo and was also captured in a picture along with promoter Rahul Bhatia and the CEOs of Safran and GE Aerospace. So a big order there by Indigo for CFM International.
Maria, thank you for that update there. A big order indeed for those engines. Take a short break. More news and updates follow on the other side. Stay tuned.
Increasingly
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Welcome back. On to updates from West Asia. Then the US continues its bombing on Iran for the 10th consecutive night with explosions reported near Sirik and in Bandar Abbas, Qasem Island, Chabahar and Konarak. US President Donald Trump has warned that Iran will pay many times over for the deaths of American soldiers after a week in which at least 3 US personnel were killed. Meanwhile, Iran continued its retaliatory strikes across the Gulf, with Iranian army saying that it targeted US missile systems at Kuwait's Camp Arifjan in recent hours. Now, another tanker was also hit off the coast of Oman. Elsewhere, Yemen's Iran-aligned Houthis declared a naval blockade against Saudi Arabia effective immediately. The blockade is in response to Saudi Arabia's continued unjust and oppressive siege against their people. CNBC's Dan Murphy gets us the latest updates.
The Iran-aligned Houthis in Yemen have announced a naval blockade on Saudi Arabia. A full closure of the Bab el-Mandeb Strait, which accesses the Red Sea, could cut off Saudi oil exports to Asia and reduce global oil supply by around 7%. It's unclear if the Houthis will start attacking ships heading towards Saudi ports, but this new threat will likely choke off shipping activity and cause significant uncertainty around the Saudi oil trade. The Saudi-led coalition in Yemen said such threats will be met with a response and are a, quote, blatant violation of international law. The Red Sea escalation also comes after a deadly weekend for US forces, with the Pentagon identifying 2 US soldiers killed in an Iranian attack on a base in Jordan and another in Iraq. The Wall Street Journal reporting this morning that Iranian attack on Mufawak Salti Air Base in Jordan hit housing units where those troops were sleeping. It comes as US Central Command announced in the last few hours that it had completed a 10th consecutive night of strikes on Iran. Meanwhile, a senior Iranian official told Reuters that Tehran has received a proposal from mediators for a 10-day ceasefire aimed at paving the way for a lasting agreement to end the war that began on February 28th with US-Israeli attacks on Iran. CNBC has reached out to Iranian and Qatari officials for comment on the proposed ceasefire deal. The war has, of course, killed thousands of people, mostly in Iran and in Lebanon, part of which has been occupied by Israeli forces following attacks on what the IDF say is Hezbollah in the south.
So that's the latest from West Asia. But on that note, it is time for us to head into a short break. More news and updates coming up on the other side. Stay tuned.
Some properties are not just homes. They are statements, achievements, legacies. At India Sotheby's International Realty, we represent the country's most exceptional properties with unmatched expertise. Unique homes, uniquely for you.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
ए दया, कौन है रे?
मैं है।
सखू।
हाँ।
साहब बनेगा रे हमारा दया।
सर, आपकी कॉफी विद मिल्क और सर, आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर, आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ आया।
और फिर एक दिन उसे एक मौका देखा।
ग्राफिक्स 1299।
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगा.
Welcome back. You're still with us on Business Lunch. Former Manchester Mayor Andy Burnham becomes UK's 7th Prime Minister in a decade. Burnham described the moment as a circuit breaker as he promised to usher in a new political and social model for the country, taking power out of London and spreading it across the regions of the UK. CNBC's Ritika Gupta gets us the updates. Ritika?
Really, the markets are focusing on these new cabinet picks, and what we've seen is that it's change on Downing Street with the Starmer allies out and the new Prime Minister Andy Burnham completely moulding his cabinet towards his own ambitions here. Now, the biggest surprise was the role of Chancellor, which was announced as John Healey. This is the former Defence Secretary who last month quit Starmer's government in a row over defence spending. Now, this was a total curveball pick. Everyone thought that it was going to be a race between Shabana Mahmood and Ed Miliband, but now Mahmood is going to remain the Home Secretary, and Miliband will be the new Foreign Secretary. So, what do we know about John Healey, and what can we expect? He worked in the Treasury many years ago. We also know he's a defence hawk, so we can expect that defence spending will be a big priority for him. The irony here is that Healey will now be tasked with finding the money to fund a multi-billion-pound hole in the defence budget that the Treasury had previously refused to fund. Now, overall, he's still seen as a steady pair of hands, and reportedly this pick reflects Andy Burnham's desire to have somebody as Chancellor who's experienced to navigate the economy, but will also back his policies of reindustrialisation, devolution and the cost of living. And this announcement comes shortly after Burnham began to lay his policy agenda out. He said he won't take risks with the economy. He's going to be prudent. He's going to stick to the fiscal rules, but he's also going to try and find flexibility around them. Now, today, Burnham's going to unveil a package when it comes to reducing the cost of living. This is a down payment on a broader 10-year plan later this year. Take a listen.
Later this year, I will bring forward a new plan for Britain, a 10-year plan, laying out a path from where we are now to where I believe we all want Britain to be, wherever we're coming from, whatever party we support. But I can do something to give people some breathing space now, some help with the cost of living. And I will set out some of those measures starting tomorrow, including how we pay for them.
So he'll be outlining some of the short-term tangible measures that he can provide people to reduce the cost of living. Where the issue lies is some of those more longer-term projects, the likes of devolution, social care, building council homes. These are going to cost a lot of money. And the question here about whether Andy Burnham is overpromising on what he can deliver on, because it certainly looks like we may have to see tax hikes coming the autumn budget.
Moving on then, an orange alert has been issued for Mumbai. Forecasters have warned of very heavy downpour alongside winds gusting up to 60 kilometers an hour. The IMD says a fresh low pressure system over the Bay of Bengal will pull the monsoon trough back into position, moving from the northeast to central and northern India. Meanwhile, Himachal Pradesh continues to bear the brunt with 36 roads still blocked and 43 drinking water schemes disrupted by fresh landslides.
And it's time to take a check on the markets. The Nifty it's doing slightly better than when we started the show about 30 minutes ago, but still near the low point of the day. It's about 0.3% in the red at about 24,168. The Sensex is down around 330 points as well. The Nifty Bank absolutely flat, doing slightly better than the Nifty and the Sensex. That index about 21 points in the red. We've got the mid-cap index. That's the only one in the green. It outperformed yesterday as well and is doing better today as well. It's about 0.2% higher. And if you take a look at the advanced decline ratio, we've got about 1,550 stocks advancing for 1,476 that are declining as we speak. So those lines crisscrossing at this point. Helping the markets go higher are those metal and realty names, and on the downside, it's those IT names. But with that, it is a wrap on this edition of Business Lunch. From Hormuz and me, goodbye and many thanks for watching. Midcap Radar will take all the action forward.
Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
When the market moves, we don't just report, we decode. From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV 18 Market Central for your daily source of market intelligence and wealth creation with a commitment to doing it right.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
ए दया, कौन है रे?
मैं है।
सखू,
हाँ।
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहां जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ आया।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा।
जो दया
Good afternoon and welcome to Mid Cap Radar live from the CNBC TV 18 Motilal Oswal studio. I'm Vivek Iyer and with me today is Ekta Batra. Well, Ekta, good afternoon. Well, it's been a very topsy-turvy session. We've had a lot of results. We've been digesting a lot of results that's come in. Yesterday, the Bank Nifty was down significantly. Today, we saw an auto company, Bajaj Auto, delivering its results. Been quite topsy-turvy, but advance declination, the broader end of the market's quite in favor of the advances.
Hi Vivek, yes, absolutely. At this point in time, it's definitely a mixed set of indices for our markets at this point in time. The broader markets managing to hold up. But nonetheless, we'll take you through all that and more in the next 30 minutes. These are top stories. Stocks trade soft amid continued US-Iran tensions, even as mid-caps notch some gains. Mid-caps outperform relatively. IT and consumer durables are the big drags, while metals gain.
Crude Vysya Bank shares near record high after a 12% jump on the back of record Q1 profits. The management tells CNBC TV 18 that they will be able to maintain their current asset quality.
Action Construction Equipment, or ACE, fires up after posting strong double-digit growth driven by robust performance in its construction equipment business.
Paytm does a volte-face, drops its plan to consider a bonus issue of shares, says it will focus on compounding growth and profitability for creating shareholder value. This flip after a strong Q1 isn't the first of its kind. Well, welcome to Mid Cap Radar. Well, we are essentially seeing quite a bit of volatility, especially as far as the broader end of the markets are concerned. Earnings, despite quite a few of the companies coming and delivering a strong set of numbers, names like Granules, that particular name has seen quite a bit of a fall from the from the intraday highs. Even a name like Atlanta Electricals, that delivered a very good set of numbers, has now dropped down and it's down almost 5%. The other stock that we've been tracking, of course, has been a couple of names from the broad end of market, names like Jindal Steel, SAIL. All of these stocks have recovered quite smartly. But this is a special segment, mid-cap movers. These stocks and a whole host of other names is what Ria has on her radar. She's standing by the big wall to take us through all of the mid-caps that are moving around in the session.
Well, yes, a lot of stocks moving around in today's trading session. Let's start off with the gainers. First, we have Crude Bank, which continues to gain after posting a strong set of numbers yesterday. In fact, the stock is also trading on very strong volumes today, nearly 21 times the monthly average volumes traded in today's session. There's also Gabriel India on the gainers list. This stock is up nearly 70% in the last 4 months. Gujarat Fluorochem also continues to trade higher, up nearly 50% in the last 4 months. And also on the gainers list today is Balrampur Chini Mills as well as Nuvoco Vistas. Also looking at some of the stocks that are at their 52-week highs today, there's Canara HSBC Life, Manappuram Finance, Ajanta Pharma, HSCL as well as Reddys Labs. And on the flip side, looking at the losers in today's trading session, we have Gallant Ispat, which continues to take a hit today. Cartrade also is on the losers list, but this stock is up nearly 55% just in the last 2 months. MV Photovoltaic also taking a hit today, but up nearly 70% on a year-to-date basis. Even Aegis Logistics has doubled in the last 4 months, and Zensar Technologies is also on the losers list today, and this stock is down nearly 40% in the last 1 year.
Okay, all right, Ria. Thanks very much for bringing us all of the stocks that are moving around. Shrikant Chauhan of Kotak Securities joins in for a technical check on the markets. Shrikant, hi, welcome to the show. Well, 24,200 thereabout is where the Nifty's been hovering for the past couple of trading sessions. What's your call in terms of any sort of decisive move that the Nifty would make and your strategy on how to play it?
Good afternoon, Ekta. Good afternoon, everyone. So I think 24,500 is the level above which we can expect reversal in the market. Till then, we are expecting market to consolidate within this range with a downward bias, because at 96 levels of currency and 90 levels of crude, I'm not expecting market to sustain at higher levels. Yes, we may see some higher opening or maybe bounce back during the day, but to sustain at higher levels, we need some positive flows. In the absence of that, we can expect market to remain sideways, and we can even expect some downward pressure in the market. So I'm of the view that the market may even retest the levels of 24,000 or 23,800 in the near term. That's the overall view. For Bank Nifty, there also we are seeing some struggle. It is finding difficulties to sustain above the mark of 58,000. Possibility of hitting 57,000 are very high, and accordingly, we have to place our bets.
Okay, Shrikant, that's your view as far as markets are concerned, but give us a sense of what exactly are your trading tips or trading ideas for the day.
For the day specifically, it's very difficult to say because the market is in the range. But for next 1 or 2 days of time, we can expect some activity in stocks like Nestle, which is currently trading around 1450, 1455. It is forming higher base formation. Based on its technical formation, the next level to watch out for would be 1500 or maybe 1530. We can keep a stop loss around 1420 for creating long positions. The other stock on which we are bullish is Container Corporation. There also, we feel that after a very long time, the stock has absorbed selling pressure around 490, 480 sort of levels, and it is holding comfortably above the mark of 480, which is positive. Based on its technical formation, the next level to watch out for would be 550, 560. Between these levels, 490, 500, it's a buy with a stop loss at 475.
Okay, all right. Well, a couple of these financials continue to be in focus, Sriram. Just wanted to understand, Shrikant, how you'd approach an HDFC Bank, which is seeing follow-on selling in today's trading session?
It was completely unexpected that the stock can fall like this after breaching the level of 800. But when looking at its entire technical pattern of last at least 2 months or 3 months since April, I am of the view that the stock had started forming base building formation. I think it will take some more time, but eventually I'm not expecting stock to sustain below the levels of 740, 750 so easily. Around this level, we can see some sideways sort of activity, and eventually the stock can again start moving towards the levels of maybe 820, 850. So it's not that the stock is going to outperform the market, but at the same time, downside looks limited. And at this level, or maybe somewhere close to 750, 740, the stock is having very good support. There we should look for taking some long bets.
Okay, thank you so much, Srikanth, for joining us, giving us a view on the markets as well as your individual trading calls, along with a view on select banks as well. Well, we'll now slip into a short break. We'll get you more on the markets and focus on Crude Bank, which is buzzing in the session today.
We've not.
ए दया कौन है रे?
मैं है।
सखू
हाँ।
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहां जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ आया।
और फिर एक दिन उसे एक मौका देखा।
ग्राफिक्स 1299।
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा। जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया और हमें ये सिखाया।
Welcome back. Well, for the markets, like we've been pointing out, it's an extremely quiet day. We have the Bank Nifty, which is absolutely flat at this point in time as well. So we do have a pull and push which is taking place within that Bank Nifty. And maybe the constituents should come up for you. So stocks such as HDFC Bank continues to reel under pressure today. But on the upside, we do have a couple of counters such as IndusInd Bank, which is holding up with a gain of around 2.5%. And even Kotak Mahindra Bank, after yesterday's reaction, that stock is up around 1% today. Just watch out for Bajaj Auto as well. After what was a great set of numbers, the stock is just about lower by around 0.3% at this point in time. So consolidating for Bajaj Auto. A couple of the other auto stocks, however, doing well. So Hero Moto as well as M&M, all of these counters up anywhere between 0.5% to 1% at this point. But time now for our mid-cap spotlight segment. Ananya is here. She's focusing on Crude Bank. Ananya, over to you.
So, well, the stock is surging today. The bank, I'll give you the numbers afterwards. I'll give you the background first. So, it's a South India focused private lender. They have diversified from a corporate heavy book to a diversified retail, agriculture and MSME franchise. So, that diversification is reflected in the strong quarter that they delivered here. Now, if you look at the numbers now, the advances are up 17% year on year. The deposits up 15%. The business momentum looked great here. NIMs, if you see, are the best among the peers, 4.26%, and the credit cost and the asset quality are also best in class. Now here, the bank delivered. Now speaking to CNBC TV, the management mentioned that the bank's record performance reflects the strategy adopted 3 years ago to diversify beyond a corporate-heavy loan book, like I mentioned earlier. Now here, management maintained a conservative FY27 NIM guidance of 3.7% to 3.8% here. Now it expects next quarter's NIM to remain around 4%, with funding costs likely to stay stable, supported by RBI's FCNRB measures. Now management also highlighted that the nearly 6% sequential business growth was the strongest in almost a decade. Now they also reiterated that gold loans will remain around 30-35%, maximum it will go to 32%. They will not extend beyond that, with a comfortable LTV of around 67%, non-agri LTV of around 60%. Now interestingly, despite a CASA ratio of just 27.5%, the bank continues to generate an ROA of over 2% plus. So the bank has also given, like if you look at the stock performance of the last 1 year, it has given 50% return. So it is one of the best mid-sized bank, best performers in the mid-sized segment.
Well, thank you so much, Ananya, for joining us and giving us all of the details as far as Karur Vysya Bank is concerned, and that particular stock clearly outperforming, especially as far as the private financials are concerned. But Ananya, do stay on with us. Paytm is in focus. The company has gone ahead and dropped its plan to consider a bonus issue. It says it will focus on compounding growth and profitability. A good set of numbers as far as Q1 is concerned. But Ananya, what's caused the fall? Quite a bit of a rally prior to the results as well.
Well, yes, good set of numbers, like you mentioned. Revenue up 28% year-on-year. EBITDA nearly tripled, and net profit, they continue to deliver the fourth consecutive profit. Now, the board, now here the main catch is the board also decided not to proceed with the proposed bonus issue. Now, choosing to prioritize long-term capital allocation over short-term shareholder reward here. So that's what weighing on the sentiment today. Now, one thing to look at. Let us look at the bullish side first. Citi retained its buy rating with a target price of 1560. Now they highlighted that the EBITDA beat and potential impact upside if UPI MDR is introduced. Goldman Sachs also maintained a buy with a target price of 1500, citing strong execution, faster revenue growth, merchant share gains, and improving profitability. CLSA, however, retained its underperforming rating with a target price of 1050. It believes that the recent rally has already priced in hopes of a UPI MDR return for large merchants, which could improve Paytm's earning, while also highlighting pressure on a Paytm take rates and operating costs. So while the bulls are betting on stronger growth and profitability, the bears believe much of the optimism is already priced in. That is also reflected in the stock price action. The stock has declined for the last 5 trading sessions, despite gaining over 21% in the past 1 month and around 30% in the last 1 year. So one of the key things to notice here, all in all, the growth looks good, but the valuations are still quite expensive compared to the peers.
Okay, absolutely. So definitely a valuation challenge there coming in. Ananya, thanks very much for that. So that's Paytm, that stock down around 3.2% at this point in time. Remember that you've seen that dip come through just post 1 o'clock on that particular counter. But India's largest AMC, SBI Funds shares, have listed with around a 7% premium on the exchanges earlier this morning. Let's get in Devyani to break down how the stock compares with peers such as HDFC AMC and ICICI Pru AMC, and what are the key risks ahead? Devyani, over to you.
SBI Funds listed at a premium of 7% over its issue price at around the 613 rupees per share mark. This implies a price to earnings of around 41 times its FY26 earnings and a market cap of 1.27 lakh crores. Now, at these levels, it is trading between HDFC AMC, which trades at 40 times its FY26 earnings, and ICICI AMC, which trades at about 46 times its FY26 earnings. Now, that is in spite of the fact that it has a higher AUM and market share overall. But keep in mind, it also has structurally lower yields than its peers due to a higher 32% passives exposure. Now, coming to this passives exposure, this is likely to reduce going forward because of their SIP book, which stands at a strong 4,000 crores and is actives heavy. Now, that said, also the CKYC 2.0 rules, which are expected to roll out very soon, is something that the management is counting on to help reduce onboarding friction going forward, and as a result also be able to convert more SBI customers into mutual fund investors, which currently just stands at about 2% penetration, which could increase going forward. Now, there are also certain risks to keep in mind. Specifically the regulatory risks, especially with SEBI tightening its measures going forward, including the recent expense ratio changes that came into place. And along with that, keep in mind, AMC business by itself is cyclical in nature and moves with market movements, which directly impact the AUM as well as the investor sentiment. And that said, the mutual fund business is growing, but so is competition with it, with Jio BlackRock, Grow AMC and Angel One AMC all ramping up operations, and companies such as Anand Rathi setting up their own AMC going forward.
Okay, all right, Devyani, thanks very much for that. So yes, while competition is seeping within that space, for today, the stock is managing to hold up in a weak market with a gain of around 8%. We'll take a short break, but we'll get you a lot more on the markets once we're back. Stay tuned.
Movers and
Welcome back to Midcap Radar. Well, a bit of a recovery as far as markets are concerned, especially in the pharma pack. Names like Reddys Labs, names like Pyramid Pharma, now near the day's highest point. But shifting focus, SBI now draws a hard line, insisting it will sell only SBI Life's product at its branches. This comes days after we reported that the government isn't considering mandatory open architecture for bank assurance, and that IRDAI itself isn't in favor of that. Yes, joins in with more details. Yes, important development as far as SBI Life is concerned?
Well, absolutely. On the sidelines of SBI Funds Management listing, there's an important statement which has come from SBI Chairman C.S. Setty. On the insurance side, there have been discussions of late from the highest authority in terms of what are the pros and cons of open architecture when it comes to bank assurance. What is bank assurance? It's an arrangement between the insurance company and banks to sell the products of that insurance company. Today, an important statement came from the top authority at the State Bank of India, from C.S. Setty, the chairman himself, saying that the bank would stick to selling only SBI Life's insurance products at all of its branches. The chairman, substantiating this particular stand, said that they get confidence when their subsidiaries' insurance products are sold at SBI branches. Now, in terms of major insurance companies which have a closed bank assurance network, it includes SBI Life, Kotak Life, as well as Canara HSBC Life on HSBC's side. It is primarily important for SBI Life because SBI, the State Bank of India branches, they together contribute 56% to SBI Life's individual new business premium and 50% to its total new business premium. The situation is important because imagine it this way. Today, SBI, State Bank of India branches only sell SBI Life products. Tomorrow, assuming maybe if open architecture was to be introduced, the branches will also have to sell other life insurance companies' product, and the amount of business which today the branches are providing to SBI Life could have reduced and would have been shared with other insurance companies. That at the moment, according to SBI chairman, is not happening, and that entire business, and it's a large business, as I said, 56% of individual NBP and 50% of total NBP will continue coming to SBI Life, going by the statement made by the chairman at State Bank of India.
The product suitability is approved at the highest level in SBI. And I don't think we are looking at competing products. As I mentioned, I think our focus continues to be on core activity of deposit mobilization and lending. Nothing distracts us from there. As far as the open architecture is concerned, I think broadly we believe that we have product portfolio across insurance, life, non-life, mutual fund. I think every product is in our portfolio. And it gives us confidence that when our own products are being sold at counters, both for customers and so for the time being, I think we will stick to our own subsidiaries product.
Okay, let's get back to numbers then. We have Ria now joining in to tell us about Reliance. Ria, over to you.
Well, yes, Reliance has been tanking in today's trading session, down nearly 3 to 4% after coming out with its quarter four numbers yesterday. Now, on the headline, the numbers have actually beaten estimates. The revenue has seen an increase of nearly 7% versus estimates of 2% growth, and this has largely been led by a double-digit volume growth that the company saw in the domestic formulation segment. The EBITDA has also increased by nearly 23% versus estimates of an 8% decline, and this has been driven by better volume growth in the crop protection as well as optimization of fixed costs that the company has undertaken. Even the net profit has increased by nearly 29% versus estimates of a 9% decline. So overall, the headline numbers for the company have been good. But if you look at the segments, the crop care segment revenue has increased by nearly 7% on a year-on-year basis. And while this has primarily been driven by a 19% increase in the B2C segment, the B2B segment has seen a 19% decline this time around. So that has offset the revenue growth for the segment. For the seeds business as well, the company has seen a 6% revenue growth this time around, and they have seen a volume growth in some of the select key products for this segment. But the entire segment has faced market headwinds this time around, largely due to delayed sowings. And in fact, the company has also said that for quarter one, the B2B exports, which includes the CSM exports revenue of the company, has declined by nearly 16% compared to the previous year. And overall, the demand environment has been quite weak and subdued for the company. And today, the stock is reacting to these results, down by nearly 4%.
That's right. Thank you so much, Ria, for joining us and giving us a sense of what exactly has led to quite a bit of a weakness as far as Reliance India is concerned. A bit of a negative read across even for Tata Chemical that owns a significant stake in Reliance India. Well, in terms of the markets themselves, have a look at HDFC Bank. Follow-on selling here is quite significant. That particular stock down almost 2% after the little over 4% fall that we saw in yesterday's trading session. But with that, it's all the time we have on this edition of Mid Cap Radar. MF Corner when we return.
He is
Hello, good afternoon. You've tuned into MF Corner on CNBC TV 18. I'm Vinny Motiwala, and thank you so much as always for tuning in. Now, today what we're going to be discussing is going to be business cycle funds. So, before we get into the conversation, bring on board our experts as well. Let's understand a bit more about business cycle funds. What are business cycle funds? Business cycle funds are equity mutual funds that don't stick to one style. They keep rotating through the economic cycle and through the cycle of the economy as well. So, there are phases, right? You have recovery, you have expansion, there may be a peak of the cycle, and there may be a slowdown. So through these cycles, you will see the fund changing its style, changing its investment in sectors as well. Now, the fund manager will shift between sectors and bets to match this economic cycle. rate-sensitive plays like banks, real estate in a recovery cycle is something that maybe some fund managers would look at. Then you have industrials, consumer discretionary in the expansion phase, defensives like FMCG, healthcare that come into play in the next cycle. And when things cool off, there are other sectors that a fund manager may look at. Now, SEBI actually has classified this under thematic category. But unlike a pure play thematic fund, which is maybe locked only into one story, one sector, whether it's defense, whether it's PSUs, that's not the case with business cycle funds. And fund managers have the option to exit or change the sectors entirely according to their macro views, according to the changes that are coming in the economy as well. So that flexibility is there, and that's the pitch as well. There are around almost 19 funds that are there in India as well, and the top one itself, when you look at it, is over 15,000 crores in terms of AUM in this category itself. So the category leader has a very large chunk in terms of the AUM, and you can see the fund performance and the fund returns coming in on a screen as well over a period of time. And we look at it in terms of the 5-year returns. It's coming at 16% for business cycle funds as an average as a whole that I've compared it. And individually also look at the fund names that come in. You have ICICI Pru that is there in terms of the list, and that is the leader in terms of the business cycle fund. You have Quant Business Cycle Fund, Kotak Business Cycle Fund, which have done much better in terms of a performance over a 3-year CAGR basis, which I'm looking at. So that'll be interesting to see that how this is going to be moving and how business cycle funds actually merit whether to invest in them. Should you look at it versus maybe a thematic fund, a flexi cap fund? When should you be looking at it? We'll discuss all of this. And to discuss that, we have our experts joining us today. We have Kushal Baghi, who's the owner at PCC Investing, as well as Kshitij Mahajan, co-founder at Complete Circle Consultants. Kshitij as well as Kushal, good afternoon. Thank you so much for joining us on the show as always. Let's get just started with the basics. We've understood what business cycle funds are, but where are they currently sitting in the India story? And if someone or an investor who believes that 2026 is going to be a turn for that upcycle, is it the time to look at business cycle funds now? Kshitij, let me start this one with you first.
Good afternoon, Vinny. A very interesting topic you have picked. And I think there are 4 different cycles which we look at in the economy. One is recovery cycle, second is a medium cycle, and then end cycle, and then recession as a cycle. And we are at medium phase where already rate cuts have been done. We are at 5.25 of repo, where growth is picking up, where capex is building up. Private capex is expected to grow at 21% this year, around 2.7 lakh crore. I think we're in that cycle, and business cycles and in this phase, they're looking at to participate in consumer discretionary. They're looking at to participate in energy. They're looking at to participate in materials to some part, because it's not the rate cut has not been actually transformed into the real results, because we have seen rate cuts happening on the repo side, but it's not transformed in bond side. So yes, banking stocks also, business stocks, maybe NBFC stocks also they are looking at. So, interestingly, how it works, at what phase you are at. So India, I think, is at that phase. Most of the business cycle portfolios are inclined toward that. So there we are.
Absolutely. Point taken there, Kshitij. Kushal, coming to you on the same point as well. Where do you believe that we are in this business cycle right now? And if an investor is looking to enter this one, would it merit entering a business cycle fund, or maybe there are other options that they should be looking at?
Right. Thanks, Vinny, for having me on the show. And yes, I agree. There's certainly reasons to be optimistic. One could argue the environment is becoming kind of supportive for equities. But I'd also say it's not very easy to predict or gauge where exactly you are in the business cycle, because these turning points are only obvious in hindsight. It's entirely possible that 2 business cycle funds, they may both agree that India is on an upcycle, but their portfolios might be very different because fund managers may be able to disagree on which phase they're in or even which sectors capture the opportunities the best. I would say if an investor has conviction that the economy is indeed entering a stronger phase, then a business cycle fund, it's an interesting way to express that particular view, because a fund manager is trying and does have the flexibility to rotate quite hard into sectors that are expected to benefit. But I won't say it's the only possible avenue or it's the default avenue. I mean, a well-managed, diversified flexi cap fund will also participate in the economy. It actually depends on each individual investor, where they stand with respect to their portfolio construction And whether flexi cap or whether a business cycle fund, they can use either of the two to get this objective achieved.
You know, Kushal, I just have a follow-up. You know, you mentioned flexi cap also. You could either go for flexi cap as well, and that's what everyone is picking up right now. You know, why then should I go for a business cycle fund, right? Why not just stick to flexi cap? What interests you then in a business cycle fund?
So I think the first thing is that, understand if I have to talk about a core and satellite portfolio, right? This is not your core portfolio fund. It's a satellite fund. And I think investors would be actually advised first to build a portfolio of diversified equity fund, which builds a lot of your core portfolio, like a flexi cap fund, for example, or a large cap fund, because these are well-defined categories. The parameters of where you can invest, cannot invest, these are very clearly spelled out by SEBI, and investors know what they're getting into. If you have a large cap fund, it says 80% of your EM should be in the top 100 companies. Or a mid-cap fund which says 65% should be in the 150 companies. So larger AUMs, easier to select, easier to compare, and these are good, long-standing track records. I would say once you have the experience of remaining invested in these funds, right, then you can consider building out a satellite portfolio aggressively, and that's when you look at business cycle funds, because flexi caps do also rotate between sectors. They can participate in the upside in the economy. It's just that the rotation in a business cycle fund tends to be more pronounced, more concentrated, and more volatile than what you typically see in a flexi cap fund. So again, depending on where an investor is in their own journey, if you're just starting out, I would think if you want to take advantage of this, go with flexi cap funds. But if you've already got a well-established portfolio and you're then looking to play this as a concentrated bet, then a business cycle fund is something that you could look at.
Kshitij, coming to you as well, like Kushal also said, depends on where you are in your portfolio as well. This is surely not a part of that core portfolio. How should an investor maybe look at this more detailed? Is there a way that investors should know this fits my category right now or not? Is it just a tactical bet or an addition, according to you as well?
Well, Vinny, yeah, for sure it's a tactical buy, but tactical buy is also not for everyone. Let's say someone who's starting, his or her journey as an investment. I don't think that a business cycle or thematic fund should be a part of their portfolio. They should start with index fund, flexi cap fund, multi-cap fund. Second, someone whose risk appetite is not that, on higher side, they should also avoid, because they can have drawdown for 12, 18 months where you see no return or low returns or negative returns in the portfolio. Because at what point in time you are entering into a business cycle is also important. Sometimes we have a conviction, let's say in a pharma, as a story will turn around, but you are early in that rally, and for next 6, 8, 9 months or a year, there is no movement in the segment. So some news like US India FTA issue has cropped up. So some sectors take sometimes little long. So I think it's not meant for those clients also. It's meant for people who understand and can go level 2, that how these sectors work, who understand a few economics metrics, that how what trigger a fund manager to churn this portfolio, because this can be really volatile, much more volatile than I can say small and mid cap fund also, in terms of its approach. So I think it's meant for those clients who are okay to understand that as a category. It can do well, but yes, it can take some time, and who are there for 5, 7 years, because sometimes if one cycle is not playing out, the other cycle will play out for you. So one has to be clearly watchful while allocating toward this category.
Absolutely. Kshitij, what do you understand? How does this dance stand up against thematic? As of now, it comes in the thematic category, but business cycle fund versus just someone who's specifically in defense, PSU, sort of funds. How does that stand up versus that?
So thematic means you have picked up one theme. Let's say theme is defense, PSU, revival. It can be banking, it can be consumption, and so many thematic funds have come. Business cycle doesn't stick to one theme. So as we say, markets started recovering, or let's say rate cuts have started happening in the markets, then you keep on moving to one set of sectors, and then you move once you reach the medium stage, which is the Indian stage right now. Thematic is pure that you play one theme, one story. So thematic fund is a fund where you need to exit also in right point in time. And if you're coming on the wrong cycle in terms of, let's say if the entire theme has played out, let's go back and understand and see how 2021, 22, 23, all these PSUs and all these themes done really well. Somebody who's coming in 24 onwards have seen negative or low returns in that category. So thematic is totally that you based on one theme and you play that entire story on that theme. Very strong conviction and only one story you play. But business cycle is different. So, thematic, you need to have a right exit in right time. At the same time, you should understand that theme well, that it should go along with your overall investment philosophy and allocation. Business cycle is one fund, it's a tactical allocation, but you can have for long term. It can go up to 5-7 years in your portfolio.
Okay. Kushal, coming to you, if you had an investor comes to you and says, should I pick up maybe an thematic fund or should I pick up a business cycle fund? What would that be? And, maybe what is a checklist that one could have for a business cycle fund when they're entering into this? What is important to note as well?
So I think the biggest difference, as your guest rightly mentioned, is I would say that a business cycle fund is much more dynamic, than a thematic fund. If we understand that and you want to look at the key criteria in terms of what to select or what you're looking for before you buy a business cycle fund, I think you have to understand what you're buying when you buy a business cycle fund is a fund manager's ability to navigate the changing economic cycles. And therefore, the people and the processes that are behind the fund, that becomes very important because unlike diversified equity fund, right, here you have managers taking very concentrated bets. They're betting very aggressively and moving in and out of sectors. This is a very actively managed product. So you want to look and see whether a fund manager has experience of successfully rotating through at least one full cycle before. And if the returns are good, then you have to look a little deeper and actually ask yourself the question, have these returns been delivered by the same fund management team over the years? If the 5-year returns of a fund are spectacular, but the fund management team has changed in the last 1 year, then that historical performance may not be a very relatable guide to the future. So understand that business cycle funds tend to be very dynamic. It's a very tough task. It's a very actively managed fund. And therefore, fund management, track record, expertise, consistency, I think these aspects matter a lot more as opposed to whether the expense ratio of one fund is slightly higher than the expense ratio of another fund, for example.
Okay, important points there. But, the key highlight is that this is a very dynamic fund. First, understand where you are standing at it as well, what your expectation is also, before you look at the checkpoints also that are mentioned, whether it's a fund management, track record, consistency, all of that will be key because this is not a short-term investment that you're making. It's a long-term story, 5 to 7 years at least, a cycle that goes on, and that's where you'll be seeing the whole story play out for the business cycle funds. That's the point right now, but on that note, we're going to slip in a very short break, viewers. We'll come back and continue this conversation forward. Stay tuned in.
ए दया कौन है रे?
मैं है
सखू
हाँ
साहब बनेगा रे हमारा दया। सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर आपकी ग्रीन टी।
थैंक यू दया। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल हाँ आया।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा। जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया और हमें ये सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमेशा दया करता है। ऐसे इंडियंस लिख रहे हैं नए इंडिया की कहानी। और
Welcome back to MF Corner on CNBC TV 18. We're still discussing business cycle funds today, and we still have with us Kushal Baghi, owner of PCC Investing, as well as Kshitij Mahajan, co-founder at Complete Circle Consultants. Kushal, let me start the segment with you. Now, you said, yes, it's dynamic. Depends on where you want to invest in as well. Not a core portfolio for sure. But if you're very positive on the business cycle, you think that this is the time you're going to see an upcycle as well. Should an investor look at it more on a lump sum strategy or an SIP strategy? How does that thesis also play out? If you're earlier in the cycle, is SIP better? How do you judge this?
Well, honestly, there's a case to be made for both methods of investment, right? You have a lot of people who say SIP is always better. That might not always be the case. What is SIP? SIP is primarily a behavioral tool, right? It helps investors invest regularly. It reduces the anxiety of trying to time the market. But does it automatically mean that it's the better investment strategy in every situation? I think not. I think if an investor already has a lump sum amount available, your asset allocation is in place, your core portfolio of flexi caps, etc., is already in place, and you've done your R&D and you have conviction in the fund manager's ability to navigate the business cycle, then yeah, it's a very reasonable method of going and deploying capital. Because, remember one thing, even the best fund managers, they can't consistently identify the top and the bottom of each cycle. In fact, that's not even their job. What they're trying to do is trying to capture a bulk of the opportunity. So think about it this way. If you think and you believe that the economy is at the beginning of a new upcycle, and then you do a staggered SIP approach, that could mean that by the time all your funds are invested, a meaningful part of the gains have already happened, right? So in that case, lump sum would be much better. But I think if you are building out your equity portfolio still, if you are investing from monthly incomes, if you are a little bit nervous about where you're on the valuation stage, then SIP is a perfectly excellent way to go and invest in these kind of funds. Just understand that SIP is a much slower strategy than lump sum because you're dealing, how you're investing that money. So your patience will be tested a little bit more.
Absolutely. Patience will be tested a little bit more. But that's the nature of the market, right? They test your patience. You have to just wait by whatever returns you're waiting for or whatever your goal is. But that patience sometimes becomes a real fear when your portfolio is maybe lagging, your mutual fund is lagging for 12 to 18 months. Then, Kshitij, does this become a very big red flag given that, we are investing in business cycle funds? At what point of time should an investor worry about this as well, right? 2 years is almost a long time that they could start worrying if your fund is underperforming.
Vinny, had it been every year you keep on getting 15% return, money from deposit will also start moving to business cycle fund. So 12, 18 months underperformance is not a very long underperformance because sometimes, as I said, it happens with best of the best fund managers. We have seen HDFC CIO having conviction on the PSU side, and eventually that playing out in a big way in 21, 22, 23. I'm saying sometimes it happens with best of the fund managers that you take a call on some theme and it's taking some time to play out. But yes, if you can see that the underperformance is for more than, let's say, maybe 10, 12 quarters, maybe, which is 2.5, 3 years, then you should reconsider whether the approach is right or not. For that, while investing, before investing, I think one check and one has to do is the track record of a fund manager, whether he has seen down cycle, up cycle, both, and he has maneuvered the right themes when the cycle is turning around or not. When you see only the up cycle, which can cause some sort of problem because a fund manager has to go through both cycles and then coming back again. So I think a couple of things are there, but there is nothing to worry. I think give some time. Sometimes some things require some duration to play, but once they play, they reward you and your patience.
Absolutely. On that note, Kushal, how much of an investor's equity allocation, once they have invested in their core portfolio, should maybe go to business cycle funds? Is that a strategy that you would suggest, or it's a small portion?
No, small portion. I think we've mentioned and established that most of your core portfolio should be in well-diversified equity funds, right? Funds that can perform across all environments. And this is very clearly a satellite allocation. So, I mean, assuming that an investor has 6 mutual funds with them, 4 of them in their core portfolio at 20% each, that leaves 2 funds of 10% each. So I think around a 10 to 15% allocation would be more than sufficient for most investors. You know, what happens is that a business cycle fund, if the manager gets their calls right, your portfolio returns can be enhanced quite a bit, right? But as we've also mentioned, there can be significant periods of underperformance as well, because this is a very concentrated style, and sectors do take time because you're never going to be able to time the top and the bottom, right? So there are going to be periods of underperformance, which makes it harder for you to remain invested in these funds. And therefore, there's a tendency to go performance chasing maybe. So I wouldn't want these funds to dominate the portfolio. Your core portfolio should be core. This is that best a satellite play. If you have conviction in the fund manager's ability to navigate the cycle successfully.
Okay, point taken. And Kshitij, the same question to you. Equity allocation that one should have in their portfolio towards business cycle funds. And are there any funds that are maybe specifically you're looking at? You know, ICICI Pru has been commanding in terms of AUM, but is that the way to look at picking up a business cycle fund?
So I think for small portfolios, one should not look at allocating to business cycle fund. Please understand whether flexi-cap, multi-cap, all funds and all fund managers, they all are doing a great job, and they are also running a fund to outperform the index. So they're also doing and allocating to sectors which are going to do well only. Unless until there is a thematic fund where there is specific allocation toward a given sector only. So I think for small portfolios, I will not allocate or not request anyone to allocate toward that side. Portfolio which are little big in size, it's like 1 CR, 2 CR plus. If you have the technical allocation which you want to make and you have the risk appetite with you, maybe 10-15% is what one should look at allocating toward that side of business. Otherwise, I think for smaller allocation, if risk appetite is high, only then allocate. Otherwise, don't allocate. As you said about the funds, I think there are a lot of options. Almost 19 funds are there. So I think you can do due diligence, but this is not a fund where the due diligence has been done on the basis of the past performance, because that is not a relevant point here. Here you want to do the due diligence, then look at the portfolio, underlying portfolio, understand what cycle as a country we are in, and then accordingly, if you go level 2 or level 3, if you can go level 2 or level 3, only then allocate toward these funds. Otherwise, one can refrain and go for vanilla products.
Okay, point taken there, Kshitij, and it depends on the portfolio and your allocation, and we've made that point. This is very dynamic. This is not something that should come in your core portfolio as well. So Kushal as well as Kshitij, thank you so much for joining us on the show, explaining us business cycle funds and who should maybe be looking at it as well. And viewers, thank you so much for tuning in. As always, last hour of trade is still left, and your closing bell up next for that.
Block President Trump.
Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
CNBC TV 18 tracks the pulse of markets and business in real time, bringing you the stories that shape the economy.
From breaking news to sharp analysis, we deliver insights that help you navigate businesses, markets, and investment opportunities.
Novama presents CNBC TV 18 Market Central.
Providing sharp market intelligence for wealth creation with a commitment to doing it right.
ए दया, कौन है रे?
मैं है।
सखू।
हाँ।
साहब बनेगा रे हमारा दया. सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी. सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर, आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहां जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल हाँ आया।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा। जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया और हमें यह सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमेशा दया करता है। ऐसे इंडियंस लिख रहे हैं नए इंडिया की कहानी और बजाज फिनसर्व इनका साथ देता है।
We are over, Jimmy.
Headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Asia markets pretty mixed opening. The implied open is indicating a gap down start, about 113 points in the red for Nifty implied.
The rupee, I mean, just look at the rupees, 96.44. The low is just under 97. Nifty, I think, is absolutely flat, 24,216 at the end of the pre-open. I think we should start there.
Right now, in case of an India, we do believe that absolute return are going to be positive.
So, we are broadly cautiously constructive across all asset classes over the next 2 months, equity rates, FX. And I think one of the big reasons for that is, this FCNR number.
The pre-open left us with about a 6-7% pop, and SBI Funds Management, the latest AMC coming into the markets.
As expected, it's a very good set of earnings reported at Bajaj Auto, and the reason for this outperformance is mainly because of the major exposure that company has from the export segment.
The Nifty and the Sensex extending their losses a little bit more, but the mid-caps managing to hold in the green.
These engines will power 510 Airbus A320 Neo family aircraft that Indigo has already ordered.
Well, that is the day so far. I think we are going to end as we started. Not very different. I think we are down about 70 odd points, 80 odd points the last I checked. I think it was around these levels earlier in the morning as well. Market breadth, though, was looking much more positive earlier. That has now become much, much closer. Not very much separating what is up, how many stocks are higher and how many are lower. We are coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant, with me my colleague Nigel. Nigel, afternoon. And I think... the price of oil is still there. Yeah. Just like what the Nifty is at 88, 89. And I think the Nifty has not moved very much since the open.
Well, that's right. But from the broader markets, you can pick and choose, right? A couple of winners, if you look at it. And some of them are outsized winners as well, in today's trading session. So quite a few stocks doing a thing of their own. It seems earnings are top of mind as well. And I guess since earnings pass from a company to company basis, you always are keeping an eye out whether or not there is a large trade in the offing because the way the stocks have moved up. But I think the last 1 hour, the bright spot has been TVS Motors. And we'll address that set of numbers as well. People talk about it being expensive. The stock is now shooting up 6% and it's holding on to those gains. So a good set of numbers is what the street is reading it.
Absolutely. And I think Sud is lined up first on this one. I think the entire reaction has come post numbers, right?
Yes.
On TVS. The other one is Bajaj, which reported sometime back, half an hour back, maybe a little more than that. Bajaj numbers were also a beat, by the way, although the stock's not doing very much there. But TVS is an outsized reaction post earnings coming through. Well, here's what you will see. You will, of course, see the market discussion, but we'll also talk about both TVS and Bajaj. As I just told you, SBI Funds, the listing has happened. How does it now compare on various parameters with other listed asset management companies? It's the latest in a line of companies on the AMC side which are listed. So we'll tell you that. We'll also look at MTAR Technologies. The stock has lost 35%, just like that, blink of an eye. I mean, a few trading sessions, basically. So what's gone wrong here? And what's happening? So it's, I think, limit down 5% today as well. So that is what is coming up, and a bunch more things that is lined up over the next 60 minutes or so. How should you position yourself? Long, short, what trades to take? Mitesh is here with answers. Mitesh, take it away.
Yeah. So, Prashant, on the indices, nothing much. I actually said this that yesterday when the kind of follow-through did not happen to Friday's strong closing, we basically mean that the indices are back into a trading range. And therefore, since we are somewhere in the middle, I am not inclined to take a trade on the index. But in case you get close to about 24,000, 24,050 on the Nifty, maybe that's where you would want to look at a long position. Having said that, on the stock side, I have a buy call on HAL with a stop below 44.95. Look for targets of 46.60, 46.70 here. And BPCL is a conditional buy. It needs to break about this 322, 323 mark. So buy about that, 323. Keep a stop at 316.75 and look for a target of around 336.
Got it. Okay, all right. Thanks a lot, Mitesh, for that. Well, let's focus on the stock of the last 1 hour. TVS Motors reported set of numbers and looked like they're revving up the engine. Sudarshan joins us to break it down piece by piece. Sir, take it away.
So like Bajaj Auto, TVS Motor too has reported a very strong set of earnings, and what has worked for the company is the big exposure in the export segment. For both Bajaj Auto and TVS, export continues to do well, and that has not only supported the volumes but also on the margin front. So increase in the export volumes and the rupee depreciation against dollars has worked for these companies and improved the margin. For TVS Motor, we were expecting a drop in the margin, but in contrary, company has reported an expansion in the margin, and it has come at a multi-quarter high of around 12.8%. On the bottom line, it was supported by the rise in other income, which has come at around 150 crore versus 35 crore. But despite that, the operational numbers are looking very strong. Revenue, if you talk about for TVS Motor, it has increased by 38%. EBITDA has seen a jump of 41%, and margin, it has expanded to 12.8% versus 12.5% in the same quarter last year. Overall volumes, these were up 28% YY. Even on a sequential basis, it has seen an increase of more than 4%. One parameter that is very important for most of the auto companies, that's the realization. And for TVS Motor, both on a sequential basis as well as YY, this one has seen an increase as well. YY up 8%, on a sequential basis up 4% YY. So very strong set of earnings. In the commentary, we'll be watching out for what exactly company talks about the outlook for both domestic as well as export, and also what's the strategy on electric two-wheeler front. But as far as the earnings are concerned, looking very strong.
What about Bajaj, Sud?
So Bajaj Auto, it has come out with very strong set of earnings. Stock is seeing profit booking because it has outperformed the peers just ahead of the numbers. But talking about some of the major internals, this is the first quarter where export volumes for Bajaj Auto are more than domestic volumes. Now exports form almost 51% to their total volumes. Now second part is the margin expansion. Margin has come in at multi-quarter high of around 21%. It's at 20.9%. And now that has been supported by increase in the export volumes, and also the rupee depreciation against dollar that has helped. Now talking about the Chetak, earlier till Q4 FY26, EV, both electric two-wheelers and three-wheelers combined, used to form 20% to their domestic revenue. Now that has seen an increase. It has increased to 30% to their total revenue. Now coming to the headline numbers for Bajaj Auto, profit has seen an increase by 42%, revenue has increased by 37%, EBITDA has seen a jump of 45%, and margin, as I told you, has come at a multi-quarter high of 20.9% versus 19.7%. For Bajaj Auto, overall volumes have increased 29% YY and 5% sequentially. Realization, the important parameter, up 6% YY and up 3% on a sequential basis. For Bajaj Auto too, we'll be watching out for what exactly company talks about the outlook and if it can sustain the margin increase that it has seen in Q1 FY27.
Got it. Okay, all right. Thanks a lot, Sudarshan, for joining and giving us a quick analysis of both those numbers. Before we go across to Dharmesh Kant, keep an eye out on the bottom of your screen. Zen Technologies has bagged an order of around 177 crore rupees, explains why the stock has now spiked up to the high point of the day. So they're coming in. The management had sounded optimistic that in the coming quarters, order inflows will pick up. And that's precisely what's happened. Dharmesh Kant is with us. Dharmesh, I'm not sure which bike you like to ride, but help us out with your analysis on these numbers. Bajaj Auto, TVS Motor, which one do you like?
Yeah, good afternoon, Nigel. Thanks for having me for the show. I mean, all the bikes have been taken up by you. So once you release them, I would be taking up your Royal Enfield. That is the one which is also dearest to me. As far as the numbers are concerned, an excellent set of numbers, both by TVS Motors and Bajaj Auto. And primarily, they're helped by one is the price hikes which they have taken. And secondly, the export exposure, which gives their currency tailwind. So both these factors are doing well for both of them. Both of them has been gaining significant market share in the electric vehicle sales. So, I mean, TVS Motor last month, they reported almost 48,000 odds of units sold in a month. So, far ahead of 20,000 a year back. So, those numbers are climbing very fast. And it's same with Bajaj Auto. There's also north of 30,000 units a month. So, these two things are helping them. Valuation wise, Bajaj Auto does provide a comfort or cushion as compared to TVS Motor. Is on the higher end of the valuation multiple, around 40 to 43 times 1 year forward multiple is where TVS Motor is trading, whereas Bajaj Auto is 21, 22 times. So giving sense to how the currency has been behaving, I think this tailwinds will continue. And the best part is if input prices is a bit lower than what it was in Q1 on an average basis, and if things turn out positively, this will be further lower. So this margin expansion because of price hikes which they have taken and the export exposure will have a better impact in Q2 and Q3. So that will provide a tailwind on the upside. We are liking Bajaj Auto more just because of the valuation comfort as of now. And the second best pick from the lot on the two-wheeler space is Hero MotoCorp. There also electric vehicle sales are getting a good traction. And valuation-wise, is far more comfortable than where Bajaj or TVS is there. Around 15 times 1 year forward multiple is where Hero MotoCorp is trading. They have also taken the price hikes. So I think on the pecking order, Hero MotoCorp is the topic, followed by Bajaj Auto.
With Hero, you get a piece of Ather also, right?
Yeah, that's a big plus for Hero as well, yeah.
And Ather, of course, has gone up like a rocket. But compared to, of course, I mean, Hero's market cap, Ather is... It's not small now, Ather, and it's building in a substantial market share. I mean, if you try to price in what the current market cap is pricing in, I mean, it's calculating, a substantial share. I mean, it's basically assuming two things, that most of the market moves to electric, and Ather then has a substantial share of that market in that sense. I think the last leg of the move in Ather, of course, appeared after Hero put in more money into the company. Okay, well, that is autos in focus and two-wheelers specifically. But let's talk about SBI Funds, which is above the IPO price, but I think it's at the margin for some. It's been a bit of a letdown with just a 6. I mean, I think it listed with a 6% premium is right there, 606, 607. But, the thing we do on listing day is how does it compare with existing businesses in the segment? Devyani is here and she's given it a look. Devyani, take it away.
SBI Funds listed at a premium of 7% over its issue price at around the 613 rupees per share mark. This implies a price to earnings of around 41 times its FY26 earnings and a market cap of 1.27 lakh crores. Now, at these levels, it is trading between HDFC AMC, which trades at 40 times its FY26 earnings, and ICICI AMC, which trades at about 46 times its FY26 earnings. Now, that is in spite of the fact that it has a higher AUM and market market share overall. But keep in mind, it also has structurally lower yields than its peers due to a higher 32% passives exposure. Now, coming to this passives exposure, this is likely to reduce going forward because of their SIP book, which stands at a strong 4,000 crores and is actives heavy. Now, that said, also the CKYC 2.0 rules, which are expected to roll out very soon, is something that the management is counting on to help reduce onboarding friction going forward, and as a result also be able to convert more SBI customers into mutual fund investors, which currently just stands at about 2% penetration, which could increase going forward. Now, there are also certain risks to keep in mind. Specifically the regulatory risks, especially with SEBI tightening its measures going forward, including the recent expense ratio changes that came into place. And along with that, keep in mind, AMC business by itself is cyclical in nature and moves with market movements, which directly impact the AUM as well as the investor sentiment. And that said, the mutual fund business is growing, but so is competition with it, with Jio BlackRock, Grow AMC and Angel One AMC all ramping up operations, and companies such as Anand Rathi setting up their own AMC going forward.
Well, lots of people want to set up AMCs, and we will see many more new ones out there as well, but useful to look at where things stand right now. So yields, I mean, if you can have that table back on, yields are lower compared to the other two that Devyani compared it against. But I mean, of course, the guidance, stated guidance, and we sat down with them, is that they'd like to take the revenue yield, the second row, to about 45 odd basis points, in line with where HDFC AMC is at. And of course, I mean, their broad sense has been that, you take a fresh inflow plus net fresh inflow plus mark-to-market gains. I mean, you're looking at, hopefully north of 20% kind of gains every year, in terms of the size of business for SBI funds. Dharmesh, any thoughts here? Do you think this is day one, and what's your sense on SBI funds?
Yeah, Prashant, I mean, when we came out with the IPO note on SBI funds, the view was very clear. Valuation-wise, it's fairly priced. There was nothing left on the table on the valuation front. But on listing day, we did expect, 10 to 15% kind of a gain, just because of a technical buy in the nature, like all the family offices, PMS, and the fund houses who have an allocation to the AMC portfolio will be definitely having SBI as well, SBI funds into their portfolio allocation. And there, if the allotment is not there, that buying will come into place. And that is what we are seeing in today's market. Only two factors are to be noticed here. One is the growth in the equity AUM, which SBI is the lowest. Last year, they clocked around 14% kind of an AUM growth, as compared to SDFC, we did 19%, and ICICI and Nippon did around 29-30% kind of equity AUM growth. So there they are definitely lacking on the growth front, and yields are very low. Even if you exclude the alternates from the business, so yields, and the other factor is even alternates are growing in single digit, 9% kind of a growth was there last time. So I think they have to pull up their, growth trajectory quite significantly, and the yield trajectory. So yield, how it will improve, it's difficult to sense as of now. Maybe more into direct equity play can improve the yield, but competition is likely to put a pressure down. So portfolio allocation is fine, but I think it's 1 or 2 years it will more or less stagnate in a range rather than a good value buy. In that space, if one wants to buy, I think Nippon, ICICI and SDFC looks far attractive than SBI funds.
Okay, got it. Let's focus on another name then. MTAR Technologies, that's a stock in focus. In fact, in the last 1 month, it's down 35%. Ria joins in to tell us what's triggering the decline. Ria, take it away.
Well, that's right. In the last 1 month, the stock has corrected by nearly 35%. And in fact, in the last 4 consecutive trading sessions, the stock has hit a low circuit of nearly 5%. But even after this recent correction, the stock is up nearly 3.5 times just in the last 1 year. But let's understand what has led to such a steep correction in the stock. Now, certain concerns have arisen over Bloom Energy's supply chain and also their key project timelines. But let's first understand why Bloom Energy is important to MTAR Technologies. Now, MTAR derives roughly 65% of its annual revenue from Bloom Energy, which is a company based in the US which makes solid oxide fuel cells for energy supply to data centers. Now, in terms of the concerns that have arisen around Bloom Energy, on the 8th of July, Bloom Energy shares started falling after a short seller called Hunter Brook published a report that challenged the company's statements about its supply chain and its production capacity as well. In that report, Hunter Brook had questioned Bloom's earlier claims of not being dependent on China, and they said that even after these repeated claims, the company heavily relies on scandium, which is a rare earth element used in the company's fuel cells, and that is largely sourced from China. But Bloom Energy then responded to this allegation through a formal SEC filing, strongly rejecting these claims by saying that they are not dependent on any single supplier or country for the supply of scandium, and they have ample supply of the rare earth metal. In fact, the company also said that they have clear visibility into their supply chain to support their production of 25 gigawatts of fuel cells every year, and that they will also continue to expand this capacity. Now, apart from this concern, another key incident that happened was for Oracle's data center project, which is Project Jupiter in New Mexico. That has also been facing delays after New Mexico regulators have rejected for a second time their permits for a gas supply, for a gas pipeline supply, which had been planned to supply the data center. And because of that, Bloom Energy might face some delays in their projects. And as a result of this, that impact might also trickle down to MTAR Technologies, because any delay in Bloom Energy's orders or their production timings also can see a potential delay for MTAR Technologies' component demand. Now, apart from all of these concerns, MTAR Technology on its own has been performing quite well. In fact, for FY27, the company recently raised its revenue growth target from 50% to 80% revenue growth for the year. And they have also said that their closing order book for the year will double to nearly 5,000 crore rupees. Now, despite all of this, the stock has been trading at high valuations even after this recent correction. Currently, it trades at 70 times one-year forward earnings versus its 2-year historical average PE of nearly 55 times.
When was the short seller report? What was the date, Ria?
That was on the 8th of July.
Okay, so so if you were to identify a root cause, is that when the stock started selling off as well? It looks like one of the reasons for sure, but okay, I don't have a chart here. So, and of course, yeah, sorry, go on.
The high that MTAR Technologies made was on, I think, June 19th. And largely it had started falling off because of the overvaluation. But this was one of the key triggers that led to the steep sell-off later.
I see. And this was against Bloom, right?
Yes,
the company.
This was against Bloom, yes.
Okay. And what is the sort of revenue dependence on Bloom for MTAR?
65% of MTAR's revenue comes from.
Got that. So that's a pretty large one. Shireen, by the way, caught up with the Bloom management in the US about a month and a half out back. And, they've been, of course, on an absolute roller coaster with all the demand coming from hyperscalers, etc. But this is, has been an absolute rocket ship. Went up one way and has seen a sharp correction since. Ria, thank you very much for that. Dharmesh, any thoughts? MTAR?
Yeah, Prashant, I mean, the 65% dependence is based on the last year's revenue, which was less than 1,000 crores. So, but the order book itself is around 5,000 crores, and the majority of them is coming from the Bloom Energy, which is far higher than what their annual revenue run rate is. So this is what single client concentration risks can be. I mean, in difficult times, it can be a big blow. And the secondly is, I mean, anything linked with China and Mr. Trump always leads to heavy speculation. So you never know what kind of a rule and regulation can be formed out there. And valuations are very high. So it's for a high risk, valued investors who have the faith they can continue. Otherwise, difficult to take a call how the things will settle, whether it will favor of MTAR, Bloom, or it will go against them just because of the China angle and US President Mr. Trump being there.
Got it, Dharmesh. We'll let you go at that. Always a pleasure having you on the show. Thanks a lot for giving us your view on all of those stocks. By the way, we have weekly expiry that will play out, so it's going to be an exciting 40 minutes of trade. But first up, you just pull up the Nifty Bank with the 20 DMA. Both of them, visited that mark and they bounced off that. And this is the second straight day that we're seeing something like that, both on the Nifty as well as the Nifty Bank. That 20 DMA has become an important support zone. Now, the options data, the ones that will expire today, 24,200 call. The premium's down, I think, to around 6 rupees. It started today at around 99 rupees. So there are clear signs of writing out there, which is telling you the bears believe that higher levels can defend it. However, on the downside as well, the 24,150 put, the premium down there is down to what? 9 rupees from around 39 rupees, as of yesterday's close. So basically just punching in these data points, the levels to track is, you have the 24,150 put with premium was around 40 rupees. That was seeing writing. So 24,110 is an important mark on the downside. On the upside though, today's high, 24,262, that's the resistance mark. So that's the tight band that you're looking at. Individual stocks that you're looking at, well, some believe that gold probably has fallen enough. And Muthoot Finance as well. Post that sharp correction, we are seeing some shorts that are covering out. Remember, the stocks saw a very sharp correction, close to around 25% from the recent peak. And today, the first signs of some short covering is what we're seeing. Paytm. Now, this is interesting because in the morning it opened gap up, but the stock has moved down. The street is a buzz that probably there is some supply overhang that's still in the works with regard to the stock. Could explain why we are seeing a lot of shorts actually get into the system. From the highs of the day, you've seen a lot of short built up on this one. And Kalyan Jewellers, the one that I spoke about yesterday as well. It's the stock actually has become buy on dips. Let's see whether or not the trend reverses. But yesterday as well, it was lower in trade. I think it was down close to 2%. By the time we wound up, it was more or less flattish. And today there is some fresh buying that we're seeing out there. So I'll continue to keep an eye out on Kalyan Jewellers, a stock that has rallied 45% in the recent past, but still a distance away from its all-time high. So that's a stock I'll keep tracking. Slip into a short break. On the other side, we have Varun Goel of Mirai Asset, who's waiting for us. Stay tuned.
Yeah, look, Iran is being...
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
ए दया, कौन है रे?
मैं है।
सखू।
हाँ।
साहब बनेगा रे हमारा दया।
सर, आपकी कॉफी विद मिल्क और सर, आपकी ब्लैक कॉफी। जॉली सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर, आपकी ग्रीन टी।
थैंक यू दया। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ यार।
और फिर एक दिन उसे एक मौका देखा।
ग्राफिक्स 1299।
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा। जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया और हमें ये सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमेशा दया करता है। ऐसे इंडियंस लिख रहे हैं नए इंडिया की कहानी और बजाज फिनसर्व इनका साथ देता है।
Welcome back. I think Mahindra and Mahindra Financial Services, I think those numbers were flashing for our viewers on the screen. I think we should get the intraday chart actually out there. The stock, I think, has seen a very, very sharp spike. It seems that the street liked those numbers, just waiting for clarity whether or not it was numbers itself that was the trigger. And that's the reason why the stock has spiked up and spiked up in style currently at the high point of the day. We'll try to get you some analysis on that name. And the other one is Bluestone Jewelry. Mangalam and me spoke to the management earlier today. They sounded very optimistic on growth. But just take a look at the street, the way they bid it up, now 19% higher. That's the kind of move you're seeing on that name. And JK Cement as well, another management that spoke to CNBC TV 18 exclusively, that as well is up close to around 3.5%. So street liking some of this commentary that's come in and bidding up those stocks. Paytm though, that's a stock in focus. It's a little bit lower in trade. We have Ananya who joins us to tell us what's going wrong with the stock. Ananya.
Well, yes, if you look at the numbers, strong set of numbers from them, 28% year-on-year revenue growth is seen, EBITDA nearly tripled, and net profit was also great. But the main catch here is they cancelled the proposed bonus issue for large-term investments instead of short-term shareholder reward. That's what the management mentioned, and that's what weighing on the sentiment today. But on the bullish side, if you look, both Citi and Goldman Sachs, they have maintained their buy ratings. Citi believes that the EBITDA beat and a potential introduction of UPI MDR could drive further upside, while Goldman Sachs is positive on the company's strong execution, faster revenue growth, and the merchant market share. Now, on the bearish side, CLSA has maintained its underperform rating. It believes much of the optimism, including expectation around the UPI MDR, is already priced in the stock, while payments take rates and operating costs remain key concern here. Now, it is shown in the stock performance also. The recent price action also reflects this divide. After rallying over 21% in the past month and around 30% over the past 1 year, the stock has declined for 5 straight trading sessions, indicating profit booking. But however, brokerages remain positive overall, but valuations here are quite expensive compared to peers.
Got it.
All right. Thank you very much, Ananya, for that. So, yeah, I mean, one highlighting the sharp run-up in the stock and the valuations being expensive. And, of course, I mean, the other part of the view on this one, of course, has been that at least for large commercial transactions, there will be, I mean, this buzz has been around for a long time. It's been, put down earlier, but I think it keeps coming back, MDR, at some point, and what that could perhaps mean, apart from, of course, the business, which seems to be doing quite well. Varun Goyal is with us, Senior Fund Manager at Mirae Asset Investment Managers. Varun, good to have you with us here. Thank you for joining us. Large reactions are appearing. I mean, Mahindra Financial just reported numbers, TVS reported numbers, both are up 5%, all of it post numbers. Have you taken stock of, what we've seen so far, for the quarter so far?
Yeah, good afternoon, Prashant. Thank you so much for having me on the show. I think by and large, the numbers seem to be in line as per the expectations. We firmly remain of the view that there is a strong cyclical uptick in the Indian economy, which was threatened by the very sharp increase in crude oil price in the last quarter. But with crude having come down significantly, I think the macro story remains intact. And our view clearly is that cyclical sectors, be it lending, be it auto, capital goods, engineering, defense, these are themes which will continue to show robust earnings growth. I think the broader markets look set for much better earnings than the large cap indices, because I think those spaces were beaten down a lot in the last 18 months, and that is where we will see the sharpest earning recovery.
All right. Hi, Varun. Good to see you. Ben, looking at it, as you said, from the broader markets, a lot of ideas come up, right? Welspun Corp, what a beautiful looking stock that is. 20,000 crores of market capitalization just around 8 months ago. Now it's at around 40,000 crores. Results due later this week. And order book is full, balance sheet is clean. Tell us a little bit more about this. How much of the good news in stocks like these are already in the price?
Good afternoon, Nigel. So I think broadly there are a lot of themes, specific themes in the market where the earnings story continues to be extremely robust. I think those companies which are engaged in oil and gas transportation clearly have benefited from the revival in oil and gas capex in US. So those companies will continue to do well. I think largely, if you see, there is a lot of action in the water space in India, where we expect a lot of orders for drinking water projects and large infrastructure projects. So I think the theme looks extremely interesting, and we believe that earnings growth can hold on for the next few years.
Okay, got it. All right, earnings can continue. One of the biggest holdings is obviously the big boy, HDFC Bank. Just when people thought that it was getting its act together, unfortunately, these numbers as well have disappointed. And that's one of the prime reasons, actually, in the last couple of trading sessions that the Nifty has not moved up. because it's been dragging the index. Do you think finally the pieces are coming together? All of our mutual fund investments would have some part of this stock in our SIPs, in our mutual funds, most of them. And it's hurting because of its weightage. Your take on it?
I think if you look at the overall banking space, the credit growth has actually surprised on the positive.
Yes.
In the last few months, the credit growth has consistently been holding up above 15%. There is no sign of a credit cycle yet. I think while there is a lot of talk and concern about the NIM pressure, but I think we are coming towards the end of those NIM declines. And overall, for the banking space, we expect profitability to get a lot better in the next 12 to 18 months. So our sense is the banking space should do well. And of course, within the banking space also, there are several bottom-up ideas, the mid-tier banks, old private banks, where we're seeing much faster and much larger earnings recoveries. So I think while we remain broadly positive on the banking space, there are a lot of bottom-up stories that one can really pick and choose.
You want to talk about a few those bottom-up ideas?
Unfortunately, Prashant, I cannot talk stock specific, but our sense is if you look at within the banking system also, there are several companies in the small and the mid cap space which have come up with very robust numbers. And our sense is the next 12 to 18 months will see very robust numbers from the space as a whole.
But you continue to have faith in this big one, HDFC Bank?
Yeah, I think the tier one banking space, has been penalized quite a bit. Typically, this is a sector which is overowned by FIIs, and whenever there is large selling, there is a lot of price damage which happens. Broadly, our sense is we have come to the end of the NIM compression, and next 12 to 18 months, we should see much better growth rates there. Also, the credit growth is holding on very well. I think after several years, we are seeing such robust credit growth numbers. We saw very happy data on the FCNR deposit mobilization. That will go a long way in fixing the deposit problem for the Indian banking system. So overall, I think the macro trends for the banking space continues to be extremely positive, and we are quite hopeful about the sector going forward.
AMC's, Varun, what's the view after the big listing today?
I think financialization of savings is a theme which has, have a huge runway. I think asset management companies, market infrastructure companies, will continue to do well. In the asset management space, of course, we like companies which are either defending market share, gaining market shares, which are able to hold on to the yields. So I think we'll be selective, but we like the overall AMC space, and we believe there's a lot of operating leverage at play there.
No, you're absolutely right. And of course, it's not just when you talk about AMCs, it's not just mutual funds now, right? I mean, there is large, on the alternate side, there is so much happening. And I think that AUM, in terms of just growth, is growing at a much faster pace than the mutual fund AUM. Of course, the numbers are vastly different. Much smaller AUM for alternates as compared to the MF AUM. So the size, the growth on the size, I think on that size matters. What else? Auto comms, anything, any exposure, any thoughts in terms of how you'd like to, Goldman came out with an interesting report yesterday. I don't know if you saw it. They had initiating coverage on a company called Sansera. But I'm not asking about the stock, but their basic thesis was, and this is not completely new, some investors have focused on it or thought about it this way, that most of these companies have capabilities in forgings and other areas, and they can use some of that expertise to cater to some of the upcoming industries. I mean, defense is one, but there are others as well. So just your thoughts on this.
Yeah, so Prashant, I would agree that there is going to be significant increase in the share of manufacturing in the Indian economy. I think while India always had a very robust auto and auto component space, but a lot of those capabilities definitely will get used in the EMS space, in the defense engineering component space. We are also seeing the rise of a semiconductor sector, which is still very nascent, but I think next 3-4 years, we will see a lot more of that and we'll hear a lot more about that. So our sense is there are a lot of new ideas which are coming up, in the small cap space. In fact, I've been in the market 20 years. I think this is the first time I'm seeing so much allocation that we are doing on the manufacturing side. And auto, obviously, since India has had great capability, has been kind of the, you can say the R&D lab for a lot of manufacturing capability, which will get built. So we are very excited about some of these names and opportunities. Of course, one has to pick and choose. One has to be cognizant of the valuations. But I think there are a lot of bottom-up opportunities.
Okay. All right. Always a pleasure having you, Varun. Thanks a lot for joining in. and giving us, all of those views. We look forward to catching up with you soon. By the way, just pull up the intraday chart of Rain Industries. This is the stock we here at CNBC TV18 had explained earlier this year with regard to triggers, the proxy play to aluminium. Guess what? Aluminium prices have pulled back, but this one's time appears to have come because, I think we had explained it at around $140 or thereabouts. The stock has been moving from strength to strength. Deleveraging of the balance sheet is what the street is looking forward to, or refinancing the big debt in the books. It's one of the strongest stocks of the day, up close to 6% and moving with very, very high volumes. So I thought I'll just point that out since we had explained it earlier this year. But a good time to tell you what's going on in D-Street Chatter. Nimesh joins us to tell us what is he picking up. Hey Nimesh, good afternoon.
Hi Nigel, a range-bound day of trade, but there's a lot of action in the broader markets thanks to the earnings season and a lot of reactions to earnings as well. But also keep an eye on the geopolitical risk, and that can actually be mean that at least the upside on the Nifty looks capped in the very near term. From a flow perspective, again a mixed day of trade, but I understand there's a small MOC sell basket at leading FIDs, largely Nifty names, so maybe that's something to track. But within that, also watch out for NHPC. Last 30 minutes could be interesting because there is a $50 million MSCI buying because of the weight up, which is implementing today. So last 30 minutes could be interesting for NHPC. Apart from that, from a sector point of view, I think NBFC stands out today, largely in anticipation of very strong Q1 for most of these names, so because of which there is a bit of buying back in some of the select NBFC names in today's market. Technically, 24,300 is acting as a resistance, so that's playing out. But broadly, I guess today is a day for broader markets to outperform, and that's largely because some of the earnings have been quite strong, and markets are reacting and rewarding as well to very strong earnings.
Absolutely. What about individual stocks and companies, Nimesh, on the list?
So the first on my list is Sona BLW. That's been buzzing in trade. In fact, in the last 4 weeks, we've seen a big move in that name as well. And there is a bit of buying from large institutions as well. There was a UBS initiating report as well. But apart from that, the very near-term trigger on Sona BLW is a potential joint venture with a global OEM. That's something which can come very soon, and maybe that could be the reason why you've seen a big up move in Sona BLW in the last couple of weeks. The second name is Inox Green. Again, a flat in trade. It's been consolidating in a narrow range, but I understand there could be fundraising in Inox Green very soon. The large part of the fundraising will be for inorganic opportunities. So maybe something with regards to an acquisition is on the cards as far as Inox Green is concerned. The third name is JSW Steel. Again, a bit flattish for the last many days, but in JSW Steel, watch out for a large block. It's a non-promoter entity which is looking to sell 2% stake. So a large block is expected in JSW Cement. And the last is a very small company. I read it for the first time. BMW Industries. Nothing to do with BMW cars. It's a small cap company, 1,200 crore market cap. There is a strong chatter that maybe the company is looking to raise funds via preferential issue. And one of the prominent family office could be one of the investors. So again, not much read into, but something which has been interesting. A small cap company, 1,200 crore. Name is BMW Industries.
Sure, I mean, they've got the right name, right? Although nothing to do with BMW, as you said. It's interesting. On the first one, Sona, I mean, so this is essentially a tie-up of some sort? What exactly?
It's a joint venture, Prashant. So there are couple of things which have been talked about and been spoken as well with regards to Sona BLW. There is one large entity which I don't know whether that's going to be the name. Because normally, that particular company does not allow any sorts of name to be used. So unlikely that can be the company. But this is a specific company where they're going to do a joint venture for largely on the auto OEM on the AI side. So a lot of AI application on the autos will be done potentially through this JV, and because of which the tie-up might get announced. The joint venture might get announced very soon.
Okay, all right. Thank you very much for that. So interesting names there, from the large to something like a BMW Industries, which of course is a very small company. So lots of chatter as always. The rupee, by the way, is doing pretty well, and something we were highlighting in the morning on the back of that number that we got from the Reserve Bank of India. We got a bit of a push coming through. So 96.22, and there's a 20 paisa appreciation against the dollar this today. From yesterday's close. We'll take a break. We're back. Some short-term trading ideas with the technical experts. Stay tuned.
your
When the market moves, we don't just report, we decode.
From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV 18 Market Central.
For your daily source of market intelligence and wealth creation, with a commitment to doing it right.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Okay, welcome back. I think there is a price increase coming through from Maruti, and the flash should come up on your screen. Let's put the stock up. This seems like a large increase. We have the release with us, and we should be able to pull this out shortly. So, yeah, there you go. So, price increase by up to 30,000 rupees will come into effect in August. So, that is the information which is coming in. The stock is up on your screen. It looks like it's up to, so obviously depending on different models from the entry to the top end, the price increases will vary. But even then, I think we should try and put this in the context of, in terms of percentage of what this would kind of sort of translate into. This is in the view, and the statement says is that in view of the continuous sustained increase in input costs, the company has decided to raise the prices of its models across the portfolio by up to 30,000 rupees.
Just one word, with regard to this. Part of that will be because steel companies effective this quarter, they've gone ahead and increased prices by 4,600 rupees to around 4,900 rupees on a per ton basis. I have my ear to the ground with regard to this, and most of that has been accepted. The way it works is they get into a contract for around 3 months, but the final word is with Maruti. So at times you have the other OEMs that already accept this particular increase, but then if Maruti has not yet accepted it, then that's not the final word. So it appears now that part of this price hike that they've taken is because effectively the steel cost for them would have gone up by around 4,500, 4,600 to around 4,900 rupees per ton. And I'll tell you what, there is another price increase that the steel companies are already pushing through for the second quarter onwards, which is effectively another 1,500 rupees per ton. Remember, they didn't get the benefit of higher prices earlier in the year. So that's why that talk with regard to price increase, it's on a quarterly run rate, it's done on a contract basis. And so, all of that 30,000 rupees will not flow through the profitability. Part of that will be to offset the higher input costs. And for steel, at least I know, it's in that vicinity of 4,600 to around 4,900 rupees or thereabouts. Let's talk about a couple of other stocks then that are flying around. We have Gujarat Fluorochem. That's caught the eye of investors of late. In fact, the stock is up close to around 16%. What's behind the move? Upasana joins us to tell us exactly that. Upasana.
Well, certainly. Let me just give some basis. Now, fluoropolymer business remains the primary earnings for the company, supported by demand from semiconductor, EV, energy storage and data centers with the company. Now, management has also given a volume guidance of 15 to 20% for FY27. And if I talk about the company's FY26 segmental mix is mainly dominated by fluoropolymers at 63%, followed by fluorochemicals at 21% and bulk chemicals at 13%. Now, company has aggressive plans for battery material business with an investment of over 6,000 crore by FY28 is what they have indicated. But the key crux remains is the execution of the company's battery material business, which is one of the key concerns as commercialization of this was slower than market expectations. Now, company recently held an analyst plant visit on 16th and 17th of July to the company's battery chemical plant in Gujarat, and the visit has certainly eased the concerns as the analysts believe that the plant is now moving to the commercialization, which is closely expected in H2 FY27. Now, management has also reiterated the battery chemical segment will reach a sizable triple-digit revenue by Q4 FY27, and the near-term catalyst, according to the analyst, are the scale-up in company's battery chemical business, also the traction from fluoropolymers business from 3M's exit, which took place in December 2022, and also the probable exit of company's AGC's business in Europe, which certainly consistently faced financial and operational losses in the past 4 years. So overall, these are the key factors leading to the optimism.
Well, there's a big move, 6.5% higher on Gujarat Fluoro as things stand right now. Just put up Mahindra and Mahindra Finance. That's the other one which we should just quickly look at. I think the stock ran up very, very sharply. Oh boy, 10% higher. And almost all of it coming in after the beat which has been posted. Now, it doesn't look like there is, we don't have the investor presentation yet, but from what we have, there is no reversal or there is no write back or any of that. Credit costs are better. And the actual number is about 800, basically 900 crores, 898 crores, 900 crores compared to an expectation of about 810 odd crores or so. So yeah, there is a beat of about 10%, right? A little over 10% compared to what the street expected. But there is one item here. There is, insurance commissions from insurance sales. I think insurance distribution. That income has, I think, gone up substantially. So I'm not sure how much of that you can count as, operational. But basically, that number has jumped from 160 crores to 223 crores. So that's a 60 crore, jump in terms of earnings from insurance distribution. And that's a very large jump. If you kind of sort of exclude that and you take the 160 crore, you net this off, then the beat compared to expectations doesn't. It's not 10%. It's much smaller. So I thought it was interesting to put that out. But otherwise, I think apart from this number, even without the investor presentation, what we know is that there are no write backs or any of that stuff. So this looks like operational, except of course that almost 65 odd crore jump in income earned from insurance distribution. So just wanted to sort of put that up on the Mahindra and Mahindra Finance number. Stocks have not done anything for I think 5 years, 6 years. The stock's right there, 300 bucks, 350 rupees, and it's not terribly expensive compared to other large NBFCs. So actually, it's cheaper compared to other large NBFCs. It's been cyclical. It's had quarters of big NPAs, credit costs. But of course, it's also had turnaround quarters, and it's looked many times in the past as well that things are starting to turn. So we'll see. Maybe we'll get an opportunity to speak with the management. I think it's come off a little bit, but that's the M&M Finance stock. 10% now, about 8.5% higher. Data patterns, some information coming through. This is Data Patterns has emerged as the lowest bidder for a 1,300 crore project from HAL. That is Hindustan Aeronautics, order pertaining to buffer amplifier and built-in test equipment module. So that is interesting. And website indicates that's the awarded contract to Data Patterns. I think, they're largely in the electronics, avionics kind of segment. And it's been high growth, high value, high margin business. And those stocks, all of those stocks, Data Patterns, Paras Defense, in that segment have done quite well. Mitesh is with us. There's about 11 minutes to go for market closing. Mitesh, what do you recommend? BTSC trades?
Yeah, I have one BTSC on JSWC. Keep a stop at 1257. Look for targets of 1285 to about 1288. And STVT, which is on HDFC AMC. Keep a stop at 2600, look for targets of 2555.
Okay, fair enough. Thanks very much, Mitesh, for that. Well, SBI Funds, of course, has made it to the market, but there are two other companies, SBI subsidiaries, which are already out there. There is SBI Life, which of course has been a wealth creator. I think it's about 3x from the time that it listed. And the other one is SBI Cards, which has had a more bumpy kind of ride. So why not just sort of look back at what these two subsidiaries have done? Ritu's got this. Ritu, take it away.
Well, with the SBI Funds Management making its market debut today, I think it's a good time to look at SBI's track record of listing subsidiaries. Like you said, one is the story of a blockbuster success. One has been a disappointment. And now, of course, there's a new entrant to that listed club. It started with SBI Life Insurance was the first listed subsidiary. That was October of 2017. And that has been a standout success story for the group. The stock has more than doubled from its IPO price of 700 rupees. In fact, almost 2.6 times currently. And it commands a market cap of more than 1.8 lakh crore rupees at the moment. Now, while recent returns have been muted, if you look at the stock over the last 5 years, it has comfortably outperformed the Nifty, though not its parent SBI, which has delivered some solid returns in that period. The outperformance, of course, being helped by the consistent premium growth it has delivered, the profitability improvement, and the strong market share gains. Next was SBI Cards. That got listed in March of 2020, during that COVID market crash. And despite becoming India's largest pure play credit card company, the stock has been a disappointment for investors. Currently, it trades even below that IPO price of 755 rupees a share, hovering at around 640 odd rupees. Now, the business has continued to grow, yes, but there's been higher credit costs since the pandemic. There's been a lot of competition from banks and fintechs, slower earnings growth, and a sharp derating in valuation multiples. All of that has been weighing on the stock. As a result, SBI Cards significantly underperforming the Nifty Mid-Cap 50 across every meaningful time frame that'll come up on your screen. The newest addition now, of course, is SBI Fund Management. That made its debut. Largest asset manager in India by asset size. It had a healthy debut, listing about 7% above the issue price and now going up as well. Investors, of course, they're betting on the growing mutual fund story and, of course, the steady shift of household savings into financial assets. But whether it follows the SBI Life playbook or the SBI Card one, that's going to depend on the earnings delivery from here on. Quickly, as to what's next, among SBI's multiple listed subsidiaries, the market's top bet is SBI General Insurance, although the bank has not really given a clear timeline. And perhaps over the medium term, it could be SBI Capital Markets through, again, in this as well, SBI has not really indicated any listing plans so far.
Ritu, thanks very much for that. Very interesting. And just a look back at what the other two have done. And of course, we start on the journey on SBI Funds today. Well, Jay Bala is with us on technicals. Jay, great to have you with us here. Thanks for joining us. So let's go rapid fire if we can. Not really rapid fire, but rapidly fire. So Nifty Bank, Jay, what's the view?
Thanks, Prashant. See, the Nifty is still on an uncertain wicket. The key level is 24,602. And as long as that is not taken out, this uncertainty will continue in the short term. The higher time frame is very bullish, but in the short term, does it expand about 24,602 straight away, or does it pull back one more time to 23,600? That's the only question. Perhaps the Nifty IT index, like I've been pointing out, requires one more climatic low below the July 1st low. Once that's done, probably the large caps Nifty will also start to bottom. When it comes to the banking index, it's slightly better off. We have a higher high on the banking index. Supports are at about 55,400. And the only drag there is HDFC Bank. And like IT, probably they're also likely to do a washout low and then turn around. So, two things that can flip the markets to the higher side. Washout lows on HDFC and washout low on Nifty IT.
You're saying for HDFC Bank, you're saying, right, Jay?
That's right.
It needs to make one more low before. Is that the view?
That's right. HDFC Bank it can also make higher low of 730. The range is 730 to 720. That's within that range, it will be completing a price structure that's convenient for calling it as a corrective downside finish.
Okay. Got that. I mean, that's not very fast. $30 away from where we are right now. Jay, we have to take a break, but we'll just come back and more on the other side. I just want to make a quick mention. If just put up MTAR Tech, right? Look at the stock. We highlighted this with Ria earlier. The 35% correction, one-way correction that we've seen on MTAR Tech, and it has come back. It was limit lower. Right from the word go, and now it's up about $50, which is about 1% or so on MTAR at this point in time. We'll take a break. We are back with Jay with his trading ideas as well. Stay tuned. Port.
Welcome back. Well, keep an eye out on E2E networks. That one came out with its set of numbers, and Vinny tells us that those numbers are very, very good because B200 cluster went live in Q1, which is NVIDIA's B200 Blackwell, is E2E's newest and highest GPU. So after the numbers came, the stock is up, but that's not the surprising part. The surprising part is that currently there are 10 lakh shares that are pending buy orders on this counter, and Vinny just brought that to my attention. So just keeping an eye out on that one as well. Good set of numbers. Market is appreciating that. Jay, simple one coming to you. Give us a couple of individual stocks, fresh ideas.
Two, of course. One is the Nilkamal Plastics cash stock. It's been on downtrend since 2021. That seems to have come to an end at the recent low of 1,050. And today it's breaking out. So stop loss at about 1225. Possibly heading back to record highs past the 2021 highs. And the second one is a reiteration of the call that was given in February. Thermax. Thermax seems to have completed a corrective decline from the May high, what we call in the Elliott wave pattern as a flat structure, possibly heading back to fresh record highs about 5,800 plus. Stop loss at about 4,300.
Sorry, Thermax, and which is the other one?
Nilkamal Plastics. It's called Nilkamal Limited now. Yeah.
Okay. Just put up Mahindra Finance. Is it? My screen is showing 11.5%. I just saw it come up at the bottom on the stock stack.
It was 11% up. Yes.
Okay. It's up just under 8% right now. 25 odd bucks on this one, but I mean, pretty interesting session all told, with so much to track in that sense. Anything else, Jay? You want to highlight? Oil? You want to take a shot at it?
Yeah, within the Indian markets, you want to keep a focus on FMCG names. They seem to be on a relief rally. When it comes to oil, I still believe that there are about 3 degrees of trend to the downside to complete. So I still anticipate the December lows of 54 and change to get taken out on WTI. So right now the premium on Brent is about $6-7. So equate that to that level.
Jay, stay with us. We're going to just wrap up the market and come back to you on markets forward. But that's the close. That's it. 45-point change, 24,190. The Nifty Bank is down about 120 odd points. And you got the mid-cap index and the small-cap indices. The mid-cap index is up about a quarter. The small-cap index, I think, is up 0.5%. So those did much better as compared to the Nifty, which was sulking through the course of the day. Sulking less, though, by 3:30 than it was at 9:15. Look at the market breadth. 2370 up, 2100 lower. So not very much to differentiate both with regards to the numbers which were higher and the numbers which were lower today. PSU Bank index down 1, the IT index down about 0.75%. So these are the top two losers. On the other side, autos did very well. Actually, the Nifty Auto Index was the top gainer. Defense and real estate follow closely behind with 1% pops coming through. So this is the final close as we had it. Just a quick look at the Nifty names. I mean, the large caps before we hand it over to markets forward. HDFC Bank, by the way, post-results, 7% gone. Yesterday's 5 and today's 2. So that, like yesterday, was a top loser. By the way, we started with the largest cut in HDFC Bank. We end with the largest cut in HDFC Bank. Infosys down 1.5%. State Bank of India down 1.5%. TCS, Reliance, Dr. Reddys down about 1% as well. On the upside, Shriram Finance about 2 3/4 higher. Bajaj Finserv up 2%. Eicher Motors up about 1.7%, Ultratech and HCL Tech with the other 1.4% kind of gainers. I mean, mid caps and small caps we've been sort of discussing through the course of the last 60 minutes. So that's been the part of the market which has done much better, helped along, of course, by good numbers, like, of course, from Mahindra Financial, like TVS Motors, not really as mid cap, but I mean, numbers have been good. That Bluestone Jewelry, the stock ended up 20% by the close. So lots of action, lots of single stock action, although at the headline level, not very much to show for it. Just a 50-point change by the adjusted close, 24,187. It's a wrap on closing bell. Markets forward in just a bit.
It's mixed after trading in a narrow range through the day. The Nifty finished around 24,200 even as broader markets kept the market breadth in favor of the advances.
It was a strong first quarter for two-wheeler makers. Both Bajaj Auto and TVS Motors beat street expectations driven by robust export demand while margins came in at multi-quarter highs.
SBI Funds listed at a 7% premium to its offer price after the IPO was subscribed more than 41 times. SBI's joint venture partner Amundi dispels speculations over further stake sale, says it plans to stay invested for the long term.
Welcome to Markets Forward, your go-to show where we aim to get you all of the key data points to gear you up for the next trading day. I'm Ekta Batra and with me is my colleague Hormuz Fatakia. Well, Hormuz, it turned out to be a session where it was absolutely mixed, but you know, it's deja vu because we spoke about this yesterday as well at the same time, where the broader markets managed to hold up quite well. So the mid-cap index was up around 0.3%. It did build on its gains as the day went on, and an advanced decline ratio which turned in favor of the advances as the day went on to around 2,300 stocks advancing to around 2,100 stocks declining. So overall, yes, the Bank Nifty was under pressure. Nifty was under pressure, but broader markets did have a spark.
A deja vu indeed, and it was neither here nor there sort of a session, at least for the benchmark index, and the Nifty continuing to hover around that 24,200 level, not gone anywhere over the last couple of days now, still in wait and watch mode. The broader markets, yes, they are building onto the gains. Every dip that is happening in either in the mid cap or the small cap index is getting bought into, and they ended at or near the highs of the day, and the bulls will take that. There are plenty of earnings reactions. It's a busy week ahead in terms of earnings as well, so a lot will depend on how a lot of these broader market constituents and Nifty constituents perform as well as we go into midweek trading tomorrow. But here's what is lined up in store for you today. The top movers and shakers of the day, as always, with Vivek. Start off with the day's key earnings, and of course with SBI Funds making its the last street debut, we will compare its valuations with its listed peers, and last but not the least, we delve into the key market events to watch going into tomorrow's trading session. But on to our first segment. As always, Vivek is here at the wall to tell us the top movers and shakers of the day. Vivek.
Well, thank you so much for that. Very sharp intraday reversal, especially in the broader end of the market's advanced decline ratio, especially in the second half, skewed very much in favor of the advances after trading most of the first couple of hours of the trading session, largely flattish or near the flat line. In terms of individual stocks, well, you can't look past the one of the largest listings that we've seen in recent times. SBI Funds opened up very strongly, over 6% upside for this particular name on day one of its T-Street debut. The other stock on the radar, of course, was Ace Construction. Very strong Q1, stronger expansion both on top line as well as margin, over 5% upside over there. United Breweries was the other stock, seeing a good up move. A lot of alcohol makers today on very good volumes, moving higher, almost 4%. Crude Vysya Bank, a clear standout performer as far as mid-cap private financials were concerned, 13% higher on good volumes. And TVS Motors came out with its numbers during the course of the session. Extremely strong set. You can see the spike in the stock as soon as the results are announced, over 5% higher as far as TVS Motors was concerned. On the other hand, quite a few laggards as well. Trill or transformers and rectifiers, muted set of numbers, disappointing the street once again, almost 5% down. Cartrade Tech on high volume saw a bit of a sell-off. Cartrade Tech is the name that we're talking about. And Paytm, again, saw a bit of a sell-off or profit booking post what was essentially a strong Q1.
Okay, all right, Vivek, thanks very much for that. So those are all of the stocks in focus in our Buzzing Stocks segment. Bajaj Auto reported what was a strong set of numbers in the first quarter, led by robust export demand. Margins expanded to over 20% this quarter versus 19% year on year. Sudarshan is here with the analysis. Sudarshan.
So Bajaj Auto, it has come out with very strong set of earnings. Stock is seeing profit booking because it has outperformed the peers just ahead of the numbers. But talking about this, some of the major internal, this is the first quarter where export volumes for Bajaj Auto are more than domestic volumes. Now exports form almost 51% to their total volumes. Now second part is the margin expansion. Margin has come in at multi-quarter high of around 21%, it's at 20.9%. And now that has been supported by increase in the export volumes volumes, and also the rupee depreciation against dollar that has helped. Now talking about the Chetak, earlier till Q4 FY26, EV, both electric two-wheelers and three-wheelers combined, used to form 20% to their domestic revenue. Now that has seen an increase. It has increased to 30% to their total revenue. Now coming to the headline numbers for Bajaj Auto, profit has seen an increase by 42%, revenue has increased by 37%, EBITDA has seen a jump of 45%, and margin, as I told you, has come at a multi-quarter high of 20.9% versus 19.7%. For Bajaj Auto, overall volumes have increased 29% YY and 5% sequentially. Realization, the important parameter, up 6% YY and up 3% on a sequential basis. For Bajaj Auto 2, we'll be watching out for what exactly company talks about the outlook and if it can sustain the margin increase that it has seen in Q1 FY27.
Sudarshan, thank you for that update there. Bajaj Auto, strong quarter. TVS Motors doing very well for itself after the results announcement, closing in on its record highs in today's trading session, 6% higher for TVS Motors. Bajaj Auto, though, ending close to the lows of the day. To take this conversation forward, we are now being joined by Jay Bala from Cash the Chaos and Sudeep Bandopadhyay. Gentlemen, good afternoon. Thank you for joining in. Jay, you mentioned the fact that the uncertainty around the index will continue till it crosses past its previous or the most recent swing high, which is 24,601. But for the Nifty Bank, though, still in that 1,000 point range, 57,500, 58,500. Is that the one that will take the index eventually past that 24,600 mark going forward?
Yeah, that's possible. I would think that the Nifty IT index, that's the thing that's causing more uncertainty than the banking index. Yes, you're right. Banking index is definitely slightly better off when it comes to the large cap names. And even there too, HDFC Bank, if it were to trade below 730, that will complete a short-term price structure and a medium-term price structure. So that can bring in a reversal. But the main uncertainty for the Nifty is probably emanating from Nifty IT index. It probably needs to go and finish a climatic sell-off below the July 1st low on the Nifty IT index. Once that's done, I think that it has a strong potential for a reversal. So yeah, watch out for Infosys result, which comes out on 23rd after hours. So probably the markets are going to react on the 24th Friday.
Okay, all right. Well, SBI Funds Management share price made a moderate debut on the exchanges. The stock listed at around a 7% premium over the IPO price. Let's get in Devyani to break down how the stock compares with its peers and what might the risks be also. Devyani.
SBI Funds listed at a premium of 7% over its issue price at around the 613 rupees per share mark. This implies a price to earnings of around 41 times its FY26 earnings and a market cap of 1.27 lakh crores. Now, at these levels, it is trading between HDFC AMC, which trades at 40 times its FY26 earnings, and ICICI AMC, which trades at about 46 times its FY26 earnings. Now, that is in spite of the fact that it has a higher AUM and market share overall, but keep in mind it also has structurally lower yields than its peers due to a higher 32% passives exposure. Now coming to this passives exposure, this is likely to reduce going forward because of their SIP book, which stands at a strong 4,000 crores and is actives heavy. Now that said, also the CKYC 2.0 rules, which are expected to roll out very soon, is something that the management is counting on to help reduce onboarding friction going forward, and as a result also be able to convert more SBI customers into mutual fund investors, which currently just stands at about 2% penetration, which could increase going forward. Now there are also certain risks to keep in mind. Specifically the regulatory risks, especially with SEBI tightening its measures going forward, including the recent expense ratio changes that came into place. And along with that, keep in mind AMC business by itself is cyclical in nature and moves with market movements, which directly impact the AUM as well as the investor sentiment. And that said, the mutual fund business is growing, but so is competition with it, with Jio BlackRock, Grow AMC and Angel One AMC all ramping up operations, and companies such as Anand Rathi setting up their own AMC going forward.
Okay, all right, Devyani. Well, SBI has made its stance clear. It will continue to sell only SBI Life products through its branch network. This comes days after we reported that the government isn't looking at mandatory open architecture for bank assurance. Let's listen in to the chairman CS Sethi on the same.
The product suitability is approved at the highest level in SBI. And I don't think we are looking at competing products. As I mentioned, I think our focus continues to be on core activity of deposit mobilization and lending. Nothing distracts us from there. As far as the open architecture is concerned, I think broadly we believe that we have product portfolio across insurance, life, non-life, mutual fund. I think every product is in our portfolio. And it gives us confidence that, when our own products are being sold at counters, both for customers and so for the time being, I think we will stick to our own subsidiaries product.
And over to Sudeep now. Sudeep, thank you for taking out time. Bajaj and TVS, first up to you. Both of them came out with numbers. Which one do you feel were the better ones? Both of them came out with strong numbers. But on the valuation front, Bajaj or TVS or neither?
Well, I like Bajaj, and in fact, the numbers also were pretty good. In fact, what is most interesting, Hormuz, is their export revenue has crossed the domestic revenue. And this is a very interesting development, particularly considering the fact that the way the currency has depreciated and the way that Indian currency normally depreciates in a normal year, 3-4%. So I think this will add further a zing to their bottom line. I do like that. Also, the domestic business has been picking up. I would definitely like to hear from the management about what they're planning on the KTM side and the EV side even further going forward. But fundamentally, looking at the valuations, I do like Bajaj Auto at current level. Nothing wrong with TVS Motors. They also came with a stellar set of numbers, but the valuation is a bit too rich.
Okay, all right. Jay, what's your view on the entire auto space?
Yeah, I think both are looking good set for record highs, but I think Maruti offers a much better risk reward from current levels. So I would prefer Maruti within the space. And within the I also like auto ancillaries. So you might want to look at tire space. And I'm anticipating crude prices to crash soon. So that will also give a fillip to the tire stocks. So Maruti within the auto space and auto ancillaries like tires.
Sudeep, what about SBI funds then? The new listing today. The IPO had a very strong subscription. The GMP was also indicating, of course, it is speculative rates, yes, but a fairly subdued listing in comparison to the expectations. There's still more value left on the table in comparison to a lot of the other AMC peers. We just saw numbers from Aditya Birla AMC and they were not very impressive. The stock got smashed after its numbers. What about SBI funds or better options within the AMC space?
Well, I think SBI funds, there is fundamentally nothing wrong with SBI funds. They are, of course, the passive funds are more, so the yield is at this stage lower compared to an HDFC as well as ICICI. But the way their strategy they have outlined during the IPO, and they are talking about taking the yield to 45 basis points, which is close to where HDFC is. I think the strategy sounds right. But as far as valuation is concerned, I think they are properly valued at this stage at the listing price. And even today, after that 5-6%, which it went up, I think it's properly valued. So I would recommend taking fresh exposure. But if somebody has SBI and wants to remain invested, there is nothing wrong. Amongst the AMC stocks, we continue to like ICICI and we will recommend ICICI at this stage.
Okay, all right. Guests hold on because the earnings season continues at full pace from autos and pharma to energy and retail. Several companies have announced their Q1 report cards. Ananya joins in with the key highlights.
Well, yes, a busy day of earnings today. Let me first start with TVS Motors. So they came out with their results today. They delivered a strong beat with revenue up 38% year-on-year and profit surging to 51%. Although the stock reaction remained muted, Granules India also reported a healthy quarter. They posting 22% revenue growth and a 60% jump in profit here, driven by margin expansion. Now coming to Mahindra and Mahindra Financial Services, which was also the key highlight, and the stock surged up to like 5% in the trading session. They reported a strong quarter as well, with NII up nearly 20% and profit surging almost 70%, supported by healthy business growth and resilient asset quality. One thing to notice that this is seasonally weak quarter for them, so as compared to that, it is a really good set of numbers. Now, Adani Energy Solution, they also reported a strong quarter with revenue up 42% and profit more than doubling, though operating margins moderated here. Now, Urban Fashions, they delivered healthy revenue growth and EBITDA growth, but higher depreciation, finance cost and minority interest led to a decline in attributable profit, resulting in a negative market reaction. Now, lastly, Atlanta Electricals also posted a robust quarter with revenue up 48% and profit rising 50%, but the stock remained under pressure today. So that's the earnings scorecard for today.
Ananya, thank you for that update there. Just only until now, there are still plenty of earnings that are lined up for the rest of the evening as well. There's a busy evening that we can promise you for sure. Jay, beyond the results, the one stock that comes to the radar is Karur Vysya Bank, was the top performer today on the Nifty 500. 13% higher is where the stock ended at 340. And the stock has done fairly well for itself this year. What are the levels you are tracking now on the stock, considering the run-up that it has had?
Yeah, it's still very bullish, but risk rewards aren't that favorable. I'm anticipating this to scale past 400, but it's likely to get a bit choppy before it gets to 400. And the next, if it does cross 400, the next level comes to about 440. So yeah, quite still bullish, but risk rewards, the stop loss that somebody were to get in fresh is quite wide. So that way, it's unfavorable.
Sudeep, what about M&M Financial? Numbers on the stronger side. The stock did very well after the results were announced. A lot of the other NBFCs, of course, still to report results in terms of Bajaj Finance and the likes. But on first glance, is M&M Finance, is the turnaround story now starting off to finally gather steam with the legacy issues behind it now?
Oh, absolutely. Look at the asset quality. And this will be apparent, Hormuz, because M&M Financial also, the asset quality on and off has been a challenge. But I think things have improved quite a bit there. And, numbers were pretty good. So it's nothing to complain as far as M&M Financial numbers are concerned. The market is also cheering that. But if I have to look at the entire NBFC space, considering the momentum and the business volume and the fundraise which happened in the recent past, I will still prefer the one of the top two, which is Sundaram. I think that's one NBFC, Shriram Finance, which is where I will put my bet on.
Okay, all right. Well, Sudeep, the other stock which is going to come out, company that's going to release numbers tomorrow is Dr. Reddy's, and that's really going to kick off the numbers from the pharmaceutical space as well. What is your sense in terms of what we can expect from pharma earnings this quarter? Anything that you would suggest to your clients at this point?
Well, we have been positive on pharma for quite some time, and we have been recommending buy on multiple pharma stocks. Dr. Reddy's has its ups and downs and challenges, but I think the quarterly numbers from most of the pharma companies, particularly considering they have a significant export earnings, should be good because the currency depreciation tailwind will add to their profitability and performance. Overall, I think it should be a good quarter for pharma, and we will look forward to the earnings from some of the CDMO players as well as the domestic pharma companies like Mankind. Also on the the larger pharma plays, Sun Pharma has been our favorite, and we'll keenly watch them.
Jay, beyond equities, the only talking point has been gold and silver. Gold has again seen a rebound from the 4,000 level that it fell to yet again. And silver too is finding support at that $55 mark. Is the bottom in place, at least for the short term, for both gold and silver at 4,000 and at 55?
I think the bottom may be in for gold, but silver could drop one more time below the recent low. But both of them are very close to an important turning point. So basically, the takeaway from this precious metal space is that we are probably very close to re-entering an inflationary phase. That inflationary phase will lift all asset classes. So, if there's no further downside for gold, it's very limited. And same for silver. But it's more likely silver gold might diverge from silver when silver makes a new low. I'm quite bullish on gold and silver from current levels. So limited downsides, probably heading back to record highs from a one year time frame.
Okay, all right. Jay as well as Sudeep, we're going to leave it on that note. Thanks very much for joining in and taking us through your views. We'll, on that note, take a short break. We'll get you all of the top corporate voices along with key market events to watch out for on the other side. Stay tuned. Welcome back. Well, some of the corporate voices of the day. CEO of Canara HSBC Life Insurance told CNBC TV18 that the company has started FY27 on a healthy note on all key parameters. The company expects a more balanced product mix in terms of a PE going forward and has guided for a VNB margin of around 22 to 23%. The management added that bancassurance is a healthy model to penetrate in Tier 2 and 3 cities.
We just spoke about Karur Vysya Bank. We spoke to the management as well earlier in the day, reporting its highest ever profits with quarterly business growth of 6%. The management highlighted that the bank is not seeing any stress emerging from the current geopolitical developments and remains confident of maintaining its asset quality as well going forward. It added that the intense competition has led to the bank to issue a conservative guidance, at least for now.
And Bluestone Jewelry outlined an aggressive growth strategy to expand its retail footprint. The company is targeting 80 new stores and aims at same-store growth of about 30%. The stock hit an upper circuit in trade.
There's the stock ending in a 20% circuit as well. And before we wrap, some key market events to watch going into tomorrow's session. Ananya is standing by with all of that. Ananya.
Well, let me first start with global market events. So investors will closely watch the much-awaited U.S. earnings from Alphabet and Tesla, which could set the tone for global technology and AI stocks. Now also AMD is advancing AI even for further cues on the semiconductor and AI space. Now, next, the UK inflation data will also be in focus as markets assesses the outlook for the Bank of England's next policy move, while the European Central Bank begins its two-day monetary policy meeting. Now, investors will also keep an eye on the proposed US tariffs on select Brazilian imports. Back home, day 3 of Parliament's monsoon session will remain in focus while the 5,000 crore Cube Highways public issue opens for subscription. Now, on the corporate earnings front, key companies, scheduled to report results include Indices Bank, Dr. Reddys, Nestle India, Adani Power, Adani Green Energy, BPCL, HPCL, IIFL Finance, and Nippon Life India Asset Management. In addition, Hawkins Cooker will trade ex-dividend with a dividend of 140 per equity share. So these will be the key events that investors will watch out in tomorrow's trading session.
Okay, all right, Ananya, thanks very much for that. With that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side. Stay tuned.
Term story.
When the market moves, we don't just report, we decode.
From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV18 Market Central.
For your daily source of market intelligence and wealth creation, with a commitment to doing it right.
and welcome to Business 360. I'm Arundhati Ramnan, and these are the headlines that we're tracking for you this evening. Brent crude prices hover around $90 mark after US and Iran attack each other for the 10th straight day. Iran claims strikes on 2 oil tankers and an Amazon data center in Bahrain. Yemen's Houthis attempt to open a new front, declare a naval blockade of Saudi Arabia. Sensex and Nifty end with marginal losses after a range-bound session. Mid-caps outperform. Rupee regains some lost ground against the dollar but remains above the 96 mark. The government summons a senior Russian diplomat over the killing of 4 Indian seafarers on a cargo ship near Ukraine's coast. External Affairs Ministry conveys grave concerns and unequivocal condemnation. There were 5 Indians among the 17 crew members aboard the Guinea-Bissau flagged merchant vessel. President Trump reignites his tariff war with Canada months after the U.S. Supreme Court struck down his global tariffs, imposes 50% duties on a range of Canadian imports, citing unfair trade practices. Canadian Prime Minister Carney says they stood ready to intensify trade talks with the U.S. in the coming weeks. SBI Funds lists at a 7% premium to its offer price after the IPO was subscribed more than 42 times. SBI's joint venture partner Amundi dispels speculation over further stake sale, says it plans to stay invested for a long time. Two-wheeler makers Bajaj Auto and TVS Motor beat estimates in Q1, driven by strong export growth. Both companies also report margins at multi-quarter highs. Paytm shares declined despite a strong first quarter. Company does a vault-face and drops its plan to consider what would have been its first bonus issue of shares. Indigo places an order for 1,000 engines with CFM International in its largest single order yet. This comes after India's largest airline faced disruptions due to issues with Pratt & Whitney's engines. The CJP protests against Education Minister Pradhan over paper leaks continue at Jantar Mantar, but protesters call off the march to Parliament after several people were injured in the police crackdown yesterday. Activist Sonam Wangchuk also continues his hunger strike. Delhi High Court allows Wangchuk to be shifted to Medanta Hospital. Parliament adjourned without any business for the second day. Opposition leaders, including Rahul Gandhi, protest outside the Prime Minister's residence over the police crackdown in Jantar Mantar. Prime Minister Modi says neat paper leak accused will not go scot-free at a meeting of NDA MPs. At least 11 people are dead and 15 remain trapped after a landslide triggered the collapse of an under-construction tunnel in Sikkim. Continuous rainfall in the area hampers rescue operations. Straight to the big story this evening. There is no let-up in the fighting between US and Iran as they exchanged fire for the 10th consecutive day. The US military claimed to have struck Iran's military command centers and maritime capabilities. Explosions were reported in Tabriz city. Iran's Gulf ports and ports in the southeast, including Chabahar, also came under attack. The U.S. Central Command insists that commercial vehicles are passing through the Strait of Hormuz and claim to have helped 450 million barrels of oil transit the waterway. The fresh wave of U.S. attacks follows a warning from President Trump. In a social media post, Trump said, and I quote, "Iran would pay many times over for killing U.S. soldiers," end of quote. 3 U.S. military personnel were killed in Iranian attacks over the weekend, taking the overall death toll to 18 so far. Nearly 100 U.S. troops have also been injured. Iran launches missiles and drones at U.S. military bases in Bahrain, Kuwait and Jordan. Iran's Revolutionary Guard also claimed to have struck an Amazon data center in Bahrain. 2 oil tankers are currently ablaze at the Strait of Hormuz. Iran claims the tankers took what it calls an unsafe route. British maritime authorities have confirmed strikes on 2 tankers near the coast of UAE and Oman. Brent crude prices continue to hover around the $90 mark. According to marine traffic, 53 vessels have transited the Strait of Hormuz in the last 24 hours. The Houthi militant group in Yemen is threatening to open a new front. The group has declared a full maritime blockade against Saudi Arabia, which could further threaten global energy supply. Gulf states like Qatar have strongly condemned the announcement by Houthis and made a global call to uphold freedom of navigation in the Red Sea. The Indian government has summoned a Russian envoy and lodged a strong protest. This comes after 4 Indian seafarers were killed in an attack on the commercial vessel off Ukraine's Black Sea coast. The External Affairs Ministry conveyed its grave concerns and unequivocal condemnation over the attack. According to Ukrainian authorities, the attack killed 4 Indian crew members, along with 5 other crew members and a Ukrainian maritime pilot. Another Indian national was critically injured, while 8 people were rescued. On to the day's market action. Markets ended mixed amid a range-bound session. Nifty closed around the 24,200 level. Mid-caps outperformed while Nifty Bank slipped 110 points. Auto stocks surged after TVS Motor and Bajaj Auto reported healthy numbers in the first quarter. The market breadth remained in favor of advances. The Reserve Bank of India's special incentives to shore up foreign inflows have brought in over $20 billion in 42 days. Now, this includes over $17 billion being poured into Indian banks via a special scheme that allows NRIs to make leverage deposits till the end of September. But despite those inflows, the rupee remains under pressure. Ritu Singh joins us now with all of the details. Ritu, why has the rupee not responded positively so far?
Well, the first report card on RBI's foreign currency mobilization measures is out, and it is stronger than expected. In just 6 weeks, banks have mobilized $17.4 billion through the FCNRB deposit window and $20.7 billion in total, which includes the external commercial borrowings and the overseas foreign currency borrowings as well. Now, that is already more than half of the amount that was raised in the entire 2013 FCNRB scheme, even though this current window remains open until the end of September. So the measures are clearly bringing in dollars, and yet the rupee is still down nearly 7% this year and close to the record lows. Now, the answer to that is simple, because the rupee is driven by daily dollar demand. You see, India imports more than 85% of its crude oil. So higher oil prices means the oil companies have to keep on buying dollars, and that puts pressure on the currency. Also keep in mind, FCNRB inflows mainly strengthen our external balance sheet. Now, banks, when they get these dollars, they swap it with the RBI. So that will boost our exchange reserves and the banking system liquidity and supports confidence over time. But it does not immediately add enough dollars to the spot market to offset the importer demand. And that explains why the rupee remains under pressure. Now, the latest RBI data also dispels any concerns in the market that the mobilization was falling short of the initial expectations. So Jeffrey says much of this FCNRB money appears to be fresh inflows, largely from the NRIs in UAE, Singapore and Hong Kong. Macquarie adds that foreign banks have played a much bigger role perhaps this time, using their own balance sheets to support mobilization. Now, both believe the strong mobilization will improve bank funding and liquidity, even if we don't see the response on rupee yet. Now, going ahead, if FCNRB mobilization remains strong through the month of September, oil prices also stabilize importantly, the rupee should receive more meaningful support. But until then, day-to-day importer demand for dollars is likely to be the dominant driver of the currency movement that we're seeing.
What gives us confidence is the update that we got last night, that there have been inflows which have been quite strong and fairly front-loaded. It basically gives a sense that, it's off to a good start, despite all the problems that, borrowing costs are very elevated at this point of time, which is true. And our sense is at this level, I think it's going to be even higher in August. So broadly speaking, our estimate is that, we could get, about $50 billion from the FCNR alone in this entire sort of 3-month window, and then take about $10 to $15 billion more from ECB and all of that. So $60 to $65 billion inflow, which will really help the BOP and put it into surplus.
It was a strong debut for SBI Funds Management. The company shares listed at a 7% premium over its IPO price. The 9,800 crore rupee issue was subscribed over 42 times on the last day of bidding. Speaking at the event, SBI Chairman C.S. Setty said the bank has no plans to further dilute its stake in the newly listed entity.
At this moment, we are not looking for any more dilution. Of course, the whole dilution process will depend on the public shareholding norms of SEBI. There are definitely financial institutions. State Bank of India has helped to grow through our subsidiaries route, and now currently with SBI Funds Management we have 3 subsidiaries listed, and we would definitely look for opportunities of listing of as they evolve and mature and reach a stage where the listing makes sense.
And in earnings, auto majors Bajaj Auto and TVS Motor have beaten estimates in the first quarter. This growth was driven by strong export growth. The two-wheeler makers also reported margins at multi-quarter highs. Sudarshan Kumar joins us now with all of the details. Sudarshan, take us through the numbers.
Two major two-wheelers, Bajaj Auto and TVS Motor, have come out with the earnings for Q1 FY27. Both the companies have reported earnings that have looked much better than expectations, and earnings for both these companies have been led by export segment. For Bajaj Auto, now export forms more than 51%, and for TVS Motor, too, export forms the major part of their total volumes. Now, just talk about the headline numbers. For Bajaj Auto, revenue has seen an increase of 42%, almost 37%. EBITDA has seen a jump of 45%, and margin has come in at a multi-quarter high of 20.9% versus 19.7%. Two internals, volumes for Bajaj Auto have seen an increase of almost 29% YY. Even on a sequential basis, it has seen a healthy increase. If you talk about the realization that company earns on every bike, here also both on a sequential basis as well as YY, company has seen an increase. Sequentially, it's up 3%. YY up, it's almost 6%. For TVS Motor, margin, we were expecting that margin might drop for TVS Motor, but company has reported an expansion, and for TVS too, it has come at a multi-quarter high of 12.8%. Bottom line, or say profit, was supported by the increased other income. Other income has increased to 151 crore versus 35 crore in the same quarter last year. For TVS Motor, revenue has increased by 38%, EBITDA has seen a jump of 41%, and margin has come in at 12.8% versus 12.5%. For TVS Motor 2, realization has seen an increase of 8% YY and 4% on a sequential basis. So overall, very strong set of earnings by both TVS Motor and Bajaj Auto. In the commentary, we'll be watching out for what does company talk about margin, if it will be able to sustain the margin expansion that has seen in Q1 FY27, and what's the outlook on volume front for both domestic and export. But as far as earnings are concerned, looking very strong for both these export majors.
So strong numbers there for both those companies. Thank you so much for all those details, Sudarshan. Shares of Paytm tumbled in trade after the company decided to defer its proposed bonus issue of shares. This comes as the company wants to continue its focus on compounding growth and profitability for shareholder value creation. However, Paytm is not the first company to delay its proposal to issue bonus shares. Hormuz Patakia brings us a list of all the companies who have deferred their proposal so far. Hormuz, what are you picking up on that front?
Well, more than the results, this was the bigger news point for Paytm, that they were supposed to consider a bonus issue of shares. Now they have called it off. They've said that they plan on focusing on compounding their growth and profitability to create more long-term value for their shareholders. And more importantly, they have not even shared a further timeline whether or not this will be a proposal to be considered in the near future. Of course, this is not the first instance that this has happened. The most recent one that comes to mind is Indus Towers, when back in 2025 they had said that they will be rewarding their shareholders either via bonus or buybacks or debentures or dividends. None of these were considered in that board meeting in 2025. But earlier this year, they announced an interim dividend of 14 rupees a share, which is pending shareholder approval at the upcoming AGM. Most of the other companies in this list are PSU companies. NTPC back in January of 2019 said that they are going to consider a bonus issue. They deferred that plan and then approved it next month in February, which was a 1:5 bonus issue. RITES as well in 2020 had said that they will be considering a bonus issue of shares. Then they pushed back on that because of the onset of the COVID-19 pandemic. Therefore, to conserve cash and to protect their balance sheet, the proposal was deferred. And then it was only in 2024 that the company declared a 1:1 bonus. SJVN as well back in 2019 had announced that they will be considering a bonus issue. They pushed back on that proposal, and since then they have not declared a bonus issue at all for its shareholders and have paid dividends worth only 13 rupees so far. ONGC also forms a part of this list. Back in October of 2016, they had deferred the bonus issue of shares, which was later on approved in the ratio of 1:2 in December of 2016, and that was the last instance that the company had announced a bonus issue for its shareholders. And last on the list is BPCL. Back in May of 2017, they had deferred this proposal, then approved it in July of 2017, which was in the ratio of 1:2, and then in June of 2024, they declared another 1:1 bonus issue of shares and have paid healthy dividends as well to its shareholders. So a negative news coming in for Paytm in terms of the bonus issue. Stock reacting negatively despite earnings being on the positive side. But of course, this is not the first instance that something of this sort has taken place.
All right, Hormuz, many thanks for those details. Now, Indigo has continued to dominate India's domestic aviation market share in June, accounting for over 66% of the total share. This was followed by the Air India Group, which accounted for nearly 24% of the total share. Domestic airlines carried over 1 crore passengers during the month. Small carriers, Akasa and SpiceJet, captured 6% and 2% of the total share, respectively. And staying with the aviation space, Indigo has placed an order for 1,000 engines with CFM International in its largest single order yet. This has come after India's largest airline faced disruptions due to issues with Pratt & Whitney's engines. Madiha Mujawar explains all of those details. Madiha?
Well, this isn't a new aircraft order, just to clarify. These engines will power 510 Airbus A320 neo family aircraft that Indigo has already ordered. Remember, Indigo has over 1,000 aircraft in its order pipeline, but the significance here lies in who will power those aircraft. So when airlines buy an Airbus A320 neo family aircraft, they have two engine choices: Pratt & Whitney's GTF or CFM International's LEAP engine. Now, Indigo's latest agreement is a clear vote of confidence in CFM as the airline prepares for its next phase of growth. So the deal is significant because Indigo has faced years of operational disruptions due to issues with Pratt & Whitney's GTF engines at different points. Several Indigo aircraft have been grounded, forcing the airline to wet lease aircraft, cancel flights and absorb higher costs. Now, Indigo had started the shift to LEAP engines for A320neo family back in 2019 by selecting CFM for some 280 aircraft. Then in 2021, it again chose CFM for another 300 aircraft. Now, by signing up for more than 1,000 LEAP engines, Indigo is reinforcing its long-term engine strategy. The agreement also includes long-term maintenance support, spare parts and assistance in setting up Indigo's upcoming engine MRO facility, critically as the airline rapidly expands its fleet. Now, for CFM International, this is a landmark deal, the largest LEAP engine order in its history, but a big setback for Pratt & Whitney for losing Indigo, which was its biggest customer. This is also the first time when Indigo CEO designate Willie Walsh has officially spoken on behalf of Indigo and also captured in a picture along with promoter Rahul Bhatia and the CEO of Safran and GE Aerospace. Walsh also said, and I quote, as Indigo marks on its next phase of growth towards becoming a truly global airline, we are delighted to extend our long-standing partnership with CFM International. The LEAP engines industry leading proven reliability makes it the ideal choice to support our scale, operational resilience and sustainability ambitions. End of quote. So clearly a big order from Indigo for CFM International.
Absolutely. Thank you so much for taking us through those details, Madiha. But on that note, it is time for us to head into a short break. Coming up next, the CJP protests against Education Minister Pradhan over paper leaks continue at Jantar Mantar, but protesters call off the march to Parliament. That and more when we return. Stay tuned.
Onto the floor.
Welcome back. You're still with us on Business 360. Thousands gathered at Delhi's Jantar Mantar a day after a police crackdown on protesters seeking education reforms and Minister Dharmendra Pradhan's resignation. Protesters resumed a hunger strike but called off the march to Parliament after police action left several protesters injured yesterday. There is no official tally on the number of injured protesters. Delhi police say over 100 of its personnel were also injured in the clashes with protesters. Police also denied reports of pellet guns being used. Activist Sonam Wangchuk, who has headlined the protests over the last 3 weeks, continues his hunger strike. Delhi High Court allows Wangchuk to be shifted to Medanta Hospital from the government-run Safdarjung Hospital. The court said that shifting Wangchuk to a hospital of choice will ensure protection of his fundamental rights. Meanwhile, Prime Minister Narendra Modi defended the government's action on the paper leaks. Speaking to NDA MPs, the Prime Minister also promised to punish those accused in the paper leaks, calling it a grave sin. He also urged state governments to work together to prevent such incidents in the future and ensure that examination processes remain secure. Meanwhile, the crackdown on protests has snowballed into a major political issue. Congress leaders, led by party chief Kharge, Lok Sabha leader of opposition Rahul Gandhi, protested outside the Prime Minister's residence today. The Congress leaders then sat on the ground and started raising slogans demanding the resignation of Prime Minister Narendra Modi and Home Minister Amit Shah. Parliament was adjourned without any business for the second day amid opposition-heavy sloganeering. Opposition parties demanded a discussion on the paper leak issue and the crackdown by the Delhi police on protesters yesterday.
प्रधानमंत्री जी ने ये भी कहा कि पेपर लीक सिर्फ एक राज्य का मामला नहीं है, सिर्फ केंद्र सरकार का मामला नहीं, पूरा देश का हर एक राज्य में जहां-जहां पेपर लीक करने में जो लोग लिप्त हैं, जो लोग इस धंधे में इन्वॉल्व है, जिन्होंने काम इस तरह का घिनौना किया है, पाप काम किया है, उनको सजा देने के लिए सब एकजुट होना चाहिए। ये कोई दलगत राजनीति का विषय नहीं है, ये देश का विषय है।
देखिए, इशू स्टूडेंट्स की है, यूथ के फ्यूचर की है, और ये जो किया जा रहा है, लोगों को मारा जा रहा है, पीटा जा रहा है, दिस इज कंप्लीटली अन इंडियन।
कतई मैं इस बात का पक्षधर नहीं हूं कि छात्रों की आवाज को किसी भी दबाव से दबाने का प्रयास किया जाए। संवाद एक खूबसूरत माध्यम है जो सरकार ने, जिसके दरवाजे हमेशा खुले रखे। कल जिस तरीके से उनके प्रतिनिधि मंडल ने सरकार से मिलने की इच्छा जाहिर की, तुरंत सरकार से उनकी मुलाकात हुई, आदरणीय जेपी नड्डा जी से मुलाकात हुई, वहाँ पर उन्होंने अपने विषयों को रखा, अपनी बातों को रखा।
जो कल छात्रों के साथ, युवाओं के साथ हुआ है, कोई कल्पना नहीं कर सकता था कि आज़ादी के बाद इस तरह का व्यवहार किसी सरकार ने किया हो। सर पर चोट है, आंसू गैस के गोले चले, लोगों के सर पे टाके आए हैं, पैरों की हड्डी टूटी है, हाथ की हड्डी टूटी है।
At least 11 people have died after an under-construction tunnel collapsed in Sikkim following a landslide. Rescue teams are working to recover the bodies of those still trapped inside the tunnel, with around 17 workers feared to be stuck underground. Initial reports suggest a suspected methane buildup and explosion may have triggered the collapse. As the monsoon intensifies across North India, Himachal Pradesh remains on high alert. The Met Department has issued a red alert for heavy rain in 5 districts. Heavy showers are expected to continue across parts of the state until the 25th of July. Flash floods have damaged crops and roads, disrupted highway traffic, and forced the closure of schools in several districts. And staying with monsoons, Assam has also been hit by torrential rains and flooding. At least 5 people have died and over 1 lakh people have been displaced from flood-ridden areas. Rivers are currently flowing well above the danger mark at some locations. Search and rescue operations are ongoing. US President Donald Trump announced a 50% tariffs on a wide range of Canadian imports. The move comes in response to what Trump described as unequal treatment of American products, including cars, dairy, and alcohol. The new duties will impact goods ranging from wine and hockey sticks to cement. Canada has rejected the move as a violation of the USMCA trade deal. Canadian Prime Minister Mark Carney has vowed to intensify talks and criticized what he called a series of unilateral trade actions. Britain's new Prime Minister Andy Burnham has announced a slew of new measures. He has said that he will remove a VAT from electricity bills in October, cutting the rate from 5%. This move will be funded by scrapping former PM Keir Starmer's digital ID scheme. And with that, it is a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV 18.
From Washington, Rubio outlined a
Welcome back. You're watching Commodity Champions and I'm Manisha Gupta. Well, our focus today is diamonds. Rough diamond prices have declined nearly 20% in the past year. And the last month alone, we have seen the prices fall by nearly 3%. The Zimnisky Global Rough Diamond Index to understand what is putting pressure on the diamond market. I am now joined by Paul Zimnisky, a leading global diamond industry analyst who maintains the widely tracked proprietary rough diamond price index. Paul, hi, thank you so much for joining us. First of all, your sense really of legendary mines going for a closure. How are you looking at the supply situation going forward, especially when you have Devik, Venetia, and so many mines closing down for good?
Yes, I guess just to maybe provide some context. So the industry's really been on a roller coaster the last 5 years. We had record demand for diamonds in 2021 with all that, pandemic era government induced consumer stimulus. But the following 4 years have really been rough. We've been, through a generational phase of inflation. The price of everything is up, but diamonds are one of the very few products that are down. I mean, we're down anywhere from 10 to 50% from that 2021 peak, depending on the category. And that's, had a direct impact on supply. I mean, we've seen, diamond prices down, but operating costs are up. The price of everything from, diesel fuel to labor to machinery to truck tires, prices are up, and that's really squeezed the miners. And, over the last year alone, we've seen at least 10 major diamond mines that have either halted production or outright closed. And that puts us in a situation where, supply is down significantly. I estimate we're going to have, maybe 90 million carats of natural diamonds produced this year. And that compares to over 150 million pre-pandemic. So I think this year we're looking at the lowest natural diamond supply since 1987, according to my data. So the supply situation is very notable at the moment.
Oh, wow. So from 150 million carats last year to 99 million carats this year, that's quite a considerable decline, as you tell us, Paul. Are we looking at a permanent downsizing of the market, or is this a temporary cyclical low that we are looking at in sense of diamond supplies globally?
Well, the thing with diamond mining is it takes a lot of money and a lot of time to put a new mine into production. So I think we do have, a secular trend of decreasing diamond supply. I think it's, directly relates to the rarity of large economic commercial diamond deposits, right? So I think we're going to probably be in that 90 million to maybe 120 million carats for the foreseeable future.
All right, so 92 to 120 million ounces in carats rather in sense of diamond availability. Paul, let's also talk about the prices now. And while the commercial stones under 1 carat remain under pressure, the premium large stones are looking at gains. How are you looking at this trend? And I take your point, as you said earlier, that from 2021 peak, we've seen diamond prices come down anywhere between 10 to 50% for some of them. Are we looking at some recovery? Have we seen a bottom?
Yeah, it's a good point. So, for instance, like the 3 carat and larger size polish, so the finished diamonds, that's a hot category right now. And the availability of that supply has significantly declined. I estimate that there's going to be maybe approximately 100,000 diamonds that are in that 3+ carat size range produced this year. And that's down from over 200,000 carats pre-pandemic. So, for context, Rolex will produce, say 1 million watches a year. So I think it kind of puts into context how, rare some of these larger diamonds are becoming. And that's definitely impacting prices. It's definitely that maybe that smaller to mid-tier category of diamonds that are going to continue to probably be pressured because of the, introduction and competition from man-made diamonds, the lab-grown diamonds. So I think that's going to be the category of the market that the natural diamond industry is going to have to continue to fight for.
Oh, well, absolutely. As you said, there have been various reasons that have put pressure onto the diamond prices there. Would you also say, Paul, that the natural diamond prices are now near bottoming out? What would it mean for the retail luxury markets then?
Yeah, so I think, maybe something your listeners especially will be interested in, given India's stranglehold in the manufacturing segment of the industry. I estimate that midstream inventories, so that's, diamonds held by the manufacturers and the wholesalers. I think I estimate we're at approximately $30 billion worth of inventory globally right now. And that's down from 45 billion just 2 years ago. So, I think we're going to continue to have, tight supplies. And I think if we do see a resurgence in demand for natural diamonds, I do think that, sets up a situation where we could see, a real spike higher in prices in the near term.
And Paul, where would that bring us in sense of prices? How much higher would prices be, let's say, from a year from now for many of these diamond categories?
Yeah, I mean, it's a very nuanced industry. Like I said, there's certain categories that are outperforming. There's certain categories that are underperforming. So I think it's just kind of a matter of what particular areas we're looking in. Again, I think these larger, higher value diamonds. I mean, these are diamonds that consumers will spend $10,000, $100,000 for. I think that category is going to remain relatively strong. But it's going to be that medium-sized category, and it comes down to, can the industry convince consumers around the world and in major markets like the U.S. to buy, say, a 1-carat natural diamond instead of a 3 or 4-carat perfect quality lab-grown diamond, and that's where the marketing really comes into play.
Oh, well, absolutely. Would you also say that the impact or the disruption caused by lab-grown diamonds to natural diamonds is now done with? Would you say it has its own category, its own buyers right now with much awareness?
Yeah, so I think it's important to understand that when we look at, like, say, the industrial segment of the market, so these are diamonds that are used for, say, cutting tools and, special, technological, fabrication and that sort of thing. The synthetic diamond basically took over the natural diamond market in the 1980s. For context, there'll be 1 billion carats of industrial quality synthetic diamond produced, this year alone. So we're talking, 98, 99% of diamonds for synthetic application are already, or diamonds for industrial application are already synthetic diamonds. So I think that's what's possible. But I would also note that if lab-grown diamonds were going to completely take over the natural segment of the diamond jewelry industry, I think that would have already happened. I mean, there's certainly enough supply to do that. There's unlimited lab-grown diamond supply. It's a made-to-order manufactured product. I mean, but I think the fact that the natural diamond industry still holds about half of that market makes it clear that consumers still want natural diamonds. I mean, if you look at celebrities and I would say people that actually work in the diamond industry, they overwhelmingly still seem to want natural diamonds. So I think that says something, and I think we're heading into this world where it's getting more and more difficult to tell the difference between, say, AI-generated music and movies and writing. And I think, we're getting to a place where I think people are actually going to want natural things to gravitate to. And I think diamonds are a great, representation of that. It's something you wear every day. And you can distinguish, natural diamonds from lab-grown diamonds. So I think, this remains a huge opportunity for the industry. I think it has to get its messaging out. But I would actually argue that we're getting into a phase where it actually really does favor natural diamonds given where we're headed.
Paul, then what would you say has been the impact of the West Asia conflict on the overall global diamond trade? I mean, it has impacted various other segments and sectors and companies for that matter. Has it impacted diamonds as well?
Yeah, I mean, from what I've seen, it's more of a macro impact. It's the price of oil's up, the price of diesel's up, the price of goods are getting up. I think middle-class consumers are certainly feeling the impact of that with their everyday expenditures. And again, I think that kind of gets back to what you're saying with the K-shaped recovery, where we're certainly seeing the higher end of the market is much more resilient. These people are less impacted by, say, the price of oil and the price of gasoline. So, that's something we've seen for a long time. I mean, the higher end is always a more resilient part of the market. But at the end of the day, the industry needs all segments of the market to buy diamonds if you really want to see a strong market. So that's going to continue to be a very sensible, it's going to be a sensitive variable going forward.
All right, Paul, so how would you look at the demand going forward from here? India is growing. US seems to be doing okay. It is the largest market by market share in that sense. China doesn't seem to be coming back as strongly as Street anticipated. How would you look at also Europe? And are you looking at West Asia? Are you looking at newer markets which are now wanting or have aspirations for diamonds?
Yeah, I mean, everybody wants to talk about, the impact of lab-grown diamonds and how that's impacted the natural diamond market. But you make a good point. I mean, China, has been the second largest consumer of diamonds the last 2 decades. And demand in China is down 50% over the last 2-3 years alone. Residential real estate prices in China have fallen below 2005 levels. essentially erasing 2 decades of gains. So that's really impacted, consumer sentiment in China. And there's also been a cultural drive in China that kind of put a damper on conspicuous luxury consumption. So, this has been felt by the industry. And I think the industry needs a recovery and a strong China to ultimately get back to where we are. I wouldn't give up on China. I think it would be crazy to give up on China. I think China remains, a tremendous opportunity for the industry. But if we can see, continued resilience in the U.S., continued strong growth in India, and if we see a recovery in China, I think that would really set up the industry strongly.
All right. Well, yes, China hasn't come back, but I take your point that China will at some point perhaps come back into diamonds. Interestingly, Paul, when you talk about India, diamond really hasn't been a good investment. As you yourself said, that the last 3 years haven't given us a return. Now, when you talk about people in India, they buy diamond as a luxury, not as an investment. They would rather buy gold. Then how are you looking at this demarcation?
Yeah, I think this is most, the case when we're talking about those higher end diamonds. Again, the 3-4 carat plus polished goods, especially in the high quality, fancy cut shapes. Again, these are diamonds that could sell for, $50,000, $100,000 US. So, I think the consumers buying this they tend to be pretty smart people. And I think they do look at it, in part as an investment that they could wear. So, I think this is definitely more the case at the higher end of the market. At the lower end of the market, that's going to be less of a case.
Oh, well, that clearly has been the case. So less than 1 carat diamonds have done quite well. Actually, 4 to 6% of gains is what we've seen in the matter of last fortnight as well. Paul, as always, thank you so much for joining and making sense of what the diamond industry really looks like. There are supply concerns. There is demand that is coming back, and the prices perhaps have made a bottom. Well, on that note, it's time for a short break, but do not go anywhere. We will be joined by Chetan Mehta of Lakshmi Diamonds. On the other side of this very short break, we'll talk about Indian trends, festival demand, wedding season, all of that after this break.
Reasons for the day's
Welcome back. You're watching Commodity Champions. Joining us now is Chetan Mehta of Lakshmi Diamonds. Mr. Mehta, hi. Thank you so much for joining in. Well, I was having a conversation with Paul Zimnisky, who said that the wholesale rough diamond prices have seen a decline. The retail side of the prices have not fallen as much, but the prices have been stable for some time now. What is your sense when it comes to wholesale and retail in sense of diamond prices?
Good evening, Manisha ji. Thank you for the opportunity. First of all, I would like to tell you that already the diamond prices have come to the bottom. And as a wholesaler, I think now the prices are steady, and we can either at the retailers also, people have fixed their prices in a very better way. Because the majority of the diamonds have been used from -2 to around 8 to 10 cents sizes, the most jewelry is made of those diamond sizes. So they are stable, and it's a very bottom price have come already. So I think now from 1.5 year, the prices are very much set, and wholesalers also have got the prices at the bottom, and retailers also made their mind that this is the prices is going to run for a long time, Manisha ji.
Another trend that we seem to be looking at in the Indian markets because of the volatile and high gold prices is there's less of pure gold jewelry and more of studded jewelry that seems to be doing well. How are you approaching this wedding and festival season? What kind of jewelry are you looking at?
Manisha ji, whenever the gold prices are very much high, people like to prefer to have a pure gold and gold jewelry because they feel the prices are going up, and they get better investment and they get better money in that. But whenever the prices are stable, now you can see the prices are gold prices is very much stable, and this is the right time the studded market have jumped in a very big way. And I can tell you from past 1.5 year, as though the situation of our retail industry and a wholesaler is struggling because the prices have been up and down, but past from 2-3 months, the prices have been stable and people have made their mind. So now people have converted a lot of, they wanted to buy a studded jewelry, diamond studded jewelry, because the diamond prices also have come to a bottom and they are getting for the best prices. And people are investing more into diamond jewelry, and studded markets have been explored in a very big way. So I am seeing, because the festive seasons are coming and a lot of weddings are there, and the best part is next year all manufacturers, wholesalers are preparing for IIGS. The world's biggest shows happen in our country in Mumbai, Goregaon, and we are all preparing for that, for the new collection and all. And we have, because 2-3 months the business was pretty slow, it was not so good, as though we had a good demand in the studded jewelry, but we didn't do so good because the market situation was not so very positive. But now, because the IHS is coming and the show is coming, all manufacturers are prepared, and the retailers also set to buy a good amount of diamond jewelry, studded jewelry. And because now after the July, August, the season starts. So we are all set to have a great business in exhibition and studded jewelry. I'm seeing the good growth, as though from 1.5 year I've seen studded jewelry have been grown massively. Diamond jewelry, I can tell you, Manisha ji, I was always telling you that already the diamond prices, when it becomes stable, people have that, okay, now the prices are stable, we need to buy, and people don't see as an investment. It is seen as like, luxury, and it is seen as like Shukra God. So people are very much happy when they buy diamond jewelry, and now the diamonds have become more reasonable and good prices also. So this is a very right time for buying diamond jewelry, and people are very positive. Consumers are very positive to buy diamond jewelry. Manisha ji.
Yep. Mr. Mehta, if you look at the gold import numbers, they have continued to see a decline. I mean, June has just about been 30 tons. Jan and Feb and March were great. April has seen a decline, May and now June as well. I remember our last conversation where you told me that the exchange is still on the higher side. For a manufacturer like yours, is getting gold or getting gold at a, are you getting gold at a premium? How really is that market behaving?
Manisha ji, I think more of exchange gold is coming into market very well, because when the import is declined, people are using their old gold and they're exchanging, and they wanted to have a new jewelry out of that. Because I think a majority people, they're, I think I can tell you, before we were thinking 25, 30, now I think 45 to 50% people are exchanging their old gold to new gold, and they're exchanging old diamond jewelry to new diamond jewelry. And as the markets are stable now, I don't see much premiums or much gray market is there in the India now, because prices have been stable. So whenever the prices are stable, market performs very, very well. But I think exchange played a very important role in our country, because after the statement of our Pradhan Mantri ji, Narendra Modi ji, that we need to save the gold. But I think all the consumers heard this, and even we know we have more of 25,000 to 30,000 ton gold in household. And even the retailers in our industry, we told that please you use your old gold and maximum you get this old and exchange. I think people are hearing out to this, and we can see massive exchanges is happening around 45 to 50%, Manisha ji. That's a good sign, because when you have more of rotation of old gold happening in our country, obviously the decline of import will happen, and it's a good sign, what I feel is.
Mr. Mehta, also, would you look at the lower caratages and lower weightages as a trend going forward now, or because you come in from South India, would you still say it is higher caratages, 22 carats perhaps, is still something that is more prevalent?
I think it is, Manisha ji, always it's a market to market. Because I come from South India, I stick to that 22 carat and 22 carat have been the highest sold in the South India, and 18 carats people prefer. But when we come to the part of Northern India, 14 carat and 12 carat also, 9 carat also is going. But Gen Zs, like we call Gen Zs and younger generations, people like to buy 9 carat and 12 carat, 14 carat gold. But that I can tell you, it is a very hardly 2 or 3% of the 1% I can tell you this is the quantity they are doing it. So it doesn't affect much. But coming to South India, it is always will be 22 carat and 18 carat in diamond jewelry. And when it comes to the North India, yes, 14, 12 and 9, it is you call it trending gold. People are for a trending, they're buying it, because when you're pocket friendly it is. So I think people are preferring it, but not in a very big way. People are doing it, but I don't see it in a very big way.
And as you said, the lower caratages are much lower caratages, perhaps is just about 1% of the overall market. Mr. Mehta, we've known you and how you have been launching newer themes with every new occasion. Now with the wedding season and the festival season approaching, what are your plans? What are Lakshmi Diamond plans?
So Manisha ji, it's very happy to announce that we are launching the Riti Rivas collection. The Riti Rivas is parampara, like old parampara of our country. That will be a total touch of modern and heritage. And that beautiful collection we are going to launch in IIJ's first day on the 6th August. And I would request even you can come and witness this beautiful collection. And I can't show you that because it's not revealed still yet. But that will be totally a heritage come, today's technology, what we call, youngsters liking. It's a combination of heritage and technology and new modernization. So that collection, Riti Rivas collection, we are launching, and that will help all the generations, like you age the woman from 20 to 30, 30 to 40, 40 to 50. Everyone will like that collection. In that way, we work hard 6 months for this, and I'm sure this collection will boom the market, and all the retailers will love it, Manisha ji.
Oh, well, absolutely. Looking forward to see that. Mr. Mehta, also, India is now the second largest market in the world when it comes to diamond. Our overall market share globally is 12%. For the Indian markets, we have seen a penetration of around 15 to 16%. With the kind of growth that we are looking at, especially in Tier 2, Tier 3 city, the aspirational buying that we've seen in case of diamond, would you say that the growth from here on perhaps would be more stronger?
Yeah, Manisha ji, I think whenever the gold price has gone up, and we are seeing every year as the prices have been stable, diamond grow. Now it's not, we can't divide now. People are buying gold or diamond equally. They're buying gold and diamond now. I can't tell they're buying gold more and diamond less. It's not like that. Now people have become, the prices have become so good, and I think pocket friendly. Diamonds also are affordable. I don't see now diamonds are not affordable. It's a very good price, affordable, and I can see 100% day by day the market is going to enhance, and the numbers will increase rapidly. It would not be correct that I would tell you what number it will be, but I'm sure that every year 5 to 10 or 10 to 15% we will have a growth in diamond jewelry, because as a manufacturer I can see the mood of market. And when we see retailers, we can see that retailers are selling more diamonds jewelry rather than gold. So it's a very good sign for our country. I think we are second, and very soon I hope we become number 1 in the world also, Manisha ji.
All right, that percentage is very far yet, Mr. Mehta. But you talked about exhibitions, and well, yes, IIJS is one to watch out for. There have been various global exhibitions as well. Very muted response to some of them. When it comes to manufacturing, how are you looking at that demand one? Is it about lower weightages? Because you talked about the caratages part of it. You talked about on how higher caratages are still doing well. But when it comes about weight, is that something that is absolutely non-negotiable right now? People are going for lower weightages.
Manisha is again into market to market. It would be not right to tell me what it is, but as a manufacturer, because I known as for a heavy diamond jewelry make. But I think people who wanted to buy heavy diamond jewelry, they have their mindset, they'll buy. But I can tell you, majority people wanted budgeted only. There is no doubt with that. With the proportionate of proper gold and diamond, like around 5 grams of diamond or 4 grams of gold, 5 grams of gold into 1 carat of diamond. That type of jewelry people are preferring. Because I make a heavy weight of diamond jewelry, that demand also is very good, because the limited manufacturers are there who are making a heavy diamond jewelry, and when wedding comes, people like to buy heavy diamond jewelry. So I'm catering, we as a manufacturing, we are preparing for both, even the heavy and the lighter, but lighter will be around 60 to 65%, and 35% we are going to make a heavy diamond jewelry, so we can cater both the market, heavy and light. But majority of the Indian share will be a lighter weight only. People like to have a lighter necklace. In a budget of 2.5 lakhs, people like to have a necklace. In the rings, maybe 80 to 1 lakh they like to have. In the studs, around 1 lakh rupees. So there is a mixed combination. But I think if it is 1 lakh, 1.25 lakhs and 2.5 lakhs, it's a very reasonable buy for buying a diamond jewelry, Manisha ji. It's a very reasonable price to buy a necklace.
A final question then. Do you think it still is about diamonds, or you think the colored gems have made a strong inroad into the Indian jewelry market?
No doubt with that. The color stones plays a very important role, but I always believe with the diamond, when it's have a combination, it enhances the diamond jewelry. So wherever you see a diamond jewelry, yes, there will be emerald, there will be sapphire, there will be a precious stones. So they play a very important role to look beautiful, no doubt with that. But it is a combination always. I think majority of only color stone jewelry have a very less sale in the market, but when it have a combination of diamond jewelry with the color stones, emeralds, rubies, sapphires, or any other precious, that jewelry becomes more beautiful, because it's a colorful diamond jewelry, looks very nice and beautiful. So always it plays important role. I think before also was playing important role, but now I think from 2.5, 3 years, people are started making more with the color stone diamond jewelry, and that is very good, and it looks very beautiful, and it looks very mass-to piece. And I think it's very easy to saleable, and client likes to buy those type of jewelry. So color stone is proportionately playing a very important role in our industry, Manisha ji.
Oh, absolutely. So from diamonds to gold to nearly colored gems, almost everything seems to be picking up. And I get your point. It is budgeted jewelry buying that we are looking at. So people are not going as per weight. They are going as per their budgets. Is perhaps what going to be the theme going forward as well. Mr. Mehta, thank you as always for joining in with your sense on what really to anticipate in this wedding and festival season when it comes to jewelry buying. But with that, that's all the time that we have on this episode of Commodity Champions. Thank you for watching.
Are yet to be scheduled.
Let me begin with the first line, the changing face of warfare. You know, a couple of decades back, or even 5 years back, when we thought about a nation's military might, immediately you would think of how many fighter jets do you have, how many tanks, how many artilleries. But now increasingly, that's being countered, challenged, complemented by inexpensive drones, AI, cyber operations. Man, the entire face of modern warfare has changed now. It's no longer just about hardware, but it's also equally about software. So given that the face of warfare has changed, how has that changed the thinking and strategy at DRDO?
I think that the change has been there for quite some time. We have seen it in the current wars, but the change has been building up gradually. If you take any weapon system today, there is an inbuilt software, and of late, more and more of AI also getting built into it. So DRDO has been working on a number of software as a solution, as you say, and the EW systems for a long time. Today, the software-defined radios, the geographical information systems, the command and control systems across the three services, all of them make use of software, and EW is something, as they say, whosoever controls the spectrum controls the war, right? So that's the reality today. The AWNC system, Netra, which you would have seen the FOC recently. So over and above the platform, where we still depend on a foreign OEM to give us the platform, all the mission systems, all the logic, all the intelligence that is built into it is again homegrown technology. And I think the defense has imbibed the technology in a big way. And while the traditional arms, ammunitions would continue to grow, more and more of software-based solutions using AI and all is the way to go in the future.
And how sovereign is our AI, the technology that goes into the DRDO and defense?
I think sovereignty is something that is the key to everything that happens within, the government's directive of Atmanirbhar Bharat. So that Atmanirbharta comes basically from sovereignty. If you control the software stack, you control the data on which you are training your algos. So within DRDO, we make sure that the algorithms that are developed, the data sets that are used for training, all of that is home built. Even the software stacks that are developed, especially for the weapons, defense platforms, etc., are all done within the labs. We have come up with our own software development guidelines, the verification and validation processes, the ETI framework for evaluation of the AI stacks that we build. All that has been identified, and a structured framework is available to make sure that the technologies that are built, the solutions that are built are sovereign. We have complete control 100%
over it. 100% sovereign, no import dependence.
Absolutely.
Okay. The next line, ma'am, of the introduction, the topic, was how does India achieve leadership in defense? What are your thoughts on that? And here particularly, I wanted to get your thoughts on the kind of spend that we do on R&D. Now, India's defense budget is 7.8 lakh. The amount that goes to the DRDO is about 29,100 crore. That's about 3.7%. Do you think, to your mind, that is enough, or more needs to be spent on R&D?
So I think R&D is something that we need more funding. We also need more resources and in terms of manpower and all. But that is something that we are working on in a collective mode. It is not just the DRDO labs that are working for the development of specific systems. We are together working as a larger ecosystems. So most of the young startups working in this domain are working with the DRDO labs in some partnership model or the other, either as a development partner for developing specific solutions, or as a part of a TDF project. We have the IDEX scheme The services also run certain indigenous development challenges. So it's more of an ecosystem with DRDO being anchoring the development of the indigenous efforts towards building sovereign capability.
So earlier we would always think that DRDO was the brain, the innovation engine, and then they would give it to the PSUs to manufacture. The private sector would also be a part of it. But do you think that's increasingly changing? Even from the innovation for IP development, the industry, DRDO, is increasingly looking to work with the private sector and startups with the various schemes that you spoke about?
I think absolutely. Ever since 2001, when the defense industry was opened up for the private sector, there has been continuous government focus on integrating more and more of all the participants in the ecosystem. While the public sector has been and continues to work on defense systems, the private sector has also come up in a big way. Today, I think more than half of our development cum production partners are from the private sector.
And you would be okay if the private sector owned the IP, or would you be more comfortable that the government owns the IP?
I think the current rule position, and this drives its strength from the GFR, is that wherever government is spending money, government is spending resources, the IP belongs to the government, right? So that is thing. This is something that we have changed in the Technology Development Fund, where the IP is shared equally by both the industry partners who co-create the IP with us and the government. But for the larger tech that is developed in-house in the DRDO labs, I think the IP still belongs to the government. And I think that is something where we'll have to treat carefully before we kind of.
You know, one of the biggest success stories of India's defense, one is indigenization. You spoke about it. From import dependence, we've come to indigenization. And the second one is exports. I remember 10 years back, India's defense exports was 1,500 crore rupees. Today, the number stands, I think, at 39,000 crore rupees. That's a massive jump in just the last 1 decade. How do you see India's exports going up? And if I may add one question, India's defense, the exports from a large value point of view still come from components or maybe ammunition sub-assemblies. In terms of pure IP, whether it's a Pinaka, Astra, it's growing, but it's growing off a small base. How do you see that changing?
I think the curve has gotten flex. We have started steadily going towards more of exports. We have a target of 50,000 crores for 2029. Today we are talking about exporting Pinaka weapon system, the guided Pinaka, the radars, the weapon locating radars. We are talking about exporting the BrahMos, the Akash missile system. There are multiple opportunities available for industry. And I think it's the industry which is kind of leading the race by reaching out to newer markets. I'm not sure how many people would know about it, but our very own indigenously developed wheeled armored personnel carrier, which one of our private sector companies had developed with the DRDO lab, they're now setting up a co-development, co-production facility in a foreign soil. So that is the way to go. More and more companies I see for systems that have been developed in the country, they will go and set up co-development, co-production plants in foreign countries. And I think it's not too far away where we will be able to export large platforms, large systems to many, many countries.
Do you all have a number in mind when we reach that stage where we export complete, full assemblies, full systems?
We are already doing it.
We're doing it. We're growing, as I said. There's Pinaka, there's BrahMos, all of them, we're exporting.
And then target for 29 is 50,000 crores. So I don't want to put a target. I'll leave it to the higher authorities for us to put on. But I think I'll not be surprised if we surpass 50,000 also by 2029.
That's amazing. At the DRDO, how are you all using AI? We're already using AI in laboratories. I think the way we've developed drones also has been fantastic. If you could tell us how you all are using AI to develop more and more, whether it's ammunition or algorithms, of course we would be. But if you could just explain a little bit more about that.
So I think AI is something that we are now trying to integrate in almost every system. So based on the data that is available, the learning models that can be incorporated into the systems and the platforms. And we are increasingly looking at trying to put AI on the edge, in the sensors itself, right on the platform, so that the kind of you can actually reap the benefits of using those AI models in the field conditions. So AI is something that we are kind of extensively using across all systems that are getting developed in DRDO.
And as we develop, and globally, more autonomous weapons are developed and AI gets more capable, what is the thinking behind whether an AI will be used to make a decision to fire?
So I think that is something that a lot of effort is happening on. The government, global governmental experts, which are debating the Lethal Autonomous Weapon Systems Treaty as a part of the UN effort, that is something where a lot of discussion and debate is happening. So whether it is a human in the loop or human on the loop, our personal thought process, and that is we need to define and kind of bring out the safeguards, the guardrails that are there in any autonomous system that could be used for lethal capabilities. So I think from the country's perspective, we feel that we need to have a human in the loop for the final command for any lethal action.
And you said human on the loop also, or you just mean the final decision has to have a human involved?
Yeah.
But what if the adversary doesn't play by the same rules?
I think that is a tactical question, and I will leave it to the tactical decision makers, maybe in the field. But the global consensus seems to be emerging towards everyone trying to follow the ethical part of using autonomous systems.
Okay. So ethically use AI, because this is increasingly becoming a very important issue. Another thing that we've picked up when it comes to DRDO is that, I mean, you guys are world-class when it comes to developing prototypes, but not all of it always translated into production at a mass scale, at a reliable scale. And the DRDO has been working very hard to remove some of those friction lines between the prototype to actual full development. What were the constraints earlier? What were the issues earlier? What have you resolved? How have you resolved it?
So I think a few fundamental structural changes that we tried to make, and it is all of ministry effort. One was linking up the development processes to induction, right? So we linked the development of mission mode DRDO projects with their take away the acquisition cycle. So right at the beginning of starting a development project, there is clarity on what kind of numbers would be inducted, and that helps the industry also in coming together during the design and development process. So that was the first structural change. So when the government gives an acceptance of necessity for initiating the development of a major system or a platform, along with the go-ahead for the development, it also gives a go-ahead for the kind of quantities that will be inducted post-successful development and trials phase. So that was the first major structural change, and it got incorporated in 2016. And today we have more than 6 lakhs crores worth of AONs which have been approved for induction. And the second change was that once we had this approval, we could identify a development cum production partner, and this could be anyone from the private sector or the public sector, and we always follow a competitive process for identifying an industry partner. So with each such AON accorded system, we have an industry partner which starts working with the DRDO lab right from the beginning of the project. So they are doing concurrent engineering. So the prototype that comes out for trial and evaluation is made by the industry partner, and then it kind of compresses the time cycle for evaluation, induction, the integration facilities, the production facilities get established, and things move much faster. On the production side, we are also trying to anchor that all stakeholders through working committees for production coordination work together, the industry partner, the DRDO lab, the user community, plus the quality assurance agency, so that as soon as a contract is signed, this mechanism kicks in and which kind of reviews very, very regularly the progress that is happening, and in case there is any issue, it comes to the forefront at the earliest rather than till someone flags it out.
It was a wonderful conversation, and thank you for joining us and sharing your insights.
Yeah, look, Iran is being sanctioned.
So the Air Force has, I think, been an integral part of the self-reliance program, not now, but for decades. I mean, even, in fact, immediately after independence, we set up the Armament and Aircraft and Armament Testing Unit, which today is called the Aircraft and Systems Testing Establishment. And this organization, along with the rest of the Air Force, has been part of various indigenous programs over the years, starting from the Marut, the HT-2, the HPT-32, the Kiran aircraft, of course, the Tejas, the STD-40, the light combat helicopter. All these programs have been driven together by HAL, Air Force, DRDO together. And I think that there are a lot of success stories there to be seen. I don't think we should try and match what has been or assume what has not happened just because there are certain delays in the delivery of the aircraft. But I think we have done a lot over the past few decades. Even today, in fact, as I speak, trials are on for almost 60 programs, both of the DRDO and the private sector, for various projects. It could be aircraft, platforms, EW systems, weapons, and these are all in different stages of trials driven by the Air Force in collaboration with DRDO. The Air Force today also is driving almost 44 projects under the MAKE and 110 under IDEX, which are going to represent a business opportunity of almost 21,000 crores, primarily for the private sector. And here we have our own Directorate of Aerospace Design, which is the face of the Air Force when it needs to interact with the private sector for all these MAKE and IDEX projects. And in fact, in the last 12 months alone, we have taken AONs for almost 15 more D&D projects, both with the DRDO and the private sector, including MAKE-1 projects for as ambitious and futuristic projects like airship-based HAPS and fixed-wing-based HAPS. And for these 35 projects which were released in February 26, we've got almost 1,700 proposals from the private sector. So there is a lot of interest in these problem statements and to work together to make these problem statements a reality. Somebody was asking, even Dr. Chandrika, what are the focus areas that we are looking at? From the Air Force perspective, the focus areas are, of course, platforms is there at the top level, but below the platforms, you have sensors, sensor integration, fusion, and the use of embedding AI into these sensors. Integrated electronic warfare suites for our platforms. Long-range weapons, whether it is air-to-air, air-to-surface, air-to-ground. A key component, of course, based on, you've all seen this in the conflicts which are happening across the world, both in the Middle East and in Europe, drones and counter-UAS systems. And I think drones of all types, whether it is long-range munitions, loitering munitions for ISR, for surveillance, for battle damage assessment, long-range drones and counter-UAS systems is the need of the hour. And here we need to manufacture at scale. It is not just only about getting the technology, it is about getting them in numbers. Our adversaries are doing that, and I think there is a requirement for here to industry to step up and manufacture at scale. On the whole, there is a need to leapfrog. Today, whether we like it or not, we are a generation behind as far as technology is concerned. The world is moving on to 6th-gen technologies, whether it is platforms or the sensors. So there is a need to leapfrog and catch up and go straight to 6th-gen through some means possible. At the end of the day, the systems which are coming to the Air Force need to deliver sustained offensive and defensive firepower. And that is something that can happen if we all work together. While we are concentrating on inducting new systems, there is a huge opportunity also for sustenance and MRO and life cycle support for existing legacy systems of the Air Force. And here I would encourage the industry to connect with our base repair depots, because there is a lot of opportunity, because the Air Force is looking at reducing the dependency on foreign OEMs for the life cycle maintenance and support of our existing systems. I also want to take this opportunity to talk about certain challenges which come, because aerospace products and systems are notoriously difficult to design and certify. There is a huge challenge as when it comes to certification and qualification of aerospace systems. And there is a requirement of significant hand-holding, which the Air Force is already doing and is ready to do. But I think here there is a need for designers of aerospace systems to understand this from the time they start the project, that there is a requirement of certification and qualification which cannot be overlooked. And at times we find that players tend to underestimate this requirement. So like I mentioned, institutions like the Aircraft and Systems Testing Establishment, we have a Software Development Institute in Bangalore, we have an AI center here in Delhi called Udan, and all of these are facilitating the integration of indigenous weapons and systems developed either by DRDO or by the private sector onto our legacy platforms. And there is a lot of independence which has been achieved. The question was being asked, is all the software which is there today, is it indigenous? I would say it is more or less indigenous, and the Software Development Institute today is writing indigenous software so that all systems which are getting integrated onto our platforms ride on these softwares without any dependencies. We are also going out of the way to provide access to industry, to our test facilities, whether it is airfields, whether it is our testing facilities, whether it is our firing ranges. And this is open to all. And I think if anybody has an issue, the Director of Aerospace Design is our front end. We are open to providing as much help as support as possible to make the system a reality. At the same time, there is a requirement for everybody to invest in creating these ground test facilities, because these today are the bottleneck when you want to certify and qualify an aerospace system. And this requires a whole of nation, whole of industry approach. The Department of Defense Production is doing its job, is creating a defense testing infrastructure scheme where the facilities, testing facilities which are available across the country can be accessed, can be seen online, and thereafter you can go and ask for those facilities. Recently I visited IIT Kanpur, and I'm very happy to see HAL and BEL have funded a drone testing facility which has been created in the incubation center in IIT Kanpur, which will be available for anybody to use on a pay-as-you-use basis to carry out testing of their drones. Better program management is a critical area, and I think we need to have realistic timelines when we come with the product to the services. Do not overpromise and underdeliver. I think this is something that we need to keep in mind. And another aspect is the aspect of national champions. I find, as ACS plans, I look after capital acquisitions, and I meet a lot of industry, and everybody seems to want to do everything. I think we need to introspect and see, do we need to be present in every domain, or find that niche area for ourselves and try and focus on that area and become a national champion in that domain. In the panel on AI, this question came up of R&D and the requirement to spend on R&D. And I know we have industry partners here, from the big guys, from the small guys, from MSMEs. And I am very frank, and I've said this earlier on other occasions also, the small startups, the MSMEs are more nimble, more agile, more appetite for risk-taking. I think the bigger guys have got boards and shareholders to answer to. So I think, but we need to, unless we spend money on R&D and match the international averages, we won't be able to take the next leap. So there is a requirement to invest more on R&D. And here I would, while the small startups are more nimble, obviously they have smaller pockets. So I would urge that here there is an opportunity for collaboration rather than competition. And maybe the bigger players, the bigger industry partners can take these startups under their wings and support them, because they will bring the tech and the funds come from the bigger partners. So I think there is a requirement here to collaborate rather than compete, because often We have a project where there is a huge player like Tassel or L&T competing with a small startup. I mean, it's an uneven playing field. It's not a level playing field. So I think we need to look at this to a large extent. And I think like the C295, which was started or pushed by MOD and the Air Force so many years back, there was a lot of reluctance. How will it happen? It can't happen. And we are seeing the result today. Today, there is an ecosystem for manufacturing of transport aircraft which has come up. And I think the AMCA model, where we are again going to the private sector, will help to create the second facility in the country for manufacture and design development of a fighter platform, of a fixed-wing fighter platform in the country. I think it's a great move. And I think we need to jump on the bandwagon because there will be a whole requirement of Tier 2 and Tier 3 vendors who will have to come up and support this program. There was a lot of talk on export. There were questions on export. And I think it is wonderful what we have achieved over the past 10 years, the growth which has been there in the export market. But as a user, I would just like to advise on one aspect to all those who are exporting their products. You need to build your supply chains, because if you do not have the proper product support or after-sales support, that next order will be difficult to get. Because this, we see it here in the Air Force. When you buy an item, the moment you don't have after-sales support or product support over the life cycle of the platform, you are reluctant to go back to the same vendor to buy something else. So I would request and I would urge you to invest in this, because it is the only way that you can get that next order. Like I mentioned, it is the need of the hour is to take that leap forward, to take the next big leap. And I think Dr. Chandrika also mentioned this, can only be done through a whole-of-nation approach. It will need a collaborative approach to be taken by us, the services as the users, the industry who's sitting here, and the academia. I think very often the academia tends to get missed out when we are doing this R&D work. And having visited IITs, having signed MOUs with a lot of academic institutions, I think there's a lot of work on the basic technology, the core technology, which can be done by the academia, so that the industry can restrict itself to development of systems rather than going into core technologies and leave that to the academia. So I think if we have this whole-of-nation approach and this collaborative approach, then this leap can happen where we straight away leap to 6th-gen technologies across the board in the defense sector. And I want to use this forum to once again reiterate, and I go back to that question about the Air Force. The Air Force has been part of this self-reliance framework for several years and decades. And I can assure you, on behalf of the Air Force from this podium today, that the IF is here to support every indigenous effort, every idea, whether it is small or big. I can tell you, I have met a 15-year-old boy. A 15-year-old boy sent in an email saying, I've got an idea, I have an idea for this product. We have met him. While that idea of his might not be immediately realizable, we have given him that guidance, because we don't know, tomorrow he might be the one who's creating a new startup which will deliver products to the Air Force. So we are not averse to any idea, big or small, but we are here to engage with each and every person. And I think if with this collaborative approach between the user, the services, the academia, the industry, I think we can move forward and make a huge difference and realize this dream of Atmanirbharta in its totality. Thank you very much. Jai Hind.
The hearing was Rubio's
India's data center industry has shifted from a megawatt scale to a gigawatt scale investment powerhouse, positioning it as one of the fastest growing digital infrastructure markets globally. Despite this, India remains significantly underpenetrated in the data center capacity, despite being a large producer as well as consumer of digital content. Asia-Pacific hubs continue to service a meaningful portion of domestic demand. However, growth is on track. Installed capacity has increased from approximately 500 megawatt around 2019 to close to 205 gigawatt presently and is expected to scale up rapidly. Policy support, sovereign ambitions as well as tax incentives could attract foreign investment. And one company that is at the forefront of this revolution is CleanMax Enviro, which has emerged as the preferred partner of choice for MNCs such as Apple as well as Meta, leading the CNI charge. Now, to break down this particular space, number one, I'm joined by Mangalam. Good evening, Mangalam. Very interesting discussion.
Interesting discussion and more importantly, interesting guests as well. So we have Kuldeep Jain, obviously, who's the managing director at CleanMax Enviro Energy Solutions joining in. And along with him, we have Priyankar Biswas, who is the industrials and logistics research head at JM Financial Institutional Securities as well. Thanks a lot, gentlemen, for joining in. Kuldeep, I got to ask you this. What's the kind of opportunity size that there is here? And with all these tie-ups that have come in with the MNCs, etc., the data center capacity, and, where are we lacking? Do we have enough resources to be able to supply to the demand for all these data centers and hyperscalers?
I think 2 or 3 observations there. First, I think a lot of these big AI data centers will need to come to India because there's so much opposition to them being built in the US. It's very difficult to do this kind of stuff in Europe or Middle East after, Iran bombed out the Amazon data center in Middle East. Therefore, a lot of this will have to come to India. And this is now the AI data centers from an energy perspective are at a different planet, a different scale. Every building of an AI data center takes 10 times the amount of energy the same building in a standard data center. Right? So that's firstly, a lot of this global requirements is going to come to India, and therefore a lot of the predictions typically out in the market is about 8 to 10 gigawatt of data centers will come to India in the next 5 to 6 years. The second is that if you translate from AI data center to power, right? Because every 1 gigawatt of AI data center needs 40,000 crore rupees of investment in about 6 gigawatt of power. So, 1,000 megawatt AI data center needs 6,000 megawatt of renewables plus 3,000 megawatt hour of storage to supply it with green power, right? And that costs 40,000 crore rupees. So if you're going to have 10 gigawatt,
4 lakh crores.
That's 4 lakh crores. And this is not the size of the renewable industry. That is different. That is, whatever we are supplying to discoms or we are supplying to general CNI. This is just for data centers in India. In the next 7 years, we'll need 4 lakh crores of capital expenditure to build out about 60,000 megawatt of renewable plants to just meet data center demand.
Well, Kuldeep, you used 4 lakh crore as the opportunity size. That's music to Priyankar's ears, given the fact that you track this particular space so closely. Priyankar, within the capital goods universe, break down the opportunity for us. We are building close to 10 gigawatt of data center. You spoke about the opportunity as far as the power space is concerned, renewable energy capacity being added significantly. Within the capital goods space, within the transformer space, and other supply chain components, what is the opportunity?
Thanks for the question. So you would have already observed that anything that has to do with data centers nowadays, they are actually doing quite well. I mean, both from an order inflows point of view and even from a stock point of view, that has been kind of the trend. But that is not without reason, as I said. So when we are speaking about the costs, it's essentially we are speaking of the X servers and the racks cost. And here, let's say, we have great opportunities from, let's say, a Siemens or an ABB, or even for that matter, like people do not associate this name with data centers, but let's say Honeywell for that matter as well, which we had actually put out in our recent report as well, that it too has a data center scope within it from the fire protection systems point of view. So broad ballpark, as I can say, like if the non-server portion, if it's costing something close to like 60 to 70 crores nowadays per megawatt of setting, so that would be 10 to 15% of that is the addressable opportunities for these guys. So may not seem large, but if you get into this gigawatt concepts, it's actually a humongous opportunity.
I get that. So while we speak about the size of the opportunity, it also costs a lot of resources, not just capital resources, the land resources. You have a lot of water requirements and all these things. Are we pruned enough for that to be able to, meet the kind of investment money? Yes, you can get it from multiple places, but what about the resources?
I think there's land, water, and power, right? And actually, I think the water is a little overdone because from a PR perspective, because most of these for AI data centers, you need so much water that's moved to a closed loop system. So on a running basis, you do not actually need to replenish the water.
Got it.
So I don't think the actual water requirements are really that high, and even the land required is quite less. But I think the one area where we are getting it wrong, in my view, is trying to put up these AI data centers near cities doesn't work.
Got it.
As an example, we have signed about 5,000 megawatt of MOUs for data centers in and around Mumbai. Now, the entire power demand of Mumbai city on the hottest day last June was about 4,700 megawatt.
Right.
So getting another 5,000 megawatt of power into the city, or even Navi Mumbai is really part of the city now, for AI data centers, along with whatever growth Mumbai was anyway going to have with houses and air conditioners and the like. So that is going to really strain the power availability and the technical challenge with these transmission capacities. So power EHV transmission capacities, to give you an idea, are like railway lines. You have to really go straight.
Yeah.
You cannot go zigzag, you cannot curve it much and so on. Just like a railway line, a railway track cannot really swing 90 degrees. Yeah. It has to go straight. So it comes up with lots of ROW issues, and therefore my view is that the new generation of AI data centers, which need gigawatts of energy, really need to be located near to the energy generation points where there's plentiful renewable power being generated, rather than near the cities.
There's also been a lot of policy support as far as installing data centers in India is concerned. Going forward, what else do you think is required to go ahead and attract a lot more MNCs? I know you're in talks with a lot of MNCs. You've already set up CNI capacities for quite a few of them. Going forward, what else is needed to give this a further push? And what is your solution? You said that going away from metros is one particular solution. Is another solution building up alternate transmission systems?
I think AI data centers globally are now energy constrained. Right? You've read this everywhere. AI data centers are energy constrained, and therefore having some sort of identified zones where they could come up and you need like 3 to 5 gigawatt of transmission, which is, you think about it, in a 400-acre piece of land. In 1/3 the size of BKC, you need Mumbai's entire power demand to be accommodated. This is what you're discussing.
Right.
So it is not easy, which is why, in the US, in spite of infinite capital availability, data centers are not being able to come up, and they are energy constrained. So you will need some sort of zoning or planning around where to put this up. And it's not going to be around the cities, because if we do that, then the problem will be after 5 or 10 years, when the city's load itself grows and the data centers have also ramped up, then there will be a political issue that, in Mumbai suburbs, lights are going out because these data centers are using that power. So that's then a real trade-off and will not be comfortable. So, some of that may be needed.
Right. Priyankar, since we spoke about the kind of opportunity that there are a few players here already, but the pace at which the demand is increasing, the supply among the listed players, the large Indian companies, is not as much. So at some point, it will need to be fulfilled via imports, and a lot of them coming in from China and other places as well. Do you think that could put a spanner in the works for the opportunities that people are projecting?
So I would put it this way, that parallelly we are also adding, let's say in India, a lot of transformer capacity as well. So this data center opportunity that we are sitting in India, I don't think should be looked at in an isolation. So let's say in US it is also happening. So at the same time, the equipment constraints is not a very India specific thing. So today if you want to get a power transformer in the United States, it typically may take 3 to 4 years as well. So someone, if they are able to give it in 2 years or something like that, they will be appreciated wherever the instances. Now, what has happened in India, and I would add here, is that there has been some bit of a, let's say, relative to the other markets, we are actually a bit more competitively placed. So you will see that a lot of the players that are there in the power transmission space, they are actually exporting as well. So the government, I am sure, would be aware of this. So probably the measures that you are speaking about is probably intended in those lines. But having said that, the ultimate ground impact, if we have to assess, like 4 Chinese players have been allowed, is what I see from the directive. And whether they will scale up, because that the relaxation is for 2 years only, is what I see. So that is not very clear at this point. So the challenge as far as to the prospects of Indian players, I would say at this stage is a bit limited.
All right. And how much of the upside is captured in the valuations which are currently there already?
So it is difficult to explain from a purely a valuation point of view. So if you see, like, let's say an ABB or let's say even Siemens, so nothing is trading cheap. So everything is kind of trading at 70 odd or somewhere there, at least at a bare minimum 60 plus. That is where the trading is. Now, usually if we are entering into a long-term capex cycle, so there has been known instances also that the multiples tend to stay elevated for a prolonged period of time. So this has happened. What we can do, however, like, because we have to face the practicalities of the situation, is on a relative basis which are still much lower and which we think there is a scope of re-rating. So that is how we actually evaluate stock. And recently we had actually put in a lot, let's say, with, let's say, Honeywell, or for that matter, Kirloskar Oil Engines.
Beaming live.
Kuldeep, I want to ask you one thing. Now, when we speak about the power market, not too much is known or spoken about as far as the CNI space is concerned. We generally speak about open market tenders, open market access. These are the words that we generally talk about. We speak about PPAs being discovered at auctions. You will sit in a completely different space. You speak to your customer one-on-one. You set up capacities for them one-on-one. You're one of India's largest CNI players. What is the scope for growth for a player like you, given the fact that you operate almost parallelly to what other players operate at?
So, we've, as CleanMax, we sell power directly to the corporate consumer and use the grid lines, just like a manufacturer uses a toll road and pays the toll. We use the grid lines to transport our green electricity to the consumer, and the grid's toll of the distribution charge is paid to the grid. That's the business model. So it's a direct-to-consumer model in green power. We are the largest player in that space. We are nearly 2 times the size of the number 2. And as of now, we have about 3,600 megawatt of operating capacity. And the scale up has been such that we've doubled our scale in about 15 months time frame. Right? So that's the pace at which we are scaling up. And the reason corporate consumers, so firstly, it's a very large market because corporate consumption of power in India alone is a 3 lakh crore rupee gross profit margin market.
Okay.
Right? Because 50% of all power consumed in India is consumed by the corporate sector. Right? If you look at what that market size is based on, if you take a generation busbar tariff of 3.6 or 3.8 rupees, it becomes a 3 lakh crore rupee market just for generating renewable energy to supply to corporates. And corporates are adopting green quickly. Because it gives them at least 25% cost savings over grid power. So, what is cheaper and greener is selling well. And therefore, corporates are adopting green power to save money as well as to reduce their carbon footprint. And therefore, that explains the underlying high growth. And within that, within our overall growth, as I said, we've doubled our installed capacity in about 15 months. Data and AI has really grown for us as a segment. It has grown 10 times in 2 years, right? So from 240 megawatt in March 24 to about 2,400 megawatt contracted with data and AI customers as of March 26. So 10x in 2 years is what we have seen in the data center part of the market. But not just data centers, everyone's adopting green.
We know you're in the silent period, but a couple of numbers, what you've already said. Operationally, Q1 has been the strongest in terms of capacity being added. You're looking to double EBITDA on FY26. What is giving you the confidence to say that you're going to be able to double your FY26 EBITDA base?
So, we have said we'll double it in a 2-year time frame, just to clarify.
Right.
But I think more important than just a number is the fact that we are seeing tremendous growth in client contract signings, and we are also able to execute and deliver well. As we announced a record quarter where we installed and commissioned 500 megawatt in 1 quarter, and that gives us that confidence.
Priyankar, I want to come across to you. You've spoken about transmission, you've spoken about transformers, you've spoken about players like Siemens, ABB, Cummins, Honeywell. Where does your preference lie? Give us a sense of the valuations at which they trade at. We believe you also have a positive stance on a player like Kirloskar Oil Engines. A quick view on that particular part of the business.
Okay, so starting with the last question first. So on Kirloskar Oil Engines. So generally the data center market, diesel engine supplies to data centers. So it is generally perceived to be a Cummins monopoly. And it is kind of true as well. So if you see right from FY19 to as recently as maybe a year back, this is how the situation was.
Right.
And the reason why it happened was there were no proper competitors. So while there were some foreign suppliers there, they did not have a large distribution arms to actually threaten this aspect. Now, Kirloskar never really popped up on the picture earlier because they did not have a significant high horsepower offerings, like at least before FY23. But since then, I would say they have innovated, introduced the OptiPrime series, and importantly, they are adding capacities which is there in the public domain on the high horsepower range. So they have done certain ERP data centers before, like with SBI and those. So they have been able to get certifications for the entire range, right up till 2750 kVA. So why this matters is generally the engines that are used are 65 liters and 78 liters. So they have cracked these areas. So the recent hyper next order that they had announced is actually in this 65 liter category. So this is the big breakthrough, and the reason why we were positive is because if you see Cummins, it has also re-rated significantly. It has kind of closed the gap with Siemens, which was unthinkable, let's say even 3-4 years back.
Absolutely.
Kirloskar, it has also gone up, like even on a YTD basis, I think it has doubled.
21-30%.
Yes, something of that sort. But why we were positive is essentially that the multiple convergence still hasn't happened. So not going into that whether Cummins trade at a fair valuation or not, I personally think it is at a higher valuation, but it is what it is. So in that case, the convergence factor would come into play. Now, 2-3 years back, if you look back, you would see that MNCs always had a premium. This theory was there. But CG Power, as you will see, with their product innovations and introductions, they have closed the gap. So today it's kind of this way or that way between this. So this is a same phenomenon that we expect.
What could, from a stock market standpoint, and not asking him about business because fundamentally the business looks strong, the runway looks strong. From a stock market standpoint, what could topple this apple cart? Because we've had multiple trends in the past across the board, across sectors, which include the likes of, even railway stocks, etc., where we're talking about demand, we're talking about a lot of orders coming, and because of which we see multiples expand to, beyond comfort levels. And then when the move is on, all these stocks do see multiples coming together as well. But at some point, people stop looking at this, and then we see either a price correction or, in more cases, including the increasingly time correction. What, according to you, could topple that apple cart?
So that's a very hard question, but I will attempt that. So in the past, when we had seen like railways or even for that matter highways and those, when the real rallies had happened, so there was a big element of public capex and a dependence on the government in that particular case. Now we will see in case of roads, this Bharatmala projects and which had happened, then we had big run-ups in the likes of Dilip Buildcon, PNC. Like these are pre-COVID times, so maybe people won't recollect at this point, but that had happened at that point of time. Similarly, railways also are significantly dependent on how the government allocates and spends. We had also seen in water, for example, water was a clear-cut theme, but then Jal Jeevan Mission linked allocations did not happen. So these sort of issues were there. But if it is more like a secular issue, like renewable integration for that matter, so that leads to power transmission capex. So that is kind of a very essential. Similarly, the data center is also among the essential parts. The real thing that can be a constraint, which we have seen in certain countries, is the countries themselves putting a moratorium on that. Singapore being an example, Ireland being an example, but we are not even close to those, let's say, a crisis level.
Well, thank you so much, gentlemen. Thank you so much, Kuldeep. Thank you so much, Priyankar, for joining us, breaking down the data center hyperscaler position, the opportunities that lie as far as the stock market is concerned.
And not to forget the risks and threats as well that they put out. Right, we will wrap up on this edition. Thank you so much for joining in. Take a short break. You stay tuned to CNBC TV 18 as more news and updates continue.
The Trump administration
So when you think of AI, for the last couple of years, 2 or 3 years, we instantly think of a ChatGPT, Gemini, and Claude. And we wonder which is the better model, which is the more efficient model, now perhaps the more cost-efficient one. But AI is so much more than that. The next chapter of AI perhaps is not about the smarter model, but the infrastructure that builds it. We're talking about GPUs, data center, edge, inference. And I think the country that builds this physical foundation will have that competitive edge. So I think our job for the next 30 minutes is, can India really become an AI infrastructure powerhouse? What does it take? What are our competitive strengths? Where are we missing? So Sunil, let me begin with you. We're calling this an AI infrastructure supercycle. Is it really just a catchy phrase? Or are we at the cusp of something very revolutionary? Say what the software industry did to India in the 1990s. It catapulted India, middle-class jobs were created. Or is it something similar to the internet revolution? Why are we calling this?
I think the software revolution came just 3 decades back, and internet revolution also came almost at the same time. But before that, we had electricity revolution, we had an industrial revolution, and we had got agricultural revolution before that. This is a new industrial revolution. You can call it 4.0, 5.0, whatever. But this possibly is the biggest revolution mankind has seen for over multiple decades. And if AI is percolating our personal lives and professional lives across industries, the fundamental infrastructure to build that, to host that, to train those AI models, to use those AI models for various use cases in our lives becomes fundamentally important. More than that, I would say that given the nature of the technology, given the implications of the technology where your own data is being used to train the model, it's like your raw material is being used to create an IP, and that IP in turn will be monetized to again give value to you. So it's very, very important considering the geopolitical situations where it is not just enough for India to again become a consumer of technology, but to become a builder of technology. Besides that, we need to build infrastructure. It's important we build this infrastructure of AI in India so that we use our own data in our own cultural context. We train our own sovereign models. We train our own agents and our own use cases, which are specifically for the needs of our own citizens. So the IP of our data should be built by us in India, and underlying that, the infrastructure for that, the GPUs, the data centers, have to be built here in India. It is not a fad. It is real. It is being built as we speak now.
But Sharad, why now? Data centers have been around for decades. Yota's been in the business for the last 3 decades, SIFI for 25 years. Why are we having the conversation right now?
It's mainly because to support the kind of scale and the kind of transformation Sunil talked about. We are really in the phase where, just to take it from the sovereignty angle, where the data is being used to train and give us the intelligence, we are in the phase where we need to be talking about the intellectual sovereignty. And for that intellectual sovereignty, the infrastructure should be prepared for that. And it's scaling in a big, big, big manner. In last 30 years, the way I have seen the way the things transformed, in 2000, we were preparing the data center infrastructure to scale internet, to scale the enterprise network, to connect the enterprises and deliver to them the virtual private network. In 2005, we were enabling enterprises to implement their ERP solutions. We were helping them automate their systems. Around 2010, we were helping with the big analytics, data analytics, and the digital transformation. In 2015, we were trying to do the cloud implementation and cloud transformation, public cloud implementation that is now hyperscale. It has kept growing and scaling, and now it has reached to a level where the time to scale has consistently, time to double has consistently changed. And now, because it's changing so fast, it's doubling so fast, it is important that it is now the time.
Now is the time for India. So, gentlemen, if India has to truly become an AI infrastructure powerhouse in the next 5 years, what is the bottleneck? If I could get one answer from each of you. Ankush?
I think it's just the courage of doing whatever we believe in doing. And we have the infrastructure, we have the technology. And it's enough of technology to really change the word, to say so, or to really solve the problems of humanity and the businesses. It's just, I think we all have to come forward and do it.
Courage.
Yeah.
Okay. Sharad?
I would say the infrastructure.
In terms of?
Ability to execute and build the infrastructure fastest possible manner. So I would say speed.
The biggest bottleneck, the constraint?
Let me give a little detailed answer of this, and let me decipher this whole AI infrastructure and the AI stack for everybody. If you have heard Jensen Huang of NVIDIA speaking about it, he keeps on talking about the whole AI cake. And that cake consists of multiple layers. At the bottom layer is essentially data center. And data center is nothing but a physical building with lots of power, lots of cooling. That is where the IT equipment is hosted. Earlier, we were hosting CPU-based servers for regular applications. Now we are hosting GPU-based servers, which consume obviously too much of power and obviously require too much of cooling. So that is the physical infrastructure which you require to train AI models, and obviously after that do the inferencing on the model. That is the infrastructure piece. And of course, energy piece comes by default as a part of that because you require megawatts and megawatts of power to support that infrastructure. On the top of that is what you are creating is models. You use raw data, like assume you have taken the whole data of the internet, scrapped the whole internet and then put into machines, and the machine use some algorithms to train itself to become intelligent. It's like a small child. When it's born, you actually keep on giving some data to the child all the time. This is A, this is B, this is C, this is 1, 2, 3. And after some time, it gets trained and then start giving his own answers, his or her own answers. That is how essentially it's happening. So that is the second layer. That is, you are using raw data, putting in the machine, and then machine become intelligent. It creates models. That's what we call as like ChatGPT or a Gemini or Claude or whatever, right? On the top of that, you create an application layer. It can be just a browser layer, like the way you use ChatGPT. You put your prompt and it starts giving you answer. You can just have a browser layer, or you can actually use the APIs of those models and plug them into your enterprise application, like you plug that into your SAP or Oracle or your email or your, let's say, MS Office. That's how the Copilot of Microsoft has come in, right? And obviously, on the top of that, you as a user are sitting who are benefiting from that. Now, if I put that in the context of your question, I think in India, top layer is never a problem. Building use cases have been a forte of India for the last 3 decades. That is the thing which our software companies, IT companies are doing for decades, and they will again become relevant in that. It's just that they need to redefine themselves. Instead of just doing coding, which they have been doing for ages, they will have to now repivot themselves to start building AI use cases, right? That is India's forte. Just below that, people like Ankush and people like many others, fantastic people, they know what it means to make a model, how to train a model, how to use data, how to create industry use cases. Again, India has got no dearth of great talent to do that. Below that is the infrastructure part. Just for everybody's information, India was just about 200 megawatt of data center capacity, just about 7-8 years back. Today, the industry is 1.6 gigawatts. We are 8 times more than what we were 7-8 years back, right? And if we just go by the projections of the various people who are building this infrastructure and also the demand signals, you must be keeping on hearing about Google doing something in Vizag, Reliance doing something. Obviously, all of us are building that infrastructure. You will see this infrastructure going from 1.6 gigawatt to around 8 gigawatt in the next 5-6 years. If we are scaling at such a speed, you can fairly assume, despite all the cribbings we keep on doing, government ne ye nahi kiya, wo approval nahi mila, we still are finding our way and expanding our infrastructure so crazily, which means India is still a great place to build data center, and we have the capacity to do that. My answer now, the finally coming to my answer is, I think from my point of view, I'm only looking for as much capital as I can get. The opportunity in front of us is just tremendous. First time I am seeing that sitting in India, I'm not able to give my GPU compute to Indian use cases only. I'm right now exporting. US and Europe customers are coming and consuming my compute, which is hosted in India. This is the first time which is happening that we were just consumers of technology. Today we are in a position that our compute is used by other countries. So that opportunity is big. If I can have tons and tons of capital, I have already invested 4 billion. I'm putting another 4 billion within this financial year. If I can get 10 times more than that, that's the only limitation.
So capital is constrained, yes, you would say?
Yes, because I can go to detail answer, I'll not do that, but fundamentally, because the new technology, it demands too much of money. people are also working cautiously. Banks are touching it very cautiously because banks by nature are supposed to be conservative. So it requires risk money, it requires private equity, which is exposed to these technologies. It's happening very frequently in a very large scale in US. That effect is gradually going to come up in India. It is coming up. We are in touch with such people, but I think that effect has to come very, very early in India.
Sharad, I'm surprised no one has said power. Like, if you read all media articles, New York State, for instance, now they have frozen permits for data centers in their city. And everyone's concerned about the environmental effect, the consumption of water, power. Is that not a bottleneck?
Surprisingly, it's not. In India, we have surplus power. Our generation capacity is more than 550 gigawatts. In month of May, when India hits the peak, this year we hit the peak of around 270 gigawatts. Obviously, 550 gigawatt is not around the clock, and it doesn't translate. It's not an apple-to-apple comparison between 550 and 270, but we have enough generation.
And even as we get to 8 gigawatts, even then you're saying
it's still less than 3%. Even if we get to 8 gigawatt, it's still 3% of
data centers in 2030, when we get to 8 gigawatts, will consume only 3% of India's
Just to intervene, when industry become 8 gigawatt, India's installed capacity also will become around 800 gigawatt if we just go by Ministry of Power statistics.
Just remain 1 or 2%. And then the second aspect is that India consistently is investing in the renewable energy. All our additional power generation capacity is coming from solar, wind, and then now with the government's initiative towards the nuclear also. So over the period of time, we will not just have enough power, but also coming from the renewable sources. Therefore, the sustainability angle is also taken care of. Other aspect is, India data center industry, very beginning, recognized the fact that we cannot use potable water for the cooling purposes. And therefore, we deployed closed loop water chiller systems that typically uses a lot less water than what is actually be required to be used or is used in the Western world where they use evaporative cooling. So these two factors put together, yes, power is not a problem in India, water is not a problem in India.
So water is not a problem because we are using closed loop system rather than evaporator, which requires how much less water, and what percentage of the installed capacity today is using this?
Across the world, approximately 70% of the data center capacity is using evaporative cooling. But when you come to India, it's almost 100% using closed-loop water chiller systems. India has not been using the evaporative cooling at all. For the comparison sake, for the data-wise, it requires 3 million gallons of water per megawatt every year if you are using evaporative cooling. But when we are doing it using the closed-loop water chiller system, it is less than 1,000 liters per megawatt per annum. And that's the comparison of the water consumption that we have.
Thank you very much, Ankush, Sharad, and Sunil for joining in. Thank you once again.
News agency reported on Tuesday.
Mr. Kant, thank you so much for joining us here this afternoon. As you look at the global world order, Mr. Kant, what worries you the most today?
This is a period of conflict. Second is that the growth and prosperity post-World War II was driven by global supply chains, global value chains. You could export, you could import, you could do just-in-time manufacturing. All that is broken down. These supply chains are all disrupted, and you have muscular industrial policies. You have protectionism, you have tariffs, and therefore we are living in a very different world, very distinct from the hyper-globalization that had taken place. But in the midst of all this disruption, there's one force which is going to drive major productivity, major rise in growth, and that is the rise of artificial intelligence, which will impact every single sector of manufacturing and every single sector, including energy, in a very big way to make it far more efficient. And therefore, we are very fortunate to be in this room at this point of time and living in this era which will witness the greatest rise of productivity ever.
Given the reorientation of the global order, what do you believe are the imperatives that Indian companies must focus on to make good of the manufacturing opportunity that everyone seems to talk about? What should the roadmap now, give me specifics of the next 3 or 5 things that between the private sector and the government we must do to truly ensure that we leverage on the manufacturing opportunity?
So, Shireen, we grew at 7.7% last year. To my mind, we should be growing at 9%. If you want to be a developed economy by 2047, you should grow at 9%, nothing less than 9%. So 9% growth over a 3-decade period is critical for India to become a developed economy. Without that, it's not possible. Now, 9%, look backwards, you require, your investment rate right now is about 29-30%. You need to accelerate the pace of investment to about 40%. From 30 to 40% means that you don't have adequate savings in Indian economy. China had major savings which it put into investments. India doesn't have that kind of domestic savings.
But it also has a massive debt problem.
Yeah. So I'm coming to that. So India needs to actually either export or either get foreign direct investment. Now, one of the good things that's happened in India is that India has actually structured FTAs with a lot of countries, and hopefully it should be able to structure a FTA with USA in due course. So you will have major UK, Europe, America, you'll have FTA, and Indian manufacturing will have to compete. So if you don't become globally competitive, if you do not have size and scale of manufacturing for Indian companies, the European companies will come and dump goods here. The UK companies will come and compete you out here. So it's a challenge. The FTA is a wake-up call for Indian industries to actually become globally competitive and get the size and scale right. It's the biggest thing that's happened, but the Indian industry, I don't think, has woken up to this call yet, that it must be able to penetrate Europe, must get the size and scale, must do R&D, must innovate, must be world-class. That's important in the world of FTA. The second critical thing is our ability to get a lot of more foreign direct investment. Now, foreign direct investment requires policy predictability and stability. I mean, you can't have advanced ruling coming after 2 years and say that we have 40% vacancies in our customs department. So you need to fill that up and give arbitration. You need to give advanced ruling within 60 days. You need imports for exports, and therefore imports should come. You can't have a situation where Volvo gets its imports right at 15% and VinFast doesn't get it and somebody rejects it. You can't have contrary rulings. All this is critical for the country. I'm making these points because predictability, you can't have cases like Tiger Global on, so you can't, because Tiger Global was a major investor in the country. So you need predictability, consistency on our tax policies over a long period of time to bring confidence in foreign investors to be able to invest here. You need loads and loads of FDI coming in. You need over 180 to 200 billion FDI, dollars worth of FDI coming into this country annual basis to drive the investment rate to 40%. And that, to my mind, is critical. The third point I want to make is about Indian private sector. And Indian private sector, the country gave away 140,000 to this private sector by reducing the corporate tax 3 years away. Instead of putting that resources into R&D and innovation, they are busy giving dividends. So Indian private sector is also lazy, and it must do more innovation, more R&D, and put more resources into cutting-edge technology and make it globally competitive. Otherwise, they'll be wiped out by the European and American companies as the FTAs come in. It's a wake-up call for Indian private sector.
The notion that the PLI would be used to create national champions would also be able to create global champions. Have we truly achieved that?
Well, some sectors have done incredibly well. I mean, look at mobile manufacturing. I mean, the value addition has also gone up. We've managed to create a lot of jobs, particularly 70% of the jobs for women. I think in the years to come, we'll become a major manufacturing nation for mobiles. There's no doubt. And
it's our number one export today.
Yeah. And major exporter of mobiles. That is because the scheme was very well structured. It was very well structured. It was very tightly done. And it was the right kind of incentive for the right kind of increased production. It has worked in some other sectors like air conditioners, a few other sectors. But, you have all kind of civil servants, you have all kind of bureaucrats. So you have, in many other sectors, it's failed because the bureaucrats just didn't structure it properly.
So it's a bureaucratic problem.
No, it's a problem of bureaucrats not interacting with the private sector adequately enough to structure it in a manner where you can create the right incentive. For instance, the battery manufacturing. Battery manufacturing should have been done much better. I mean, we should have by now, have had about 50 gigawatt of battery storage here in this country. So I think my view is it's not just the production-linked incentive, but to create the whole ecosystem so that you get into component manufacturing, you get into machinery manufacturing next, and that ecosystem for manufacturing needs to be created, which is happening in the case of electronics and mobiles, it's happening in the case of air conditioners, but should have happened in many more cases.
Should have happened in many more cases. I also want to talk to you about what everybody is focused on, semiconductors. And we've just given the cabinet approval to the Semiconductor Mission 2.0 with a higher outlay as far as semiconductors are concerned. But again, to your point about building the ecosystem, how confident do you feel about that in light of the experience that we've had with Semicon 1?
So I feel very proud of one thing, Shireen, that the country opened up several sectors. It opened up the space sector. You've seen Skyroot with Vikram 1, what it has done. Path breaking. We opened up the drone sector, and you see a number of Indian companies doing drone manufacturing. We've opened up the geospatial sector. A lot of great innovative work is happening in the We've opened up the defense sector, and look at what the path breaking work that has been going on in defense, and many Indian companies are actually exporting defense equipments abroad. So the more you open up to the private sector, the greater will be the case of India becoming a manufacturing nation. These are sectors which are controlled and cabined by the government. You need to open them up. The public sector will not be able to do innovation. Public sector will not be able to do disruption. Young startups need to do that, and that is what is happening. In the semiconductor sector, the government took a major risk and actually provided huge amount of outlays as production-linked subsidies. So 12 major manufacturers have come in. And, we were a champion of design, but design is not ultimate. Ultimately, you have to manufacture. And so you have 12 manufacturers, but in the next phase of Semiconductor 2, you'll have much more components, you'll have design, many other things. So I think this is a step in the right way. You need to create the entire, after all, mobile manufacturing is not adequate. You need chips. To be an AI champion, you can't be a manufacturer. You can't be dependent on the rest of the world. What is happening in the AI world? We must understand this. AI world, the computing power is being controlled by NVIDIA, which is a US company. The chips are being controlled by TSMC of Taiwan and Samsung and SK Hynix of Korea. So the chips are being controlled there. But for making the chips, you need lithography machines, which are being controlled by ASML of Netherlands.
Yeah.
And for that, you need glasses, which is being controlled by ZS of Germany. And helium gas is coming in from Qatar. But to drive all this AI, you need data. And 25% of the data resides in India. So if India can't, there's no such thing as sovereign AI, but India must be clear that we are going to control certain nodes of AI. So with your data, because the world is going to run out of all the data that is on the internet by 2030, they will have to fall back on data in emerging markets, particularly Indian data. So if you control data, and if you read the Stanford AI Index, the talent is all Indian. Yeah. In fact, global talent is coming back to India. So if you have data, if you have talent, and you have progressive policies like we have right now on data and all this, there's a huge possibility that in the coming days, India will hold several nodes and will be a major player. The fourth key thing on AI will be that India does about 286 gigawatt of renewable. It should accelerate the pace of renewable. So I've been saying that if you want to do $200 billion worth of data centers which have been announced, you need to accelerate your renewables. Yeah. You take them up from, your target should not be 500 gigawatt, your target should be 1500 gigawatt for security and for data centers. And 1500 gigawatt is doable in India because you have climatic conditions. And secondly, you have very good private entrepreneurship in this sector, and they've been able to attract private equity and venture fund into India. The policies are right, private sector's there, private equity comes in, climatic conditions are good. So India should raise its ambition in renewable to be a champion of data centers.
Ladies and gentlemen, a big round of applause for Mr. Kant. Thank you so much for joining us here this afternoon and being a part of Make 2026.
Commitment to reform.
Hello and welcome to Startup Street. I'm Shruti Mishra. These are the top headlines from the startup space. Former Indian cricket captain MS Dhoni has invested in residential rooftop solar startup Solar Square through his family office Midas Deals as part of its $53 million Series C round. Dhoni will also join the company as its brand ambassador as Solar Square expands its pan-India presence. Ather Energy has closed its 1,300 crore rupee qualified institutional placement, allotting shares to marquee investors, including MFS and Abu Dhabi Investment Authority. The QIP was priced at 1,202 rupees per share and is part of the company's broader 2,500 crore fundraising plan. Fire AI has raised 2.5 crore rupees from existing investor Succeed Innovation Fund. The company will use the capital to expand its enterprise sales team, accelerate R&D, and scale its AI-powered decision intelligence platform. Jewelry retailer Bluestone sees a 49% jump in first quarter revenue to over 700 crore rupees. The uptick was driven by strong same-store sales growth of 39%, plans to add 12 new stores during the quarter. French lawmakers are set to vote on a bill that would ban children under the age of 15 from using social media. If passed, the law will require platforms to verify user ages, with the government aiming to implement the measure before the new school year begins in September. Those are the headlines we've been tracking for you this evening on What's Brewing Today. Rice feeds more than half the world's population, but it's also responsible for around 12% of global methane emissions, roughly on par with the aviation industry. The question is, can technology make one of the world's oldest crops more climate friendly without hurting farmers' incomes? Betting that the answer is yes is Rise, a sustainable agriculture platform that has just raised $31 million to scale AI-powered low-emission rice farming across Southeast Asia. Joining me now is Dhruv Sani, the co-founder and CEO of Rise. Dhruv, welcome to Startup Street. Here's a statistic that surprises many people. Rice cultivation contributes around 12% of global methane emissions, almost equivalent to the aviation sector. Dhruv, why has this problem remained largely under the radar, and how big an opportunity is sustainable rice farming in the global climate conversation?
Thanks, Shruti. This is a decades-old problem and something that hasn't been tackled at a meaningful scale. There have been technologies that have been around for multiple decades, but they haven't really scaled. The biggest challenge is farmers don't have any incentive to adopt. These are largely smallholder farmers, and they heavily depend on their livelihood for the small land holdings to be successful each season. And so what Rise does is we actually drive a fundamental business model innovation that gets incentives upfront in the hands of these farmers. And we bring together all the technologies to them in a very convenient, easy way for them to adopt. And we bring in a whole range of better advisory, better inputs, market access that drives better resilience and better income for these farmers.
All right. Dhruv, let's talk about your model. You know, it is built around AWD, alternate wetting and drying, which you say can reduce methane emissions by up to 50%, cut water usage and increase farmer incomes without impacting yields. So if the benefits are so compelling, Dhruv, why hasn't this become the industry standard already? What's preventing wider adoption?
Yeah, this actually goes back to the age-old practice of farmers flooding their fields, right? So when farmers flood their fields, there is methane starts getting produced because of anaerobic bacterial process. And this results in very significant emission levels. You spoke about 12%, which is actually spot on. And so what farmers really don't have any incentive to do is dry their fields at the appropriate time, which is what AWD is about. When farmers actually dry the fields, that bacteria actually comes in contact with light and air and dies. And each drying event, when practiced safely, can cut emissions by 50%. So you can easily do 1 to 2 drying events each season, and you can cut 50 to 70, 80% of emissions, which is very significant.
Sure. And Rise has scaled 10x in just 2 years and now works with 17,000 farmers across more than 50,000 hectares. Beyond sustainable farming, Dhruv, you're also building AI tools, field-level traceability, and carbon certification. Tell us how exactly is AI being used on the ground, and by how much is it helping farmers improve productivity or create a stronger export proposition?
Yeah, we haven't seen big success historically working with smallholder farmers across the ag ecosystem. The intervention of AI has actually allowed us to build more advanced monitoring, tracking through remote sensing, as well as on-ground field force management. So we're actually able to deploy our field force far more effectively to do better decision making, better guidance, and all of this is resulting in a much more cost scalable process. So AI is actually really helping in terms of managing large field forces, which wasn't possible, as you can imagine, with large costs, with more human intervention and field force.
Okay. Dhruv, let's get to the fundraise. You recently raised $31 million from a marquee group of investors, including PNB Paribas Asset Management, the Rockefeller Foundation, Temasek, and Breakthrough Energy Ventures. Walk us through the fundraise. Where will this capital be deployed, and what are your current business growth numbers?
Yeah, so we're really fortunate and blessed, and it's a big endorsement for Rise's business model and our innovative platform approach. Our focus with the new capital raise is actually going to be in terms of deepening our presence in the existing markets. We are also looking at expanding into new markets within South and Southeast Asia. Okay. And a significant part of the investment is going into building market linkage offtake opportunities. We want to bring low emission, sustainably grown rice directly into large retailers and international markets as well.
Sure. Dhruv, carbon markets have seen both rapid growth and increasing scrutiny around credit quality. You're forecasting more than 1 million carbon credits over the next 5 years. How meaningful could carbon revenues become for the business and, more importantly, for farmers?
Yeah, this is a really exciting part because historically it's been really hard to do MRV and traceability of these carbon credits. We do 100% ground truthing and double that up with remote sensing. So it's the quality of the credit really dictates the value. This will allow us to bring more profitability into the company, but also more benefits for the farmers in terms of incentives, in addition to what they're getting today.
Okay, and you've already exported 1,500 metric tons of low-emission rice to Europe, Canada, Australia, and Singapore. Do global buyers, Dhruv, now pay a premium for sustainable rice? And can climate-friendly agriculture become a commercial advantage rather than just an environmental one?
Actually, this is a really important point. We don't believe in green premiums. So we are actually bringing sustainably grown low-emission rice at zero premiums. And that's the advantage. This is about giving buyers and consumers an option for which they don't have to pay any extra premiums. And that's the rice advantage that we're bringing into the ecosystem.
Sure. And, your goal is to reach 300,000 hectares and 150,000 smallholder farmers by 2030, while expanding beyond Vietnam and Indonesia. You sort of touched upon international expansion earlier, but which markets are next? And could India, which is the world's largest rice exporter, eventually become part of your roadmap? Do you see an opportunity to bring Rise's model to India?
Absolutely. I think, all of South and Southeast Asia is like home to rice cultivation. India is a really exciting market, and it's definitely on the list. Over the next 12 months, we will be launching in potentially one new market, and we're actually currently undergoing the assessment for what is the right market, which is fit for as the next launch market.
And are you on track to achieving your goal of 300,000 hectares and 150,000 small farmers by 2030?
Yes, and actually we have a stretch target on can we go beyond 1 million, and there's some interesting models that we're looking at in terms of can we make the Rise platform available to other partners, other operators who need not kind of rediscover the wheel and can actually really partner with us in this endeavor.
All right, and on that note, it's time for me to wrap up our conversation. Many thanks, Dhruv, for joining us on Startup Street, and wish you the very best.
Thank you.
Moving on, one of the last manual processes in manufacturing is quality inspection, and it is now being automated with computer vision and edge AI. Betting on that opportunity is Switch On, a Bengaluru-based physical AI startup that has just raised $8 million to take its manufacturing intelligence platform global. Joining me now is Anirudh Banerjee, the co-founder and CEO of Switch On. Anirudh, welcome to Startup Street. Now, quality inspection has remained a largely manual process for decades. Your platform claims to detect defects with over 99% accuracy, Anirudh, at speeds of more than 1,200 products per minute. Tell us, how does the technology work and how difficult is it to convince manufacturers to replace human inspection with AI?
Firstly, thank you for having me here. I think, as you rightly said, quality inspection is one of the last manual things that are done in the manufacturing plant. A lot of these large enterprises spend almost 25% of their workforce in only doing the manual work of picking up a product, figuring out a defect, and a bunch of quality processes around that. And still they spend about $500 million plus in cost of quality and cost of poor quality. What we are doing is we are deploying cameras, lights, and unique physical AI hardware inside of the manufacturing plants to ensure that the manufacturing can happen at zero defect. And this is very critical for India to become the manufacturing nation that it wants to become.
Sure, absolutely. And you also claim, Anirudh, that manufacturers can reduce quality costs by up to 50% using your platform. Can you help us understand the business case? What's the typical return on investment and how quickly do customers recover their investment?
Yeah, absolutely. I think generally speaking, the cost of quality has really two aspects to this. I think one aspect is a real bottom line impact where, for example, there is all of this wastage that gets generated by defects that get manufactured. Almost 25% of the workforce doing this kind of a repetitive work. And then also there is a huge top line impact, as you know, that India is now doing a lot of very critical manufacturing around electronics, cell phone, and in a lot of these cases, 100% visual inspection is mandatory, which just means that to drive up productivity, to be able to really manufacture the high quality products we want to manufacture, this product becomes the need of the hour. So talking about ROIs, I think manufacturers for us easily see an ROI of about 12 months. This is in addition to the top line impact they see by being able to service other international and critical products once they install our systems.
All right. Anirudh, you've just raised $8 million in a pre-Series B round led by IVCap Ventures. Tell us where the money will be deployed over the next couple of years. Also, take us through your current business growth numbers.
Absolutely. So I think we've been very lucky to be able to raise from funds like IVCap, SIG, as well as Trifecta. What we have seen is the VC space warming up to physical AI startups, combination of hardware and software. And I do think that is one of the key differentiators in this age of AI for us. A key deployment of capital for us is in two aspects. One is we are looking to develop a lot of technology around 3D inspection, around root causing, and things that essentially make this product relevant for the critical manufacturing in India. We are also looking to expand globally. We are looking to expand in Europe, open up an office in Germany, and serve our European customers from that geography. And we are looking to invest in go-to-market in India as well, where we are already present in a lot of the manufacturing geographies like Pune and Delhi, and looking to open up more presence in Chennai and other places. In terms of growth, we have grown about 2.5x last year, and we are looking to grow about 3x this year.
All right. You touched upon global expansion and you're already present across 4 continents. Tell us which markets are driving demand today. And as you scale, Anirudh, internationally, how do you compete against much larger industrial automation and AI companies?
Yeah, absolutely. I think, talking a little bit about our presence. So we are present in Europe, in the Americas, and in South and Southeast Asia, in addition to obviously India. I think we have, the way in which we have competed is that we have built our own vision AI models, and we have deployed this on very critical use cases. And we have really important process data and information that we use to then identify defects that can be as small as about 20 micron in lines that can be about 1200 parts per minute, right? So very, very high speed. And this Vision AI platform works completely on the edge with a completely air gap, right? And so can be deployed in extremely strategically important manufacturing places. And that's one of the key reasons why Deep Inspect is getting adopted across the globe.
All right. And you're already working with global manufacturers like Unilever, Bosch, and Maruti Suzuki with deployments across 170 plus production lines in over 60 factories. So what are these customers looking for today, Anirudh? Is the biggest driver cost savings, high quality, or labor shortages?
I think the major driver actually is product superiority. So, in this age of differentiation of product driving a maximum of the value, it is very important and critical for manufacturers to be able to guarantee the quality of the manufacturing that they're doing. Really, even a 100 part per million kind of defect rate is too high at the moment.
Okay.
What most of the manufacturers are looking to do is they're looking to drive product superiority with a Vision AI product such as Deep Inspect.
All right. Manufacturing AI, Anirudh, is attracting increasing global investment with companies building everything from robotics to autonomous factories. Do you see physical AI becoming the next major category after generative AI? And how do you ensure Indian deep tech startups remain globally competitive in this race?
So I think the first, with regards to physical AI being the next frontier, I absolutely agree to that. I think, the way the AI models are evolving around use cases like coding, which is, nearly solved, I'd say that, being able to put that intelligence into a physical environment is something that would essentially be critical to driving the next level of value, for the next hundreds of millions of customers across the globe. I think how Indian companies can become globally relevant here is a lot of India is looking to become a manufacturing nation. So a lot of the value of the Indian startups can actually get into improving the manufacturing in India as well as globally. So the abundant manufacturing setups makes this very relevant.
Yes. One final question before I let you go, Anirudh. Your long-term mission is to make zero-defect manufacturing a reality for every factory floor, everywhere. And do you believe AI-powered quality inspection will become a competitive necessity rather than a nice-to-have? And how large is the opportunity for companies like SwitchOn in India?
Yeah, absolutely. I think, when we were deploying this product about 7 years back, this was like a nice to have because, AI was relatively nascent. The involvement of technology and startups in manufacturing was nascent. But right now, with the tailwinds around AI and with being the aspirations of India to become, a global manufacturing nation and the aspirations globally to be able to in-source a lot of the manufacturing makes these kinds of products a necessity. And I think purely from a market sizing point of view, I think India and globally around the Vision AI market is around $12 billion, growing at a CAGR of about 30%. So there is like a huge potential for startups and particularly Indian startups to make a dent here.
All right. On that positive note, it's time for me to wrap up our conversation. Many thanks, Anirudh, for joining us once again on Startup Street and wish you the very best with all your growth plans.
Thank you so much. Thank you for having me.
Well, with that, it's time for us to head into a short break. Coming up, from the heart of Chambal comes a startup that's reinventing desi ghee with single origin sourcing, complete traceability, and a model that puts farmers first. A special report. Stay tuned.
Rubio appeared before the Senate for
Welcome back to Startup Street. In a country where ghee is among the most frequently adulterated food products, a women-run collective in Chambal is making desi cow ghee the traditional way. Traceable, single origin and packed at source. Behind them is Kisan Se, a startup that co-profits with its pharma network, returning over 50% of earnings directly to the producers. Aishwarya Anand reports from Dholpur, Rajasthan. Take a look.
There's probably a jar of ghee lying somewhere in your kitchen. You bought it from a supermarket, ordered it from an app, your most trusted brand. You haven't paid much attention to it, but you really should. Which cow it comes from, which land it comes from, whose hand made those, and if it's even true. Because India has filed over 7,700 cases of adulteration last year alone. And ghee was on top of that list. That's exactly what has brought me to Chambal today. One second, did the name just give you the flashes of dacoits, ravines, Phool Devi, Gabbar Singh from Sholay? Well, you're not entirely wrong. That's exactly the reputation this place has held for decades now. But what you don't know is that the same badlands is India's most popular cluster for desi cow milk. Because the terrains that gave shelter to bandits kept industries and adulteration out.
मेरे घर में मेरे 3 बच्चे हैं, 2 लड़की हैं, 1 लड़का है गए थे। तो हमें गए थे महीने का 5,000 6,000 मिलती थी। जब से हम किसान से जुड़े हुए हैं, हमारा गए थे घी है, तेल है, और वहाँ से हमें अच्छे पैसे मिलते हैं, तो हमें 12 से 15,000 रुपये महीने मिल जाते हैं। मेरी शादी हुई तो गए थे, मेरे 4 साल के बाद मेरे पति ख़त्म हो गए थे, तो मैं अपने ससुराल वालों ने मुझे निकाल दिया। मैंने बहुत परेशानियाँ झेली थी, अब मुझे किसी से कुछ कहने की ज़रूरत नहीं पड़ती है, तो मैं अपने बच्चों को पढ़ाई अच्छे से कराऊंगी गए थे, और मेरे पता नहीं क्या क्या सपने गए।
What she's part of is the Apni Saheli Farmer Producer Company, a collective of 5,000 women started in 2013 by 11 women who spent their lives within 4 walls. Its annual turnover has gone from 1 crore rupees to 3 crore rupees. Behind that growth is Kisan Se, a startup that came not to own the production but to take it to market. The pack carries both names, the profit is shared between them.
उसके पहले हमें ज़िंदगी की यही चलती थी कि अपने घर में 4 दीवारी में रहना है, रोटी बनाना है, सब्जी बनाना है और अपना काम वगैरह करना है, अपने घर पे रहना है। और राजपूतों की महिलाएं घर से बाहर नहीं निकलती थी, तो सवाल जवाब उठते थे कि घर से बाहर जा रही, काम करने जा रही हैं, पैसा कमा रही हैं, तो अच्छी बात नहीं है। सन 2013 की बात है और अब में बहुत फ़र्क आ गया, क्योंकि महिलाएं अब तो अपना कमा रही है, अपने बच्चों को पढ़ाई लिखा रही है, किसी के ऊपर निर्भर नहीं है।
What started with ghee in Chambal is now a network of 25 farmer producer companies across 10 states, from Kashmir's saffron and walnuts to Gorakhpur's Kala Namak rice, Nashik's raisins and Odisha's Kala Jeera rice. Over 100 products, 50,000 farmers, every one of them packed at source and traceable to the farm. The man who built this model is Nitin Puri. What does your operations in Chambal actually look like?
This is an enterprise which is owned and run by 4,000 women from this Chambal region. These women are the shareholders. These women run the day-to-day operations. These women handle activities including operations, sales, finance. And we run this operation where we have our milk supply chain, milk collection, the processing of the milk into ghee, and then the distribution of this ghee through Kisan Se to our consumers. Every pack of Kisan Se carries both the Kisan Se logo and also the logo of the respective farmer group. And co-profit essentially means that whatever operating profit we make selling each and every pack through Kisan Se, we plow back 50% of the profits back to the farmer producer companies. Over the last 2 years, we've grown from 20 lakhs a month to 3 crores a month. And the eventual objective beyond the numbers is to impact 5 million farmer households all over India.
Everybody claims that my product is this, my product is that. How can a consumer verify that what you're claiming is actually true?
In the case of this unit, for example, we have an extensive system of collecting milk from villages where the quality is tested on ground. The milk collection then comes to the factory where there is a secondary level of testing. And we also have a validation from NDDB CAF. NDDB is National Dairy Development Board.
Now, India's food system has a trust problem that no label, no certification and no marketing campaign has managed to fix. What I've seen today is one attempt to reverse it in a place that nobody was watching by women who had nothing to lose but everything to gain. Now, whether it can scale without losing what makes it work is a question that models like this will eventually have to face. With camera person Lakshman Singh, in Chambal, Aishwarya Anand for CNBC TV 18.
And with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
Rubio described Iran.
Is, but yeah, those food stocks have just been unbearable. Lilly down 7. Wait till it's down 10. There'll be some people saying Kramer loves Lilly so much. I got the idea for Lilly from Ken Langone.
Oh, that's right. He did say 1,000, right? Yes.
It was in 400. He said, Jim, Eli Lilly.
That was a good call by Ken. Yeah. Yes. Let's get the opening bell here at the big boy on Wall Street. It's Massachusetts-based Pan Mass Challenge, celebrating the 47th annual Bike-a-thon in August, raising funds for Dana-Farber.
Yeah, my cousin does it every year. I always back this charity. It's been one of the great any of us who've lost relatives to cancer, those guys are.
Yeah, amazing institution. At the NASDAQ in Times Square, Impinj, a maker of radio frequency ID tech, celebrating 10 years. And at SIBO in Chicago, Atlas Fellows, a nonprofit focused on developing young people for a career in financial services. So, Jim, we're kind of chopping some wood here. We haven't really touched GM when Paul Jacobson on Squawk today.
Yeah, now look, GM has this terrible habit of going up and then someone finds fault and then it goes down, which is again happening. It was up $1.50. I say, forget it. Mary Barr is great. You're buying it for less than 6 times earnings. You can let it come in, but take a look at the long-term trend. Don't look at the last 5 months. Look at the long-term trend of how she's done versus Ford. Put it up versus Ford. And I think you'll say, you know what? I want to be in GM, not Ford.
Yeah, they do raise the guide a touch on full-year EPS. Right. Incentives as a percentage of MSRP actually below industry average still.
Yeah, Mary Barr's great. Does she get much credit? She's not a promoter. She has the CFO come on. He's dynamite. But at the same time, she's done some remarkable things. And when the stock comes down, you buy GM. By the way, just so people have it, I don't want to be too clipped here. The New England Journal of Medicine's May 11, 2025 was the original.
On the Lilly stuff.
Yeah, right. But they didn't. If you think that Novo's right, I think you're going to end up being wrong.
Yeah. For an economic bellwether, 3M revenue up 5 is not bad, Jim. What are you guys going to talk about tonight?
He's broken it. He's broken the cycle of what I regard as being ennui and problems with PFAS, the forever chemicals, and problems with combat arms, which is a hearing for soldiers. He's reinvented the company. It's like the old 3M that my father used to work for, where like they used to come with innovation. He's got a terrific data center innovation involving light and the way that you can be able to rearrange how light gets sent in the data center. It's one of the many things that he's come up with. I think he's amazing. I remember when he took over, I congratulated him because I loved what he did at L3. L3 Harris, but I said, Bill, this is going to be the toughest one ever because there's been lethargy there because of the lawsuits. I thought Mike Roman was trying to do a good job, but he was up against a huge, it was a litigation factory. And I think that's behind them. There's always someone going to say, Jim, be careful. PFAS, just new Australia lawsuit. Bill Brown has this company under control. 19 times earnings, one of the greatest invention companies. He's de-emphasized consumer, which is good. Consumer is very complicated. Yep. They did have to get rid of healthcare. I think that they needed the money, but their industrial business is back. It's really a marvel. I cannot wait to speak to it.
That's good. Yeah, that's pretty good performance on a name. Obviously, so many SKUs reflecting the broad industrial economy.
So much innovation again.
Yeah. On the flip side, Jim, Danaher, which did raise the guide a touch, that's gonna fill the gap going back to the lows of May.
Danaher, if you go over, and this is Reiner Blair, if you go over what we got rid of this stock, and I feel bad. The Rails brothers are in there, and I nothing good things to say about the Commanders. I'm not even going there, but there is the last 4 quarters have read the same thing. Beat and raise, get your hopes up, and then they guide down. So now you're talking about a 2 to 3% grower that was one of the great growth companies of all time when Larry Culp ran it. And I've got to tell you, I do not want to own this company for 3% organic growth. Forget about it. I mean, I've got 3M on the one hand going from 3% organic growth, that's going to go to 5. Yep. This thing's going from 5 to down to 1. And next thing I know is this company is just plain old overvalued. They haven't wanted to make changes. They feel that it's every quarter is going to be the breakout quarter. And that's what happens when you have a quarter where everybody says it's going to break out. You get your head broken.
Yeah, that's a tough 10-year, the back half of a 10-year.
Everyone remembers how great it was.
Yeah.
So,
Jim, in financials, Key with a slight revenue miss. Ally is a miss, and that down a couple percent. We're going to have Schwab on as well later on today.
Yeah. Now, look, I happen to think that Chris Gorman's done a remarkable job with Key. He came on when the stock was at 15 and basically told a story which is, listen, we're going to do kind of what Wells Fargo did. We're going to have great investment banking. Ohio, we know, hey, best state in the union. I would buy Key on any weakness. Schwab is hard. We got to see how much. Schwab, the story is, and Rick will tell you, people feel that maybe that some people are not getting the right amount in their cash accounts, and that's always been the bugaboo for that. But let's hear. I've not heard what Rick says. I need more from that.
Pretty nice action in Hasbro with a beat. Revenue up 16, Jim. The consumer, obviously a big consumer tail.
Yeah, this stock, Chris Cox has done a great job. It tends to go down when Mattel says something bad, and then when Hasbro says something good, it goes up. I'd rather just listen to Hasbro and not listen to Mattel. As much as I do like Ynon Kreiz, it's been a tough performer, Mattel versus Hasbro. Yeah. If you put those two together next to each other, you're going to see great disparity.
Yeah. Housing, we've been waiting for some of these builders, Jim, to sort of lower the boom on the full year. Right. Horton today does come in and cuts the full year revenue guide. Closing's up 4. We know what the action's been like in pending.
It's mortgage rates.
Yeah.
You can't fight mortgage rates. You just can't. As much as I like Horton and I like the price of their housing, it's the least expensive. You have to go with Toll if you want to be in, because Toll, 25% of people pay cash. That's the better investment. But I've got to tell you, having said Lennar's a great company, they can't get any traction. It's a very tough group when the Fed may be against you. It's just, you have to just put the Heisman up. I don't want that.
But you've been, I don't think you've been convinced that hikes are on the way.
I did think that the war was going to wind down, though, and I'm wrong on that. I had thought the president, I didn't think there'd be 10 straight days of
strikes.
I mean, no longer true social, so who even knows what they're doing?
Yeah.
I didn't think it would expand. I got that wrong. I'm still hoping for I don't know what hoping for the best is anymore. So I think we're all very confused.
It's very complex. The Washington Post today with the piece on sort of the cash-strapped Pentagon, which they argue, according to some officials, they're already limiting some elements of training and maintenance. as this supplemental is going to be before Congress before long.
Well, the way we're going to find out more about this is when RTX reports on Thursday, because Chris Callio, they have so much good defense business. It's been a terrific stock. By the way, yesterday you mentioned to me about how I liked airlines and aerospace.
Yes.
And I was shocked to see GE won its biggest leap order ever. That's their major engine. And it was with Airbus. And the stock went down $8. Talk about everything's hated now.
Yeah.
But RTX has that good mix of aerospace, commercial, and then aerospace because they make engines, and then defense. I'm going to rely on Callio. I got to find out the straight story here because I'm not getting it.
Yeah, I mean, and then there's Northrop, down 7. This is going to be the lowest since last June, Jim.
You can't get the straight story.
Yep. They a double beat. I think they raised the low end of their guide. But that does not look like a chart in which we're actively in defense mode.
If it's defense, people want you to sell it. Now, I know another guy that I really love, James Takelet, and they were cutting the price of How to Make a Patriot, and that's terrific company, 2.8% yield, 16 times earnings. But people just have said, look, I don't really care what you think is going on with the war in NATO. You got to get out of those stocks because the Congress is not going to give them any more money. That this is what the Democrats are going to be able to pull off. They have enough Republicans to say, listen, too much is being spent there. And therefore, you have to sell the stocks. And that's the wrap, and I can't go against the wrap. I've tried. Yeah. I've failed.
No theories as to what would happen if we did have to leave just for financial reasons. What would happen to the region? What would happen to commodities?
That would be a disaster. I don't even want to think about it. But then again, I didn't think that one day we would wake up and see that we pulled out of Afghanistan in a very much of like the way when I was growing up, we pulled out of Saigon. You know, it's like, you know, hey, every man for himself.
Yeah.
I didn't expect that.
Yeah, and of course, it's not just affecting us. It's the Europeans. I mean, European LNG, we're watching those prices.
There's some very big geopoliticals that we're avoiding because we talk about the data center, or we're avoiding talk about Eli Lilly. And these are very big companies, and they're not. They're an anchor to leeward. They're really, the defense stocks are really general dynamics too. I don't want to touch any of them.
What do you think of this Nikkei piece about TSM raising price maybe 5 to 10 next year?
Well, I think that the main theme is, okay, who can pass on the price increase? And the street is very bullish, and it did save the stock, thank heaven for TSM. The street's very bullish on that the hyperscalers can pass it on. People do not think that Apple can pass it on. I think that's a big mistake. I think Apple's probably the most able to pass it on. But Taiwan Semi is trying to save the group right now, and the one that, of course, you know, I follow, that David's not here to make fun of me about, is NVIDIA. But NVIDIA opens up 4 and then finishes the day up 32 cents. And I'm so used to that pattern now. It's like, all right, wake me up when it gets to 36 cents. You know?
Yeah. Micron does get added to the B of A US 1 list, and there's a nice 9% gain, third best on the S&P.
He has, let's see here, Sanjay Mehrotra has taken the money, and he's spending, remember, he's spending $200 billion to be able to build up our capacity. He's an American hero. He's not self-promotional. He's a remarkable man, but whether between Boise, where I intend to go to, and upper New York State, this man is putting more people to work than any, I think, and I said to him, I think he's putting more people to work than anyone other than the U.S. government.
Sanjay Mehrotra.
Yes, I do. I think he is.
In New York State, in Idaho.
Right. My daughter was up there the other day. Jeez, this is like the biggest boom area I've ever. I mean, it's a boom town. It's a boom town.
Yeah.
And it has been now for a while, but I think Sanjay's terrific, and he's made it so the company's like the old days where it was the leader, but it's now high bandwidth mode. I think it's a terrific. If you have to own one, own that, but again, it's parabolic, so it's up 220.
Yeah. I mean, I think I think page 1 of the Arizona Republic over the weekend was about TSM in Arizona doing essentially the same thing on employment and construction.
I think that, look, I want them here because I don't like how close Taiwan is to China. And I know there's a lot of glib nature about how the Chinese are trading partners, and I just don't think they are. I think they're Russia, the Soviet Union? I think they're closer to the Soviet Union than they are, say, I'd say Poland.
Yeah.
Well, great, one of our great part. I'm just saying there's a great misinterpretation about like the Cold War and what Cold War countries did with us in terms of trade versus now. We seem to think that somehow we were doing a lot of Arm and Hammer Day, the big trade with Russia, because Lenin liked the new economic policy. But after that, there was like 70 years where there wasn't a lot of commerce, and we're acting. A lot of our companies are saying, we can save a little money, do a little business with China. And the president has been silent on this issue.
Well, I mean, we mentioned these Canadian tariffs at the top of the hour. We built a chart of I think it's the customs good deficit with China versus the deficit with Canada. And it's not which one's the problem.
No,
and it's not Canada.
Thank heavens they didn't put it on oil. We have a remarkable moment where we have these two leaders of Canada and Mexico, and they're probably the best leaders that those two countries have had, I don't know, maybe in a century, and we don't seem to have any mojo with them.
You think the market can handle another wave of tariff chatter?
I think the market's going to be worried about a guy by the name of Chief Justice Roberts and whether the president doesn't think that Marbury versus Madison mattered. I mean, we're beginning to get a sense there are people, very serious people within this administration, who just said, listen, there are balances of power. And Roberts didn't like what you did. And he made a real big footnote where he just said, listen, this is outrageous. We're done with this. We're not going to have a president who just disregards Congress. But he's ready to do it. Pick a fight that you're going to win, man. You've been losing all these fights.
Yeah, we're trying to figure out could this be done under Section 301? By the way, Jim, last month we paid more in double the amount in tariff refunds than we collected in tariffs to begin with.
Let's just move on. Get a better narrative. Who's doing this narrative? Get a better narrative, man. Go for some wins. You're supposed to go for wins. You're president. I learned that when I studied with Doris Kearns Goodwin. Yeah. And you go for the wins.
I mean, that's Jim. I think midterms are maybe getting close to 100 days away. Do you think there's market vulnerability going into? I mean, typically you see some sideways chop going into midterms.
If he puts up a dog catcher against the senator, then the dog catcher wins. But there is just a moment, I think, where Wall Street's going to say, wow, we got to be careful because the Republicans have had their way. Who knows if the Democrats, socialists, that's what you'll be hearing, like Democrat socialists.
Right.
I mean, we had Mark Warner on today. He didn't deny that the Democrat socialists are, he didn't say they're a bunch of clowns. He didn't say that they're anarchists, which is some of us feel they are anarchists.
Right. In terms of overall price action, Jim, interesting chart out of BTIG yesterday. When you look at price versus breadth, they've moved in opposite directions 52 times this year. That's going to tie you for the third most in 30 years, and the month's not over yet. That's sort of where we are, as you get these huge weightings and a few select names.
I don't like that. That's why, again, one of the reasons why I want to kind of broaden the way. I want to try to find. I'm not saying I'm looking for Utz, and I'm not looking for PepsiCo. But I do think, as like you did between April 14 and 17 and 2000, you saw the Coca-Cola suddenly start going up. You realize, well, wait a second. And that was the heyday of Bristol Myers, which is certainly not the one I want you to be in now. But that's why I'm saying J&J. Because you want to be in something that everybody can agree on. And I think J&J is, to me, the paradigmatic stock to own at this point, just because you got great CEO, you got the company splitting, getting rid of the orthopedic next year. The multiple's not so high. They have 18 blockbuster drugs, and it's weaker because they had one heart study done out of London that wasn't so good for a business that represented $100 million on a $100 billion sales company. So that's why I like that one.
Yeah, you keep coming back to that one. That's true.
Because it's emblematic, because it's AAA, better than the U.S. I like a company that has a better balance sheet than the U.S.
Yeah. Finally, Jim, you mentioned rates. Long bond 5.13, 10-year back above 4.6. Biggest Dow laggards, you can almost guess it at this point. Depot and Sherwin-Williams.
On my self-flagellation / monthly meeting, I talked about for a club what a fool I am to buy Home Depot. Now, Home Depot is Ted Decker's unbelievable. It's a really good company. But you don't buy Home Depot if you think rates are going up. This was my hedge against the rates going up, and it was, I don't even want to buy my tomato flats there.
No Christmas in April or May?
I'm done. No, actually, I once said it about Frank Blake, who's the CEO, and he sent me a big bag of seeds. He said, stop buying flats, start growing seed. I will say it's a great company, but I'm sticking with it. The new head of Xbox is on the board of Home Depot.
Oh, wow.
Look, I just feel like Home Depot is. Look, it's like when you want to go on Restoration Hardware, which actually had a decent quarter. But Gary Freeman will tell you what matters, and that stock's coming back, is turnover, and we just don't have any turnover. And Home Depot is on turnover of homes, which therefore is related to mortgage rates. It's not about mortgage rates per se; it's about turnover.
Right. Yeah, you're right. I mean, you need household formation is basically what it is. And you could say that about cable companies or you name it.
Yeah, I mean, look
broadband.
at that. This is what says mistake by Kramer. I don't mind that. It says NBC. You see that at the bottom there, bottom right.
We're going to have Novartis on later on this morning, Jim.
Yeah, there's my man.
That was a beat. Revenue ahead. They affirmed the guide. It was up 4 pre-market.
But look, Fastener Simon, if you take a look at the drugs that are driving this company, they're almost all drugs that he came up with. I mean, I think he's fabulous. I think he and not Aaron Rodgers is the hero.
Yeah. Again, you keep gravitating back to healthcare. I think.
Oh my God.
Maybe more than any other sector.
Because I don't have to worry about where did the Cosby go out. I mean, I don't want to wake up and have my day decide. I get up at 3:30 and say, oh, it's a bad day. I don't want that. I don't want to look at Cosby and say, oh, it's a bad day for us. But Cosby, those guys, I mean, there's a lot of trading goes on in Korea. And it's really we've gotten infected by it. We are infected by it.
By the Cosby leverage.
By the leverage that they brought over here. And I'm not saying they aren't trading partners. I am saying that their love for trading, I think, should be on Kalshi and not should be on
the president has come out and said their own stock market is unstable.
Well, that's not really a reassuring comment.
Yeah.
I mean, the Chinese will come out and say it's more stable than ever. I don't know who's telling one guy's telling the truth. Yeah.
Meantime,
can you believe it?
I know. Floating right below 74.70 as we go to break. Watch bonds. The data calendar is kind of light before Thursday when we'll get jobless claims. But you can see sort of the elevated nature of the curve today with the 10-year, 4.64. We're back in a minute.
Good evening. Let's do it right with Nuvama presents The Wealth Brief, where today's market moves are decoded to guide your wealth journey. Markets end mixed after a range-bound session, with the Nifty closing around 24,200. The Sensex falls 238 points to 77,470, while the Nifty slips 51 points to 24,188. Mid-caps outperform, keeping market breadth in favor of advances. Reliance Industries and HDFC Bank drag the benchmarks, while auto stocks rally after strong Q1 earnings from TVS Motor and Bajaj Auto. M&M Financial jumps over 8% after robust results, and gold financiers gain on strong buying. Data Patterns surges after securing a 1,300 crore rupees HAL order, while Indus Bank extends gains ahead of earnings. Waaree, Premier Energies, Paytm and EMS stocks end lower. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Steve spied on colleagues when he worked at J.P. Morgan, alleging that Frank Bisignano directed his security staff to use software to snoop in the emails of rival executives, including Charlie Scharf, who then was co-head or head of consumer banking at JPM. You're going to hear Bisignano's response when he joins us in the next hour. First, we will get Stop Trading with Jim. Stay
on Wednesday.
Just now, I love what's going on with 3M and Bill Brown, but then Adobe. This morning, this analyst, he's been there for a while, but he's been covering other groups. Adam Wood has replaced Keith Weiss, and he's got a piece about Adobe that is one of the most disturbing pieces I've ever read about a $90 billion company, talking about how there really is no CEO and no CFO. And I call on the board of Adobe to explain how you could be running a $90 billion company without a true CEO and CFO, because it's a bit of a travesty. And when he says downweight to underweight, what it says to me is, please, come on, it is a public company. You have $90 billion in market cap. You can't just say, you know what, we can't find anyone? I mean, come on. Let's bite the bullet and find someone to run this company. This was a fine company. It's obviously the most easily disturbed by... You can do, I mean, I understand Wix. You could Claude in its sleep could destroy Wix. But a wide awake Claude, and, you got to wonder, or Canva, oh my God. Adobe is just not what we thought.
They were at 365. They cut it to 240. You think that's still rich?
Well, I think that just the multiple's going to just keep contracting, because it's really hard. When you don't have a CEO or a CFO, you tend to start thinking rogue. Is it like rogue? It feels roguish.
Underweight over at Morgan Stanley. Jim, so you got 3M tonight.
Oh my God, I got my Claude cheat sheet. Oh, it's just, look at this. It's a thing of beauty. This is what you live for. I've been waiting for Bill. I've been staying in touch with him for a long time, and I knew there'd be a breakout. And it is just talk about inflect. That's what that company's done. It's going to be like the old 3M. You're going to have multi-year move. This is day one of a multi-year move by Bill Brown.
177 would get you pretty much to, well, going back to 2018.
Villanova and Wharton.
Nice.
I told him, I said, listen, I like you more than Brunson.
Jim, we'll see you tonight. Busy session, Mad Money, 6 p.m. Eastern time. As we watch these markets here within a range, once again, S&P up 30. Don't go away.
Good evening. Let's do it right with Nuvama presents The Wealth Brief, where today's market moves are decoded to guide your wealth journey. Markets end mixed after a range-bound session, with the Nifty closing around 24,200. The Sensex falls 238 points to 77,470, while the Nifty slips 51 points to 24,188. Mid-caps outperform, keeping market breadth in favor of advances. Reliance Industries and HDFC Bank drag the benchmarks, while auto stocks rally after strong Q1 earnings from TVS Motor and Bajaj Auto. M&M Financial jumps over 8% after robust results, and gold financiers gain on strong buying. Data Patterns surges after securing a 1,300 crore rupees HAL order, while Indus Bank extends gains ahead of earnings. Waaree, Premier Energies, Paytm, and EMS stocks end lower. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Let me begin with the first line, the changing face of warfare. You know, a couple of decades back, or even 5 years back, when we thought about a nation's military might, immediately you would think of how many fighter jets do you have, how many tanks, how many artilleries. But now increasingly, that's being countered, challenged, complemented by inexpensive drones, AI, cyber operations. Man, the entire face of modern warfare has changed now. It's no longer just about hardware, but it's also equally about software. So given that the face of warfare has changed, how has that changed the thinking and strategy at DRDO?
I think that the change has been there for quite some time. We have seen it in the current wars, but the change has been building up gradually. If you take any weapon system today, there is an inbuilt software, and of late, more and more of AI also getting built into it. So DRDO has been working on a number of software as a solution, as you say, and the EW systems for a long time. Today, the software-defined radios, the geographical information systems, the command and control systems across the three services. All of them make use of software, and EW is something, as they say, whosoever controls the spectrum controls the war, right? So that's the reality today. The AWNC system Netra, which you would have seen the FOC recently. So over and above the platform, where we still depend on a foreign OEM to give us the platform, all the mission systems, all the logic, all the intelligence that is built into it is again homegrown technology. And I think the defense has imbibed the technology in a big way. And while the traditional arms ammunitions would continue to grow, more and more of software-based solutions using AI and all is the way to go in the future.
And how sovereign is our AI, the technology that goes into the DRDO and defense?
I think sovereignty is something that is the key to everything that happens within, the government's directive of Atmanirbhar Bharat. So that Atmanirbharta comes basically from sovereignty. If you control the software stack, you control the data on which you are training your algos. So within DRDO, we make sure that the algorithms that are developed, the data sets that are used for training, all of that is home built. Even the software stacks that are developed, especially for the weapons, defense platforms, etc., are all done within the labs. We have come up with our own software development guidelines, the verification and validation processes, the ETI framework for evaluation of the AI stacks that we build. All that has been identified, and a structured framework is available to make sure that the technologies that are built, the solutions that are built are sovereign. We have complete control over it.
100% sovereign. No import dependence.
Absolutely.
Okay. The next line, ma'am, of the introduction, the topic, was how does India achieve leadership in defense? What are your thoughts on that? And here particularly, I wanted to get your thoughts on the kind of spend that we do on R&D. Now, India's defense budget is 7.8 lakh. The amount that goes to the DRDO is about 29,100 crore. That's about 3.7%. Do you think, to your mind, that is enough, or more needs to be spent on R&D?
So I think R&D is something that we need more funding. We also need more resources and in terms of manpower and all. But that is something that we are working on in a collective mode. It is not just the DRDO labs that are working for the development of specific systems. We are together working as a larger ecosystems. So most of the young startups working in this domain are working with the DRDO labs in some partnership model or the other, either as a development partner for developing specific solutions, or as a part of a TDF project. We have the IDEX scheme. The services also run certain indigenous development challenges. So it's more of an ecosystem, with DRDO being anchoring the development of the indigenous efforts towards building sovereign capability.
So earlier we would always think that DRDO was the brain, the innovation engine, and then they would give it to the PSUs to manufacture. The private sector would also be a part of it. But do you think that's increasingly changing? Even from the innovation for IP development, the industry, DRDO, is increasingly looking to work with the private sector and startups with the various schemes that you spoke about?
I think absolutely. Ever since 2001, when the defense industry was opened up for the private sector, there has been continuous government focus on integrating more and more of all the participants in the ecosystem. While the public sector has been and continues to work on defense systems, the private sector has also come up in a big way. Today, I think more than half of our development and production partners are from the private sector.
And you would be okay if the private sector owned the IP, or would you be more comfortable that the government owns the IP?
The current rule position, and this drives its strength from the GFR, is that wherever government is spending money, government is spending resources, the IP belongs to the government, right? So that is thing. This is something that we have changed in the Technology Development Fund, where the IP is shared equally by both the industry partners who co-create the IP with us and the government. But for the larger tech that is developed in-house in the DRDO labs, I think the IP still belongs to the government. And I think that is something where we'll have to treat carefully before we kind of.
You know, one of the biggest success stories of India's defense, one is indigenization. You spoke about it. From import dependence, we've come to indigenization. And the second one is exports. I remember 10 years back, India's defense exports was 1,500 crore rupees. Today, the number stands, I think, at 39,000 crore rupees. That's a massive jump in just the last 1 decade. How do you see India's exports going up? And if I may add one question, India's defense, the exports from a large value point of view still come from components or maybe ammunition sub-assemblies. In terms of pure IP, whether it's a Pinaka, Astra, it's growing, but it's growing off a small base. How do you see that changing?
I think those got in flex. We have started steadily going towards more of exports. We have a target of 50,000 crores for 2029. Today we are talking about exporting Pinaka weapon system, the guided Pinaka, the radars, the weapon locating radars. We are talking about exporting the BrahMos, the Akash missile system. There are multiple opportunities available for industry. And I think it's the industry which is kind of leading the race by reaching out to newer markets. I'm not sure how many people would know about it, but our very own indigenously developed wheeled armored personnel carrier, which one of our private sector companies had developed with the DRDO lab, they're now setting up a co-development, co-production facility in a foreign soil. So that is the way to go. More and more companies I see for systems that have been developed in the country, they will go and set up co-development, co-production plants in foreign countries. And I think it's not too far away where we will be